bounce while the PBOC continues its battle to prop up the yuan. Wall Street still sees plenty of room for the Chinese currency to fall.
Goldman Sachs steps up the pressure on staff to return to the office full-time as frustration grows on the reluctance of some workers to come back in.
And Iran plans to keep raising oil production as backdoor diplomatic efforts with the U.S. appear to be easing pressure on the Middle Eastern nation. It's gone 8 a.m. across the Emirates, 6 a.m. if you're in Johannesburg. I'm Yusuf Gameluddin in Dubai.
And I'm Menace Rennie, back alongside you, back together again. We've got a few more shows to plug in. The question is...
Every time I try to get away from the heat wave just keeps chasing me along. But it's good to be back in the seat, for sure.
It just follows you around the world. Scorched Europe. The question is, are we going to be in for another scorch in stocks? I mean, we've given back about 5% so far this month on the S&P 500. That's the NASDAQ. The S&P is down over 4%. Can that paradigm of rising yields and stoic stocks coexist for much longer? There are fairy tales, there are miracles, but the fairy tale is, of course, AI. NVIDIA will deliver their results. What are you more fearful of? A disappointing set of NVIDIA results or something perhaps more august from Jackson Hole, from Lagarde and Powell? But the stock market this morning brings itself back from the lows. By the way, that fairy tale from NVIDIA, it makes it the 6th biggest company in the world, up 221% this year. But roll it over and you look under the hood of what's going on in the equity market. By the way, semiconductors are up 36, 39% this year. But look at this, Nike. It took a bath yesterday. $13 billion has been wiped off the value of Nike in the past 10 sessions. A record-losing streak in China. Charles Schwab down 5% yesterday. 11 straight days of a bath on Charles Schwab. And here is the kicker. Credit card delinquencies wipe out Macy's, down 14%. They are warning on delinquencies. That is the real economy. Roll it over and have a look at what we're waiting for, which is Powell and Lagarde. What will that do to the dollar is the question that I have for myself. We drift back ever so slightly. Will they intimate that we are at peak rates, but that cuts could be muted? Credit Agricole say that could challenge the overall risk narrative of the world. Dollar yen I put in there, which is yen strengthening ever so slightly. We've got a 9-year high on the JGBs of 0.66%, and that is where, a little bit higher now, that is where the Bank of Japan last intervened. So yen takes its strength from the equity drop and indeed the rally in the yields. And dollar yuan, Yusuf, while you've been away, we've been on a roller coaster with the yuan. They're fighting the burrs. The 955 pips of a stronger fixing today. Less than we thought, but this is about trying to tighten the financing conditions progressively, evolving it.
Absolutely, Menace. In the meantime, bonds catching a breath after the historic move that we saw in yields, close to a 16-year high. Currently, we're at 4.30 for U.S. 10-year yields. TD Securities talking about where the real pain trade is, and for them, it's in the 2-year yield, north of 5%. Remember that a lot of financial institutions are holding 2-year securities on their asset sheet. And that means that this is where the pressure is going to begin to build in terms of available for losses at some of these lenders. If the country sells U.S. treasuries in China to fund its currency intervention, the broader debate is, will U.S. yields rise even further? I want to get to this chart here and talk about a commentary piece by Bill Dudley, who says basically that the bull market for U.S. Treasury bonds is over. This is a chart that reflects on the total return that's been negative since 2021. Year to date, we are down just about 1%. The larger deficits are going to push up our star and add to the bond premium by increasing the risk of long-term lending to the U.S. government. The bond term premium is the hardest part to forecast, no doubt about it. Prior to 2008, it averaged about 100 basis points. And since then, it has been around zero in large part because there was little risk. Bonds were viewed as a good hedge against a recession. The paradigm has shifted. Higher yields are back. I want to move to the energy equation, get you a sense of where we are, because Monday, Tuesday, we were a bit higher, but at the moment we are actually pointed lower over 3 days. So currently intraday, we are actually making a move back. So over 3 days, we are lower by 0.75%. The big news out of Iran, they're going to boost their oil production to 3.4 million barrels a day by the end of the summer. So the oil minister made some comments to the state press agency, and they're looking at the highest monthly exports this year as U.S. stock speculation continues to swirl, Mass.
Let's check in on those Asian markets. It's been a daily battle in the FX side. Avril is in our Singapore studio for the very latest. What have we got today, Avril?
Well, as you said it, we are looking at the FX space. I mean, the Chinese currency has been on a weakening trajectory. Our colleagues at MLive, though, feel that dollar yuan may have peaked as these China risks have been priced in. We're seeing them grapple with those yield differentials after the rate cut, as well as the optimism, or the pessimism rather, on the Chinese economy. So we've seen that slide, but today that stability is returning a little to the Chinese currency. Let's not forget also, earlier in the week, we did get speculation that Chinese authorities are making it more difficult to short the currency. We also get a stronger than expected fixing today. Not all doom and gloom, though, because if you look at the tech space in China, we got some of the tech giants actually beating on those earnings estimates, though a key test will come in the form of NVIDIA earnings later today as investors grapple with higher yields as well as a slowing Chinese economy. Guys?
Everil, thank you for the roundup. That's Everil Hong there. I want to stay with Asia and get to China's stuttering economy, because it is now the biggest threat to global commodities as global activity and credit flows in the world's top buyers slows sharply. Bloomberg's Jill Deeses joins us now from Hong Kong. So, Jill, just run us through then some of the standout figures that have caught your eye.
Yes, of course, Yusuf. So I think that at this point, commodities in China right now, a very complicated picture, just trying to weigh on what's exactly going on with the slowdown, how that's impacting prices. Of course, coal really, China's mainstay fuel underpinning the Chinese economy right now. We know that, earlier this year, Beijing was boosting output, was boosting imports, trying to drive the recovery, which of course is disappointed. That's created a glut that's really weighed on prices. I think when it comes to some other materials, such as some base metals, the picture's a little bit more complicated. Obviously, the property crisis has really weighed on a lot of construction firms' activity. That's really hit materials there. But copper, for example, has gotten some support from the drive in renewables. So that's feeding into copper demand, helping on with EVs, wind turbines, that kind of thing. And then I'm also looking at pork prices, for example, which of course have fallen quite a bit. Some of that's cyclical, but another part of that really has to do with Chinese demand being completely impacted. That's really one of those key components of the CPI basket, for example, that's weighed on prices. That certainly led to in part some of those deflationary figures that we saw in July. So we'll have to see how much of that carries over. And then the last thing that I'm really looking at is iron ore, which I know has been supported by a lot of expectations for stimulus. Not sure how much of that is going to feed through, but we're at least getting through sort of a depressed seasonal period for sort of factory activity and such. Maybe we'll see some pickup as we get into the September month.
Jill, thank you very much. Jill Deeses there in Hong Kong. Well, the China slowdown has been hurting Nike, whose shares have fallen for a record 9 straight sessions, as we just showed you. That wiped out nearly $13 billion of the company's market value. Meanwhile, you've got Dick's Sporting Goods, which is a major Nike customer, reported disappointing second quarter results. Investors are now looking towards Foot Locker earnings, which hit later today. Another important signal for Nike and indeed for the overall retail market. But I think those delinquencies from Macy's tell a very interesting story about the end of stimulus checks, Yusuf.
Yeah, it reminds me, I do need to pick up a new pair of shoes. But in the meantime, I'm looking at this broader debate about the return to office enforcement policies at various companies. I could never relate to that because I was not really away from the office, never really worked from home. But one of the companies taking the lead is Goldman Sachs, right? So they're cracking down on the laggards. They're embarking on a fresh effort to enforce the policy of working from the office 5 days a week. Now, revenue-producing employees have mostly returned full-time. Senior managers, they've grown frustrated, though, by reluctance of staff in other groups constituting a significant chunk of their workforce. And the company maintains that there is flexibility when needed, but they're simply reminding employees of their existing policy.
I think they've got a much bigger issue to deal with, don't they? I mean, they have this ongoing internal angst with David Solomon. The FT has the story, Yusuf, of course, that the board are going to talk about the backlash to Solomon, his major foray into some other areas, the investment advisory business that they bought and they built up. What is the truth of the angst within Goldman's? That's certainly something which is also there, pushing people back into the office. And of course, you've got a number of other highs, the Citigroup and JP Morgan also tracking everybody's attendance. So there's a number of contentious issues at play within Goldman's at the moment. Still ahead on the show, we're going to get an outlook for the Middle East markets. Sure, Asset Management joins us. What are the traders going to be picking over the clues at Jackson Hole Symposium?
But up next, we'll talk about the risks China's mounting problems pose for global assets. It's going to be with SEB. This is Bloomberg.
Have you checked your tires? eBay Motors has millions of new tires from all the big brands at really good prices. And they'll even send them to an installer. Honey?
Honey? They're ordered.
For a young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make a decision.
This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
A mixed picture for Asian equities this morning after Wall Street's risk-on mood faded following the big tech rally. Shares are lower in China. Traders see plenty of room for its currency to fall further. Meanwhile, investors are awaiting key results from NVIDIA and Fed Chair Jerome Powell's speech in Jackson Hole on Friday. I want to get out to Eugenia Victorio, head of Asia strategy at SEB. Eugenia, I take you straight to the real yield chart that shows the highest level since 2009 for the 10-year part of this equation. I begin to wonder whether this yield jump could start causing the recession that few now fear. How big a talking point is that going to be at Jackson Hole?
Well, clearly the changes in the 10-year yield has been quite dramatic in the last month alone. But looking at the daily changes of the 10-year yield, it's showing signs of toppish. And I would hope that it would, if it were to go up, I think it would only go up to around 4.5%, as long as there are no changes to the Fed rate expectations from here.
I suppose then the question, good morning to you, Jenna, welcome to the show. I suppose the question then becomes is how high and enduring is the regime of this rate spike? Bill Dudley wrote an op-ed for us. He said, goodbye to the bull market for US Treasuries. We have a paradigm shift. Higher yields are back, and he suspects that the bull market that began in the early 1980s is over. Do you agree? Are we firmly reasserting ourselves to the 4s and 5s in yields? Is there a regime shift in the bond market?
Well, it really depends on where the inflation is. If you believe that the inflation will not go down to 2%, then there's the real possibility that the 10-year yield will remain in current levels. However, even as we speak, there are still expectations that the Fed will eventually cut rates in 2024. So it does not make sense that the 2-year yield will go down and then the 10-year yield will stay where it is right now. Having said that, the timing of the expectations of the Fed rate cut is getting pushed back almost every day. So at this point, I would say the first cut would likely be in Q2, but the moment you have a pivot from the Fed, it is quite likely that the 10-year yield will follow as well.
Eugenia, you spent a considerable amount of time in your research note looking at the China dynamics, and specifically as it relates to its foreign exchange. The Markets Live team has been doing some analysis, and they argue that the intraday high of last October could pretty much be the peak for weakness in the China yuan. Do you subscribe to that, and what do you see policymakers responding with in the coming days?
As long as the U.S. 10-year yield remains at above 4.30, there is reason to believe that the dollar CNH would remain at around current levels of around 7.30. However, if the 10-year yield were to rise to around 4.5%, then no matter what the PBOC does, there is an upward pressure to dollar CNH. But the PBOC can slow down that move, and that is exactly what we are seeing these days, especially with the recent squeeze in the offshore market in the last few days.
One narrative that is building is the PBOC has responded with incremental policy responses, and we're going to need something much more dramatic in the MLF, 100, 150 basis points cut. We maybe had one guest yesterday talking about the need for helicopter money in China. How much more significant a response mechanism do you need from monetary policy and fiscal policy in China to steady the ship?
At this point, the monetary policy easing seems to not be working as much because we've already been seeing consecutive cuts in the different policy rates, as well as further injection of liquidity in the market. And even then, credit growth in China has barely budged. And at this point, we really need fiscal policy to step up to the plate. But Beijing has made it clear they're not going to deliver, at least not yet. They're trying to see how much more pain the market can take before they actually step in, if they will even step in. In my view, the likelihood of helicopter money or further aggressive fiscal policy is not in the cards at this point.
The big global equities event is going to be the set of NVIDIA earnings, and that is likely going to have a major impact across Asian stocks as well. What are you telling clients about positioning ahead of that?
Well, clearly the Asian stock market is really very much determined by the general risk on sentiment. And as long as China is having a bit of a cold, it is very difficult to see that the Asian equity market would be able to rally even with the rise in tech sectors. We've seen some upside in the Korean tech equity names, but that's going to be limited as long as the general export picture of the region is not picking up.
Okay, let's see what the policy responses are. And of course, all eyes down on Jackson Hole and NVIDIA. I don't know which one I'm more concerned about. Eugenia Victoriano, head of Asia strategy over at SEB. Our guest this morning on Global Markets, right here on Daybreak Middle East and Africa. Good morning.
Meet Mode. With Mode, analysts can quickly jump into ad hoc analysis to answer questions that have never been asked before and find that next game-changing aha. And that analysis isn't siloed. It's a catalyst for collaboration. Analysts can instantly share with business teams to dig deeper, turn it into a trusted foundation for self-serve reporting, or use it as a starting point for more advanced analytics in an integrated notebook environment. So connect your database and watch Mode clear the path from data to impact.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
What we see from the announcement today is that rather than Microsoft being able to control how those cloud streaming rights are used, that control will shift to an independent company, and Ubisoft will be able, for example, to enter into all sorts of licensing deals with other cloud streaming providers, supporting importantly different kinds of business models, for example, multi-grain subscription services, or enabling cloud service providers to offer their content over a non-Windows operating system. So we will be testing carefully whether that does deliver on keeping that market open to competition, supporting innovation and choice.
Sarah Cardell there from the UK's Competition and Markets Authority speaking as Microsoft's planned $69 billion takeover of Activision Blizzard got a new chance of winning approval. The US tech giant has submitted a substantially different deal, one which would give the French video game publisher Ubisoft cloud streaming rights for Activision games, potentially easing concerns around the monopolizing the fast-growing market. So that's a big movie yesterday. Ubisoft ramped higher yesterday, Yusuf.
Yeah, just short of 92 a share. But in the meantime, the CEO of Kane Anderson Real Estate Advisors says that markets are in for a rough road ahead. Albert Rabel told us exclusively that he believes that the U.S. economy will experience a hard landing and that the Fed has already gone too far.
I'm still in the hard landing camp. I know we sort of have consensus around soft landing at this point, but I think the reality is that we've already landed. Core inflation is down to 3% plus. Core inflation minus shelter is down to 1%. So the reality, in my view, is that we've already landed and that the Fed will do what it has historically done, which is wait too late to get started and then go too far. And I believe that they've already gone too far. Now we'll see what Mr. Powell says on Friday. We'll see what happens in September, but we've got $17 million of household debt. We've got trillion.
That's a lot.
17 trillion of household debt, 12 trillion of mortgage debt, 1.6 trillion of auto debt, $1 trillion plus of student debt, which, as we know, is going to have to start actually paying on that debt sometime soon. So we're a consumer-driven economy. I think we're in for a rough road ahead.
Speaking of the rough road ahead, you look at the 2-year, over at 504 nearly today, and you look at a 433 handle on the 10-year, and you think about the trajectory of rates and what else has to break as rates stay this elevated. Where has the market not yet seen pain that you expect?
Well, you were talking about the regional banking downgrade. I mean, we're very close to that. We've got a big real estate debt business and a big real estate equity business. On the debt side, we've got $1.5 trillion of maturities coming in the next 18 months. Obviously, that's going to be difficult to do in an illiquid environment. Regional banks are a big provider of capital, or historically have been. Now private credit is coming in, private equity is coming in and filling some of that gap. But the reality is there is a lot of mortgage debt that has to be refinanced, and those rates are a lot higher. And I can tell you that a lot of those Excel spreadsheets just don't work.
Well, what about the default rates here? Because you have seen a few defaults start to hit the market, but nothing so crazy yet. Do you expect that there's going to be significant distress? And frankly, you've made your name in some of this real estate distress. At what point do you find assets that are cheap enough to buy?
Well, it's true. I say I've lived through 88, 98, 08, and the pandemic, and so I've been through a number of different crises. I don't see capitulation yet. It is a lagging indicator. I mean, the issue is that you've got a 12-month lag on shelter really being factored into the inflationary dynamics. So, you know, I think we're going to see capitulation and prices that are interesting, and private credit and real estate credit get very interesting from a buyer perspective later this year and into the first half of next year.
A whiff of that capitulation could certainly unseat global risk. Kane Anderson, the real estate advisor's CEO and managing director over at Albert Rabel. So they're nervous and sweaty in the bond market globally, but nowhere more so than in the JGB. You're now seeing Japanese government bond rates hit levels that we haven't seen since 2014, both at the 10s and indeed in the longer area. What does that mean for the Bank of Japan? They've come in twice, Yusuf, and intervened to cap rates when we've been around this 0.66%. The yen is strengthening this morning at one juncture, up 0.2%. So you are just looking at a nervous set of bond traders all the way around. What's your way? We made a 15-year high globally on rates. You got the highest since 2007 in the US, and real rates are the highest since 2009, and that suggests maybe that gives the Fed the room to pause. Right now, pressure in rates in Japan.
Yeah, quite a bit of anxiety coming from the higher global bond yields. You kind of wonder what's going to break next. I want to switch over to Middle East equity markets, get you a bit of a sense of how trading went underway. So for the Saudis, the Dow was down 0.3%, but underneath the index there was weakness in food and beverages, down 2.5%. A little bit of upside in Dubai, up 0.2%. The big move came through from Egypt in the region, though, with Eastern Tobacco in the news. The holding company for chemical industries receiving an offer from foreign investors to buy up to 30% of the 51% stake in Eastern Company.
Conventional thinking delivers conventional results. At Allspring, we break away with purpose, harnessing data-driven insights and boundless curiosity. We dissect the market from every angle, helping to build portfolios that redefine what's possible. Because investing isn't one size fits all. Allspring, purposefully divergent.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights.
How has that shaped your strategy for the bank?
Is this a new normal? Is this like a catalyst?
Do you think we're in a new phase for dividend policy overall?
That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning.
Mixed trading as we await Nvidia's results and Jay Powell's Jackson Hole. Elevated bond yields continue to cause concern as foreign investors ditch short-dated treasuries.
Meanwhile, Chinese stocks fail to sustain Tuesday's bounce while the PBOC continues its battle to prop up the yuan. Wall Street still sees plenty of room for the Chinese currency to fall.
Goldman Sachs steps up the pressure on staff to return to the office full-time. Frustration grows at the reluctance of some workers to come back in.
And Iran plans to keep raising oil production as backdoor diplomatic efforts with the U.S. appear to be easing pressure on the Middle Eastern nation.
What are you more nervous about, the Nvidia results? We're seeing chip stocks up 39% so far this year on the Philly stocks index. And yet at the same time, we're waiting to hear some kind of clarity from Jay Powell. We've come off the lows this morning. We're back in the green across the equity market space. But I give you some attention to that diktat. 1987 was the year the differential between bond yields and equities rising. Looks like that's been interrupted. We've got the Nasdaq down 5% in August. SPUs are down 4.4%. Is it a rerun of where finally higher real rates begin to impinge on a pro-risk stance? Have a look at this. What's going on under the belly? Nike having a rough time in China. They've got stock inventory building there. $13 billion has been wiped off the stock in the past 8-9 sessions. We're on a record losing streak in China. Charles Schwab down 5%. They're going to cut jobs, we understand. They're going to restructure, down 5%. Macy's, this is the malevolent force that you need to really pay attention to. Credit card delinquencies at Macy's are the underbelly of what took that stock down by 14%. The reality is stimulus checks are finished. Interest rates are now at 5.25%. Mortgage rates are at 7%. The cracks and the fissures begin to be delivered.
Yeah, in the meantime, I'm looking at the bond markets where we're seeing a little bit of consolidation after the historic moves in yields on Monday to levels that we haven't seen in about 16 years. The note that caught my eye was from TD Securities. And they're talking about a pain trade, specifically from two-year yields, currently at 5.04%. A lot of these securities is what some of the big banks and a lot of financials hold as assets on their balance sheets. And if you just track unrealized held to maturity and available for sale losses at banks, the pressure is on. And then also, what if China starts selling U.S. treasuries more aggressively to fund its currency intervention? Are U.S. yields going to rise further? Well, he's been looking into some of this. He wrote a commentary for Bloomberg. And he says basically goodbye to the bull market for U.S. Treasury bonds. Total return has already been negative since 2021. You can look at this chart. Year to date, we're down about -1%. The larger deficits are going to push up R-star and add to the bond premium by increasing the risk of long-term lending to the U.S. government. The bond term premium has been the hardest part to forecast. Before the 2008 financial crisis, it was about 100 basis points. And since then, it's been around 0. Largely because there was little risk, right? Bonds were viewed as a good hedge against a recession. That paradigm is over. It shifted. Higher yields are back, Manus.
They are indeed. Let's see how Asia is grappling with a currency fixing for the PBOC, which was a little bit less than the market had anticipated. Avril Hong is in Singapore. Take it away.
Well, Manus, we are looking still this hour at the way the Chinese currency is faring because dollar yuan has moved past 730. So there are some signs that the currency is stabilizing. And our colleagues at MLive actually point out that we are potentially seeing that peak in the weakness in the Chinese currency because these risks about the Chinese economy might have already been priced in. Certainly, though, the debate rages on because despite Chinese authorities' efforts to kind of support the currency and to stem the fall, we saw in the past day that as soon as New York and Europe started trading, that slide resumed. So that's one to watch. Stock markets also underscoring the concerns continuing about the property sector. Let's take a look at some of the bright spots, though, because the internet sector is doing well in China. Baidu, Kuaishou among the names that are rising in trade after they beat market expectations on earnings. So fresh signs of that earnings recovery. The rest of the Asia Pacific keeping a close watch on the Nvidia earnings as well as higher yields. And they're also keeping a close watch on what China's economic trajectory looks like. Guys?
Avril, thank you for the updates. That's Avril Hong there. I want to get back to the narrative that foreign investors are ditching short-term dated U.S. securities and Treasury specifically, keeping the pressure on yields to climb higher. Comes ahead of the key Jackson Hole meeting, which gets underway tomorrow. Let's get to the regional implications with Arti Chatrasekar, Director of Investments at XAUUSD Asset Management. Arti, I mean, you've come up with a tactical playbook as we count down to Jackson Hole and sort of the regional nuance to it as well.
So we are still overweight on investment grade names as far as our fixed income portfolio is concerned. High yields have done exceptionally well year to date, surprisingly enough as well. We have seen spreads actually widen a bit in the last couple of days, but not enough for us to take positions back. So yeah, we're just sticking on to our playbook, which is basically play it safe, keep safe bets. Recession is around the corner. It's not about if it will happen, it's more a when story.
So, I like your line where it's duration is hard to resist, and this is the basis, isn't it? Whether you step in now at 4 1/3, or whether you believe that we're actually going into a world that Dudley has said, but you know, William Dudley said you're looking at 4.5% and a new higher regime. So, do you load up? I mean, what was it Bob Michael said the other day? He said you buy every dip. Are you of that narrative in duration?
It's hard to be neutral on duration when your real yields are at 2% positive. I mean, the more stronger the data is going to come out of US, the more aggressive Fed is going to be in tightening rates, and that actually increases your story on hard landing. So I think what is more important, Manis, is how the end game is going to play out. We don't know the path to end game, which is very murky and unclear. Yep. But the end game is going to be like 10 years would be lower than what it is currently, and that's what we're playing at.
In terms of some of the political developments, we're closely following the trip of the Saudi foreign minister to the BRICS summit. There's been a lot of speculation about new members, you know, Saudi Arabia or others from the region. How much of a game changer do you think that would be?
I think it's definitely very positive. From an economic perspective, if Saudi gets included, it gives access to new markets, new people, new business opportunities, and they're trying very hard to diversify their revenue from oil. So it's going to be super positive there. And also on the energy market, it adds a very new dynamic to the global energy market. Think of it this way. You have a strong alignment of the most powerful world producers and world's powerful, prominent consumers, India and China, all in the same, on the podium. It kind of gives you a very strong influence. They can influence the global trade, in my view.
Where they have got mega influences, of course, in the Treasury part in the US, and this is something that we covered last week, is the steady incremental sell-off by Saudi Arabia. I didn't realize this. Since 2020, they have reduced their holdings by 41%. I mean, this is staggering. It's only when you actually look at the data and look at the chart you begin to understand. Is that a transformation story? Is that a reallocation of resource story? Is that a de-US story?
I would not read too much in between the lines, but I think it's more reallocation of resource story. They probably have better opportunities elsewhere. As we know that Saudi is more about Vision 2030, the Expo 2030 decision that's going to play out in November. So they have a lot more investments, giga projects that's coming their way. So I think why not? I mean, it's definitely something which I think is they're doing in the right way.
I mean, it's been a sacred relationship, right? Because they would sell the oil, and then with the oil money, they would reinvest it into U.S. Treasury. So as much as it might be a reallocation of resources story, there is a relationship that is tied to that. But in terms of the oil underpinnings to begin with, in terms of supply and demand, because, you know, we've been talking about the Iran story throughout the morning, about them ramping up. Does that move the needle for you in terms of the equilibrium in crude oil?
I think we're constructive in the near term as far as the oil prices are concerned, mainly because there is a lot of pricing power by the OPEC, which is playing a significant role. And as long as that is there, I think oil is going to be positive. The headwinds for oil is obviously the US recession fear kicking in, Chinese demand getting weaker than expected, and more importantly, Saudi rolling back the cuts, which they eventually, I think they will do it in maybe a quarter or maybe in a couple of months. So those things could be detrimental to oil prices.
Okay, well, they're certainly in there with 1 million barrels a day of unilateral cuts, which has underpinned the market thus far. Arti, thank you very much. Arti Chatrasekar, in there, Director of Investments over at XAUUSD Asset Management. Plenty more ahead this morning on Daybreak Middle East and Africa, right here on Bloomberg.
When picking a commerce platform, you have two choices.
Oh, you piece of...
Or,
yeah!
That's the sound of selling on Shopify, online, in person, and beyond. Join the millions of businesses growing on Shopify. Sign up for a $1 per month trial period at shopify.com/YouTube audio.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Artificial intelligence has been a hot topic this year, fueling a rally in the share prices of many companies involved in the technology, as well as the fears about it replacing people's jobs. But through harnessing the power of data, AI can also help businesses and governments become more environmentally friendly, and IBM has software and solutions for exactly that. I caught up with Christina Shim, the global head of product strategy for IBM Sustainability Software, about just that and the work they're doing.
So our Watson X platform is our main AI foundation that is allowing for this gathering of data to make sense of the data with analytics and to actually action on that. So that's one piece. But, you know, ChatGPT is something that really pushed and catapulted AI into the forefront of everyone's vocabulary and mind. And to be honest, you know, AI is something that we've been working on for a while now, right? Our strategy for many years has been around hybrid cloud and AI. And so what we are doing is, in addition to what we're thinking about on the large language model front, which is where ChatGPT comes in, we're also thinking about it more broadly in terms of foundation models. So one of the areas, and we're seeing it all around us right now in terms of extreme weather and what the climate change is actually what we're seeing in terms of the ramifications of that. So one of the things that we're doing is working with NASA, and we're using foundation models to take all of their geospatial data that's relevant and actually create models around that that can help with understanding kind of the physical climate risk that everybody is facing today. So you take an agribusiness and what that means for their operations. You take a global retail company or, you know, their supply chain and what it means in terms of the raw materials that they're sourcing from and how they may have to think about their future business operations. You think about what's going on right now in terms of droughts and wildfires and how a lot of this could be leveraged for real-time or ideally proactive actions in order to address how they are affecting your business operations and the people in the community as part of that. So yes, absolutely, there's a lot of investment happening, but there's also things that have been going on for many, many years.
I mean, you mentioned the wildfires. The images are very, very potent in Greece. There's evacuations from various islands. Yes. So that point is very, very real. Do you think that we are in the foothills of understanding where, for example, IBM and NASA can bring that intellect, that technology intellect to bear on climate issues and warning signs, delivering warning signs for us to understand what's coming?
Yeah, absolutely. I think it's a combination of what can you do proactively to understand what's coming, and then what can you do reactively in order to address what's happening right now. So it's a combination of both, and both are equally important, right? We can't just think about what's happening in the future without also addressing what's happening real time in people's lives and to businesses today. In addition, we also have to think about, you know, this is only going to get worse, most likely, before it gets better. And so how do we make sure that in addition to what we're managing on a day-to-day front, that we are also thinking about reducing our emissions so that this does not get incrementally or exponentially worse in 3, 5, 10, 20 years, which is what, the technology that we're working on really helps to accelerate so that companies and organizations can reach the goals that they need to.
And that takes me to COP28, which will take place here in the UAE. Many people say to me in the run-up to COP28, it's about the finance menace, it's about the finance. Show me the dollars for the emerging markets in terms of delivering change. But for you, what would a successful COP28 be from an IBM, let's say, perspective?
So we're super excited about COP28. We think that there's a lot of really great energy, and we're excited about, what our role will be in the partnership that we will have with the COP28 presidency. I think what's really important from our side is how do we make sure that technology is an enabler and accelerator to achieve the change that's necessary faster, right? So I think previous COPs, there was a lot of talk around what we need to do, what the ramifications are if we don't get there, how to make sure that we bring partners together, and these are all very important. Now it's really about the action, right? How do we make sure that we have, to your point, the dollars that are needed to make sure that the investment is going in and that there's money where their mouth is from years past, that the partnership across government, technology, business, social sector, that these are all coming together in order to really enact the change in a faster way than previously. And so I think a successful COP for us is making sure that technology is part of that answer so that we can get to it faster, and that we're really excited about seeing how these partnerships can come together, and that and how IBM can be a part of that so that we can ensure that we're moving towards our goals collectively.
I mean, look, those are very admirable goals for you, ADNOC. I know that you're working with them and with the COP28 team, but if I said to you, it's tough times out there, people are cutting back on initiatives, how do you deliver a message of this is CapEx, OpEx that you must make, it is a must-have rather than a nice-to-have, because CFOs have got to make that hard decision. You're propositioning climate change and target and net zero emissions. How do you convince the CFO this is not something to cut back on, this is something to ramp up on?
Yeah, it's a great point. So I would say it across two fronts. One is that this is good for business, right? So CFOs and anybody who's really running a business thinks about what is the bottom line? How do I make sure that I'm engaging my shareholders, my stakeholders? So if you think about it even from a pure business perspective, it is good for business. It is good for the bottom line. You're addressing risk in your business. You're addressing vulnerable supply chains. You're addressing your employees and the communities in which your company is working and your business is operating. And these are all things that any executive, CFO, CEO, COO, all need to be thinking about as part of their business. So that's one. The other piece is that, at the end of the day, what we are all trying to achieve together is a combination of the purpose and profit mentality. And so we as corporate citizens, I would say, we need to kind of embrace the fact that this is part of how we think about our business going forward. And increasingly, globally, there are regulations coming out that are mandating that. So even if you don't want to think about it from a business perspective, which every responsible executive should, you have to comply with regulations in your land. And so one or the other, a combination of both ideally, you're having to address this from the business lens.
That was Christina Shim, Global Head of Product and Strategy at IBM Sustainable Software. Plenty more ahead on Bloomberg.
Hey, I love good food and good deals. And here at Food Lion, the freshness is like, what? And the prices are like, whoa. They don't call me the deal daddy for overspending.
No one calls you that.
Yet.
Names in global leadership are on Bloomberg.
When the dust settles, Israel will
not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Let's talk about China, because the country has publicly backed the expansion of the BRICS bloc while also using the annual summit to sound an upbeat note on the nation's economy. While President Xi Jinping skipped the business forum, he did attend a dinner with the leaders of South Africa, Brazil, and India, as well as the Russian foreign minister. Bloomberg's Jennifer Zabazaja joins us now from Johannesburg. So Xi's absence was notable given the deteriorating outlook for China. What more did we hear yesterday?
Yeah, Yusuf, I mean, a lot of people were anticipating this to be the time where President Xi Jinping was going to tout his economy because it was in front of the BRICS Business Council. But it was a little surprising not to see him actually there, especially because earlier in the day, we did see him attend that state visit with South African President Cyril Ramaphosa in Pretoria. So the expectation was that he was going to use this opportunity and this stage to give the message that, you know, his economy is, you know, the message of whatever he believes his economy, the stage his economy is at right now. But instead, we heard from the Commerce Minister, who was defending the economy, saying that the Chinese economy is resilient and saying that there is a long road ahead for them. But as you mentioned, we did eventually see Chinese President Xi Jinping appearing later in the evening at the leaders' gala dinner. But throughout the day, he talked about, you know, earlier in the day in Pretoria, he talked about the importance of the China-South Africa relationship. And so we are waiting to see whether or not he is going to make an appearance today. The leaders are expected to make more speeches throughout the day today and then release a joint statement later this evening. But his absence was very notable, especially considering the Business Council was an opportunity for him to deliver whatever message he wanted to deliver.
So I just wonder what other messages we're going to get. I mean, we've touched on this, haven't we, Jen, about Modi perhaps meeting Xi, etc. What are the other schedule highlights for today?
Yeah, Manis, we're at the moment, what we know is we're just getting a lot of statements right now from the Business Council. We also got a joint statement from the finance ministers of the BRICS countries. So today we're waiting to see whether or not there's going to be some action, because the concern leading into this summit was that we are just going to see a bunch of communiques announcing that everybody is in consensus over certain issues, whether that's economic issues or financial issues. But today we're supposed to get hopefully some substantive notes from the leaders about what it is that they're going to do to move forward. Potentially we hear something about expansion, but at the end of the day, that is the expectation. That is what's on the schedule.
Okay, Jen Zabazaja at the BRICS Summit. Let's see what today yields for us in Johannesburg. We said since the start of the show it's all about NVIDIA, whether NVIDIA delivers a shocker and a rocker. I mean, the stock's up 221%, but there's no doubt about it. Equity futures are off the lows. How long can the rising interest rate environment, the rising benchmark yields, the highest since, what, 2007 and 10 years, do and hold on to this equity market rally. There's the rates narrative, Yusuf. I wonder which number. I mean, you've been away for 10 days. It's a question of where you think we are after you walk back in. Larry Summers talking about a whisper number of 4.75%. Bank of America says prepare for 5%.
Yeah, so, I mean, the numbers are coming in from all directions. TD Securities talking about a pain trade at 5%. The financial institutions that are holding a lot of the assets on their balance sheet. If you just track the unrealized held to maturity and available for losses at banks, the pressure is firmly on. Today has been also a wider debate around whether China is going to sell U.S. Treasuries to fund its currency intervention. If they do so, is that going to lead to U.S. yields rising even further? U.S. 2-year there at 5.04%.
I like Bill Dudley's op-ed where he says, goodbye to the bull market for treasuries. The paradigm has shifted. Higher yields are back. And he says, look, the strong bond market, the bull market that you had since the 1980s is over. But, of course, he did have a pop at Morgan Stanley who said rates would be 2%. He said, you know, I think the title of their thing was Don't Be a Dud. Here's the GMM, Yusuf. I know that commodities is something that has popped for you on that. I'll have a look at the FX. But on the commod side?
Yeah, so we're seeing iron ore just pop up higher somewhat. I'm also looking at news out of Switzerland that the Gotthard Tunnel is open again for freight transport. This is one of the most important infrastructure links in Europe, and it had been offline, and freight had been piling up with transporters seeking alternative routes. So that's going to be very interesting to see that kind of normalization of flow.
Indeed. FX, you might be nervous about Huawei, but it's a blood red sky over London. So what comes out of Jackson Hole can have a pretty tremendous effect on the FX spectrum. We'll leave.
What VR use cases are there in healthcare?
Physical therapy. Like, let's say there was a patient that had wrist surgery. They would actually see in the goggles and visualize trying to catch the butterfly, right? Get that movement going in your wrist in a way that is enjoyable for the patient.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle. It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks are mixed after Wall Street's tech-driven rally peters out. Traders watch for results from chipmaker Nvidia and a first reading on Europe's economic performance for August. A Bloomberg scoop, global chip makers warn that Huawei is building a secret network of semiconductor plants to skirt US sanctions and boost China's tech ambitions. Plus, still not doing it. Nike shares drop for a ninth session, their longest ever losing streak, on concerns over sluggish Chinese spending. Well, good morning. Welcome to Wednesday, and you're seeing Treasury yields down in the Asia session. Investors have been positioning for the Fed to keep rates higher for longer, and more clarity on that should come over the next 3 days. The Jackson Hole Summit kicks off today. But the broader surge in yields has been the main reason stocks have declined over the past few weeks. And S&P's downgrade of banks yesterday and the Macy's earnings didn't help matters. But this morning, you are seeing US futures pointing to a higher opening. Traders awaiting Nvidia's results later after the US bell. At this point, these earnings really are basically a macro indicator on AI. The shares hit an all-time high yesterday and then turned lower. And that slide is a reminder that there's plenty of room for disappointment today. But let's get over to Bloomberg's Asia Markets Executive Editor, Paul Dobson. He's in Singapore, and he's going to tell us how all of this is faring in the Asia session. Paul, you've got Chinese stocks having a late rally yesterday, but back down today. What's going on there?
Yeah, morning, Lizzie. At least on the mainland, equity gauges are back weaker in China today. Yesterday, we had around a couple of hours later than where we are now. So your breakfast time, our mid-afternoon, we had a pretty big rally in Chinese equities, almost from nowhere. And, you know, it really sort of like set the chins wagging, was this kind of tacit support for the market. Our reporters weren't able to speak to anybody who really had any evidence to support that notion. Rather, people pointed to the technicals. And let's face it, Chinese markets have been very oversold already. That said, you know, the mainland gauges are down again today. And what our reporters are pointing to now is these outflows from the blue chip companies, which is, you know, the overseas investors are pulling money out of the biggest names in China. Some of their favored trades earlier on this year. We've seen 12 days of outflows in a row, which is a record streak. And, you know, amounts to several $1 billion as well. So signs of some sort of bigger capitulation or exit en masse by major global investors there. And there's a lot to be pessimistic about in those Chinese markets, and this kind of reflects that.
Yeah, the CSI 300 down nearly 0.9% now. Meanwhile, Paul, the yuan pegs come in little changed for a third day. Is this the PBOC drawing a line in the sand?
Everybody's starting to ask that same question as well, Lizzie, over here. You know, fixing it at that rate keeps it within the sort of range on the onshore market of 7.35, which has been identified as a level that authorities are particularly paying attention to. So setting that marker down there would indicate perhaps, you know, the reluctance for authorities to see the yuan go weaker than those sorts of levels. That said, we've seen a similar pattern of fixings before, where we've had several days where it's been round about the same level and then it's been allowed to weaken again. The quote that we have in the story says, you know, yes, it might be a line in the sand, but lines in the sand can often be redrawn. And so there's a sense of, at the moment, you know, kind of confusion or maybe interest in just how long and how committed to that kind of a level the authorities will be, or whether they will relent and allow further weakness, which, you know, would be in line with the economic fundamentals over the coming sessions.
And meanwhile, we're all waiting for Jay Powell's speech at Jackson Hole on Friday. Are you going to see shockwaves in Asia, perhaps?
Oh, boy, yeah. Well, we'll all have gone home by the time he starts speaking, so it won't be till our Monday morning, which is good news and bad news if you're a trader in Asia. I think what's been interesting that we've seen over the last 24 hours is if you look at the shorter-term Treasury market, people have been pulling back their bets again for Fed cuts next year. So higher for longer mantra is still very much kind of being priced in, and the probably the sort of consensus view on where Powell's going to try and land. That does give the opportunity for him to surprise to the dovish side and maybe trigger, kind of a bigger rally in treasuries. On the other hand, if he sticks to his guns, then you can see that, high interest rate environment trade continuing to play out for the rest of the summer.
Indeed, or maybe Nvidia will just overshadow it all. We'll have to see. Thanks to Bloomberg's Paul Dobson for that update on Asia markets. Time now for our morning roundtable. Today I'm joined by Jill Decies in Hong Kong, Maria Tadeo here in London, and Jennifer Zabasajja in Johannesburg. And I want to kick off with that Bloomberg scoop. Global chip makers have warned that Huawei is building a secret factory network to skirt US sanctions and boost China's tech ambitions. Jill, let's start with you. How much do we know about whether this network is funded by the Chinese state?
Hey, Lizzie. So this reporting is coming from us through the, this is a presentation that the Semiconductor Industry Association, it's a Washington-based global chip-making leadership organization there. This is a presentation that they gave to their members. And so what we're learning is that Huawei is receiving an estimated $30 billion worth of state funding in China from the government, also from their hometown of Shenzhen to build these factories. We're not sure if this is coming from cash incentives, loans, other types of incentives there. But just to put this in context, I mean, that is an absolutely staggering amount of money, Lizzie. I mean, this is almost as much money as, you see in the manufacturing incentives that were put into the U.S. CHIPS Act that was passed last year, which of course went to multiple manufacturers. So really, yes, the scale of the amount of money at play here to sort of help Huawei sort of boost China's chip-making ambitions, obviously a very, very major priority for Xi Jinping and the Chinese government. It's an absolutely massive amount of money.
Okay, but what can Washington actually do in response when it isn't clear exactly who's making what here?
Yes, that's a great point, Lizzie. I think that, obviously the sort of secretive nature of a lot of this kind of comes down to the idea that Huawei could be, potentially obscuring, its connections to some of these different facilities. Obviously, they've been targeted with U.S. bans for quite some time. I think at this point, the U.S. government has pretty much prevented Huawei from working with American companies on pretty much almost everything. So that's certainly a concern here. The U.S. Commerce Department says they're watching this. I think that a really key meeting to look out for is going to be next week when, Trade Chief Gina Raimondo visits Beijing. Hard to not think that this might be a topic of conversation at that point, especially as these ties between the U.S. and China, they're obviously trying to improve them and work together where they can. But as we know, I mean, the tensions between the world's two largest economies are certainly simmering there. And so it's, we'll have to see how that works going forward.
Well, yeah, speaking of the relationship between those economies, China's sluggish economic recovery, which of course we've been talking about every day, has now weighed on Nike shares. So they fell for a 9th straight session, wiping almost $13 billion off its market value. Jill, just give us some context here on how significant the China market is for Nike. This is its longest losing streak since the IPO in 1980.
Yes, sure, Lizzie. So look, I mean, China is obviously a very key growth market for Nike. And this is a $6 trillion consumer market. I mean, a lot of a lot of retailers are really trying to get into China, build business there. We've seen, issues within China impact Nike before, right? I mean, think back to 2021 when Nike was one of the companies saying that they were no longer going to use cotton sourced from Xinjiang, for example. We saw sales drop there due to some nationalist boycotts in China. I mean, there's a lot of, sort of push and pull here that impacts Nike. What I'd say right now, obviously, our big concern in China is that slowdown, is this pullback in consumer demand. We saw retail sales last month grow just 2.5%, a pretty major deceleration that was also pretty short of what economists were expecting. So I think as consumers don't spend money on goods, they're saving their money. That's, a continued concern with the economy that's going to impact Nike and other manufacturers, as we've seen.
All right, thanks, Jill Decies. And I want to bring in Jennifer Zabasajja now, because we're staying in China, but President Xi Jinping has attended the BRICS leaders' dinner in South Africa, but he did skip an earlier scheduled appearance at a business forum. Jen, we've been talking a lot about China's domestic problems. They've meant that this Africa trip has been only Xi's second international visit this year. What was the readout from his meeting with the other BRICS leaders?
Yeah, Lizzie, and it's not just his second trip this year. This speech would have been his first speech made internationally overseas this year. And so a lot of people were really anticipating, and especially because of what you and Jill just talked about, hearing from the Chinese president during this BRICS Business Council meeting. But instead, we heard from the Commerce Minister. But throughout the day, you mentioned we saw Chinese President Xi Jinping later on in the day at the Leaders Summit. Earlier in the day, we saw him meeting with South African President Cyril Ramaphosa, talking about the importance of that relationship. But a lot of people saying that this was potentially a missed opportunity for him to tout his economy and tout the strength that they believe the economy is in at this point in time. But we did instead hear from the Commerce Minister during that business meeting.
All right, thanks to Jennifer Zabasaja. And closer to home, we're going to get the Euro area composite PMI survey later today. That should give us a bit more insight into the impact of monetary tightening on the area. Maria, let me bring you in. What do economists expect from this data?
Yeah, what a word tour we just did. We went all the way to China. We ended up here. Look, I think for me, when you look at the PMIs, it's always a good way to get a sense of where things are, right? There's two things I'll watch out for. One is, do we get this continuation of a real weakness that we saw play out in July with the numbers that we get today for August? And then there's a perennial theme about manufacturing and services. We know that European manufacturing, this is in a downturn and it is in a recession. The numbers are not good. But what about services, especially in the context of summer? Obviously, we're still in August and that feeds into the service economy. So a lot of that will feed here. And of course, the ECB looks out for inflation. But we know that GDP and just the overall sense of the economy always plays into deliberations.
Yeah, where will it leave the ECB, given we have some expectations on what's coming?
Yeah, and that is a big question. And now it's an open field because remember, Christine Lagarde said we could hold or hike, and whatever we do, it doesn't set a precedent going forward. It doesn't signal a sequence. Look, it will depend on this data, but particularly to the CPI print. The core numbers, we know they care, and also we have a speech from the head of the ECB on Friday. So I think that will give us some signals to this speech coming up, well, this decision coming up in 2 weeks' time.
Yeah, maybe Christine Lagarde will steal the show at Jackson Hole. Great to have you with me on British soil, Maria Tadeo. All right, in terms of what's coming up today, as Maria says, we get those Euro area PMIs for August at 9 a.m. London time. Then at 2:45 p.m., it's the US Global Manufacturing PMI. That's expected to stay in contraction territory just for August. And finally, after the bell, we're going to get Nvidia earnings. The shares hitting an all-time high yesterday on optimism ahead of the results before turning lower. Of course, they've surged 212% this year. And in a sign of just how significant this report is going to be, the option market is bracing for a move of almost 10% following these results. So they could even overshadow what's said at Jackson Hole if we get a big beat or a big miss. But you can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Today, they lead on that anticipation of the Nvidia results. They've also got Huawei's secret facilities and Goldman pushing staff to return to the office 5 days a week. Terminal subscribers can go to DAYB Go. Coming up, we discuss the rates debate ahead of the Jackson Hole Summit and China economics weakness as well. That's with our MLive team. And we'll also have a check on the UK economy. We speak to former current economic advisor to the UK Chancellor, Anna Valero. That's coming up next. This is Bloomberg.
Like Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe. Now, for more on the markets, Bloomberg M Live strategist Mark Cranfield joins us now. We've got NVIDIA earnings in focus today, Mark, and we've talked about the potential implications for the S&P. But what about for China tech? Some are saying that NVIDIA could overshadow Jackson Hole.
It's a very big deal for the China market, that's for sure. The last time NVIDIA reported quarterly earnings was in May. And it was around that time that they came out with very good results, and the stock performed extremely well. And it flooded over into Asia as well. So the Hang Seng Tech Index, which is where most of the big China names are, Alibaba, Tencent, those kind of people, they're in that index. And that index then started to rally pretty well off the back of NVIDIA. And it had a very good run. It has since given up some of those gains, but it's still holding well above the levels we saw back in May. So certainly, NVIDIA has spurred a lot of interest in tech companies in the Greater China area, also in Korea and Taiwan as well. So it's really a very big deal for people watching the tech space in Asia. So they will be glued to their screens tonight to see how NVIDIA trades, because a good performance there will probably ensure we get a pretty decent move again the following day in the Asian markets.
And of course, when it comes to Jackson Hole, the key questions are how high the Fed takes rates, and then perhaps more importantly, how long they'll stay there. Do you reckon that Jay Powell's going to sound more like Alan Greenspan or Paul Volcker in his speech on Friday?
Yeah, I think Anna Wong in Bloomberg Economics has got this about right. I think it's more the Greenspan than the Volcker here. Greenspan was known as somebody who actually achieved, or while he was Fed chairman, the Fed managed to achieve something like a soft landing for the US economy. And Jerome Powell seems to be on that same path right now. It looks as though he's going to achieve that. Last year's story was all about beating inflation, but things have changed quite a lot. And the dynamics also are much more international than they were a year ago. He will be very conscious of the fact that the European economy is slowing pretty fast. The Chinese economy clearly is struggling and not performing as it should be. So these international factors will weigh on his thoughts a lot more than they did a year ago. So he'll sound a lot more cautious than he did. And if anything, he may start telling people he doesn't want the risk of the Fed over-tightening compared to last year when they couldn't tighten fast enough. So a very different scenario compared to 12 months ago. And by the end of the weekend, Christine Lagarde also speaks, and she'll probably sound a bit dovish as well. So by the end of the weekend, traders will probably get the idea that the major central banks in the world have done most of the heavy lifting they're going to do. They're not going to be cutting rates straight away. But certainly the path toward rate cuts next year is beginning to open up.
But of course, when it comes to treasuries, it's not just potential Fed policy that's affecting them, it's also the China currency action. I note the MLive Pulse survey this week asks whether if China dumps treasuries to fund its currency intervention, that's going to drive 10-year yields even higher. What's your take, Mark?
Well, if China dumps treasuries, yes, yields will go up higher, that's for sure. They would go everywhere. I mean, sounds like a bit of a disorderly movement. Well, I don't think, for one thing, the China authorities are much smarter than that. They wouldn't just go and throw bonds at the market in a disorderly kind of fashion and create big waves where yields rise very quickly. They're just not part of their strategy. More likely what they're actually doing is, because they're such a huge investor in treasuries, they will have maturities of bonds every month. And they're probably just not reinvesting the money that's coming back to them. Those dollars that come from the maturing bonds, they're probably using it for other things, probably directing it back towards their own economy where they need to be spending. So rather than actually selling bonds outright, they're probably just not putting money back to work. That in itself is quite significant because they are such an enormous investor in US treasuries. But for them to actually aggressively go into the market, sell treasuries and use those dollars to then go and support their currency, they probably don't need to do that. They've got many other avenues they can support their currency. They've shown it this week. They can tweak short-term interest rates in their own market to start to protect their currency. So yes, if they were to dump, of course yields will rise, but they're probably not going to do that.
Okay, thanks to Bloomberg MLive strategist Mark Cranfield. Now, we're going to get that update on Jay Powell's read of the health of the US economy on Friday, but the CEO of Kayne Anderson Real Estate Advisors says that markets are in for a rough road ahead. In an exclusive interview, he said he believes the US economy is going to experience a hard landing and that the Fed has already gone too far. Take a listen.
I'm still in the hard landing camp. I know we sort of have consensus around soft landing at this point, but I think the reality is that we've already landed. Core inflation is down to 3% plus. Core inflation minus shelter is down to 1%. So the reality, in my view, is that we've already landed and that the Fed will do what it has historically done, which is wait too late to get started and then go too far. And I believe that they've already gone too far. Now we'll see what Mr. Powell says on Friday. We'll see what happens in September, but we've got $17 million of household debt. We've got trillion.
That's a lot.
17 trillion of household debt, 12 trillion of mortgage debt, 1.6 trillion of auto debt, $1 trillion plus of student debt, which, as we know, is going to have to start actually paying on that debt sometime soon. So we're a consumer-driven economy. I think we're in for a rough road ahead.
Speaking of the rough road ahead, you look at the 2 year, over at 504 nearly today, and you look at a 433 handle on the 10-year, and you think about the trajectory of rates and what else has to break as rates stay this elevated. Where has the market not yet seen pain that you expect?
Well, you were talking about the regional banking downgrade. I mean, we're very close to that. We've got a big real estate debt business and a big real estate equity business. On the debt side, we've got $1.5 trillion of maturities coming in the next 18 months. Obviously, that's going to be difficult to do in an illiquid environment. Regional banks are a big provider of capital, or historically have been. Now private credit is coming in, private equity is coming in and filling some of that gap. But the reality is there is a lot of mortgage debt that has to be refinanced, and those rates are a lot higher. And I can tell you that a lot of those Excel spreadsheets just don't work.
Well, what about the default rates here? Because you have seen a few defaults start to hit the market, but nothing so crazy yet. Do you expect that there's going to be significant distress? And frankly, you've made your name in some of this real estate distress. At what point do you find assets that are cheap enough to buy?
Well, it's true. I say I've lived through 88, 98, 08, and the pandemic, and so I've been through a number of different crises. I don't see capitulation yet. It is a lagging indicator. I mean, the issue is that you've got a 12-month lag on shelter really being factored into the inflationary dynamics. So, I think we're going to see capitulation and prices that are interesting, and private credit and real estate credit get very interesting from a buyer perspective later this year and into the first half of next year.
That was Kayne Anderson Real Estate Advisors CEO and Managing Partner Albert Rabiel. Plenty more ahead. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He caught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Welcome back. Now, a new report says that more than a third of desks in offices around the globe are unoccupied all week. Workplace sensor provider XAUUSD found that only 14% of cubicles and desks are used for 5 hours or more each day. However, meeting rooms for 2 or 3 people are 90% full on average. Which brings me on to one of our most read stories on the terminal. We all know that Goldman Sachs has been aggressive when it comes to demanding that its staff work from work. Now it's ramping up its 5-day in-office policy, which it's had, of course, for a long time. But clearly, it's not happy with the current take-up rate. The nudge is becoming a shove, and it is back to business after Labor Day. Goldman, of course, has been a leader on Wall Street, especially on M&A and underwriting. So the question really is whether others will follow where it leads. Citigroup and JP Morgan have been tracking attendance, asking managers to enforce a 3-day in-office policy. Could 3 become 5? Coming up, Huawei is building a secret network of chip plants in China. We'll bring you the details of that scoop next. This is Bloomberg.
For a young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that you're waking up to. Asian stocks are mixed after Wall Street's tech-driven rally peters out. Traders watch for results from chipmaker Nvidia and a first reading on Europe's economic performance for August. A Bloomberg scoop, global chipmakers warn that Huawei is building a secret network of semiconductor plants to skirt US sanctions and boost China's tech ambitions. Plus, still not doing it. Nike shares dropped for a 9th session, their longest ever losing streak, on concerns over sluggish Chinese spending. Well, good morning. Welcome to Wednesday. And you're seeing treasuries steady in the Asia session currently. Investors have been positioning for the Fed to keep rates higher for longer. And we're expecting more clarity on that over the next 3 days because Jackson Hole kicks off today. This surge in yields really has been the main reason that stocks have declined over the past few weeks. An S&P's downgrade of banks yesterday and the Macy's earnings didn't do much to help matters. But this morning you are seeing US futures pointing to a higher opening. Traders, of course, are waiting Nvidia's results later after the US bell. At this point, they're basically a macro indicator on AI. You've got the options market bracing for a move of almost 10% on these results. The shares hitting an all-time high yesterday, then turning lower. But that slide is a reminder that there's plenty of room for disappointment today. I want to go over now to Bloomberg's Asia Markets Executive Editor Paul Dobson in Singapore for all how this is faring in the Asia session. Paul.
Yeah, so, you know, as you said, a little bit of optimism out there in the equity space right now, but looking across the market, it's not all a clear-cut picture of joy and jubilation. If you look at the mainland Chinese stock market in particular, we're still seeing some pressure on companies there. And in fact, sort of scrolling back a little bit, if you think about or look at the performance of those companies over the last 12 days or so, what we've been struck with is a continuing stream of international money flowing back out of China on the trade links with Hong Kong. So 12 days in a row is a record losing streak. And what's even more remarkable is the companies that we're seeing the outflows from aren't, you know, kind of like the buzzy ones, aren't the sort of hedge fund favorites or anything like that. It's the big firms, you know, that are the investors' favorites and typically the darlings. So that kind of gives you the impression that what we're seeing now with some of these outflows is people really giving up on that China story and looking to allocate their money elsewhere, which only spells more doom and gloom for the outlook for that market.
So that's the equity picture. The yuan peg came in little change for its third day. Is this the PBOC drawing a line in the sand, Paul?
It certainly feels like it could be. You know, I think that there's a lot of debate out there about exactly, you know, how strong the defense from the authorities is likely to be at these levels. We heard from people last week that 735 is a level they're watching very carefully. And what we're seeing with the fixings being sort of held in a relatively steady kind of band is that it's going to keep the market below that level with the permitted trading range. We also saw all those measures earlier this week to squeeze investors that were shorting the yuan in offshore markets. That was seen as something of a shot across the bows or a warning. And in fact, the currency has shown some more gains today with a little bit of the state-backed banks chasing it higher again. So maybe, just maybe, there's a line in the sand. But as our story sort of says, and we're quoting the analysts, they're saying lines in the sand tend to get redrawn. And if that market pressure emerges again, then maybe authorities will relent and take it back. But perhaps they'll be happy that they've at least slowed that pace of depreciation.
And Paul, I note that 10-year JGB yields have passed the point at one point when the BOJ last stepped in. Are there any murmurs of an intervention here?
Well, what I think is really interesting, I mean, obviously, you know, you can never say for sure when they might pop up or anything like that. And obviously, again, it's about the pace that they're really worried about. This time, the pace of the increase in the yields or the pace of the sell-off in the bonds market. We rose to 3.66% yesterday, which was the previous high. We were on alert in case there was some action then. None came, silence actually from BOJ. So, you know, either there's a sense of a little bit more comfort and complacency with the market at the current levels, or, you know, maybe they're waiting to catch the market at the next big move. It's also, remember, and well, you will have been talking about this non-stop, I'm sure, but Jackson Hole coming up at the end of the week, and perhaps authorities are a little bit less keen to be seen to be doing too much active interference and meddling in markets with that key meeting looming, and maybe we will wait and see what the outcome of that is before we see more action from the authorities there.
Okay, Paul Dobson, thank you. I want to go now to that Bloomberg scoop. The leading association of global chip companies says that Huawei is building a secret network of semiconductor fabrication facilities across China. And joining me now for more is Bloomberg's Debbie Wu. She leads North Asia tech coverage for us. Great to have you with me, Debbie. What do we know from the warning by the Semiconductor Industry Association?
So the Semiconductor Industry Association told its members in April that Huawei is building or acquiring a bunch of chip-making plants across China. And that includes 3 of these plants that's being built in Huawei's hometown of Shenzhen. And by building and acquiring these chip plants, that means Huawei now has the potential to get around U.S. sanctions that prevents it from securing advanced chips. So back in after the U.S. Department of Commerce put Huawei on the entity list in 2019, Huawei's access to TSMC and foundries have been cut off, and that means that they can only depend on other suppliers like Qualcomm to get some chips for their devices. But now by building plants in China, Huawei is helping itself and China to achieve their ambition of being self-sufficient in semiconductors, although they are not quite there yet, but they seem to be making some breakthrough in this case.
And of course, markets are on the edge of their seats awaiting Nvidia's earnings later. Could the biggest NASDAQ gainer so far go even higher, Debbie?
That's certainly a possibility. So investors will be keen to hear what NVIDIA says about the demand for its AI chips in the second half and beyond. At the same time, as its primary supplier, TSMC, indicated that it cannot supply enough of chip packaging capacity for these AI chips. I think investors will be interested in what NVIDIA has to say about whether it can get enough supplies.
All right, thanks to Bloomberg's Debbie Wu in Hong Kong. Now, China has publicly backed the expansion of the BRICS bloc, while also using the annual summit to sound an upbeat note on the nation's economy. While President Xi Jinping skipped a business forum, he did attend a dinner with the leaders of South Africa, Brazil and India, and Russia's foreign minister. Joining me now is Bloomberg's Jennifer Zabasajja. She's at the summit in Johannesburg now. Xi's absence was notable, Jen, given the deteriorating outlook for China. What more did we hear yesterday?
Yeah, Lizzie, and this would have been his first public speech abroad this year. So it was very notable that he did not make the speech, especially considering, as you mentioned, the Chinese economy has really sort of been in the global focus at this point in time. But despite that, in his absence, we did hear from the Commerce Minister of China, again, as you mentioned, sounding upbeat about the economy, saying specifically that the economy has strong resilience, tremendous potential, and great vitality. So in their mind, sort of putting to rest all the doubts that we're hearing globally about this Chinese economy. But we did see Xi Jinping appearing with Cyril Ramaphosa, the South African president, earlier in the day for the only state visit that we're seeing this week, talking about the expansion and how they support the expansion, which we know of, but also talking about how they don't want to see BRICS create bloc confrontation, as he said, and taking a thinly veiled swipe at the U.S., saying that, they do not want to support unilateral actions without talking about the U.S. And so that was a little bit about what we heard yesterday. We saw him later in the evening at the gala dinner with the leaders. And so today we will see whether or not he is going to make appearances throughout the day. The expectation, though, is, of course, yes.
So what else is on the schedule for today, Jen? What's the expected outcome?
The focus today, Lizzie, is really on BRICS and Africa. Of course, we are in the one and only African country within the BRICS bloc, South Africa, and we've heard Cyril Ramaphosa talk about his focus and his real strategy, and you know, he wants to make it a point to incorporate the rest of the African countries and see them also benefiting from the BRICS bloc. So we're going to hear a number of the leaders talking about that, talking about what that might look like, talking, of course, about value add and African countries getting benefit for finished products and not raw materials. And we will see the leaders throughout the day. And then at the end of the day, the expectation is that the leaders will sign a joint Johannesburg declaration, hopefully outlining some of the tangible outcomes to move forward and not just more statements. So that is what we're paying attention to today here in Johannesburg.
All right, thanks to Jennifer Zabasaja in Johannesburg. Coming up, we're going to speak to Anil Agarwal, chairman of natural resources company Vedanta Group. We'll be asking him about the impact of China's economic weakness impacting demand for commodities. So don't miss that key interview at 7:30 a.m. London time. Now, we've been talking about the Chinese slowdown, and it has been hurting Nike. Shares there have fallen for a record 9th straight session. That's wiped nearly $13 billion off the company's market value. Meanwhile, Dick's Sporting Goods, which is, of course, a major Nike customer, reported disappointing second quarter results. And investors are now looking towards Foot Locker earnings later today as another important signal for Nike. Let's also take a look at some of the other events we're following today. The BRICS Leaders Summit is underway in South Africa. President Cyril Ramaphosa will be delivering opening remarks. We're also expecting a joint statement. And we're watching out for a slew of European PMI data. That's coming throughout the morning. The Eurozone flash reading for August is due at 9 a.m. UK time, with the UK coming in at 9:30 a.m. Investors really have their eyes on this data to see whether pressures from higher rates will seep beyond the manufacturing sector. Then stateside at 3 p.m. London time, we'll get the July reading for US new home sales. And lastly, we're expecting Nvidia's second quarter results. Those are due after the bell. Coming up, Anna Valero from the London School of Economics Centre for Economic Performance will join us to talk about the outlook for the UK economy. She is an advisor to the Chancellor, Jeremy Hunt. That's next. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
DOJ or other authorities
could face bigger challenges. Britain's next.
Fed was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
This is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, another Bloomberg scoop this morning. Sales at Britain's small businesses have collapsed by more than a fifth over the past year. That's according to new research by accounting software provider Sage. Figures drawn from 85,000 SMEs are showing that firms struggling with revenues and profits and cash balances. I'm pleased now to be joined by an expert on the UK economy. It's Anna Valero. She's economic advisor to the UK Chancellor of the Exchequer, Jeremy Hunt, and a distinguished policy fellow at the Centre for Economic Performance at the London School of Economics. Anna, really great to have you back with me. Your specialism when advising the Chancellor, Jeremy Hunt, is economic growth. I mentioned the issues small businesses are facing at the moment. They really are the backbone of the economy. Are you worried about the impact of higher rates and higher inflation on economic growth? Do you worry that the Bank of England perhaps risks going too far to trigger recession in order to get inflation under control?
Hi, Lizzie. Well, it's great to be here. Of course, you know, any economist observing the UK economy at the moment is worried about our poor growth outlook. If you look at the recent data, there is some good news on inflation. There's also some bad news. So, of course, there's going to be this balancing act about how we can tame inflation while avoiding pushing ourselves into an unnecessary recession. Clearly, as you said, small businesses, they make up the vast majority of firms in the UK. I think it's over 99%, but also a large share of employment and revenue. So around 60% of people are employed in small firms. And the reality is that they've been through a series of shocks against also some quite difficult foundations. So if we take the foundations first, you know, since the financial crisis, many smaller firms face financing constraints, etc. There's this well-established long tail of less productive smaller firms that have challenges adopting productivity-enhancing management practices and digital technologies. What we've then seen, of course, is a series of shocks and challenges for such firms, which kind of culminates in this current situation we're in now. So change due to Brexit, obviously the pandemic, the energy shock. So this has really been hard for smaller firms. They often find it harder to adjust. It's harder to access external finance. It's harder to maybe have the skills in place that they need. So, you know, this is concerning for the UK economy. And of course, within smaller firms, there are different types of smaller firms. We tend to talk about the high growth economy as perhaps around 40,000 firms, depending on how you define it, that have high growth potential. They really want to grow, and often they might face heightened constraints in accessing that scale up finance during recession or during hard times. So there's kind of that side of it, the future large companies that can be a great source of dynamism and productivity growth in the UK, and kind of the broader group of SMEs that we really need them to be investing in digital technologies and the types of things that will make them more productive too.
You mentioned that mixed economic data. Yesterday, we saw the UK public finances data coming in, actually borrowing below official estimates. The Chancellor, of course, has got his autumn statement coming up around the corner. He said that he's going to cut taxes when it's affordable and that he's going to make full expensing permanent when it's affordable. What should he prioritise?
Well, I think I've said on this programme before, you know, I think it's this permanence of the full expensing, because what we really need now, rather than short-term politically motivated tax cuts, is targeted support for the things that we know we need to improve that supply potential of the UK economy and hence our productivity. Because really it's business investment that is the fundamental key to getting growth going again. We know that that has been particularly poor in the UK for some time. And there are a number of things we can do. Tax on its own or tax improved allowances for investment won't solve the problem, but it's definitely a key part of it. There are other things. We've seen the pensions reforms, and that's a great step in the right direction. Planning is a key thing for removing barriers to investment. And as I mentioned, the suite of issues around smaller firms and what's the appropriate support to be providing them.
You mentioned pensions in terms of growing the economy, but of course one of the other policies of the government is the triple lock, and it's increasingly looking difficult to afford it when it's got to go up by either 2.5% inflation or wage growth. Wage growth's hot. Would you advise the Chancellor to look again at affordability of the triple lock?
Well, I mean, there's a big debate around this. And, you know, obviously it's really important for us to be protecting the vulnerable in society. And that's something that this was designed to do. There are now issues, as highlighted by the OBR, in terms of the baby boomers, kind of the demographic trends of that generation. And then, of course, this high inflation environment making it more costly. So there are reasons from the perspective of sustainability of our finances for looking at that. Of course, there's massive debates around intergenerational fairness too, and how actually younger people, working families are often in poverty and perhaps not getting the same support. So, I think looking at this seems like the right thing to do, but whether a wholesale change to this at this point would be desirable or feasible is another matter.
And of course, one of the Prime Minister's top priorities is to cut the national debt. We have seen this downgrade of US debt by Fitch recently. Are you concerned that the UK could potentially see the same, given how much of its debt's index linked?
I mean, of course, that's always a concern, which is why it's so important for us to manage our public finances prudently. So I think, we've got strong institutions in the UK. We've certainly reversed a lot of the damage that we saw last year during quite a volatile time. I think that's why it's important now to be focusing on being really careful if there is any headroom, spending on something that can actually credibly be seen as expanding that productive capacity of the economy, getting the denominator, so the GDP part of the debt to GDP ratio, we just need to get that growing. That's really, really important part of the prospects and the outlook of the UK economy, which forms the basis of these types of ratings.
All right, Anna Valero, Economic Advisor to the UK Chancellor of the Exchequer and Distinguished Policy Fellow at the Centre for Economic Performance at the London School of Economics. Brilliant to have you on the programme. Thank you very much. There's plenty more ahead. This is Bloomberg.
Like Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back. Now we're going to get an update later this morning with Euro area and UK flash PMI surveys for August. And here in London, we have Bloomberg's Europe correspondent Maria Tadeo for a preview. What are we expecting, Maria?
Which is not a bearish and it's not a bullish sign. I'm just here as a technicality. It doesn't mean anything. Don't read too much into it. The thing
Hence the beige.
Yes, there's a beige. Exactly. That's a good point. Look, I think overall, when you look at the PMIs, there's three things that we focus on today. obviously with the full numbers is, do we get the continuation of that weakness that we saw play out in July, which is actually steeper, and it builds on the 3 months that we've seen where the downturn has been almost entrenched now in the European economy. So that points to a deceleration of growth. Then you look into the regions because, listen, we talk a lot about Germany, and obviously there's a reason for it. It's the biggest economy too. But when you look at the French PMIs, all of them are in contraction too. So this is not just a German story. And then we go into what has been this almost fascinating dichotomy between the manufacturing and the services, because we know European manufacturing, the numbers are obviously pointing to a recession. They're not good numbers. The German numbers for July, they were awful. I mean, I hate to put it in those terms, but they were really bad. Do we get services that saves the day because it's the summer and it's August, or actually that also cools? And then again, all of it put together, it points to this softening of the European economy.
And of course, we're going to hear from Christine Lagarde at Jackson Hole. How does all of this fit into the outlook for the ECB?
Yes, and that is a big question, of course. And I think the speech on Friday, this really kickstarts what is the period where obviously every European reporter, everyone that looks at the European Central Bank will be focused on every little word that we get. Look, where we left it is that she said very clearly it's about the data, and the data will decide which way we go. It's an open field now. They can either hike or hold, and then whatever happens after will depend again on the data. So to me, the two combined, they feed together. This is an interesting kickstart for that decision that will come up in a few weeks. And I think that speech will really set the tone for a number of things.
All right, thanks to Maria today. Brilliant to have you with me in London. And I just want to take a last little preview at the Nvidia earnings, because we're expecting them after the bell in the US. Really could overshadow Jackson Hole if it's a big beat or a big miss. The shares hit an all-time high yesterday on this optimism ahead of the results. Analysts raising their price targets, but then they turned lower. They have surged 212% this year. That optimism really based on the AI frenzy, and it could, of course, affect many other stocks in the S&P 500. So we'll keep a close eye on that later today. But up next, Markets Today is coming. This is Bloomberg.
In the middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yang1 yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV. For sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets Today. I'm Anna Edwards, live in London with Tom McKenzie. Mark Cudmore, our Markets Live managing editor, joins us from Singapore to take us through the market action this hour.
The cash rate just less than an hour away. Here are your top headlines then. US and European futures pointing higher. That's as markets stand by for tech giant Nvidia's earnings and Fed Chair Jay Powell's speech at the Jackson Hole Symposium on Friday. A Bloomberg scoop, a global chipmakers association accuses Huawei of building secret facilities in an effort to skirt US sanctions on the Chinese company. Plus, President Xi backs expanding the BRICS as meetings are underway in South Africa, while the group also discusses shifting away from the dollar.
From BRICS to China tech, there's lots to talk about when it comes to the geopolitics and global politics. Welcome to Markets Today. It's just gone 7 a.m. here in London. It is a lot later in Singapore. Mark is with us from there as ever. Those are the headlines, Mark. What are the markets saying to you?
Good morning, Anna. Good morning, Tom. It is a happy August Wednesday out there. The dollar's a little bit softer. Risk assets are generally doing well. Interesting enough, metals are really starting to do well. And I think we're starting to get a slight turnaround, very, very slight turnaround, perhaps, on the China narrative. But I wouldn't want to call victory too early on that one.
Well, indeed. It was really interesting to see as well, Mark, one of the best read stories of the day. I know you've been looking at this as well in terms of the foreign flows out of some of those blue chip stocks in China. What, just over $9 billion US worth, a record run, about 12 straight days. So foreign investors, certainly, in terms of the sentiment around China, negative. And I just wonder if that's a paradigm shift. As we look at these futures, though, to your point, the mood is changing a little bit more broadly in terms of the upside. Yes, across the bond market, it seems that there's a bit of a holding position ahead of Jay Powell's speech on Friday. Not a big surprise on that front. Futures, though, here in Europe, pointing to gains of 0.3%. You had a little bit of upside coming through across European stocks yesterday. Of course, the tech rebound in the US ran out of steam. We'll see if that gets another lift with those Nvidia numbers later today. FTSE 100 futures, you're still just below that 7,300 mark for the FTSE 100, but looking to add 16 points at this stage, up 0.2%. And over in Germany, the DAX, 15,808, a gain of 0.4%, and the eco data as well. We're going to get PMIs out of France and Germany. Maria Tadeo to break down the context for us and that diversion between manufacturing and services. Let's have a look at how things are shaping up for US futures then. After, again, losses of between 4 and 0.5% by the end of the day on Wall Street. S&P futures now pointing to gains of about 14 points, upside about 0.3%. NASDAQ futures, 15,000, looking to add about 66 points, 0.4%. Again, very much focused on those Nvidia earnings, making up, by the way, about 3% of the S&P index. Mark, what is popping for you on the GMM this Wednesday?
I don't normally start with the commodities column, but I'm going to today because that's the one that's clear green across the board, and it's metals that are standing out. Steel, copper, iron ore, and because we work for an American news agency, aluminum, are all there on the commodities column, all doing well. What's the reason behind that? Well, yuan, top of the FX column, but not red today. It's green. Note that. The yuan is doing very well. The dollar is also soft. That's helping that story. And there's a general theme of a little bit of yield softness. I don't want to overstate that. Two-year yields are pretty much glued. US yields are pretty much glued to the highs. But we are seeing the back end come down a tiny bit. I don't want to overstate that. It's a pause in the yield narrative rather than really yields coming lower. But we are seeing, again, a pause in the dollar narrative, a pause in the yuan narrative. That's pretty good. We're mixed overall in equities, but do note mainland Chinese shares are still the weak link.
OK, Mark, let's talk about the markets in 3 minutes. And jumping off what you're saying there about commodities being strong, but driven by a pause in some of the themes that we've dealt with recently. I mean, does it make sense to see strong metals, to see a strong emerging market narrative when we've been talking about China weakness and strong dollar so much in recent weeks and days?
It doesn't make sense with the narrative that we've had the last few weeks, because the narrative of August has been, of course, higher yields, stronger dollar, weakness in China. As you know, I am in the camp that those themes are kind of a little bit overdone, a little bit overwrought, and I'm looking for a change of narrative in the coming weeks. And I think that if, we're already getting it ahead of Jackson Hole, but I think Jackson Hole is really set up for an asymmetric kind of risk reward in terms of getting a slight dovish surprise out of Powell because of the yield adjustment recently. And I also think, as I've emphasized a lot recently, that the China negativity is overdone. It's valid, but it's already in the price. And therefore, to me, the fact that we're getting this turn in sentiment does make sense with the way I'm viewing markets. Maybe it doesn't quite tally with some of the narratives of August so far.
Okay, maybe this is a bit of a pivot in that narrative as you describe, and that takes you to conclude that perhaps the dollar CNH has peaked for this year. On the other side of this trade, I see JP Morgan, UBS, Nomura all saying that the yuan will continue to drop. Mark, why do you think we're in a period where the worst is already priced in then for the Chinese currency?
Who's on my side on this trade, Anna? Oh, sorry, no one. That's the issue here. I do think you're off on the show yesterday, Anna, but Tom and I actually talked about this yesterday, and I threw out this idea yesterday, and of course I did get several viewers kind of going, that's just a completely crazy idea. And internally, everyone thinks it's crazy. On Monday, I sent an email out to my internal colleagues on my team and some other senior managers in China and FX going, what happens if dollar CNH has peaked for the year? And they basically all called me an idiot. Look, I do think that it is ripe for a turn in this trend. I think that the most important thing is the PBOC will not want to let dollar CNH break through the October highs of last year when they're clearly trying to defend it. That would show people that the PBOC have lost control of the narrative. They've lost control of the situation. And that would lead to massive capital outflows. Now, China's main problem at the moment is a lack of animal spirits, a lack of confidence. Companies aren't spending. People aren't investing. Consumers aren't spending as much of their money. They cannot afford to have a crisis in the currency on top of that. Now, what they've had is depreciation, because we're near the highs of last October in dollar CNH. But in the meantime, the broad dollar is more than 7% weaker. And so therefore, that has given the broad yuan depreciation. I think from here that there's a very much risk reward. The PBOC will not let dollar CNH go any higher. And I think we've got a risk reward for dollar to soften post Jackson Hole, or already maybe into Jackson Hole. And I also think the yield story is overdone. And put on top of that, China's negativity is just so extreme. I walk in every morning, I get a collation of China stories into my inbox, and almost every single one is negative, negative, negative. This is a market that cannot rally. This is a market that's broken. It's overdone.
Okay, there we are, Mark, with a lot to say on the yuan as ever. I guess maybe it comes down to whether you think the PBOC is just defending that a particular level, or if it's just about slowing the move. More on that, no doubt, as we go through the programme. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. Plenty of different views then on the Chinese currency on the Markets Live team, and all of their views on the Markets Live blog. MLIV Go is the function to use on the Bloomberg terminal.
OK, another element of the China story now, and a scoop from our team on the ground in China. The leading association of global chip companies has told Bloomberg that Huawei is building a secret chip-making network to help it skirt US sanctions. According to the Semiconductor Industry Association, the Chinese company is receiving an estimated $30 billion in state funding to build the network of facilities in China. Joining us now is Bloomberg's Debbie Wu, who leads our North Asia tech coverage. Debbie, what else do we know about this network and about Huawei's efforts to build out foundries in China?
So, trade group Semiconductor Industry Association told its members in April that Huawei is building or acquiring a bunch of chip-making plants across China and then it is supporting the construction of 3 chip plants at its hometown in southern Chinese city of Shenzhen. And with these efforts to acquire or build chip plants, Huawei is getting around US sanctions that force it to lose access to cutting-edge chip manufacture at TSMC since 2019-2020. And so with these chip plants, Huawei will now be able to help China and itself move toward the goal of being self-sufficient in the supplies of critical components, including particularly in semiconductors. So with this move, that shows that Huawei and China, despite tightening U.S. export controls and U.S. curbs, they are still trying to make some breakthroughs in the supplies of critical components.
And Debbie, good morning. Staying with chips, Nvidia is reporting earnings later today. This stock up 212% year to date, the sixth largest company in the world now. What are we expecting? It's clearly going to have an outsized impact. We saw this last time they reported, and it could have another outsized impact on markets.
That's almost for certain. So investors will be keen to hear what NVIDIA management says about the demand for its AI chips in the second half and beyond. But at the same time, we heard from their primary supplier, TSMC, earlier this year that the company cannot supply enough packaging capacities for these advanced AI chips. So I think investors will also be keen to find out whether NVIDIA can supply enough for its customers.
Debbie, thanks very much. Bloomberg's Debbie Wu with the latest on a couple of chip stories that we need to be across this morning. Let's take a look at some of the events that we're following today. Debbie was mentioning the NVIDIA numbers. That's clearly in focus. We'll also be focused on the BRICS Leaders Summit, which is underway in South Africa. President Ramaphosa will be delivering opening remarks, and we are also expecting a joint statement from those assembled. We're also watching for a slew of European PMI data throughout the morning. The Eurozone flash reading for August is due at 9 a.m. UK time, with the UK coming at 9:30 a.m. Investors have their eyes on the data to see if pressures from high rates will seep beyond the manufacturing sector. Then, stateside at 3 p.m. UK time, we will get a July reading on US new home sales. We'll have a conversation about the home sales market a little bit later in the programme. And lastly, we're expecting those NVIDIA numbers for the second quarter. Those results are due after the bell. So, Mark, we have to wait until after the bell for what is arguably one of the big events, well, not even arguably, one of the big events of the week, NVIDIA, ahead of the Jackson Hole meeting. But some people have been arguing this has a really big macro influence this time around. I'm also focused on those Eurozone data, the PMI numbers. Manufacturing last time came in at 42.7, incredibly low handle on the manufacturing side. But of course, as I'm saying, the focus is how much that seeps into services.
Yes, I think they are really the two big stories. Obviously, NVIDIA is very important. It's not been not my area of expertise. I don't really have any extra to add, but it is very important for the market, for both US stocks, the signal into the Asia tech sector, and the general kind of sentiment for the kind of AI hype around this year. But in the shorter term, absolutely, the flash PMIs are really kind of catching my interest. And remember, a big theme of this week that I think will be is people realizing how problematic Germany's growth is, and hence how problematic Europeans' growth story is.
Yeah, Maria Tadeo is going to break down that story for us in the next hour or so. I just think NVIDIA is fascinating. We're going to get BlackRock on in the next hour or so. In the second hour, Kerim Jadid, who's talking and focused on the AI trade and still thinks there's some upside to play there. So his views on the NVIDIA component in that is going to be really interesting. Eddie van der Walt of MLive, of course, a big gamer, has talked to us about the value of that company's GPUs. So it is a story that we're going to unpack and see how it filters across more broadly in terms of that sentiment around data centers that are linked to those AI chips.
Yeah, absolutely. Eddie talking about the high-end consumer demand, as it still supplies, as you say, Tom, gamers custom building their gaming machines. Something that
I don't know if Eddie includes himself in that high-end demand.
Well, I don't know about the high-end bit, but certainly the gaming machine.
He's a big gamer, yeah.
He is a man of surprises, Eddie van der Walt. So we thank him for his analysis. 4 things to watch around NVIDIA. Coming up on the programme, we'll talk to India's metals king in South Africa about global prices and New Delhi's plans at the BRICS Summit. Plus, Europe's largest economies released their latest flash PMI data, as we were discussing, giving a snapshot into the continent's economic well-being and the implications on the ability of the ECB to hike rates.
But up next, is the Treasury bull market on its way out? Bill Dudley certainly thinks so. We will tell you why. If you have any questions of your own for our guests, please send them to us on IB plus TV Go. Is Mark Cudmore right that maybe USD CNH has topped out at this point? You can also get more from the Markets Today team on the front page of the Bloomberg UK website or by typing TLive Go on the terminal. This is Bloomberg.
top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
On the next episode of The Circuit. It's still almost shocking how new you still are to this sort of being famous thing.
When I do, you know, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Welcome back to Markets Today. We still have around 40 minutes until the start of cash equities trading for this Wednesday morning, I should say. Tom has his morning must-read for us. Tom.
Yeah, Anna, look, I'm pulling out the piece, the opinion piece by Bill Dudley, formerly, of course, the president of the New York Fed, a contributor to Bloomberg Opinion, because what he is describing and his assessment is, of course, central to where these markets go, central to how you think about these markets. And this is his view that bull bond market from the 1980s has come to an end. He marks the fact that back in June, towards the end of June, he came out of an estimate that yields on the 10-year in the US would get to about 4.5%. That was at a time when yields were around 3.75%. And he got pushback, quite a lot of pushback. Morgan Stanley, for example, put out a report saying, don't be a dud, and said there was going to be a summer rally in bonds. Well, that has not come to pass. And Bill Dudley says, I'm sticking with my prediction. What's more, I strongly suspect that the bond bull market that began in the early 1980s is over. We have a chart, of course, year-to-date showing the yield run-up on the 10-year. Look, he breaks this down into three parts. He talks about R star, of course, the neutral rate. He puts that at about 1%. He talks about long-term inflation. He puts that at around 2.5%. And then the premium that investors will demand on that debt and on that investment at about 1%. Put all that together and you get 4.5%. Now, you can take and challenge any parts of those three components, of course. But what Bill Dudley is saying is that long-term, of course, growth and inflation are going to be the key drivers. But long-term, he says, the paradigm has shifted and yields are going to remain higher, Mark. And, of course, that, I think, is consequential for how you think, in terms of the debate, that remains live and how you think about positioning going forward.
Tom, I absolutely agree with you. This is completely a must-read. I'm structurally with Bill Dudley on this. However, I do think it's a slightly worrying time to take a victory lap just after we've seen yields climb in a straight line for 2 months and just ahead of Jackson Hole. He's probably structurally right, but this is probably the wrong time to publish that article. However, in the first block, we talked about how almost every single major name out there is bearish the yuan. And Anna highlighted that I am one of the sole bulls out there, but I'm not alone, because joining us now is Carlos Carranza, who's a portfolio manager at Alliance Global Investors. And I am very pleased we haven't just rustled him up off the street. It turns out he is sympathetic to the yuan view as well. Carlos, tell us, what are your views on the yuan and how does this play into your broader EM view?
Thank you very much. It's a pleasure being here. And yes, so essentially, it is true we have had some disappointing data in China. We've had systematic and consistently measures, for example, that failed to convince investors that this was enough. But the question is, are we really seeing a regime change now? Are we really seeing China going into a new paradigm in terms of GDP growth? And we don't necessarily think that we are there yet. We think that, for example, this devaluation that the currency has had is definitely, in my opinion, helping in terms of tracking GDP recovery going forward. And, but there's an interesting point to make. For those that are not necessarily that bearish in China and that may be willing to take the opposite stance, maybe not necessarily the CNY or CNH are the best positions for that. For example, some currencies in emerging markets have a much higher beta to whatever developments happen in China, namely Chilean peso, namely, for example, Brazilian real, which in our view, for example, may offer very interesting opportunities for those that are interested in positioning and perhaps taking a stance which is not obviously the consensus that is that we're heading into a significant slowdown, which we are already there. And one more point I will make before I pass it back to you, but the revisions in the consensus are already quite aggressive. The revisions in GDP growth downward, the sentiment, the main research houses on the street, everybody seems to be talking in the same direction. And sometimes when that happens, as investors, it's interesting if we should not think ourselves, well, isn't this going too far? And in case it is, well, the opportunity comes on the other side of the equation, in my opinion.
OK, so maybe the moves have gone too far. So your positive view on emerging markets then, Carlos, is including China, not despite China, or not excluding China?
It's a very good question. I would say the following. I think there are some markets in emerging markets that if you are willing to take a stance that the deterioration is already priced in, you want to be invested in. And maybe not China because you have higher beta to whatever, even China developments. We're definitely constructive on emerging markets. We think that outside China, as you probably mentioned, we have GDP growth resilience in Latin America, GDP growth resilience in EMEA emerging markets. And those countries or those markets may offer a very interesting investment opportunity if you are willing to digest that the news in China are there. But not necessarily perhaps the vehicle, in my opinion, would be Chinese assets. But other emerging market assets with high beta to China news, but that they also have better fundamental drivers.
I mean, that's the big if, isn't it? So and if you conclude that a lot of this is priced in to the Chinese markets, then you want to be playing it, as you say, through the Brazilian real or the Chilean peso, rather than directly through the Chinese currency. Mark, I just want to bring you in at this point, Mark. Do you agree with that take? Is that how you would be thinking about playing the pricing? I know you think that the action has been priced in largely across Chinese markets. Would you align with that take from Carlos?
Very much so, but just in your last kind of summary there, Tom, like, I completely agree with most of Carlos's view. I think Brazilian real is a brilliant way to play this in terms of great fundamentals, high beta to this story. It's got the commodity play, and it's got its own tailwinds as well, and it's also got a positive dynamic in terms of its current relationship with the US. Chilean peso, though, really worries me. I think that's actually the big weak link in LATAM markets. So to me, in fact, there's a relative value play of Brazil via Chilean peso there. But I'm curious, Carlos, given that we agree on these views, or to a large extent, the bigger picture view, how worried are you? Because this is what worries me, is the tail risk that we get reinflation in developed markets, that we suddenly get to the end of the year and the Fed goes, actually, we've got more rate hikes next year. Will that blow up the EM trade, or can it be more resilient this time around?
So I think inflation is going down. I think there's an evident deceleration trend in inflation in emerging markets. I think it's quite interesting, but the pace of inflation increases And the deceleration that we have seen going forward is almost in the same proportion and the same speed and in the same magnitude. So when it comes to inflation in emerging markets, the trend, in my opinion, is very clear. Inflation is coming down, it is decelerating, and if you look at the breakdown of the CPI baskets across many countries and emerging markets, you will look that it's not just base effects bringing inflation down, it's also food inflation, which was one of the key drivers of EM inflation. So, for example, just to give you an interesting statistic, about 30% of the spike in inflation was driven by food prices and close to another 20% by energy prices. Those two components of inflation, on average, in emerging markets are coming down steadily for CPI. So you have food inflation being less pressure, energy inflation being less pressure, and headline, and then you have, on top of all that, you have base effects bringing down. And some GDP growth deceleration, which also helps central banks in emerging markets to be able to cut rates and continue cutting. And I will make just this observation before stopping, but emerging markets have done a fantastic job when it comes to policy making. And back to Brazil.
Interesting.
Fun fact, when the Fed hiked 25 basis points in March, the first hike, Brazil had already done close to 1,000 basis points. So when it comes to policy making, Chile had done 650 basis points before the first
They were not behind the curve on the question of inflation.
They were ahead of the curve.
But when it comes to politics, though, and political risk, you can't talk about EM without political risk. Argentina was a big reminder of us, for us, on that front. Javier Milei is obviously in good standing to win the presidency. But you actually think that could be constructive for Argentine assets. This is a man who says, quote unquote, I want to blow up the Central Bank of Argentina.
Yeah. So, for sure.
Fair point. Justify yourself, Carlos.
Just briefly, Carlos.
So, there's one thing that we all, for those of us that have been following Latin America politics for so long, there's one thing when you are growing into polls and you want to say things to get press, to get attention, to get cameras. That's one side of the policy making. And then there's what you actually can execute once you are elected. And for example, I'm not necessarily saying that Milei will be the complete game changer, but there's already significant moderation.
I unfairly put that question to you just before the end of the show, or the end of the segment. Carlos, thank you very much indeed on all things EM from Allianz. Plenty more coming up. This is Bloomberg.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
For a young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides. that are not 100-0.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to Markets Today. We are 30 minutes from the cash equities open.
Here are your top stories. US and European futures point higher as markets stand by for tech giant Nvidia's earnings and Fed Chair Jerome Powell's speech at the Jackson Hole Symposium on Friday. A Bloomberg scoop, a global chipmakers association accuses Huawei of building secret facilities for production in an effort to skirt US sanctions on the Chinese company. Plus, President Xi backs expanding the BRICS as meetings are underway in South Africa, while the group also discusses shifting away from the US dollar. Plenty of geopolitics to talk about then and global risk. Tom, what does that, all of that add up to in terms of the futures picture this morning?
And futures in Europe pointing higher after some pretty modest gains yesterday. The losses, of course, across Wall Street towards the end of the day, the tech gains seem to peter out a bit. But across the European session, by the end of the day, at the top of the list, you had the likes of basic resources as a sector, but also technology. Bottom of the list, you had grocers, supermarkets, for example. So futures in Germany, the DAX looking to add about 51 points. Here in the UK, the FTSE 100 pointing up by 0.2%, so snapping those losses that we've seen across the UK benchmark. We'll see if that can maintain and be sustained. And gains of 0.3% looking to be added to the CAC 40. We are, of course, waiting as well eco data in terms of manufacturing and services PMI out of France and Germany. And that's going to be really important in terms of how the ECB thinks about the softness in Europe and how far to go with rates.
Yeah, absolutely. The euro a little on the front foot ahead of that, but partly to do with a little bit of dollar weakness. Let's talk about what's caught Mark's eye this morning then, Mark. And I know that the housing market sort of half reported for this week. We've got part of the housing story out the US yesterday, part still to come later on today. What struck you as interesting from the housing data we've received?
Yeah, we've got new home sales coming out later today, and there was a chart set around by Terence Holt on our TV charts team in the US yesterday internally that got me a little bit excited. My team in the US, I take no credit for this. The MLive team in the US have talked a lot about the housing market in the past year and about how it is not vulnerable. It is a resilient part of the market, and it's all about a supply problem, which is why there's such high prices. And it's nothing like the bubble in the 2000s, and people should stop making that comparison. This was a great chart to emphasize that point. This is vacancy rates in the US, and they're at the lowest in almost 70 years in the US, and just showing there's just complete lack of supply. So what are the implications from this? Well, first off, it's not a big vulnerability for the market as rates continue to go higher. There's been a lot of headlines about mortgage rates above 7% in the US this week, but it doesn't really matter at the moment. And also, many people aren't refinancing too regularly because they have long-term mortgages in the US. But there is a supply problem. You don't want to remortgage. You don't want to sell and move house and get a new mortgage at a much higher rate. So you stay where you are. So you're not selling your house. You're not moving out. And there's a lack of new houses built for all the people who want them. So it's not a vulnerability for the market. This is not like the housing crisis in the 2000s. But the other implication is this is a market that's going to stay expensive quite late into any growth slowdown that comes, and therefore it's going to remain a sticky inflation problem. And this kind of highlights the risk that we go into an environment that the Fed has to keep rates high even as growth slows down. And as you guys know, I think the US will probably start going into recession around the end of the fourth quarter of this year, but I don't think the Fed will be able to cut rates immediately, and this is one of the primary reasons why.
Yeah, really interesting, I think, Mark, as well, to contrast what's happening in the existing home space and the new home space. And as you say, we get another part of that story later on today. On existing home sales, we've seen those drop, as you say, 18%. Nobody wants to put their house on the market if they think the market is under pressure and they're not going to get a great price for it. But on the new home sales side, we've actually seen activity increase in the latest data by 18%. More on that to come later on today, as I say. So really interesting contrast, partly driven, of course, by people not wanting to put their properties onto the market. But then, Tom, this ties in from from Mark's perspective at least, this seems to tie in with what we were talking about last week and a little earlier on today around the consumer, around the US consumer, and whether we see a drop back in the consumer around the third quarter, which we're now in, of course, in the United States, because they've depleted savings from the pandemic.
Well, and look, you were the first one to flag this across our team in terms of the San Francisco survey on savings being depleted, and some of the retail earnings that come through from some of the big names in the US have suggested that people are starting to pare back their expenditure. I still think when we talk about these, the real estate market and mortgages, and look, Mark was pointing this out, the fact that in America you lock in long-term mortgages for like 30 years. I mean, I remember Alex Steele, our colleague in the US, gloating about the fact that she's locked in a 30-year 1% rate. As we all see, or many of us at least. Well, she might. Yeah. Our brokers dropping emails into our inbox saying it's time to reconsider remortgaging at the end of these 2 or 5 year deal. The UK housing market, of course, is different in that respect. And we've seen prices coming off and we've seen those rates going up. But you have that demand-supply factor as well. It's really important to highlight how these things factor in to these two economies, at least more importantly the US economy, as Mark has done.
Let's pivot to the BRICS story, because there's a lot to say there this morning as well. The BRICS summit is underway in South Africa, where state leaders will be discussing the use of local currencies, among other topics. Chinese President Xi Jinping publicly backed the expansion of the bloc, but India says it's wary of the group becoming a mouthpiece for Beijing. Bloomberg's Africa correspondent Jennifer Sabasaja joins us now from Johannesburg with a guest. Jen.
Yeah, good morning, Anna. I have Anil Agrawal here. He's the chairman and founder of Vedanta, and he is here on behalf of the BRICS Business Council representing India. Thank you so much, sir, for being here, considering all the hectic schedule that you have this week. So Anna was just talking a little bit about how leaders have really been honing in on this use of local currency to move away from the reliance on the dollar. I wonder, as somebody who sits on top of a massive conglomerate, what would that do for a company like Vedanta if you were to trade in something other than the dollar?
Yeah, this is the great move in the world. You know, what is happening, the total dollar domination will come down. The BRICS has taken that lead to make sure how we can trade to even within the BRICS country and other country. And that will happen. The way I can see it, not going to happen 100%, but it's going to start. It's going to start. Russia is ready to trade for the oil on the local currency. I'm sure other South Africa will be very comfortable. They have to see the balance because Russia and China will dominate in this. So other country to have the same, it has to be 60-70% at least trade-off.
So then what specific currencies do you think would benefit your company? And what's the timeline you think for sort of moving away from trading just with the dollar?
It's already started. India has started in the rupee trade, in the rupee. And I have a feeling that everybody was cooperating, everybody was thinking. And I have a feeling it is not a one-day job. But gradually, in few years' time, lot of things will happen where 30-40% dependency on the dollar will come down.
And I mentioned you're here as part of the BRICS Business Council. You had a meeting yesterday. What came about? Because a lot of people believe this is just about statements and declarations. I mean, what's some tangible outcomes that you had yesterday?
This is not correct. Prime Minister Modi was very clear that he's going to be $5 trillion economy. He has today, the world has a flavor of India. Is everybody would like to be connected with India. Is the largest democracy in the world. The government is a red carpet, not red tapeism, and is amazing the investment opportunity India has. Same thing. I was very impressed with the Lula, the way he was talking about investment into the infrastructure. He was inviting everybody to come and invest. China was a little bit defensive, but they were there.
Defensive about what specifically?
You know, because the way the world is talking about, and they were saying that we are very fair, we are above the board, we are looking for the investment. But that was, what they have done in last 10 years is very, very different. And I could see the Russian President Putin was very forthcoming. He was talking about the sanction, that a lot of sanctions are there, and even the people are getting influence in Africa, not taking their materials. So, very interesting. I think the BRICS summit will be better than G7, and 30 countries want to join BRICS.
Well, and I want to talk to you because you mentioned China, and your company is really reliant and focused on what is happening in China, specifically because of the commodities that are imported there. Can you talk about, we've seen a bit of swings with a lot of the key commodities for your company. What is your expectation over the next few months? I mean, there's a lot of concern about the sluggish recovery that China's having. What's your outlook, especially considering what we heard yesterday from the Chinese Commerce Minister?
No, there's a huge, I think I'm very bullish on the commodities, whether it's oil and gas, copper, zinc, iron ore, anything you talk about. The demand is there, not new productions are coming. India is of rich in the minerals and the oil and gas. China definitely a little bit slow down, but so many other countries. You see the Brazil, the way they're talking about. That you see the India, you're talking about. So many new countries are coming. The entire Middle East, is coming around, and they want to be. So there's not going to be any slowdown into the natural resource sector.
So you don't see further weakness down the road?
Absolutely no.
And let's just talk about, you're meeting with Prime Minister Narendra Modi right after this. Your company, Vedanta, has had a bit of a negative outlook specifically. You've been trying to shore up some finances for your own chip project. What is the message that you're going to convey to him when you meet with him? Are you going to ask for more finances?
Vedanta is a 1.5% GDP of the country. Anything we took over, we are in every commodity. We are in largest in oil and gas. In India, we produce copper, we produce largest aluminum, we produce largest zinc, we produce largest silver, ferroalloys. Anything you talk about in technology, we are optical fiber, system integration. We are putting up the largest, one of the best semiconductor and the glass company in India. And this is Prime Minister Modi's vision, to make sure, because that is tomorrow's oil. And they have selected me to do it. I'm sure it is not a smooth ride. And we have to go through this process. But we are fully committed. Vedanta is the company which is the largest taxpayer company in India, employ 100,000 people. We have a business in 5 African countries. We have a business in Zambia, which is...
Do you think then the downgrades that you've received recently are unfair, especially considering what you're saying?
They have to do what they have to do. But I can tell you there may be so many factors. But we all have to, developing country, has to go through this. When we used to go in a train, when they will say, no, please don't come in. So once we are part of $5 trillion economy, when this BRICS country are moving forward, there will be some headwind, and we have to take this. But as far as these countries are concerned, they are going to be developed country. They are going to be there, and Vedanta is the only company in India which so much diversified in natural resource. Also into the technology. So I have built this company, and I'm looking this company to be there for 500 years.
So you'll be speaking to Narendra Modi about this specifically?
We meet him all the time. We are there. We are his full supporter, and we are there, and there is no question. And we are here to... when I came here in 1918, he asked me, we have a strong relationship because of Mahatma Gandhi, because he started his movement here. Can we make an investment here? And trust me, instantly I said, I'm going to invest $1 billion. And we invested that money. We are the largest investor in South Africa, where everybody was going away. We invested $1 billion, giving 5,000 employment in the area where nobody will go in a really in desert area.
Right, and then just finally, because we have to wrap up here, Art, do you have any plans in the pipeline to restructure the company anymore, to sell any more of non-essential assets at this point in time?
Yeah, this will go on. We are looking.
Looking at what specifically?
But some of the steel sector, Vedanta will remain either number 1, number 2, number 3, or get out of the business.
Okay, and what's the timeline for restructuring? Are you looking at 2023 or?
Yeah, this year something will happen. We'll raise $7-8 billion by selling this asset.
Okay.
So we are looking for that.
Anil Agarwal, thank you so much for your time, considering all that you're going through. And Anna and Tom, I'll send it back to you.
Genza Basaja in Joburg. Thank you very much indeed. There you go, Mark. He's going to be around for 500 years. His business, at least, is going to be around 500 years. Maybe that's how long it's going to take to really shift away from the US dollar. The ruble, really? The Chinese yuan, really, given their interventions in the market? Your views, Mark?
Yeah, look, dollar's place as the world's reserve currency is not under threat anytime soon. People talk about de-dollarization. I think they misunderstand it. There is a very slow, long-term structural de-dollarization trend. The share of dollars in reserves has declined over the last 15, 20 years. We're below 60%. It was up above 70% in 2002. But it's gone through waves before. Now, what's most interesting is the waves in the last century followed the strength of the dollar. What's interesting is over the last 15 years, we've seen the share of dollars in global reserves decline, or particularly the last 4 or 5 years, as the dollar has been strengthening, which shows that genuinely people are slowly shifting away from dollar, but very slowly. It will still be the dominant currency in 10 years' time. What are your thoughts, Anna?
Yeah, well, even if we have doubts perhaps about the speed at which any process of de-dollarization might operate, it is really interesting to see a group like the BRICS, or certainly elements of them, asking questions about how the US uses the currency as a tool of extraterritorial influence and where that gives them reason for pause. That is an interesting dynamic to follow. And coming up on the programme, we'll get back to some of the European companies that could be on the move this morning, including Reckitt Benckiser. The company's CFO is leaving. They are replacing their CFO. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point!
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Welcome back to Markets Today. We still have around 10 minutes until the start of equities trading. The futures picture points a little bit higher this morning. Let's check in with the Markets Today team. Christine Aquino joins us from the Markets Today blog to take us through some of the stories they're following. And Christine, good morning. Your focus, of course, often on things more UK, but these global themes, such as the China macro story, have an influence. We're seeing a lot of global investors offloading Chinese blue chip stocks. What's the size and scope of that move we're seeing?
Well, Anna, this is a record run in terms of how long these investors have been offloading Chinese shares, and we've seen something about more than 9 billion or 900 billion of shares being sold by funds. And I think what's really interesting about this story, what we're seeing in China at the moment, is that it's really not just the troubled property sector, stocks related to that's suffering. It's really across the board, and these are very established stocks, right? You were talking about insurers, we're talking about China's biggest distiller, EV car makers, very established companies that are seeing the fallout from just overwhelmingly negative sentiment that's beginning to turn on China. And yeah, I mean, what started kind of in the property sector as worries there is very specific, is really now turning into more widespread negativity across the board.
Moutai, one of the ones being sold down, a massive company making this kind of throat-burning liquor. When it comes to the UK, Christine, small businesses giving an update on sales. Is it grim out there?
It is quite grim, Tom. And, I think it makes a lot of sense. Small businesses very much feeling the pressure of higher rates as well as higher wage costs that we know is going on in the UK. So what we're seeing really, sales down 20% at small businesses over the past year, cash balances, profits, all under pressure. And this is particularly important in the UK, right? Small businesses, very much the backbone of the UK economy. I think they account for about half of private sector turnover, 3/5 in terms of sales contributions to the economy. And so very much a worrying sign that a lot of these small businesses now struggling on several fronts.
Christine Aquino, thank you very much indeed. Walking us through some of the key stories to focus on this morning. You get more, of course, from Christine and the team on the front page of the Bloomberg UK website or by typing TLive Go on the terminal. Let's get to Joe Easton now with some of the stocks on the move from our equities team. Joe.
Morning, Tom. So we start with an interesting note this morning from Morgan Stanley on the banking sector, which highlights that the boost from rising interest rates is not yet over for firms in France and also the Netherlands and Belgium. Now, they upgrade their rating on SocGen. They go overweight that stock, having downgraded it less than a year ago. And they also lift their price targets on ING, BNP, and make ING their new top pick. However, they continue recommending that clients sell shares of Crédit Agricole, where the picture is less clear. Meanwhile, we're looking at Reckitt Benckiser after they confirm that Shannon Eisenhardt will move over from Nike to become the interim CFO after Jeff Carr steps down. This was first reported by Bloomberg in an exclusive yesterday, and we've had that confirmed in a statement. Now, there is a CEO change also happening as well amid a decline in volumes. We can see on the screen here that stock's struggled a bit over the past year, down around 15%. But analysts do remain bullish, given it still is one of the biggest dividend payers in the market. 16 buys, 0 sells, very positive there. Finally, I'm also looking at JD Sports in the UK. That stock fell 7% yesterday, dropping with Dick's Sporting Goods in the US, which slumped 25% and brought down Nike and a bunch of other sports retailers. Now, JD gets around a third of its revenue in the US. It's one of Nike's biggest customers and has been one of the big success stories in the UK market. We can see that drop there on a one-day chart. So we'll watch to see if that one recovers this morning.
Joe, thanks very much. Our equities reporter, Joe Easton. Now, another story, very well read on the Bloomberg terminal. I know it got all of our team's attention. Goldman Sachs with a really tough line on return to office. And Mark, I wonder how much this is to do with where we see tight labour markets and where we don't. In the financial services sector, we know we talked a lot about job losses, and therefore perhaps there's a shift in power away from the labour force and back to management. And it means that management can take a really tough line on coming back to the office 5 days a week. That seems to be the Goldman line.
Yeah, I think the fact that we're starting to see this, companies feel they have the ability to pressure people further, shows that maybe a little underlying softness is coming into the labour market. Those cracks might be starting to come. So I think this is actually an interesting, potentially early lead indicator for what's happening in the labour market. I don't know whether that sounds too tenuous to you, Tom.
Attendance still less than half of pre-COVID levels across 10 of the largest US businesses. I mean, I'm a big advocate for being in the office because I like being in the office.
Because
I can't
you don't
imagine.
have any choice.
I also have no choice. I can imagine being in my 20s, starting off my career, being stuck in a shared house with a damp room and a crappy laptop, having to go onto Zoom calls or whatever we were using in those days, rather than being in the office and going for post-work drinks. I mean, that would have been shocking for me.
Now we get to
But the narrative has changed. The culture has changed. So there's a risk for these companies, isn't it, when they drill down on employees and force them, compel them to come in 5 days a week.
See, now we know what gets Tom here every day, is it, don't we, Mark? It's the post-work drinks that really do it. Really interesting story on the Bloomberg terminal, if you have time to dig it out as well, about a shortage of desks. A dearth of so many desks, but a shortage of meeting rooms. I don't know if that's everybody else's experience. It can be mine. We will talk about the market open next. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City.
In London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
A few minutes to go until the start of cash equities trading. Welcome back to Markets Today. I'm Anna Edwards in London with Tom McKenzie.
And here are your top stories. US and European futures pointing higher as markets stand by for tech giant Nvidia's earnings and Fed Chair Jay Powell's speech at the Jackson Hole Symposium on Friday. A Bloomberg scoop, a global chipmakers association accusing Huawei of building secret facilities in an effort to skirt US sanctions on the Chinese company. Plus, President Xi Jinping backs expanding the BRICS as meetings are underway in South Africa, while the group also discusses shifting away from the dollar. Anna, the focus really on two main catalysts, those earnings coming through from Nvidia later today in the US, and of course the look ahead to Jay Powell.
Yeah, absolutely. And a lot of argument across the Bloomberg terminals about which is going to have more influence on markets. Right now, this is the picture across a host of assets then, Tom. We've got the MSCI Asia Pacific pushing a little bit higher. Kind of mixed picture, actually, when you dig down into the China story today. But we've got, and in fact, China going in the other direction on some of their markets. But the MSCI Asia Pacific up by 0.3%. NASDAQ futures also moving higher this morning. As we wait for the Nvidia numbers. The euro in focus. Wanted to point that out because of the strength we're seeing, a little bit of strength in the euro. Broad weakness in the US dollar, though, certainly a feature of the markets over the last couple of sessions after we've seen so much strength and that higher yield story. We're also bracing for the PMI numbers out of Europe, and that's going to be a big focus of this hour. We'll watch how the euro moves then from that 108.62 level. And this is the 10-year yield, Tom, 4.28% as we wait for Jerome Powell at the end of the week. Have we seen a regime change when it comes to global yield story, as we heard from Bill Dudley in your morning must-read this morning?
Yeah, you're still plus 5% on the 2-year, but yields, as you say, are coming in a little bit. The equities futures then pointing to modest gains so far, out 0.3% on DAX futures. Here in the UK, the FTSE 100 looking to get back to that 7,300 level, and over in France looking to add 16 points. Anna.
Okay, so that's the expectation. The futures picture looking a little brighter this morning, so we do see some futures. The futures were moving higher. The FTSE then out of the gates first this morning and is pretty flat. The Spanish IBEX up by 0.2%, so looking a little bit of rebound in sentiment this morning. We're taking a pause, it seems, from the higher yield story that we covered all of last week and some of the weeks at the beginning of this month. And so it seems that as we're pausing there, maybe there's a little bit more room for risk appetite. But the dollar, in keeping with that, the dollar is on the back foot, down 0.1%. The pound then a little stronger, the euro also a little stronger. We wait for that PMI data then, Tom, to come out across various European economies. As it drops this hour, we'll certainly keep across that. The CAC 40 then opening 0.3% to the upside, as is the German DAX over in Frankfurt. Tom, what do you see in the sectors?
There's a bit of an echo of yesterday across the sectors. Technology was one of the leaders towards the end of the close in Europe, and it remains in positive territory this morning, gaining 0.4% in that sector. Again, as we preview and look to those Nvidia earnings. Basic resources was also a gainer in the session yesterday, and today you're looking to add 0.9%. Construction also gaining 0.4%, retail 0.2%. Two sectors that pop out in terms of the downside coming through. Energy just down 0.1%, and financial services, in fact, just mildly turned positive. So really, the losses just coming through for energy. We continue to keep an eye on those negotiations in Australia around gas and LNG. But modestly constructive, modestly positive, at least so far in the session. Tech up 0.3%, construction up 0.4%.
Okay, so that's what we're seeing at the start of the European trading day. Christina Aquino joins us now from the Markets Today blog to take us through where we are. And we talked a bit about the China story. That has been weighing on risk appetite recently, hasn't it? But today we see quite a lot of risk appetite, Christine, then when it comes to European stocks. US futures point a little bit higher. Yields have been coming down as if we're all taking a bit of a breather as we wait for the Nvidia numbers and, of course, the Jackson Hole Symposium to really kick off. Those are going to be the key market-moving events. And we're just twiddling our thumbs, waiting for those things to happen.
Absolutely, and it feels like a classic August summer day, doesn't it, in markets? But you're absolutely right. I mean, it is a bit of a waiting game for a lot of investors at the moment. Jackson Hole, of course, very much the focus this week, along with Nvidia earnings. I mean, when it comes to Jackson Hole, really the question is, is the Fed going to sound a triumphant message on inflation, or are they going to remain cautious? I mean, we did see respondents to the Markets Live Pulse survey this week showing that no, Fed really has not accomplished its mission on inflation. It's done really well, though, but it's still going to have to keep going if it wants to keep those inflation expectations in check. And also this idea of rates staying higher for longer becoming very much entrenched for a lot of investors. In that survey, of course, that I mentioned, 80% of respondents saying that rates at the current level are going to have to stay for a little while.
And that ties into what Bill Dudley was saying and writing about in his Bloomberg opinion piece. I don't see Christina Aquino sitting there twiddling her thumbs. No twiddling of thumbs from Christina Aquino. On the front end then, the 2-year in the US just above 5%, but down just 1 basis point today, and the 10-year at 4.29. Yields coming in 3 basis points. When it comes to the UK, though, Christine, what is the resilience of this economy? We're looking, of course, for the eco data out of France and Germany later. To what extent is the UK diversified from that picture, or are we aligned with the softness that's coming through from the Eurozone?
Well, Tom, I think what really sets the UK apart is the resilience of the consumers that we've seen. I mean, that has been quite surprising. We've seen it come through in the GDP surprise numbers a couple of weeks ago. And, of course, being helped, again, by the record wage growth that we're seeing in the UK at the moment. And so that's really been kind of the backbone of, if not the softness in the UK economy, a little bit of kind of just holding the line, you know, and really kind of maintaining and keeping it from fully slowing down. But, you know, when we see kind of what's coming up down the pipeline, again, we're still facing kind of a wall of households needing to remortgage their housing costs. That's going to come through later this year. So we'll see what the impact of that is going to be. And then when it comes to businesses, again, as we spoke about earlier, small businesses very much under pressure. And the PMI is expected to very much reflect that. I mean, it's still going to be in expansionary territory, but just, you know, I mean, it's going to be the lowest reading on that PMI figure since contraction earlier this year. And so the momentum seems to be really slowing down at the moment, which is quite a worrying sign for the future.
Okay, so just to prove we're not sitting here twiddling our thumbs, we've also been watching the FTSE 100, which started the year really badly, but actually has seen the end of its longest losing streak since 2019. What a relief for everybody who's long UK assets. Christine, what do we make of this latest move?
Yeah, very interesting, Anna. I mean, I think what we really saw yesterday was kind of the revival of some of those more growth-sensitive sectors. Miners definitely leading that charge away from that 7-day losing streak that we saw earlier this month. Of course, that had a lot to do with the rebound in China yesterday, which may be sputtering now. So that's quite an interesting story to watch. And then, of course, I think, again, speaking of consumer resilience, we also saw a lot of real estate stocks leading that charge because, you know, we're in a situation now where as house prices fall, higher wages come through. Actually, housing might be a little bit more affordable. So, you know, that's something to watch as well as we see, you know, the housing sector unfold. If prices keep falling, is that actually going to be a silver lining for consumers, particularly those first-time home buyers that are really looking to get to the property ladder?
Okay, the FTSE 100 still down a little over 2% year to date. But to your point around some of those commodity plays here in the UK, basic resources leading the charge again as a sector up 0.9%, and iron ore and copper prices are higher in the session. Christine Aquino from our Markets Today blog. Thank you. You can get more, of course, from Christine and the team on the front page of the Bloomberg UK website or by typing TLive Go on the terminal. Joe, how are your movers looking?
Well, I'm waiting for them to come on the screen. There we go. That's very good timing. So Reckitt Benckiser up around 0.5 percentage point. Now, they've got a new CFO coming over from Nike. She will join to replace Jeff Carr, who is leaving the firm. That was reported by Bloomberg yesterday and confirmed by the company this morning. Ticking up about 0.4%. JD Sports, meanwhile, recovering some of that loss yesterday. It was down 7% following that move lower in Dick's Sporting Goods and Nike. I've just read Shore Capital's note saying that that fall in JD was unwarranted, given that JD is not so focused on outdoor sales, which is what Dick's Sporting Goods reported weakness in. So that potentially helping with that one. Glaxo here in the UK as well. They've reported some strong data from a shingles trial over in China. That pretty much priced in, expected to be strong. So that one pretty much unchanged. And then also in the UK, we had preliminary results last night from the FTSE's quarterly rebalancing. And Marks and Spencer's could be about to rejoin the FTSE 100 after a 4-year absence. They dropped out at the start of the pandemic, but have seen a big increase in food sales, and that could come back in. We'll get the final results for that in 1 week's time. So a very green and very UK-looking screen on the first one. But we'll also flip over and have a look at some chip makers. Nvidia, everyone's waiting for that big report out of the US today. That stock declined about 3% in the US yesterday, but had been rallying into the report. And options markets are suggesting there could be a 10% swing in the price of Nvidia overnight tonight. So we're looking at Infineon, ST Micro, Nordic Semi and Melexis. Pretty mixed picture at the moment. Maybe traders just waiting on the sidelines for that report. We'll surely see some movements if Nvidia moves a lot overnight tonight. Then we're going to look at the final screen, the ratings changes. Now, we mentioned a couple of these in stocks to watch. SocGen upgraded by Morgan Stanley, and that stock up 2%, a pretty decent jump for that one. They think that the interest rates boost will continue for the French lenders, and they recommend buying shares of that one. They're underrate Credit Agricole, but that one is still up around 0.2%. 0.8% at the moment in France. Elchem over in the chemical space, Morgan Stanley cutting that one to equal weight. They say that the chemical sector will continue to see earnings declines as the economy weakens. It's a key one exposed to the economic concerns at the moment. And finally, Rotork, that was actually the best performing stock on the stock 600 when I was at my desk a moment ago, up around 3%. They do specialty seals which go into autos, that kind of thing. Peel Hunt recommending people buy that one. They say the stock's worth about 385 pence a share, trading at 292. Lots of upside. And as I say, the best performer we've got this morning.
Thank you, Joe. Thanks very much. Joe Eaton from our equities team with a host of movers and for various reasons around ratings and around the FTSE reshuffle as well. Interesting to watch all of those themes. Let's take a look at some of the events that we'll be following in markets today. The BRICS Leaders Summit is underway in South Africa. President Ramaphosa will be delivering opening remarks, and we are also expecting a joint statement from the delegates. We're also watching for a slew of European PMI data throughout the morning. The Eurozone flash reading for August is due at 9 a.m. UK time, with the UK coming in at 9:30. Investors have their eyes on the data to see if pressures from the high rates will seep beyond the manufacturing sector. Then stateside at 3 p.m. UK time, we'll get the July reading for the US new home sales. So we had existing home sales yesterday. Today it'll be new homes component, which is actually showing a really different, divergent performance. And lastly, we are expecting the numbers from Nvidia for the second quarter. Those are due after the bell. And that, in the short term then, Tom, we're really focused on the PMI story, aren't we? We're going to get data from France, and we're going to get data from Germany this hour, then the Eurozone number at the top of the next hour, of course. That's important. But the Nvidia story is just incredible. The sixth largest company in the world, more than 200% rally year to date in that particular share price. It tells us a lot about so many different things. And the AI theme in particular, and the level of excitement, whether that can be sustained, whether it's priced in, whether it all lives up to the hype.
It also tells us a lot about how companies can just kind of retake the narrative, or at least start to dominate. I mean, let's be frank, how many people had really heard about, or at least knew much about Nvidia, what, 12 months ago, 24 months ago? Very niche gaming, GPU company, and suddenly it is the thing on which we hang so many of our hopes, expectations and fears, along with the Fed. My goodness, what a change in dynamic. But really fascinating around the AI play. Has that run out of steam? We're going to be talking to BlackRock, of course, get their views on that as well next couple of minutes. On the data front, coming through in 5 minutes, of course, in terms of French PMI.
Yeah, French PMI coming. Interesting, we've talked a lot about China, and one of the things we didn't mention, the numbers out of Baidu, so another tech name, of course, which is just waiting, actually, for approval of a sort of ChatGPT-like tool over in China, just emphasising the sort of race that's been underway there, and how China only, months, not years behind when it comes to those language models.
They are, absolutely, they are really central to China's play around ChatGPT style and like models, large language models. So really interesting on that front, but also really interesting in their more traditional part of the business in terms of advertising sales. It's a big search engine, and yes, the earnings came out stronger than expected. So maybe there's a little bit of resilience there in the Chinese economy.
Yeah, it didn't seem to help the Chinese stock market today, but that's a moving feast, as we know.
OK, coming up, we are going to get those European flash PMIs. They're going to start trickling through in about 4 minutes' time, as investors look to gauge the economic challenges facing the continent. We have the read from France next. Are we going to see continued diversification or divergence between manufacturing and services? Stay with us. This is Bloomberg.
Like Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Welcome back. This is Bloomberg Markets Today. We've got some breaking news coming through in the shape of French PMIs. We mentioned this ahead of the break. So the manufacturing number, we've seen weakness across manufacturing in the Eurozone. That's been the sort of longer-term story. And actually, we're seeing a little bit of relief there. Also, still in contraction territory, and still it is 46.4. So that's still a contraction number for manufacturing. But it's ahead of the forecast, which was 45. So are we seeing a turn there? Have we passed on that baton of weakness to the services sector, where we see the PMI number falling to 46.7? The forecast was 47.5, so dropping and coming in weaker than expected. Let us get a look at market thoughts around this and other things. Karim Chedid joins us, BlackRock's head of investment strategy for iShares EMEA. And Karim, I wonder, good morning, thanks for joining us. We're waiting, of course, for the Eurozone aggregate number. That's coming a little bit later on this morning in an hour or so. And we are expecting to see that the manufacturing sector is still under pressure, as it kind of was in that French number, and we're expecting to see that the services sector stays just in expansion territory. How does this fit into your narrative around European growth right now?
Yeah, so the data coming out of France just now is actually very interesting, because could we see at a Eurozone aggregate level a trough in manufacturing? You know, not only is it the French number a bit higher than the survey, it's also a bit higher than the prior number. We've had very, very weak manufacturing data to this date over the past quarter. Could we see a trough in manufacturing, but then also a leveling off of services? Because we've had that strong services, weak manufacturing until this point. But will that be enough? Even if we get a trough in manufacturing, it's still very weak. It's still contractionary. And then a leveling off in services. That, to me, paints a pretty weak mixture for Europe. So gloomy growth outlook for Europe. What does this mean for our ECB view and our duration view? Well, it means more comfort owning duration, because the ECB's already done quite a lot.
The ECB's already done quite a lot. We're going to get German data as well, and the expectation is that that number for manufacturing is going to come in at 38.8. So very soft indeed. To your point around bottoming or troughing, maybe Germany is in a similar picture. But you still think the ECB has done a lot, but your money would be in the camp of the doves at this point? There is a live debate in terms of how much more the ECB has to do. They're going to be raising again, presumably. What is the top level now? What is the terminal rate for the ECB at this point?
So we're obviously headed into Jackson Hole, and there will be a lot of speeches and comments to digest across Fed, but also other central bankers. We may be redefining a bit the terms, because what do we mean by dove versus hawk? Tightening is not only rate hikes, right? So we've already seen significant amounts of interest rate increases from the ECB. and from the Fed. But we're now in a second phase, as the ECB called it, as Lagarde called it in the last ECB meeting. So it's not just about whether there will be further rate hikes. It's also about how long they stay at the peak. That can be a form of tightening. Holding tight, which is how we call it in our mid-year outlook at BlackRock. Holding tight is also a form of tightening. And then also balance sheet reduction. So it's broader than just the interest rate.
Okay, so holding tight is a form of tighter rates. And when we look at what signals we might get from Jerome Powell at Jackson Hole, last year, when you look at the last 10 years or so, stands out as a bit of an outlier. We don't normally get a big move in markets and risk sentiment as a result of Jackson Hole, but last year we really did. Is there any sense that we could be vulnerable again on that front, Karim? Not because maybe the language will be that alarming, but because we've come so far in terms of stocks. They've done so well, certainly around tech stocks and those that are linked to that Fed outlook since the start of the year. August, a bit of a wobble, but since the start of the year, pretty strong. So does that leave us vulnerable to further hawkishness, even though we know that there might be hawkish messages from the Fed?
Yeah, I mean, we're at a very interesting juncture for policy setting, and the market backdrop is important. So as you said, August, there has been a pullback. Equities have dropped globally 5% this month, but that's coming from very high levels, lofty valuations, depending on which market you're looking at. Also flows, when I look at ETF flows, they have all but dried up in developed market stocks in August. We literally went from almost $40 billion of inflows in July into US equities to zero in August. That can't all be down to seasonals. Of course, in August, holiday trading, we see more amplified volatility.
So is it a pullback, or is it the start of a more sustained downward trend for stocks?
Well, there's definitely some risk reduction, but the point is that there could be further to go, which is why I think going into Jackson Hole, I wouldn't rule out a bit further, wobbles in equities, because we're still coming from pretty high levels and well-owned equity flows. So I'm looking with caution for equities.
Because if Jerome Powell gives the market the message he's happy with the way that rates have moved higher in recent weeks, could that be another source of negativity for risk assets?
Exactly, which is why I think we should think about the rate tightening in a broader framework than just, will he signal further rate hikes, will he signal re-acceleration? Because holding tight, acknowledging that the tightening that has happened is welcome, is a form of tightening in and of itself.
OK, Karim, thank you very much indeed. There's loads more we could talk to you about, but we've run short of time. I know you favour European banks, for example, and think that maybe around AI and tech longer term, there's still a play there. Karim Jadid, thank you very much indeed. BlackRock's head of investment strategy for iShares EMEA, setting us up really nicely for that Jay Powell speech, of course, on Friday. Coming up, Huawei is building a secret network of chip plants in China. We bring you details of our scoop. That is next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
The leading association of global chip companies has told Bloomberg that Huawei is building a secret chip-making network to help it skirt US sanctions. According to the Semiconductor Industry Association, the Chinese company is receiving an estimated $30 billion in state funding to build the network of facilities in China. For the details on this Bloomberg scoop, let's bring in Debbie Wu, who leads our North Asia tech coverage. Debbie, how significant is this? What do we know about Huawei's efforts to curtail some of these sanctions?
So the Semiconductor Industry Association told its members in April that Huawei is either building or acquiring a bunch of chip-making plants across China. And amongst those, Huawei is helping to build 3 chip plants at its hometown in southern Chinese city of Shenzhen. And by doing that, Huawei is now maybe able to get around U.S. curbs after it got blacklisted by Washington in 2019. So after that, Huawei's access to TSMC's chip-making capacity has been cut off. And now with this chip plants, it may be able to secure some chip supplies.
Yes, and it would do this by having the ownership of these factories given a different name under a different company. Debbie, I know that you're across the other chip news of the day, which is going to be, of course, NVIDIA reporting earnings later. What are we expecting?
So investors will be looking for comments from the management on the demand for its AI chips in the second half and beyond. And at the same time, NVIDIA's primary supplier, TSMC, has said that they cannot supply enough chip packaging capacities for AI chips. So I think we will want to know whether NVIDIA can supply enough for its customers.
Debbie, thanks very much. Bloomberg's Debbie Wu with the latest on NVIDIA and indeed the really fascinating Huawei story. And Tom, in terms of NVIDIA, they're really interesting to watch. The options market's been getting very excited about this, bracing for a more than 10% move in the stock price. And of course, informed by last time where we saw the whole market really taken off guard, caught off guard by the extent of optimism around the AI.
Yeah, the moves into those call options for NVIDIA. And the size and scope is really fascinating. 3% of the S&P now, and that 200+ % gain year to date for this company. Anyone focused on tech and AI is on tenterhooks ahead of those earnings. Coming up, expansion and de-dollarization. Those are some of the themes in focus at the BRICS Summit. We are live on the ground in Johannesburg. This is Bloomberg.
we've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
or other authorities.
Could face bigger challenges.
Britain's next.
Fed was going to keep raising
World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make a decision.
This is Markets Today. We're 30 minutes into your European trading day for this Wednesday. Here are your top stories. European stocks and US futures gain as markets stand by for tech giant Nvidia's earnings and Fed Chair Jay Powell's speech at Jackson Hole at the symposium on Friday. A Bloomberg scoop, a global chip makers association accuses Huawei of building secret facilities in an effort to skirt US sanctions on the Chinese company. Plus, President Xi backs expanding the BRICS as meetings are underway in South Africa, while the group also discusses shifting away from the US dollar. Tom, we'll get more on the BRICS story. We'll get an update from South Africa and that gathering taking place there shortly. So that's part of the conversation. A lot of focus on China this morning. We are actually quite positive, though, considering the things we don't know about tech and monetary policy, and will know by the end of the week.
It is more convincingly risk on, isn't it? There would have been an argument that maybe equity markets more broadly, would be in a holding pattern ahead of those two big announcements, or at least details and pieces of information that the markets need to feed into their decision-making. But yes, there is a more convincing risk-on move now across these equity markets, with the dollar softer, by the way, in the currency space and in the yield space and the Govy space. The yields are actually coming in. A bit of move into US Treasuries and other government debt. On the equities market then, across the benchmark, gains of 0.7% here in Europe. The DAX at 15,800, adding 102 points, gaining close to 0.7%. And in the UK, back above that 7,300 level for the FTSE 100, which again, year to date, down about 2.2%. It has underperformed. Is the tide turning for the FTSE 100, gaining 0.4%. Across your sectors then, let's do a flip of the board. The last time I checked, every single sector was in the green here. We remain focused, of course, on technology and the performance there, but basic resources as a sector has also performed well, with iron ore prices and copper prices being elevated in the session today. Look at utilities as well as a sector, traditionally part of the risk haven, risk off move sector, but today gaining 1.3%. Banks are also doing fairly well, up 0.7, 0.9 for food, and I'll bring you round to what's happening in tech. Just a gain of 0.5%, but building on that optimism of yesterday in the European session, and basic resources above 1%. OK, one energy, one sector in the red so far in the session. Energy just ticking lower by about 0.1%. And the data, the macro data, still coming through, Anna.
Yes, absolutely. The macro data is still coming through, and I'm just looking at the detail of it now. Let's get to the German story, getting the German PMIs. The German PMI still has a 3 handle, which is quite incredible in terms of weakness. This is the manufacturing side, 39.1. So that is slightly above the survey of 38.8, and goes to Karim Chedid's point earlier on about whether we're seeing a bottoming out of that manufacturing story in Europe. But certainly, just like France, passing the baton of weakness over to the services sector, the actual services PMI number coming in at 47.3. The survey 51.5, so much weaker than expected, into contraction territory, and we see movement in the euro. The euro was stronger ahead of this number, and it drops. We see movement in bond markets as well. The German bunds rising after the PMI missed, the 10-year yield dropping by 6 basis points. I'm very pleased to say Maria Tadeo is on set in London with us to take us through all the details and her thoughts. Maria, what do you make of this really fascinating set of data?
Yes, Hannah, and both, as you say, are in contraction, and again builds up to the 3 months that we've seen of declines, and it would now show that this is an economy that clearly is decelerating on the bigger picture of the euro area. When you look at the breakdown, and you alluded to this, to me it's very interesting. Obviously, the three are in contraction, as we see, the manufacturing, the services, and the comp for both countries, but the manufacturing beat on the survey, it's still in contraction, we should make that clear, but it did better, and that reverses what had been the trend up until now, where services was leading the way and manufacturing was on the fallback. But nonetheless, we should stress, obviously, the numbers are not good, and you see that reaction in the market, and it's an economy that clearly would point to a contraction.
Although the softness in services, given the linkages there to inflation, possibly good news for the ECB. You're seeing now bets, arguably, from these markets with the euro lower and money moving in to German debt and yields down on German debt, that maybe the ECB has got less work to do.
Yes, and that's a big question. And remember, when we left it in July, it's an open field. They can either hike or hold, and it will depend on the data. Well, there you go. You have the data, which, as you say, there's two ways to look at it. And I would be very curious now to get the Eurozone number in just a few moments from now. I think also that speech on the Friday will really set the tone for the ECB, because, of course, the window now for ECB speak is very tight, because then you head into the quiet period going into that decision in 3 weeks' time.
Yes. So there's a lot we want to hear from Jackson Hole, isn't there? From Jerome Powell and what he does to assets, but also from Christine Lagarde herself and how she interprets this data, what she makes of this, the sort of weaknesses and strengths coming through here.
Yes, and they will say we don't actually look at the economy as an indicator. It's not a dual mandate central bank. We'll look at inflation and CPI, and core CPI particularly. So that number will be interesting to watch. But obviously all of this feeds into the narrative and the conversation around the European economy. And remember, it was Madame Lagarde who said it will be all about the data. Don't ask me to go either way, hike or hold. It will be the data. So, of course, there you go. You have the first piece of data today.
Is the data, very briefly, Maria, is the data still more important than what the Fed does for the ECB?
Well, what she says is that we're not Fed dependent, and we look at the data. That is a standard line that she repeats time and time and again. Obviously, the two are closely connected, and I'll be curious to see what they talk behind the scenes, because they will surely do that in Jackson Hole. Also, I should say, Tom, 7:30 in the morning, you're talking about alcohol. I'm slightly concerned.
This is why we flew Maria today over.
What's this? Oh, this is a flashback to the last hour.
Go back into the office. I'm happy to be back in the office, but I'm not sure if I'm concerned, or maybe there's something we need to talk about.
I don't know whether I should mention... I don't know if I should mention what she was talking about on Friday ahead of the England-Spain game. Maybe I should.
Let's not go back there.
No, we won't go back there.
It says the correspondent who shipped over how many boxes of Rioja? They're sitting under the desk. I can see them there, Maria. It's always a pleasure to have you in the studio. Maria today, of course, breaking down those numbers and giving her finger on the pulse of the wine sales across Europe as well. Now, Beijing, this is a pivot, isn't it, has publicly backed the expansion of the BRICS bloc, while also using the annual summit to sound an upbeat note on China's beleaguered economy. Let's face it, the group will also discuss boosting local currencies and deepening bilateral cooperation. Bloomberg's Jennifer Dabasaja is on the ground, charting all of this for us at the summit in Johannesburg. Jen, Xi's absence then was pretty notable. He's meant to be giving this speech on the Chinese economy, or at least giving a nod to it. Pretty notable that he didn't turn up and he sent another minister in his place.
Yeah, and really because we did see him earlier in the day, Tom, at that state visit with South African President Cyril Ramaphosa, and this was an opportunity for him to make his first public speech overseas this year, and it was going to be in front of the Business Council, which, of course, as you've been talking about all throughout the show, could have been an opportunity to tout China's economy and sound the alarm, or excuse me, and talk about what they think is a better than expected economy. But instead, we saw the Commerce Minister stepping in and still sounding very upbeat about the Chinese economy, saying that there is a lot of room for growth and that this economy is going to be okay and it will be okay. But then we did see Xi Jinping reemerge later in the day at the BRICS leaders gala dinner. Today he is still around, and today really the focus is on what other partnerships we could see with China and some of the other BRICS countries that are here.
Yeah, really interesting to get Anil Agarwal, who you were speaking to earlier, the Vedanta chairman, his views on, he was talking about Russia being very forthcoming with its views. Interesting to see it at an international forum because it doesn't participate in so many these days. What's on today's schedule then, Jen, and what is expected to come out of this event?
Yeah, Anna, I mean, today is really a focus on Africa. I mean, that is the overarching theme for this BRICS summit. And of course, as South Africa is the only African country represented within the BRICS nations, President Cyril Ramaphosa has really made it a point to make this a priority for other African nations who are not a part of this bloc to still reap the benefits. So today we're going to hear the leaders talk about some other opportunities that they could potentially explore. We also have more than 36 African leaders who are here, and so we could potentially see more partnerships, more collaborations coming about, and more messages from these leaders about just how to shore up the global south and get their voices on the global stage more prominently focused. And at the end of the day, we are expecting the official declaration from this summit to come out. Hopefully we'll see some tangible outcomes from these leaders' discussions all day today, but that is the expectation for the end of the day today.
Yeah, okay, de-dollarization, something we talked about a little bit last hour. Jen, thank you very much. Bloomberg's Jennifer Sabasaja in Johannesburg across all of the themes coming through from that BRICS summit. Coming up on this programme, talks begin to avoid strikes at Australian LNG plants, which have sent gas prices surging this month. We will have more on that next. This is Bloomberg.
For a young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today, 42 minutes into the European trading day. So European equity markets moving a little higher this morning. And US futures, Tom, also high, up by 0.6% on NASDAQ futures as we wait for those NVIDIA numbers and we wait for Jackson Hole later this week.
And we were meditating on the macro data out of the Eurozone. France and Germany, you're seeing softness in services on that PMI data. And we were discussing with Maria today whether or not that changed the calculation for the ECB. Well, traders are making the bid right now. They're pairing those ECB wages around a potential next 25 basis point hike in September. Those wages now pricing that in at about a 40% chance, and money is moving into sovereign debt It's pronounced on the 10-year in Italy on BTPs, but also in Germany. The benchmark there, 256, a move lower by 8 basis points in terms of yields, 10 basis point move lower on BTPs at 420, Anna.
Yeah, so even if we are seeing the bottoming in the manufacturing story, if we're seeing that, and Karim Cherdid from BlackRock was talking to us about that earlier, we are certainly seeing a new round of weakness coming through in services, and that is what caught the market's attention. That's what led to that move, as you would say, in the bond markets, and to this sell-off you see on your screen now in the euro, down 0.25% from up around 0.2% ahead of that data. Now let's talk about what's going on in gas markets. Talks to avoid strikes at Australia's biggest LNG export terminal are now underway. Workers at Australian plants that supply about 10% of global LNG are demanding improved pay and conditions. The risk of disruptions to LNG exports from Australia has sent European and Asian gas prices surging this month. Let us get the thoughts now of Bloomberg senior energy reporter Stephen Stapczynski, who can take us through the implications of all of this. So what's the latest on the possible Australia LNG strikes then, Stephen?
Right now, the company's Woodside, the operator of Northwest Shelf, Australia's biggest LNG plant. Woodside is in discussions with officials that represent the unions. Those talks began earlier today. It's not exactly clear exactly how the talks are going. Woodside CEO yesterday, Meg O'Neill, said that there had been progress, but there were still areas that needed agreement, and it was more complicated than just hiking pay. Now, when are we expecting a deal? We're expecting something, maybe not a deal, but we're expecting an update at least later tonight, whether there will be a deal or not. If there isn't a deal made today, the unions have threatened to go on strike as early as September 2nd. That's after their 7-day working day notice, which they have to give in Australia. So later tonight, we'll know whether or not there's a deal and whether or not strikes will move forward into early September.
Stephen, how does China play into the demand around LNG, into how things are shaping up in that space?
You know, China is very important in the LNG market because China basically so far this year will be the biggest importer, and well into the future they're going to be the biggest importer. But they've also been the biggest wild card because their rebound in imports hasn't been as high as some people were expecting. They were expecting, with the COVID restrictions being removed into this year, that you would see Chinese LNG demand really surge. And while they have jumped up from last year's levels, they're still not at 2021 levels. So actually, the less LNG that China takes, the more fuel can go to Europe or other markets that also need that LNG. So it's providing a nice balance. If Chinese demand were to bounce back later this year, a Shell executive told Bloomberg earlier today that that could create a difficult situation for the LNG market because suddenly things get a lot tighter. On top of that, you got the risks coming out of Australia. And then, of course, something that everyone watches, weather. If it's cold in Europe, things also get a lot tighter. So there's quite a bit going on, and the risks are beginning to emerge.
OK, so factoring in the weather and factoring in China's demand, and we, of course, continue to watch those talks that, as you say, could run pretty late tonight. And, of course, Stephen will be across all of that for us. Our energy reporter, thank you, Stephen Stapczynski, joining us out of Singapore. Now, the China slowdown has been hurting Nike, whose shares have fallen for a record 9th straight session. That's wiped nearly $13 billion off the company's market value. Meanwhile, Dick's Sporting Goods, which is a major Nike customer, reported disappointing second quarter results. Investors are now looking towards Foot Locker earnings later today as another important signal for Nike. So the biggest downturn, longest stretch of selling that we've seen since it first listed in about 1980, Anna.
Sticking with the US retail story, the retail giant Macy's slumped 14% yesterday after it gave a weak outlook for the current quarter. Simone Foxman has more from New York.
Mostly disappointing day of earnings for U.S. retailers. Macy's, the country's largest department store, seeing sales fall, but not quite as much as anticipated. What analysts were really worried about, however, was the amount of promotions that it's had to do to get stock off its shelves. Also talking about how consumer credit cards, its consumer branded credit cards, seeing more delinquencies than anticipated. Now, this whole story not helped out by Dick's Sporting Goods, the athletics retailer, which has seen a really strong couple of years. years, frankly, since the pandemic, but seeing weakening consumer demand and also talking up the impact of theft. One bright spot, though, continues to be the housing market. Lowe's, the home improvements retailer, seeing stronger than expected earnings, not as big of a sales decline as initially anticipated, talking about how contractors' demand is still strong, people still going out and improving their homes, and maybe even more importantly, building new homes amid a very shortage of supply in the U.S. market. A mixed picture overall as analysts continue to digest the slew of retail earnings coming in last week and this week. In New York City, I'm Simone Foxman, Bloomberg News.
US retail firmly in focus then, and we saw, Tom, some read across into European markets, and was that warranted from the Dick's Sporting Goods story? Certainly. That weighed on JD Sports just yesterday. It was down by more than 5% at one point. Actually seeing a bit of a bounce back in a sort of better environment today. We are up by 1.8% on that particular retailer. So people instantly joining the dots and maybe then questioning whether that's sensible or not.
It's challenging, isn't it, for these retailers who have come through the supply chain constraints, those higher input costs, and kind of managed that. Then they have to deal with inventories, and now they're having to deal with the slowdown in China. So we look to Puma and Adidas, of course, who also have exposure to the Chinese market. But it's an interesting one to look ahead to, and Foot Locker later today will show us whether or not there's further pain ahead for Nike.
OK, coming up on the programme, volatility in the world's biggest bond market has finally caught the attention of investors who have been driving up stock markets all year. We'll get more on that next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Happy Wednesday. This is Markets Today. We are 52 minutes into your European trading day. You're seeing gains across the European benchmark of about 0.5%. US futures pointing higher as well by about 0.4. It is risk on across these markets, at least for now. The data, though, is looking a little bit grim here in Europe. The Eurozone's two largest economies are deteriorating pretty quickly, with services following manufacturing into a slump. Flash PMIs for August show worse than expected contractions in private sector activity in both Germany and France. At this point, let's bring in Denitsa Teskova, our cross-asset reporter in Milan. Denitsa, we're seeing a move then in these markets. The data seems to have taken at least some investors by surprise, with yields lower across sovereign debt in Europe and the euro slightly softer currently at 108. Were they taken by surprise? How do we read this data in terms of the market reaction?
Yeah, in terms of market reaction, in stocks, we have seen little impact. Of course, the bond market and currency markets are reacting more heavily. If we look at German 10-year bond yields, they're the lowest in a week. And if, most importantly, if we look at the chance for a rate hike in the next ECB meeting, those chances are falling. Which kind of comes at a big difference in what's happening in the US, where we saw this huge treasury sell-off, and we actually saw expectations about more hawkish Fed in the coming meetings. So we're seeing that kind of trend and big gap between European economies who are seeing more growth risk and US economies where central banks could be could turn more hawkish, grow even wilder.
Yes, and before we saw a drop in yields in the US and this very notable drop in yields we're seeing in Europe today then, Denitsa, driven by this data, we had seen yields going higher, hadn't we? And I wonder how that is factoring in. That's been the conversation all of, well, for much of August, hasn't it, about a higher yield environment, very much driven by the Treasury's side, so over in the US. But what does that mean for investment flows into bonds versus equities?
Yeah, indeed. Going back to the US, yields there are still hovering around the highest level since 2007 if we look at the 10-year Treasury. And when it comes to valuation metrics, if we compared equities and bonds, now we're seeing fixed income being the most attractive against stocks in at least 20 years. If we look at equity risk premium, which is a good way to measure profitability of the S&P companies, it's the lowest since 2004 against bonds. And we've kind of seen all those valuation metrics impact flows. Last week, there was outflow from stocks for the first time in 3 weeks, while people were buying fixed income and specifically treasuries, which is kind of a reversal of the trend we've seen for some time. And again, investors were going back to money market funds to really lock those super high bond yields they're seeing at the moment, despite the bond sell-off. And money market funds have actually seen a record inflow this year compared to 2020, and year to date, it's 925 billion. So, of course, the most important thing remains what happens to the Fed next, and we have the Jackson Hole on Friday, so we may see where rates are heading next.
Well, before we get to the Fed, we have, of course, NVIDIA earnings later today. Does NVIDIA continue to allow tech to push through this high yield environment?
Yeah, so something we've seen, an interesting trend this year that's kind of very different from what we've seen in 2020, 21, 2022, is bond yields haven't been as much of an impediment to the tech rally. If you compare value and tech stocks, which traditionally are very tied to bond yields, and tech stocks are suffering when they're rising, this year actually tech stocks overall have done very well. And even in those coming weeks when bond yields were really rising at a rapid pace, tech hasn't suffered that much. And we saw the rally on Monday. There hasn't been that much of a stress for tech stocks going there. Of course, if bond yields don't matter that much, then fundamentals become important. And this is where artificial intelligence, which we've been talking so much about, comes back in the debate. Because this is why investors have been so optimistic about tech stocks. And NVIDIA earnings today is a big part of it, and everyone is looking towards those earnings. People are expecting higher revenue, so we're going to see if that hype can continue.
Thank you very much, Denitsa. Denitsa Teskova, cross-asset reporter over in Milan. And this time tomorrow, Tom, we will have had those numbers out of NVIDIA. That's what many are waiting for. Will they give us that steal? Will they be able to justify the rally of 200% plus year to date? It's going to be fascinating. Plenty more coming up. Stay with us. This is Bloomberg.
So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, you know, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs. This is Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
A very good morning. Welcome to The Pulse. I'm Manish Krenny in Dubai. Here's what's coming up on today's program. The Eurozone's two largest economies are deteriorating quickly, with the services PMI missing estimates in both France and Germany. We'll bring you the figures for the full euro area in just a moment. Europe opens higher as markets stand by for the tech giant Nvidia's earnings and the Fed Chair Jay Powell's speech at Jackson Hole Symposium Friday. Plus, the leaders of China and South Africa call for an expansion of BRICS and discuss shifting away from the dollar. Is it verbiage or more? We're live to Johannesburg. Very good morning, warm welcome to the show. It's getting slow and tough in France and Germany, but on a pan-European basis, I can tell you it's fairly turgid. This is what we've got: 43.7 on the manufacturing services, 48 services firmly in contraction, 48.3. But the Eurozone composite now drops to 47, dragged lower. So 47, the estimate out there was for 48 approximately. So we are just looking at a downturn in services activity beginning to shrink. The composite 47, the estimate was 48.5. Germany shrinks at the fastest pace since the start of COVID. So immediately we have this verification of the long variable lag from the ECB. It's manifest most quickly in the currency. We'll talk more about that with Maria in a moment. German services imploding and firmly in contraction. The euro down by 0.25%. The composite in Germany, it's the biggest drop. It's the lowest level in 3 years. And again, the positioning around the map, the equity market in slightly green territory belies something much more malevolent. The positioning in European equities, the shorts are mounting. The question you need to ask yourself, are you going to have a Minsky moment in the China market? And what would the reverberation, the second round effect, be for Europe? Cities say that there are no longer any long positions in Europe. That is the risk that you have. Euro dollar is down by 0.25%. We'll talk about that in a little bit more detail in just a moment. So again, this is really going to put pressure on the ECB and the talk of another rate hike later in September. Across the asset pool, this is what you've got. You've got goodbye bull market in the bonds, according to Bill Dudley. More on that op-ed in a moment. Yields come back from the 2007 high that we had. We are, of course, focused on where we close in the bond market. That's going to be one of the most hotly focused areas in the long end and in the short end at 2s. JGBs, I put them in there because we have, again, seen a rally, a 9-year high in JGBs. We're hitting intervention territory, everybody. This is where the BOJ typically steps in to convene a consensus that rates will not get out of control. The dollar is back to flat. What is said at Jackson Hole will define the narrative for risk and for the dollar going forward. And I popped in a little bit of Brent because we're never far from a barrel of oil where I live here in Dubai. Third day of a drop in oil. Iran is pumping like Billio. They're going to boost their output by 50% over the next 2 years. And I can tell you, in terms of the August production, 3.4 million barrels a day by the end of this summer. The capacity for Iran is at around 3.8 million barrels. So there we go. Services are in contraction in the euro area. Germany's under pressure. The context to Maria Tadeo to break the numbers down. We knew it was bad, but it's getting worse and quite quickly. Good morning, Maria.
Good morning, Manus. Yes, because when you look at the numbers that we just got from the euro area in particular, the euro area would now be in a contraction. That's not a surprise. What it's interesting here, as you say, is the velocity, but also the intensity, because the PMIs that we get today, they build to the 3 months of weakness that we had seen already play out. So that would point now to a real deceleration in the European economy that is becoming entrenched. Now, what is also interesting, Manus, again, as I say, the PMIs for the euro area in contraction, the 3 different indices are also in contraction. But when you do the breakdown to Germany and France, and they matter because this is the biggest economy and the second biggest economy in the euro area, what's also concerning is the implications for services, because we also see that they take a tumble for the month in August. So if you had any hopes that perhaps the services would come to the rescue, let's say for the German economy where manufacturing is dismal, well, this data today would dissipate that.
But I can tell you what, they're all either in Ibiza or Mykonos. So let's not, I suppose we could actually sort of say that the services component, I tell you, 800 euros for a beach bed, 800 euros for a beach bed and a bottle of, what is it, Blushing Angel up in the north coast of Mykonos. That just shows you the reality. Apparently it's empty. Now let's focus in on the French and the Germans, because maybe everybody's in Ibiza. Talk to me about the pace of the slowdown in France and Germany, Maria.
Manus, we can go to Mykonos, we can go to wherever you want, but you pay. If that's the amount of money we got to pay for one umbrella, you're paying. I'm not doing that. Manus, look, again, when you look at the, and I mean this, look, again, when you look at France, Germany, obviously the 2 big economies, you put it all together with the euro area, what it points here is to this trend that we had already almost anticipated of slower growth in the euro area. And of course, that has ramifications for, of course, the European Central Bank, and we're waiting for that speech from Christine Lagarde on Friday in Jackson Hole. The reality is, when you look at the reaction in the market, traders are actually paring back bets of an ECB hike in September, perhaps suggesting the monetary policy or the forces of monetary policy are now beginning to really trickle.
Yep, you're certainly going to see those swaps traders pare back. I have a factual correct, Maria. You like this. It's not Whispering Angel. Sorry, it's not Blushing Angel, it's Whispering Angel. 800 euros and bid for a beach bed at a beach in the northern part of Mykonos. Maria, we'll leave you with that thought. Maria Tadeo, breaking down the data, which is a little bit less frivolous than a bottle of wine in Mykonos. Nanette Heckler Feiderb is the EMEA CIO, Global Head of Economics and Research at Credit Suisse. We can get back to the inflationary pressures of Whispering Angel in just a moment. That's bad data by anybody's measure. Does this kind of data unnerve you?
To be honest, it's consistent with what we had expected at the beginning of the year. In fact, we were a bit more pessimistic than what we turned out to revise data over the course of the first quarter. But by and large, we are in the orders of magnitude of what was to be expected this year. Europe is going through a tough time of adjustment in terms of its industrial production. It's very much tied still with the business cycle in China. So when there is disappointment over there, then it reverberates, and the inflation is biting. Your example of the beach bed in Mykonos is a good one. It's just simply the fact that a lot of the services are now starting to be inaccessible for a number of households. So not too much of a surprise. However, as far as the equity market is concerned, I would just caution of making the direct link here, because really a very important part for European equities is what the euro continues to do. If the euro was being able to weaken a little bit, it would perhaps dampen the downside for European equities.
And here's the conundrum for Lagarde as she sits at Jackson Hole tomorrow with Powell over the next couple of days, which is how to walk that tightrope. The market is trimming back its rate hike bets. Now we're going to move into the Trichet debate narrative, which is to go one more hike could be the killer hike. It's not going to be the killer hike, but to go further and do another rate hike could potentially begin to morph into a policy error.
I mean, look, the ECB, together with a number of other central banks, really has to make up its mind in terms of the key priorities. The key priority over the medium and long term is to ensure price stability, because eventually that is the bedrock for sustainable growth, for sustainable consumption. So I am pretty sure that over immediate growth concerns, there will be really the priority of maintaining and bringing inflation back, especially on core groups of prices, into a more comfortable territory.
With inflation, with growth under pressure, services taking a drubbing, some of the wealthiest families in Europe are inextricably linked to what happens in China. Now, we'll spend more talk on China in just a moment, but from a wealth perspective, where are the pockets of losses? You have a new wealth report this morning. How under pressure is Europe in that perspective?
Europe, together with the United States, with North America as a region more generally, has seen in 2022 of some of the largest losses in household wealth. This is what our global wealth report for the year 2022 that we just published recently is clearly demonstrating. A number of factors are playing into that, Manus. One is obviously what financial assets did over the course of 2022. This was not a very good year in terms of financial assets, and has been a particular source of loss for the US households. And in Europe, it's not only been financial assets, but also what the currency did against the US dollar. Everything that we measure is in US dollar terms. So when a currency weakens, then also the wealth expressed in US dollar tends to shrink.
Well, I'll tell you, two families that aren't too worried at the moment is Bernard Arnault, 183 billion on Richco. It's a great function. You can find the richest people at the touch of a button. François Bettencourt, 86 billion. I look a little bit further down. Wow, François Pinault, 40 billion. There you go. That's just a hint of the wealth on the European dashboard. Nanette, stay with me. We have a little bit more work to do. Nanette Heckler-Fayeb, the CIO, Head of Economics and Research over at Credit Suisse. Coming up on the show, well, Huawei is building a secret network of chip plants in China. We bring you the details on the Bloomberg Scoop.
Like Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman brothers, the world might well look a lot different today.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
It's the conversations that matter, the insights that you need right here on The Pulse with me, Manus Cranny, in Dubai. Let's bring you a Bloomberg scoop. The leading association of global chip companies says Huawei is trying to skirt U.S. sanctions. Washington-based Semiconductor Industry Association says Chinese tech giant is receiving about $30 billion in state funding. Now, what are they going to do? They're going to build a collection of secret chip fabrication facilities right the way across China. Bloomberg has reached out to Huawei for comment. The U.S. Commerce Department says it's monitoring the situation and is ready to take action if necessary. Well, the global investment community has been shedding China's blue chip stocks at a record pace over the past 12 days. Overseas funds have offloaded nearly $9.5 billion in assets. Concerns are mounting about a deterioration in the economic outlook. My guest this morning is Nanette Heckler-Freiderb. She is the EMEA CIO, Global Head of Economics and Research at Credit Suisse. So, Nanette, we've just spent some time talking about Europe and the malaise that it's in, but it's absolutely tied to what's happening in China. When you see this kind of velocity, and I use that word because it's a pretty big quantum, over $9 billion in 12 days have been dumped in China, sort of A-rated assets. Is this the beginning of a much bigger and more oppressive move and flight of capital, excuse me?
I mean, look, China equities within emerging market equities as a group is obviously a market that has big volatility. So these type of moves can occur anytime. They can be motivated by a conjunction of factors, some of them more structural, others are more cyclical. At the moment, I think there is not much surprise to associate with these type of moves, but I would generally say China equities, emerging market equities have these type of volatilities. And what goes down in that fashion can also go up very quickly. We have simply to understand that this is a very different market than European equities or US equities.
So look, every day we're coming in and we're checking bond prices and real yields. We're talking about 10s at the highest since 2007, real yield the highest since 2009. JGBs, let's see where we go with intervention. But I'm drawn to what Bill Dudley had to say. Goodbye to the bull market in Treasury bonds. We're heading for a paradigm shift. Higher yields are back, and he strongly suspects that the bull market that began in the 1980s is over. Where do you come down in this debate? I grew up in a world of where rates at 5-6% were really quite the norm. And a mortgage rate of around 7% was high, but affordable. Of course, property prices have changed. Do you think that the 1980s are a bygone era of Duran Duran, or are they something which are coming back to life and will endure in the 5% club for yields?
From what I see in terms of investor behavior and how they're reacting to those type of yield levels, they continue to see it as an opportunity. So I guess that a number of investors would expect that the extraordinary inflation rates, which have actually been the source of the yield increase that we saw very clearly this year, is going to recede, and yield levels might not be the same attractive levels down the road in 12 months, in 18 months. So I do take from that a certain optimism that we have at the moment extraordinary levels still of inflation that are leading to interest rates which are really quite attractive. But to your point, is inflation going to come down to the levels that we were used to in the recent past? They're probably not. So a paradigm shift with respect to the inflation regime is certainly there.
And here's the conundrum, isn't it? Whether you, as an asset manager, as a corraler of assets, say, yes, I will take 4.2, 4.3%. I'm not going to wait for this next dip to 5%. Do you think that duration hunters are active? I mean, we're waiting for this closing level on the 2 years. There's some pincer moment levels there. The last 15-year high that we saw was about a 5.07% on March 8th. That was before the bank failure crash. That's at the short end. Do you think we should be nimble in building duration into our portfolios more aggressively right now?
I think it much depends on the regions, Manus. If we are dollar-based, I think that investors have already started to add duration after, a first half of the year where a lot has been concentrated, a lot of flows at least have been concentrated into the short end of the curve, into money markets. And that has made a lot of sense. But now that everybody is putting their heads around the possibility that in 2024, the Fed might actually cut interest rates by maybe a total of 100 basis points or so, there is a point of shifting a little bit away from the money markets and adding gradually duration. Is that a point of doing it all at once right now? I don't think so. I think it can be gradually done, and this is what we're seeing. We're seeing a start of building duration.
Okay, Nanette, thank you so much. That's Nanette Heckler-Faderb, EMEA CIO for Global Head of Economics Research over at Credit Suisse. Coming up, Macy's gave a weaker than expected set of sales and profit projections overnight, but it was the delinquencies on the credit card business that really was the sting in the Macy's brown bag.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Shares in the U.S. retail giant Macy's slumped 14% yesterday. That's after it gave a weak outlook for the current quarter. Comparable sales, these are the numbers in the latest period. Beat expectations, but there was a significant drop from a year ago. That suggests that the department store and the customers that they have, they're putting back on purchases. Simone Foxman has more from New York.
Mostly disappointing day of earnings for U.S. retailers. Macy's, the country's largest department store, seeing sales fall, but not quite as much as anticipated. What analysts were really worried about, however, was the amount of promotions that it's had to do to get stock off its shelves. Also talking about how consumer credit cards, its consumer branded credit cards, seeing more delinquencies than anticipated. Now, this whole story not helped out by Dick's Sporting Goods, the athletics retailer, which has seen a really strong couple of years, frankly, since the pandemic, but seeing weakening consumer demand and also talking up the impact of theft. One bright spot, though, continues to be the housing market. Lowe's, the home improvements retailer, seeing stronger than expected earnings, not as big of a sales decline as initially anticipated, talking about how contractors' demand is still strong, people still going out and improving their homes, and maybe even more importantly, building new homes amid a very shortage of supply in the U.S. market. A mixed picture overall as analysts continue to digest the slew of retail earnings coming in last week and this week. In New York City, I'm Simone Foxman, Bloomberg News.
Well, Nike shares also took a pasting, fallen for a record 9 straight sessions. We're just opening at the moment, so we'll see how they trade. Stockpiles, inventory, China's sluggish recovery wiped out $14 billion in 9 trading sessions. That's what you call wealth and equity destruction. We'll see how the stock opens later today. Reality check in big retail in the USA and beyond.
For a young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The euro area follows France and Germany services PMI missing estimates across the board. The figures are particularly dire in Germany, where overall activity has declined at the fastest pace since the first wave of the pandemic. European markets open higher as we stand ready for the tech giant Nvidia's earnings and the Fed Chair Jay Powell's speech at Jackson Hole Symposium Friday on tenterhooks. Plus, the leaders of China and South Africa call for an expansion of the BRICS and discuss shifting away from the dollar. A touch of madness is what Jim O'Neill calls it. We're live to Johannesburg. Warm welcome to The Pulse. I'm Manish Krenny in Dubai. We are waiting for more data from the United Kingdom. We've had pretty tortured PMIs for France and Germany and the whole of Europe. But have a look at this. Sterling, of course, is the vanguard. It's had its glorious moment in the currency sun. It is the best performing currency in the G10. You can see up over 5% this year. So we're waiting for the PMIs. They have hit the tape. Let's give those to you. And they're pretty bruising. The composite falls deeply into contraction, 47.9. And again, we're looking at one of the deepest downturns that we've seen for a number of years. The composite UK index, 47.9. We had a survey of 50.4. Services collapse to 48.7. So any ideas about escape velocity in the United Kingdom are firmly on the back burner. So the index falls, as I say, the lowest reading since January 2021. New orders, a second consecutive month of declines. So you are looking at the flash reading for the United Kingdom, fairly bruising. The pound, let's have a look at sterling in terms of how the reaction function. You can see down like a stone. Of course, this is what Marcus Athworth was talking about. This could be the Wile E. Coyote moment for the pound, which is up over 5.6% this year. It's the strongest, as I say, in G10. But will the Bank of England deliver a 15th increase? Will they go for another increase on the back of this soft data? Soft data to CPI, of course, is the divergence. We've had 14 hikes. Is number 15 really fully in play? I'll leave you with that thought. Right now, the pound is taking the strain. 126.87 is where we are, down a third of 1%. Well, Beijing has backed the expansion of the BRICS bloc, while also using the annual summit to sound an upbeat note on China's economy. Boosting the local currencies, deepening the bilateral cooperation are all on the agenda. Jen Zabazaja has been travelling from Johannesburg to Pretoria and back again. Jen, good to see you this morning. So if we look at the past 24 hours, the theatre that we saw, Xi turned up at the dinner, but he didn't turn up at the business of BRICS. What is that message to us?
Yeah, and Manus, that was really the talk of the first day of the summit, because as you mentioned, we did see a lot of pomp and circumstance in Pretoria where she was hosted by Cyril Ramaphosa, the president of South Africa. But then in the first opportunity for the leaders to actually make a speech to the Business Council, especially considering what you've been talking about all day about China's economy, he was not there, but then turned up later at the gala dinner later on in the night. But in his absence, we did in fact hear from the Commerce Minister to China, again sounding upbeat about the economy, saying that the Chinese economy has strong resilience, tremendous potential, and great vitality, and still remains bullish about the prospect of China's growth going forward. But what we did hear from Xi earlier in the day when he was speaking to the media was that he really doubled down on this idea of practicing multilateralism and giving more of a voice to the global south, giving more of a boost to the global south. And that is something that we've heard from both Xi and the other leaders within this BRICS bloc. And part of that, leading into the summit, there was this talk about this joint currency, potentially a common currency that being developed. We haven't yet heard about that, but we have heard a bit of chatter about dollar dominance and really moving away from that. That is something that we heard from South Africa's finance minister yesterday, sort of playing down the fact that the dollar is not going to go away, but maybe reliance on it is going to slow down, and finding other ways to increase and encourage trade within these countries. And so earlier today, it was interesting. We had in studio an Indian billionaire, Anil Agarwal. He is the chairman and the founder of Vandana, and he had some interesting things today. He had some interesting things to say specifically about dollar dominance. Manus, take a listen.
This is the great move in the world. You know what is happening, the total dollar domination will come down. The BRICS has taken that lead to make sure how we can trade to even within the BRICS country and other country. And that will happen. The way I can see it, not going to happen 100%, but it's going to start. Gradually, in few years' time, lot of things will happen where 30-40% dependency on the dollar will come down.
Manus, and those comments were echoed too by Russian President Vladimir Putin, who is not here physically, but over video conference, sort of making the same statements about moving away from the dollar. And so we're going to have to wait and see whether or not we get any sort of declaration about whether or not these countries are planning to trade more in their local currencies, and what the debate is at this point in time.
I don't know how you're going to be by the time you get to Friday. Probably exhausted with the driving, the running, the chasing. So tell me then, what's on your schedule today, apart from a quick nap in somewhere hiding at the back of that conference center?
I hope so, Manus. You can only hope, but we don't want to miss any beats today. So, you know, as I was mentioning, there's going to be a lot of debates here, potentially about expansion. I heard you mention that in the intro, potentially about how they can diversify trading in their local currencies. We're waiting for the leaders to actually arrive here, and at the end of the day, anticipating the official declaration of this BRICS summit. Hopefully there's some tangible moves and some tangible outcomes rather than just sort of declarations of what's to come in the future, but things that are going to be instituted here this week.
Yeah, well, it's interesting. We both just reflect back on what Jim O'Neill spoke to us about the other day. De-dollarization, or throwing off the dollar, is madness, and expansion of BRICS, maybe to Saudi Arabia means something, but really, apart from that, he was not that bullish on expansion, was he, Jen?
No, he really wasn't, Manus. But, you know, that hasn't really changed anyone's ideas out here. As you mentioned, we've heard from a number of leaders that this is on the agenda. Whether or not we're actually going to hear whether any countries are going to be added at this summit, it remains to be seen. But a number of leaders, at least 30 African heads of state, are here. And so we'll see whether or not anything actually comes of this. Potentially Saudi Arabia, potentially Indonesia. A lot of discussions around here.
Indeed. Go see if you can find Prince Faisal. We have it on good authority. He is there from the kingdom. Jennifer Zabazaja in Johannesburg with the very latest on BRICS expansion and the risks to emerging markets. Well, our next guest says that President Xi's priority continues to be doubling down on national security, all at the expense of growth if necessary. So what are the risks for growth for the rest of the year? We've seen markdowns, cut downs by various houses. Diana Choileva is the chief economist at Inodo Economics. I mean, we've seen some of the stalwart houses cut the growth forecast. Diana, good morning. How bad is it going to be in China this year, and what is the reverberation globally? Good morning.
Good morning. It already is pretty dire, and it's likely to continue or China is likely to continue to experience much weaker growth. And actually, the fact that Xi Jinping is attending the BRICS summit in itself shows how much more weight he's putting on geopolitical considerations. And we haven't seen him actually attend or appear physically in person at any meeting back home for over a month. And certainly he hasn't given any new instructions on how to deal with this sputtering economy. We are actually likely to see a cyclical uptick. Some of the data are better than what the commentary out there suggests. And the Chinese authorities are trying various combinations of policy measures to get growth going. But any improvement towards the end of the year is likely to quickly peter out, because fundamentally this shift towards Marxism, Leninism, coupled with putting national security at the top of the agenda, has really undermined animal spirits in China.
But from a market's perspective, of course, when it comes to trade and trade angst, etc., that's where we focus from a market's perspective. But I'm drawn to what you say, and this is it. We're grappling with debt. We're trying to understand what the local governments have in debt. We're trying to understand what asset managers have. But this is your comment. Some fear this is Beijing's debt-driven Minsky moment. Others muse that China is on the cusp of a balance sheet recession or Japanifications. Can you help me understand or disaggregate the debt that I must be most worried about in China? And what is the risk of a Minsky moment in debt in China?
Look, China's debt was rising at an alarming pace over the course of the last 8 years. And now it has reached alarming proportions. So now our estimates, credit losses are likely to amount to 26% to 31% of GDP. That's for 2021. We are just updating the data for 2022. It just came out, and the figures are likely to be even more dire. It's very difficult to ascertain what's too much when it comes to excess debt, but on all metrics and comparisons with the past, China's own past, other countries' experience, China really is in a serious debt deflation situation. And the workouts when countries fall in these circumstances really happen through a combination of what we call the 3 Ds: demand deflation, default, and devaluation. And we've seen some default in China. We've seen demand deflation. What we haven't seen is the authorities use the currency actively to alleviate the pressure on the economy. And
but they don't seem to be they don't seem to be in the market for that. Or maybe it is that they're just trying to manage the pace of decline in the currency. Do you see a deeply devalued yuan as being something which is a bigger risk because of capital flight relative to economic growth?
They're not in the market for that because they spent 30 years presenting the yuan as a stable alternative to the rest of the world, in particular to the Asian economies, when you look at how they acted during the Asian financial crisis, during the global financial crisis. So from a long-term strategic perspective, they're loath to do this. Simultaneously, from a short-term perspective, it will add less bang for the buck because, first of all, we have the decoupling and the deteriorating international situation, which is not dependent really on economics, but on geopolitics. So they are not of the mind to do that. They're resisting it. But ultimately, the question becomes, will they be able to boost productivity growth quickly enough or boost consumer spending quickly enough? Or if they don't manage to do that, how much pain the Chinese population can take?
Well, here's where we are with the flows out of China, and this is about equity outflows. I'm sure there are multi-levels of outflows. You make the point, a record streak of selling by foreign investors. That's in the equity narrative. You reflect back on 2015-16, and you would make the point then they had the ability, they had ample fiscal scope to deal with their debt problems then. Why are they in a less, you tell me, how much less or how much eviscerated is their financial capacity to deal with a debt crisis this time around in 2023?
Well, I mean, even at looking at the government debt levels, and this is putting to the side the issue that a lot of these SOEs that are heavily in debt, ultimately become a responsibility of the government. But just looking at government debt, it used to be around 40% of GDP in 2015-16. Now it's 77% of GDP. If you then add these credit losses that I mentioned to you earlier and assume it's 26-31% of GDP to that number, you're already going over 100%. But actually, this is not enough for ameliorating the workout. You'll need another fiscal stimulus of at least 10 or 15% of GDP, if not higher. So you're having a very steep increase in the government debt level. And China, typically, why it's not a Minsky moment, we didn't answer that. Typically, credit-driven crises happen via the liquidity channel. But in China, they control that channel. However, it's still a solvency problem. And here on the solvency side, yes, you can compare China's government debt to that of Japan and say they do have more scope to clean up this whole mess and boost or increase the government debt to GDP ratio to even higher than, let's say, 150% of GDP. But first of all, this is going to be a major adjustment. And second, even if they do that, they still have to place the economy on a strong growth path, which actually, when I say strong, I mean 2 or 3% in real terms. And that seems, at this point in time, infeasible, given where China's economic performance and the underlying forces driving it are.
Well, it's a fairly toxic combo when you add the numbers up. Debt at 77% of GDP for the government. Credit losses at 26 to 31. That's what you call tipping, knocking on the door of Hyman Minsky. Maybe. We'll see. Diana, thank you very much. Diana Choliva, Chief Economist at Inodo Economics, my guest this morning on China. Coming up on the show, will the talks begin to avoid the strikes at the Australian LNG plants? We discuss the global gas markets right here on Bloomberg. Good morning.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Talks to avoid strikes at Australia's biggest LNG export terminal are underway. Workers at the Australian plants that supply about 10% of the global LNG market are demanding improved pay conditions. The risk of disruptions to LNG exports from Australia has sent European gas prices and Asia prices surging this month. We're back a little bit this morning, down 1.5%. Stephen Stuczynski is with me. Stephen, I mean, there's been some explosive days. You and I caught up with the CEO of Woodside Petroleum. That's who's really at the heart of this LNG supply and strike. Have we had any progress from whence you and I spoke to Meg yesterday morning?
Right now, they're locked in debate. Sources are saying that there has, the talks are going well. We heard that from Meg yesterday, that there has been some progress. But this is a complicated matter. It's not as simple as just raising pay. There are a number of different conditions that need to be met. So before we get an actual deal before the end of the day, the question of whether that's going to shake out, it's still very unclear. What we do know is that discussions are expected to go into the evening. Right now in Perth, it's almost 5 o'clock. They have until midnight to make a deal. If they don't make a deal, then the unions said that they had an ultimatum, that they would go on strike. And that's likely what's going to happen if a deal isn't met by tonight. The strikes could start as soon as September 2nd, and that would have a global impact. Even before physical supply is being curtailed from the market, you could probably see traders already positioning themselves, and you could see prices rise. You've seen that just the potential for threats, the possibility, has sent prices higher in Europe and Asia. It's been quite volatile. There have been some days that have been high, some days like today that are down a bit. But overall, it's been trending higher. And depending on what we hear at the end of the day, you could see that surge continue, or you could see it all quickly evaporate.
Okay, our senior energy reporter there, Stephen Stuczynski, on the trajectory of the gas markets for Europe from Singapore. Coming up, does the AI boom really still have legs? We look towards NVIDIA, the earnings after the bell this evening, everything the market has been waiting for right here on Bloomberg.
Like Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
It's where dreams come to die for strong currencies. The euro tanks, the pound tanks, the strongest currency in the G10 is under pressure this morning to the euro. The euro area services PMI drops to 48.3, crushed. Germany is brutally crushed. The UK, also PMI under pressure. Deutsche Bank say the risk of a rate hike now from the ECB is dropping. A pause should not be misinterpreted, however. So there you go. Would the Bank of England go for hike number 15? The land of dreams where they become crushed. That is FX trading. Let's talk about other markets. We're getting ready for Jackson Hole. We're waiting for NVIDIA's earnings. I mean, this is the tech ferry. Christina Aquino joins me. Christine, I mean, if NVIDIA disappoints, there was a wonderful piece written overnight, which was, it is, the tech ferry. It better sprinkle some dust.
Yeah, absolutely, Manus. I mean, a lot of hopes being pinned on NVIDIA to carry on the equity rally that had been sputtering a little bit in August here. We, of course, know the August market is definitely quite difficult for equities and in markets in general, just because of the lack of people in the markets. Everyone is at the beach rather than trading, and so there's a lot of volatility. But yes, expectations for NVIDIA very much higher. Analysts are saying that we might get even higher revenue than what NVIDIA indicated 3 months ago. And in the options market, we have traders bracing for a move of about 10%. So very big implications here. Really, the question, though, is the bar really low for disappointment, given that it has been built up to be this positive story? I'm going to be looking in particular at some of the indications that NVIDIA gives over supply. That's really going to be the main sticking point when it comes to it delivering on its AI promises. So we'll keep an eye out for that for sure, Manus.
Christine, I was on holiday with somebody who actually works for NVIDIA, and you know that they get stock. When they do really, really well, they give them stock, just like a little bit, like a gold star. Could you imagine being there at the start of the year? You'd be 241%, 221% better off. Christine Aquino, there you go. Now we know, tracking the stock and the vesting program, that is the key for the employees of NVIDIA. It better sprinkle a little bit of tech fairy dust across the world. Let's get you across to Bloomberg Surveillance, the early edition. Kriti Gupta is in New York. Tom McKenzie brings it to life at London HQ. Good morning from Dubai. Good morning, New York.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Limes.
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news
This is such an important economic issue. He's no longer trying to run away from
That really blew some minds.
insight,
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
and analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. The top names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It is 10 a.m. in London, 5 a.m. in New York and 5 p.m. in Hong Kong. Our top stories today. Nvidia's highly anticipated earnings report is due today after the US market close. The report could validate investor excitement over AI growth. A Bloomberg scoop, tech giant Huawei is reportedly building a secret network of chip factories to skirt US sanctions and boost China's tech ambitions. And Europe's economic downturn intensified in August. Services activity shrank for the first time since the end of last year. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie, stepping in for Danny Berger in London with Kriti Gupta in New York. And Kriti, at least in Europe, the sentiment is positive across the equity markets. It seems that bad data at least is being read as good news if you're a stock investor in this part of the world.
There is that element to it. I would argue, there's a little bit of technicals as well. Europeans, close your ears if I can actually dive into this part of the market, which is simply that you have seen pressure on equities lately. Remember, you did have that 5% retracement in the S&P 500, so it's only natural to see a little bit of optimism, a little bit of buying at the margins. But again, Tom, this is a margin that I think is pretty important ahead of those NVIDIA earnings. How much of the market is front running what we're going to see in the tech space after the bell? S&P futures higher by 0.5%, 44.23 for our radio audience on those contracts. The bond market seeing some volatility as well, and it really becomes that story of the NVIDIA versus Jackson Hole. What is the bigger market move, and which is the bigger market move, the stock market or the bond market? The bond market already getting a little bit jittery. It hit that 5% level on the 2-year yield. You are now seeing a pullback by about 5 basis points, 4.99 on that contract. But take a look at dollar MEX. And Tom, I looked at the dollar this morning. I looked at the biggest contributors to the Bloomberg Dollar Index, and one of the biggest kind of weights was the Mexican peso. So the idea of kind of the EM story weighing on the dollar is coming back. The super peso back at it. Dollar MEX just shy of that 17 level, down about 0.3% on the greenback. And of course, NYMEX crude, we are watching it heavily as, of course, we are hitting hurricane season in the States. First it was California, now it's Houston. How much does the gasoline story and the refinery story get impacted by those storms? Down about 0.5% on that commodity.
Isn't it remarkable, Critty, that we do genuinely have a question about whether Nvidia or Jay Powell is more important for these markets this week? A company, arguably, that many would barely have heard about a couple of years ago, certainly would have kept to a niche focus on the gaming space now, and it is a genuine question around these markets. Again, the data was important out of Europe because the services softened, and now there is repricing around expectations for September from the ECB. The markets are fading that expectation that you're going to get another hike from the European Central Bank because of the softness in services. You had the chief European economist for Deutsche Bank saying that maybe the transmission mechanism for the ECB is actually proving more powerful than had been expected. Across the benchmark, when it comes to stocks, though, gains of 0.6% here. You're seeing it felt, the data softness in the euro and, of course, in the sovereign debt as well. Euro-dollar softer by 0.3% around that readjustment. Here in the UK, softer data as well when it comes to manufacturing and services, and that is challenging the pound that we've seen a bit of strength come through. The pound is a little softer, and yields, certainly gilts are bid and yields are coming in, particularly on the 10-year. Look at that, 4.52 on the 10-year here in the UK after the run-up we've seen in yields. Currently yields coming in by about 12 basis points. So there's bid currently for UK debt.
You know, it's interesting, the read-through into the U.S. bond market. Tom, we're talking a lot about Jackson Hole versus NVIDIA as the major market move, but it really does feel like the European data is creating a little bit of that volatility in the bond market. Let's get right to it here and bring in Bloomberg's Maria Tadeo joining us for that data. Maria, Tom just talked about this kind of repricing from the ECB, but let's take a step back. What did the data actually show?
Well, talk about a change of sentiment this morning in Europe. You had the PMIs, as you say, which now point to weakness. I mean, the numbers were weak. They add up 2 months now that we've seen of a downturn. And what this suggests now is that this is not just a continued downturn, but it's actually becoming steeper. So this is an economy that is heading for a deceleration. The other point that I want to draw your attention to are the PMIs for both Germany and France. So obviously, the two economies matter a lot in the euro area because this is the biggest and the second biggest economy in the euro area. When you look at the details there, you also see that some of the weakness is not just the manufacturing. We knew that this was in contraction and it has been for months, but it is also spreading into services. So that is key. It's interesting. And overall, the takeaway from it is, look, the numbers were weak, and you see that reflected in the sentiment today, just how the session flipped this morning.
Maria, how does this change the view, do you think? There has been this very live debate amidst the governing body of the ECB. Does it really move the needle for them?
Yes, and it's going back to this idea of a hard landing, soft landing, and when do you know you've done enough? And is doing too much equally dangerous as doing too little? And we know that's a real debate that goes on at the European Central Bank. Look, when you look at the data today, you already saw the market reaction. Traders per bank bets that there will be a hike in September, and you also alluded to this, a note by Deutsche Bank that says we now see a pause. What is interesting, though, in that note, too, is that they say we're not sure inflation is where the European Central Bank wants it to be. So again, makes it more difficult for Christine Lagarde to look at this trade-off. But they also say, and I think this is key, that a pause should not be seen as a peak, because remember, she already said it in July, if they hike or hold, that does not set a precedent. They will go meeting for meeting and look at the data.
Certainly a lot to digest, and it kind of feels like this is the same rhetoric we had heard from Jay Powell stateside as well. Bloomberg's Maria Tadeo, we thank you as always for breaking it down. We go from Brussels and London to, of course, the story in the U.S. It's the second day of the BRICS summit where President Xi backed the expansion of the bloc and pledged to strengthen the country's ties with South Africa.
I am ready to make a joint effort with President Ramaphosa to take our comprehensive strategic partnership to new heights.
Joining us now is Bloomberg's Jennifer Sabasaja, joining us live from the ground. Jennifer, one of the big conversations has been, of course, the de-dollarization, but what else are they talking about there?
Yeah, I mean, Kriti, you heard a little bit of what Xi Jinping said earlier in the day, talking about the strategic partnership that South Africa and China have, but also talking a lot about how he thinks a number of these countries should be increasing and practicing more multilateralism and boosting the voice of the global South. Now, what really caught a lot of headlines and attention was the fact that the Chinese president actually missed the first opportunity to speak in front of the business forum, instead sending his commerce minister to speak on behalf behalf of him, and he did so in a speech touting the Chinese economy, but also taking thinly veiled swipes at the United States, specifically saying, without saying the United States, but some country obsessed with maintaining its hegemony has gone out of its way to cripple the emerging markets and developing countries, and talking a little bit about how this is the opportunity for the global South to step up. And we have, just leading up to this summit, we were talking a lot about de-dollarization, as you mentioned. That was brought up a bit yesterday, but we're still waiting to see whether or not these countries are going to come up with more of a strategic plan to trade more in local currencies. But at this point in time, there's still a lot of debates that are happening on the ground. Nothing yet substantive has come out of these meetings, but a lot more meetings to happen today and tomorrow.
Jen, that whole diversifying around the US dollar thing, it's pie in the sky, isn't it? I mean, who wants to touch the ruble? China is intervening in its currency, undermining its attempts to institutionalize that currency and get more broader take-up. Really? Is this going to go anywhere?
You know, it depends who you speak to, Tom. I mean, we've spoken to economists. Earlier this week, we talked to Jim O'Neill, who coined the term BRICS. He said that that is not going to happen anytime soon. But if you look on the other side of things, earlier today, I was speaking with Indian billionaire and businessman Anil Agarwal, who said that that's already, the de-dollarization is already happening, and he anticipates it's going to keep happening. We heard that echoed from Russian President Vladimir Putin via video conference yesterday. But on the other side, we heard from South Africa's finance minister saying, really trying to tamp down the flames and saying that the dollar's not going to go anywhere anytime soon, but they still need to look for other ways to trade in local currencies and to make some more benefits for these countries individually. Today, at the end of the day, Tom, important to note, we're supposed to get the official declaration of the BRICS summit. So potentially we get some language around what these new trade operations could look like. Potentially we get some news on expansion, but we're waiting to hear from the leaders later today.
I mean, it's the tale as old as time, right, Jen? Essentially this idea that if you are looking for the growth story around the world, EM tends to provide that growth, but at what risk? And do you really need the dollar to capitalize on that growth from an investor point of view? Bloomberg's Jennifer Sabasatcha reporting live from South Africa. We thank you, as always, for bringing up those updates. Now, to a Bloomberg scoop, Huawei reporting building a secret network of chip factories to skirt U.S. sanctions and boost China's tech ambitions. Tom, this kind of feels like your arena here. You know I've been obsessed with the chip story lately, but look, $30 billion reportedly being given to Huawei from the state of China to really build this network and kind of get ahead of this domestication of the chip supply chain that you are seeing in the U.S. right now.
And look, you stress the $30 billion for good reason, because, of course, that's about as much as the CHIPS Act provides for all of the chips companies in the U.S. It's a huge number, if indeed it's accurate. But I remember sitting down with the founder, Ren Zhongfei, of course, of Huawei, just after the US blacklisted that company, and the readjustment at that company was significant. The mobile phones business has been crushed, but they were never going to close their doors and just go away. They were going to readjust. They spent heavily on R&D. I would just note that this is the lower tech part of the semiconductor space, so 28 nanometers and below is probably the kind of fabs that they're building out. But the fact that they are doing this, according to our reporting, secretly to try and evade these sanctions is, of course, significant. And I've been hearing from sources that China is still getting hold of some of those high-end chips. The US obviously wants to make it more difficult. China is going to do everything in its power to kind of close that gap. But at the high end, that gap remains significant.
Yeah, and I think a key point that you made is simply that Huawei, as we know for a global audience, was put on the entity list in Washington back in 2019 by the U.S. Commerce Department. And one of the big concerns here is that this report, by the way, isn't actually coming from the government. It's coming from an industry organization, the Semiconductor Industry Association. Of course, we have reached out to them to see if they can join the program. But this really is a question of waiting and see when you kind of look at what the government is actually going to do about it, if anything, I might add.
Well, yeah, it's going to be a question of whack-a-mole, it seems. Different companies are going to pop up, they're going to put in demands, they're going to put in orders, and for US officials, they're going to have to keep an eye on this if they want to, again, constrain and continue to constrain China's ability to get hold of these chips. That October 2022 order was huge from the US, and we're still seeing the consequences. Coming up later this hour, we're going to catch up with Chris Watling, Longview Economics Chief Market Strategist and CEO. We'll get his views on inflation, central banks, and how to think about this readjustment in the Eurozone. This is Bloomberg.
hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Well, NVIDIA, Jackson Hole, even some of the European data, what is actually driving the markets this week when admittedly it is still knee-deep in summer trading on both sides of the Atlantic and arguably Asia as well. Perhaps that's why you're seeing so much green on the screen. But again, given a lot of these major market moving events, there is one question a lot of people are asking. Are bonds back in vogue? I want to bring your attention to a chart that we are seeing. For our radio audience, stick with me here. Basically, it shows the S&P index's earnings yield minus the treasury yield. It basically shows the difference. And you are already starting to see that earnings yield for the stock market barely above that for the bond market. Now, if you are actively investing in the stock market for that yield right now, as opposed to the long-term growth story, your case is not really going in your favor. And for that reason, the bond market is coming back in vogue. The question is, do those NVIDIA earnings change the tune, or do the Jackson Hole comments also change the tune of the market? Bloomberg cross-asset reporter Denitsa Sikova is all over that dynamic. She joins us now on the program. Denitsa, your take.
Yeah, exactly. If you look at all those valuation metrics, which actually have been looking for good for quite some time, now they're really at those extreme levels at like 2-decade high or low, depending on the metric. So if you look at dividend yields, if you look at the equity risk premium, all these equations are pretty much showing that bonds are really more attractive than equities. And we're actually seeing some impact of that calculus on the flows. For 3 months, we saw everyone flocking to equities while flows to fixed income were slowing down. In the last week or so, we've actually seen a bit of a reversal. Equities saw outflows while treasuries were getting some strong inflows. We also saw strong inflows into money market funds, which have been a big theme for some time. And it's a great way for investors to kind of lock those high yields. So we're also, in the option market, we're also seeing less of that bullish sentiment, which was super strong, and people were buying equities and buying co-options at a very strong pace. And of course, this raises the question of what happens next for the Fed and how far can those bond yields rise? Because of course, a lot of that has been on hawkish expectations of the central bank. And unlike Europe, in the US, growth, we haven't seen that many growth scares at the moment. So there is less pressure on the Fed to maybe be less hawkish going forward.
Yeah, I do wonder if there's increased divergence that we're starting to see now between the European and UK economies and the US, where strength in the economy remains. Then it's on the question of NVIDIA. You talk about the options market, and of course there's been a lot of activity in the options market around NVIDIA. How significant do you expect this to be for the broader market?
Yeah, so this can be a very significant move. If you look at the options market, there is an implied move of 10%. But it's important to say that NVIDIA accounts for 3% of the S&P. This is a very significant number. And also NVIDIA is like a proxy of that artificial hype, artificial intelligence hype we have seen for quite long. So first, obviously, it's a big part of the index. Second, it's a big part of that hype. So the question is, can more stocks benefit from that? Likely so. Of course, markets are betting, and analysts also see NVIDIA beating estimates. But in the opposite scenario, where estimates are actually missed, this can also drag stocks down in the opposite direction. But an interesting trend we're seeing is like for tech stocks, including NVIDIA, bond yields have been a big issue. And lately, despite the huge rise in bond yields, we haven't seen that much impact. So we have gone back to fundamentals, and that's where earnings matter a lot. So all eyes are on NVIDIA, and a beating estimate will really probably mean good things for the broader index overall.
Yeah, I have to say, I wonder what kind of shock you get for the markets if they miss on earnings and then Jay Powell comes out with a hawkish message on Friday. Denitsa Sekova, thank you very much indeed. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
On the next episode of The Circuit. It's still almost shocking how new you still are to this sort of being famous thing.
When I do, you know, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Tom McKenzie in London. Let's turn to some of the stories we're watching this morning. The SEC will likely finalize its proposal on hedge fund and private equity disclosures at its meeting later today, slated for about 10 a.m. New York time. Bloomberg Intelligence believes that the agency only made minor revisions to its original plan amid intense industry opposition. The proposal could increase compliance costs and exposure to legal liability. Tom, this is an enormous story for Wall Street simply because they're talking about kind of not only tamping down on some of the fees that are associated with some of these PE deals, but also some of the rights, some of the side deals that are also associated with a lot of the ways this functions. And of course, transparency. We know that PE is a hard kind of market to track tick by tick as opposed to the public markets. For example, it looks like the SEC going to crack down on that $17 trillion industry.
Well, that is exactly the point of Gary Gensler at the SEC, of course, is that there is a need for transparency in an industry that, of course, has ballooned over recent years, and that's part of the SEC push. But clearly, the fight back is there. I just wonder what the legal case is and how this transpires in the weeks ahead, but clearly massive for the hedge fund and PE industry. Talking of hedge funds, but with a focus now on the banking side, particularly investment banks, Goldman Sachs and the work from home shift or reshift back to the office. Goldman Sachs is ramping up pressure on its staff to work at its offices 5 days a week. Shock horror. Revenue producing employees are said to have mostly returned full time, but managers have grown frustrated by reluctance from other parts of the workforce. The lender's peers have enforced 3 days a week policies with stricter guidelines for managing directors. Kriti, I don't know about you, but when I first started off, a long time ago, it has to be said, in this industry, I wanted to be in the office. Certainly, I'm in the office now. I want to be in the office now. But starting off in your career, it's really important. So I guess it depends on where it lands in terms of where you are in your career. And also, frankly, if you've gone and spent money on a house outside of town during the pandemic and now face a 1-2 hour commute.
Yeah, I would argue, I mean, from a youth point of view, or if you're an entry-level banking analyst, for example, that absolutely matters. I want to stick with the labor story stateside and talk about union workers at UPS ratifying a $30 billion contract with substantial wage increases covering about 340,000 workers over the span of 5 years. Over 86% of employees voted to approve the deal. That's according to the International Brotherhood of Teamsters, the union's highest vote ever for a contract with UPS. Tom, as we have just mentioned, the labor story continues to accelerate across the U.S., across the world, specifically on what these new contracts should really actually look like. And UPS is so interesting because they've set the bar for so many of the negotiations in Hollywood, in Detroit, even on Wall Street, and really setting the tone, and not just the approach of how you negotiate, but in terms of the read-through and what you should be asking for as well.
Yeah, is this longer term, this dynamic, in terms of more power, more strength for these unions in the US? Many would argue, but it's a long time coming. Or is it going to be short-lived if we get into a slow growth recessionary era? $175,000 a year was the headline. Of course, the nuances are you have to be a long-term employee of UPS and meet certainly other conditions, but it seems to be significant in terms of the wage uptick for that labour force at least. Coming up, we're going to speak to some of these questions. Inflation, wages with Chris Watling, Longview Economics CEO and Chief Market Strategist. Stay with us for that conversation. It's next. This is Bloomberg.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
This is Bloomberg Surveillance, the early edition. Here's what you need to know. NVIDIA's highly anticipated earnings report due today after the U.S. market close. The report could validate investor excitement over AI growth. Plus, a Bloomberg scoop, tech giant Huawei is reportedly building a secret network of chip factories to skirt U.S. sanctions and boost China's tech ambitions. And over in Europe, the economic downturn intensified. In August, services activity shrank for the first time since the end of last year. I'm Kriti Gupta in New York with Tom McKenzie in London, stepping in for Danny Berger. Tom, we're kind of talking about this juxtaposition between NVIDIA and Jackson Hole, and then enter the European economic data. Walk us through it.
Yeah, are we seeing a clearer split now between the economic fortunes of the Eurozone and the UK as well, and the US, where, of course, you're still seeing relative resilience because the data was softer across the Eurozone, predominantly and most importantly for the 2 largest economies of Germany and France, and services. And there was that really interesting note coming through from the chief economist of Deutsche Bank saying that the impact of those rate hikes coming through from the ECB on the services sector may be more pronounced than the hawks have suggested, and they are now pricing in a pause from the European Central Bank. As a result, you're seeing euro down. The UK data was weak as well, so the pound is softer and money is moving into sovereign debt. But let's just remind you of what's happening in the equity space, because despite that softer economic outlook, there is good news, at least if you're an investor in stocks in the Eurozone. Gains of 0.6% may be pricing in as well and starting to think about a less hawkish set of central banks with the Eurozone. Euro-dollar 108, a move low in the single currency by 0.3%. And the money moving into UK debt. Gilts on the 10-year, the yields are down 11 basis points. 453, again, as markets readjust to how much more the Bank of England has to do in the face of what looks like a softening economy.
Well, I mean, in the absence of any clear driver in the States, it does feel like the bond market and I would argue the equity market as well, taking their cue from what you just outlined in Europe, specifically when it comes to the bond market. We'll come back to stocks in a second, but the 2-year yield hovering at about 5%, already down by 4 basis points. That is a key technical level. Markets love a round number. So how much of that is going to change when we do actually get those NVIDIA earnings after the bell? Do you start to see more emphasis hopping into the market, or perhaps a little bit of caution going into Jackson Hole as well, and specifically the comments we're expected to hear from Chairman Powell, which brings us to what we're seeing in the equity market. Again, perhaps a little bit of front running when it comes to the market. NVIDIA is the biggest volume mover in the pre-market this morning, and actually I would imagine that optimism around those earnings pushing a little bit of the sentiment into futures right now, higher by 0.5% stateside, 44.21 on those contracts for our radio audience. Let's bring it back to the FX story though, because the one place you are not seeing green on the screen is in the Bloomberg dollar. The super peso added again its biggest weight on the dollar at the moment. Dollar Mex trading about 16.86, weaker on the greenback by about 0.3%. If you're worried about trading inflation, specifically food inflation, the Mexican peso seems to be the vehicle in which to do it. And of course, we're always going to get a check on commodities because, Tom, a renewed interest on the storms that are hitting not just California, but Houston as well, and what that means for gasoline production, refinery production in the States. NYMEX crude trading below a 79 handle, down almost 1% on the day.
Okay, let's bring in Chris Watling now, Longview Economics CEO and Chief Market Strategist. Chris, we're talking about the data coming out of the Eurozone and the UK. Do you now see two economies, the Eurozone and the US, on very different paths, and how does that inform your view on central banks?
Yeah, I mean, it's an interesting point. I mean, it looks like this data, Eurozone, seems to be rolling over into a proper recession. I mean, sub 50 on services is quite meaningful, and it's broadened across the Eurozone economies with themselves, the countries within the Eurozone. So I think there's a lot of challenges there. The US has had a bit of resilience, but frankly, I don't buy it. I mean, I think recession is coming to the States. And let's throw in China. I mean, China's got so many challenges at the moment with what's going on with its housing market and with the fact that policymakers don't seem to want to respond. They seem to be stuck with like a rabbit in the headlights as to whether to respond or not. Do they want to deleverage, or do they want to support the economy and fight the deflation? So it's a tough old global economy.
And China's another drag on the Eurozone, of course. When you think about the ECB then, do you buy into the market view now? They're pricing out a rate hike in September. Does that seem rational? And if they stop and pause, does that mean we've reached a peak with the European Central Bank?
Yeah, I think so. And I think this is a theme that's been brewing for a couple of months now, that we're getting towards the end of rate hikes. And this kind of data adds to conviction that we're really not too far away at all, if not there already. So, yeah, I think the market's got overly hawkish on the hikes it was pricing in the last couple of months, and we'll start to see them come out now. I mean, this data's terrible. I mean, it comes down to what you think about inflation. Do you think there's a wage price spiral, or do you think it's a couple of shocks that are going to dissipate because money's now getting tight and money supply is contracting? Frankly, we're of the latter. So, yeah, I think, inflation goes fast. We're seeing that in the US. That'll turn up in Europe and the UK. And rate hikes can be taken out the curve, yeah.
I want to come back to the wage price spiral in a question in a second, excuse me. But you write in your notes a really beautifully worded kind of question that I don't think I can reword in any way, which is, will China's deflation be exported to the West, or will the West export inflation to China? I never really thought of it as a two-way street, Chris. Expand on that.
Well, I mean, there's a very good correlation if you look at Chinese PPI and US core CPI with a lag. You know, what happens in China gets made in China, gets exported in many ways into the States. So with a time delay, of course. So there's clearly a correlation. I mean, China's the manufacturer of the world. I mean, not everything's about manufacturing, but a lot of manufacturing will drive energy prices. Once you add in oil into that inflation equation, and once you take out shelter, you're starting to get to a lot of what's going on. So, yeah, I think that's a really key connection. Global inflation trends tend to correlate, and what starts in China tends to end up in the West. So it's interesting. It's a very sort of juxtaposed, contrarian position we see at the moment, with China in deflation now, and the US with still high-ish inflation, but it looks like it's easing pretty fast.
Well, Chris, let's come back to the wage story then, because I think it does actually all connect. If you were looking at those higher PPI numbers coming from China and other exporting countries to the U.S., that's going to filter into the end consumer price that a lot of corporate America is charging, which then is going to filter into some of the negotiations that the labor market is having with the likes of the workers in Hollywood and in Detroit and Silicon Valley. How worried should we be about pricing those labor negotiations?
Well, I mean, the IMF did a terrific study of wage price spirals not that long ago, a few months ago, looking at all the examples they could find across the developed world and wider afield over the last sort of 4 or 5 decades. And the reality is, when you really boil it down in the States, there's probably only one example, and that's the 1970s. And the reason that happened, you ended up with a wage price spiral, in my opinion, is because money supply growth continued throughout the entire decade at high levels. In other words, there was so much money around, it enabled those high prices on consumer price goods to feed into wage inflation and create that wage price spiral. So I would say, just like it says in the IMF piece, the odd wage negotiation that you refer to, yes, they're going to happen, but don't worry about it. It's not the main story here. The main story is money supply is contracting. That's what you need to look at, and that's where Friedman was right in the 1960s. And frankly, yeah, as I said, there's only been one decent example of a wage price spiral in the last, well, 100 years, let's call it. So, yeah, I think that's the trick here. That's what you need to focus on.
Where does that take you to your view on bonds then? So yields across US Treasuries are coming in after the run-up that we've seen. Was the sell-off in US Treasuries, was it overdone? Do you buy the dip?
Yeah, I think you do buy the dip. I think it was overdone. There's all these theories about why bond yields are going up. You know, the Chinese are defending their currency and selling treasuries. The Japanese are doing the same. And
big issuance.
There's so many theories. And the issuance is the one that troubles me the most, perhaps along with the idea that we've taken off 15 years of financial repression. But when you really stand back from it all, what do bonds do? You know, they really price where the economy's going, where inflation's going, where growth's going, and none of those look good to me. So I think this is an attractive entry level for bonds.
Chris, there was a call out of Bank of America last week which basically said, are we in a 5% world? And is the higher for longer essentially the new normal? Not just the new normal right now, but the new normal for decades to come. Your take?
Well, I mean, it reminds me of when we had $200 oil calls out in during the Ukraine invasion of Russia last year. I mean, generally the market seems to the narrative gets carried away at the top. And no disrespect to Bank of America, I'm sure they're terrific folks, but you know, that strikes me as the narrative getting carried away at the top. I mean, if you look over 200 years of where interest rates should be, I'd say 2 to 4% is the range. And that's where you'd actually put sort of your average 10-year bond yields as well, pretty much maybe with a bit of a premium in there to reflect normal sort of upward sloping curves. So, yeah, I think 5 is not the new norm. I think 5 is where we are at the moment. And I think I wouldn't be surprised if we're at 3 in 12 months' time, frankly.
Chris, before we let you go, the most pronounced action in the bond markets right now is in gilts, and yields are coming in quite significantly, 12 basis points on the front end and at the 10-year here in the UK. Is the UK already in recession? Has the BOE done enough?
I think they've done more than enough. I mean, it's working its way through the system. I mean, the data this morning was poor in the UK. I think it seems pretty convincing. I think the great trade out there is sell the pound. The pound is overowned, overcooked, and it topped out on very strong inflation data not many weeks ago, which suggests to you all the bad news is in the price, if you like. Everyone's in, and it needs to go the other way.
Certainly something we're going to be watching very, very closely. Chris Watling over at Longview Economics, thank you as always for joining the program this morning. Coming up, we go from the macro to the micro. Markets awaiting earnings results from NVIDIA reporting after the market close. Shares higher by 1.7% already. More on that next. This is Bloomberg.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I want them to say, damn! Golly, this is a badass knife.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Kriti Gupta in New York. NVIDIA. Kriti's been highlighting this for us, reporting, of course, today after the US market closed, the options market bracing for a large share price gain that will test the staying power of the AI boom. Shares edging higher in the pre-market. Alex Webb of Bloomberg News and Matt Bloxham of Bloomberg Intelligence joins us. Alex, just set out for us why this is so significant in terms of our broader view on AI.
So NVIDIA, at least from an equity perspective, is the thing that has really driven the boom. We had, of course, ChatGPT. Then when it came to the end of the March quarter, they forecast the quarter we're in right now, and it was more than 50% higher than analysts had been expected. They telegraphed revenue of $11 billion. Now, the analyst expectations are now for ever so slightly more than that, $11.04 billion, more or less in line. The concentration now is what are they going to forecast for the upcoming quarter? What's going to be, the quarter that ends at the end of October? They're predicting $12.5 billion. That will give us a sense of the staying power of this AI boom.
Okay, so Alex is looking at the forecast. Matt, what are you and the team at Bloomberg Intelligence going to be zeroing in on when it comes to AI, when it comes to NVIDIA's earnings and the broader read across?
Yeah, I think it really is this kind of AI-fueled demand boost. That's really helping their data center business, which is potentially in that 12.5 billion for the forward quarter, going to more than double year on year. So it's got kind of an acceleration in growth there. And I guess what we're seeing is all these end markets. Everybody is scrambling to create their own version of a GPT generative tool or tools. Across every industry. So there's a huge amount of pent-up demand. I guess one of the big questions is to what extent is the supply chain allowing them to meet that demand? So that might be the only one thing that might temper the optimism they put out there in terms of the growth rate.
Matt, let's go there specifically. When we're talking about where NVIDIA actually has their most growth, of course, we know the stock market has been capitalizing on the AI space, but talk to us a little bit about the gaming piece of their business. It's fairly new relative to kind of where their expertise is. How does that factor into today's numbers?
Well, I mean, I guess gaming is where people really kind of know NVIDIA from historically, where a lot of their kind of graphics processing fame it comes from. So it's a substantial part of the business, but out the spotlight right now, I think there are some issues there about inventory and a slowdown in China. So perhaps that together with autos, one of their newer segments, where again EV demand, electric vehicle demand in China is perhaps a bit softer than expected. Those two, maybe not going to be growing that well in this quarter. And I think really the focus is going to be on AI and how much demand there is coming through there and whether they can meet that demand given what's going on in the supply chain.
I mean, it's certainly something that the market is going to be testing and arguably has already front run. I mean, I'd be surprised to see an additional gain off the back of these numbers, given the run up in the expectations here. Alex, dive in for us and talk to us a little bit about the ARM situation. We know that NVIDIA is reported to be one of the anchor investors for the ARM IPO. How does that help their business case?
Well, they've been reported to have been in talks to become an anchor investor in the ARM IPO, along with the sort of laundry list of big semiconductor and technology players, including Qualcomm, Apple, Intel, and others. The thing is with ARM is that they provide some core technology which is used in NVIDIA's CPUs, and that is the case with a lot of different chip makers, chip designers. They therefore want to ensure, presumably, that ARM remains independent, that no one player is able to lean in too much, which frankly was the concern about NVIDIA acquiring ARM. If you remember, SoftBank had agreed a deal to sell ARM to NVIDIA. That fell through because there was a lot of concern that NVIDIA would control too much of the chip-making supply chain. One footnote to that, of course, is that a lot of the deal was going to be denominated in NVIDIA stock. That stock today would likely be worth in the order of $70 billion. The list price that is being targeted is in between 60 and 70 billion. So perhaps a certain amount of regret at SoftBank that they didn't manage to get that across the line.
Alex, I want to get your views on Huawei as well, and this scoop that we got around them building out foundries in a kind of secret attempt to avert and avoid some of these US sanctions. How significant do you think that is, and what does it tell us about more broadly China's attempts to kind of close the gap on the US?
Well, we know that China imports in excess of $200 billion worth of semiconductors a year, and they have intentions of getting, I think, more than 70% domestically manufactured by 2025. The key thing is that they do have chip making capabilities of their own, but they tend to be less sophisticated. It isn't the stuff that NVIDIA does on the bleeding edge of AI appropriate chips. That's what they're trying to get into. There have been huge sanctions placed on not least sort of Huawei, making it harder to sell chips, and of course the chip making equipment to those guys. Therefore, it looks like they're setting up these other factories to get around some of that. I think probably the most significant part is the rest of the world now seems to be aware, not just because of the Bloomberg story, but because it comes from a chip-making association, which means then that there is possibility that these measures get expanded to incorporate these other factories.
Matt, your views on this story, we know they spend very heavily, Huawei, on R&D, but to Alex's point, the gap is still large. It's likely to be the less sophisticated end, maybe, of the chip ecosystem. Do you have a broader takeaway on what the read across is for China, and indeed some of the telecoms that you cover as well?
Yeah, I mean, I think we've heard it's some like $30 billion of government support going to Huawei for these facilities. I mean, it's no surprise Huawei's been talking about its own silicon for several years now. I think if anything, the US sanctions just accelerate their desire and their need to develop their own capability. So, I'm not really surprised to see this at all. I guess there's going to be longer term questions about, I think over maybe the midterm, these kind of neutral markets, for example, maybe something like India, which is a huge smartphone market, that could create much more rivalry for the kind of historically US-driven chips in smartphone from a Chinese rival in the midterm. So I think there's kind of a midterm issue there about how the semiconductor industry is going to share between different players.
I'd argue geopolitics really factors into that as well, just given that we do have, of course, the Taiwan presidential election coming up, and a lot of the heavyweights in the chip industry will have an impact on that as well. Alex Webb and Matt Bloxham walking us through the NVIDIA story. We thank you as always. Let's get some breaking news, though, because we are seeing some major market moves, specifically in Europe. The benchmark gas metric falling as much as 18%. Now, of course, we know it's been gaining quite a bit in the last few weeks, coming off of the strikes in Australia when it comes to those facilities. It looks like Woodside Energy, one of the main players in that space, says that there has been no update yet on those LNG strike talks. But the reason you're seeing such of a pullback is because you're also seeing a lot of the LNG capacity kind of drop when it comes to storing some of that. There's been such an increase in buying because of the worry of supply. Now it feels like there's a sentiment that, well, maybe we might not actually need that production. So you are seeing a little bit of a retracement in those natural gas prices, down about, well, as much as 18%, but now about 10%. We're going to bring you all the live updates as we get them. This is Bloomberg.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We will be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, within 6 to 12 months, open up 3 or 4 large bases in Ukraine, and we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg's Earnings Early Edition. I'm Tom McKenzie in London with Kriti Gupta in New York. Let's take a look at what is ahead today. US PMI coming at 9:45 a.m. Eastern Time, followed by new home sales at 10 a.m. plus US consumer confidence data out at 10 a.m. Eastern Time, as the US consumer starting to feel a little bit more cautious. Then, of course, the big one, we get Nvidia earnings after the US market close. So much focus on that company. And the first Republican presidential debate will be held in Milwaukee later in the day. Former President Donald Trump is not expected to appear. Kriti, there's a few things on the docket. It's going to be an interesting day.
Of course, it will be, and we're going to have full coverage for you on Bloomberg Television, Bloomberg Radio, and of course on the Bloomberg Terminal. Tomorrow morning is going to be really interesting to see how America really went to bed at night, Tom. But it's also going to be interesting in terms of some of the stocks we're watching now that we're going to get results for throughout the day. Let's start in the tech space. Microsoft specifically, we know they're pushing to get that deal done with the CMA on their $69 billion acquisition of Activision. The shares both higher for Microsoft and Activision. Microsoft higher by about 0.8%. Activision higher by only 0.1%. What's interesting is that it's still shy of its $95 offer price. So again, perhaps some questions about the regulatory scrutiny, but look, they're offering up a licensing agreement. The CMA has traditionally said they're
What VR use cases are there in healthcare?
Physical therapy. Like, let's say there was a patient that had wrist surgery. They would actually see in the goggles and visualize trying to catch the butterfly, right? Get that movement going in your wrist in a way that is enjoyable for the patient.
And you're seeing a little bit of that sentiment slip into Intel and AMD as well, both higher by about 0.7%. So already a lot of good news baked into the market. Let's talk about Nike though as well. We've done a lot on tech. Let's shake it up here, because you are seeing green on the screen there as well. Nike shares higher by 0.1%, but the real outperformer this morning coming from Foot Locker, higher by 5.5%. Now, Tom, Nike has had a 9-day losing streak. A lot of that coming from China, the consumption there, and of course the inventory story in Foot Locker might be able to kind of say what those Nike earnings might look like in a couple of weeks. They're reporting in the pre-market this morning.
Well, it's a record, isn't it, for Nike, that string of downturn days for that company. And the China component is really, really interesting. You've got to feel for some of these companies. They wrestled through the pandemic. They had to deal with the supply chain issues, the input costs, the inflationary impacts, then drawing down their inventories. And now, of course, for a company like Nike with big exposure to China and a big bet on growth coming through there, that obviously being questioned by the tumult in that economy.
Yeah, I'm waiting to see about the supply chain story, though, because one of my favorite kind of fun facts from the pandemic and those supply chain crunches was that Nike Air Jordans used to take, or they do take, about 40 days to come from Asia to the U.S. They used to take 80 during the pandemic, so something we'll be watching very, very closely. That does it for the early edition. Surveillance is ahead. It's the countdown to Jackson Hole. Stick with us. This is Bloomberg.
world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lange.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
How high can rates go before it becomes almost self-limiting?
The policy rate is going to rest on a high plateau for a while. That's going to feed into longer-term yields.
We're still within that transition period where we could have a very interesting trend environment.
We had the biggest surge in inflation in 40 years, and while headline has come down, core is still sticky.
We're seeing some cracks in the consumer, but broadly speaking, we still are pretty upbeat.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
We've got a global slowdown live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market on the S&P 500 is just about negative here on the S&P, or rather positive by 0.5% on the S&P. TK, a downturn in the global economy, ex-US. The data out of Europe this morning, dreadful.
You see it across equities, bonds, currencies, commodities, John. I'm going to go to American oil, $78.79, well under $80 a barrel. And you know where I go, John. I go to Zurich. Remember that breakfast we had in Zurich? It was like $120 for a bagel. I go to EURUSD, and I got strong Swissy right now, signaling that global slowdown.
The data on services, on manufacturing, we were hoping that manufacturing came up to services in Europe. Lisa, anything but. Services is coming down to manufacturing.
And coming down at the fastest pace when you take a look at Germany in particular, going back to the heart of the pandemic, May 2020, raising a question of, okay, is Europe separate? Is Europe tied to China? Is this sort of the bleed through of the China slowdown? Or is this where things are going elsewhere and Europe is just more interest rate sensitive and ahead of it?
Take Europe out of it, take China out of it. Things are pretty good going into Jackson Hole, Wyoming on Friday. Tom, for Chairman Powell. Raises the question now for a lot of people, what's the more interesting speech? Chairman Powell on Friday or President Lagarde?
Yeah, I agree with that. I think it's going to be interesting to see how she nuances it. She speaks after Chairman Powell. Hopefully we'll get more than 7 or 8 minutes out of Chairman Powell. The last time we did that, I mean, Lisa was, Lisa had to barely get back to her chair before we had, could go live again. But I agree, Lagarde could be a really, really important moment. What I would mostly say is this is the confusion Jackson Hole. It's just a confused picture right now.
All of that coming up a little bit later on this week. Here's the price action for you on the S&P 500. Equity futures here positive by 0.5%. My attention in the FX market, the euro negative by 1/3%. Jordan Rochester of Nomura this morning already publishing saying this could open the door to 105 on the euro, but far more focused on the potential for sterling to get down to 122 from 126.44 on my screen, Tom, right now.
DXY, the major currency blended pair, goes out to new recent highs, 103.87. John, round that up to 104. The Bloomberg Dollar Index, not so much. This is a big currency move here, less about EM.
In the bond market, yields a little bit lower. We're down by 6 basis points, Lisa. Your 10-year, 426.
They're finally buying just on the margins. How long can they keep buying, though, when it comes to the bond market? This is what I'm watching today, and I think is actually the sleeper issue. 1 p.m., the U.S. is auctioning off $16 billion of 20-year bonds. Tom, I know that you often shrug off these auctions and say, what's the big deal? This time, incredibly important to gauge both international and domestic demand for longer-dated securities in the U.S., especially after the sell-off that we've seen, with yields rising to the highest levels going back more than a decade. After the Bell NVIDIA earnings, can they meet the expectations that are very high? I mean, we're talking about a 200% gain so far this year. And at 9 p.m. is the first Republican primary debate in Milwaukee. There are 8 candidates, not former President Trump. Very curious to see DeSantis really in the front and focus. The pressure is on him to regain his spot as number 2. But I'm curious about some of the others as well, in particular, Senator Tim Scott.
Looking forward to that a little bit later on this evening. Joining us now this morning to kick things off is Virginie Masseneau, the Global CIO of Equities Alliance Global Investors. Virginie, wonderful to catch up with you. Let's start with the data out of Europe. Is bad news just bad news?
Yes, we've had some PMI out of France and Germany that were weak, particularly because of services. And for Germany, it's actually the first time they shrink in 8 months. The UK also had weak data. So I think what we're seeing in Europe is the impact of tight monetary policy. The transmission has been much faster or more powerful than in the US, where we had less COVID support, if you want. And we certainly don't have the kind of packages that the US has, about $1.9 trillion.
You mentioned transmission. It's such a French word, Virginie. I remember Trichet talking so much about transmission. We're going to transmit out to Jackson Hole with Adam Posen of the Peterson Institute. His essay on China is definitive in the new Foreign Affairs. Are we going to transmit China slowdown and China deflation over to the West?
I think there's an element of that. I agree. I think Chinese weak pricing, and even if the GDP growth stays around 5%, which is still the central case scenario at this point, it is a weaker China that we've seen. And of course, Europe is more exposed to China than the US. So definitely part of the slowdown picture. And I would say generally a theme of divergence of the US versus the rest of the world.
How much can you then get any conviction about buying in Europe at a time where there are so many questions swirling and there is, as you said, the more direct transmission mechanism of monetary policy?
Well, I think, as always in equity market, there's a price for everything. So if we are at the beginning of what I call the summer blues or consolidation phase, you will see some companies that have strong exposure to some of the programs we talked about in the US, or some of the growth areas linked to technology, productivity, increased climate change, investment, et cetera, that will come back to more reasonable prices. So I think always it's where's your buying point and what's your time horizon. So during that period, we'll continue to see some interesting opportunities, but you have to be very selective.
You have a pretty contrarian call, Virginie, when you look at China and you think that it's underowned and the consensus is too negative on an economy that keeps underperforming, getting less and less transparent, where Xi Jinping is clearly not emphasizing the economy in the way that he had in the past and his predecessors did. What makes you less bearish or even bullish on Chinese assets at a time when everybody else is piling out the door and trying to exit as quickly as they can?
Well, I think what was really interesting, and as you said, less bearish, right, is that it seems you have a capitulation. There's a consensus avoid on China, and you've seen the news today with the 11 billion leaving and selling the Chinese market. You have to remember that the domestic investor in Chinese A shares is the dominant investor in the country. So what's happened? You're nearly in a phase where bad news is good news. Why is that? The government has a target of 5% GDP growth. Until it gets to the point where it feels that growth is threatened, it's not going to put in place big packages at the time where it's trying to restructure the quality of its growth. It wants less debt. It wants more quality, more high-end, more AI, more technology, more infratech, more consumer. And here's the point. The consumer, it can spend if it wants. It has a lot of savings, but it's a question of confidence. And of course, then you're talking about the property sector. I think we will see in the second half of the year policy measures, maybe around Bedaihe that's coming at the end of the month, but around supporting the property market, with the policy housing is for living and not for speculation, but in a soft way. It wants to stabilize the property market with its 3-arrow policy, if you want. One city, one policy. Every city has much more flexibility. Second measure will be to activate the capital markets. We heard about stamp duties. We're talking about long-term evaluation of companies and funds to give confidence, if you want, or even better trading options. And the final area is solving the local government debt. The LGFV issues is real, but here again, there's a lot of things going on in the background with local governments sweeping stocks, for example, selling stocks and reimbursing debts, etc. So a lot of things is happening, and what I think is right now, we are in such a negative mood for China that with valuations where they are, it's really worth a look.
Virginie, do you trust the data out of China?
I've looked at China for 37 years. I remember the times where, the first B shares were listed. Listen, the data is what it is. It is an emerging market economy. However, what I've seen over that time period is definitely more data and more precision. Now, in some cases, China gives more data than the Western world. If you look at the segment of unemployment for the 20-year-old, for example, I'm not sure we have that data for all the countries in the world, right? So it's definitely a learning path. There's a lot of data. Some of it is timely, some of it is less timely. So you have to take it for what it is, which is it's an emerging economy. It's the second largest economy in the world, but it's an emerging market economy.
Well, Virginie, then, to Ian Johnson's essay of this month on what Western companies should do, you have wonderful Pacific Rim perspective on this. Do you see investment by the West coming back to China, or is it over?
I think it's a really good question. So recently, China put in place a 24-point plan to welcome foreign investment. I think what we're going to see is a big wave of investment from areas like the Middle East, and you've seen that already happening either in stocks directly or in big projects such as technology, for example, and very selectively from other parts of the world. Europe certainly is sort of in between the US and Asia from that perspective. Will it be at the level of what we've seen before? Probably not, but China is entering this third phase of development that I call China Phase 3, with much more geopolitics, an economy that's maturing. Remember, an economy that has demographic challenges as well.
I mean, you remember when WHO came to Washington, and it was just like a huge, huge moment. Do you suggest, and this goes to Steve Roach's essay in the FT, I believe it was yesterday, do you believe that Beijing, that Mr. Xi will blink?
I'm not sure. I think there's a lot of political discussions taking place in the background. I think there's a face savings exercise, and there's the background, and there's the working level. And I believe China is the second largest economy in the world. I think people will be surprised by the innovation that China delivers in terms of the stocks you can buy in the market over the next 5 years. And I think in a year where we have elections, in a year where you have a lot of noise, we have to look through this and look at the long term.
Virginie Masseneuve of Allianz Global Investors. Virginie, thank you for the update on China. This belief here that if the growth target is threatened, we'll get the stimulus. Tom, I think some people might just say GDP is just what they tell us GDP is over in China.
I'm in that camp. I mean, I think the trend is there, the vector you can look at. But when you say 5% China GDP, do we really know what that number is? My answer is I'm going to listen to China Beige Book.
Morgan Stanley think they won't get there. JP Morgan think they won't get there.
It's a shift from 6 months ago. It's a shift from the beginning of the year.
They won't get there. So many houses now looking for a 4 handle, and the government's looking for something around 5.
Yeah, and we were looking at 6, I think is where we were.
Hoping
at one
possibly,
point.
potentially,
this is when the snow was deep at Jackson Hole. Ice was over.
China was going to reopen, and
China was going to reopen.
That's where the strength in a global economy would be.
The winds blew in from Idaho.
Is that right?
Down
Is that how this works? We weren't there.
Yeah, we were there. Lisa was out snowshoeing there.
Ramo was there talking about China reopening. That was where the growth would be.
Can you see me on the paint? We're going out Thursday. We're going to be out there a day early this year, which is great. Thanks to our team for that.
In Davos?
Can you see? No, in Jackson Hole.
Okay.
Can you see me on the Paintbrush Divide? 13-mile hike. It's pretty rough.
Is that what it's called?
Yeah, it's like the toughest hike out there. I think it says me.
A lot of elevation?
Yeah, I'm going to wear my lederhosen.
Nice.
You know,
special.
Valerie,
you're going to sing on this hike?
You're wicking bow tie?
Yeah, I got to wear the bow tie. Yeah, I'm
wicking.
told I have to.
Is this why you've been away?
Yeah, I've been training. Walk around Central Park, whole park.
Do you use that step machine?
No, I don't do the
step
machines.
machine,
I just walk around the park.
Around the reservoir?
Yeah, I start where I am and I go down and, I don't go below 59th Street. I stay on this side of it.
I'm aware of that.
Come around.
I'm not sure how you get to work when you don't go below 59th Street.
When you come up the west side, I don't make it to 110.
Right, okay.
I make it to Strawberry Fields forever, and that's about, then I have a strawberry daiquiri.
Oh, nice. Fit a drink in, Tom, on that hike. Anastasia Amoroso of iCapital joining us in the next hour. Looking forward to that. Your equity market on the S&P 500 positive here by 0.5%. There's a lift in the equity market in Europe. There's anything but. They've got a weak euro. 108.10 threatening to break 108 down to 107 potentially off the back of some dreadful economic data. The PMI soft, weak. Manufacturing wasn't great. Services now coming down to manufacturing. And Deutsche Bank this morning already out there making a call. The ECB is going to hit pause in September. That decision about a month away. Christine Lagarde, the ECB president, delivering a speech in Jackson Hole later this week. Live from New York City. Good morning.
Names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
The Fed just finished the fastest tightening campaign in over 40 years, and there's considerable uncertainty about when they're going to be able to ease the inflation, the uncertainty about the Fed, the resilience of the U.S. economy. That's left us in a very different place. I do think at some point you're going to start to see things break.
Russ Kostrick there of BlackRock on whether things are going to break in the face of what's developing in the bond market. Some major moves in the last couple of weeks. Yields we haven't seen since 2007. on a 10-year, Tom, a cycle high in the last week. Let's turn to the FX market and what's happening at the moment. In the FX market, a euro that's weaker off the back of dreadful data. PMIs on the services side, sub 50 in many places. 426.27 is where the 10-year yield is, Tom, down 6 basis points. A bit of risk aversion out there if you're looking at foreign exchange. Euro weaker, sterling weaker.
I'm going to be a broken record, John, but as you is led with the global slowdown that we have, you see it in the real yield. And at Jackson Hole, I'm going to be quoting this like crazy. 10-year U.S. real yield comes in. It's lower. It's not as inflation angst when it's up near 2%. 1.91%. That's a demonstrative move in the last day.
Was 2% earlier this week.
2%.
That was like the line in the sand for you, I know.
But for a lot of people, I think it's way above the line in the sand. The line in the sand was 1.7, 1.8. We exploded above that with convexity, with acceleration, and now we've come back a little bit. That's the news the last 2 days.
Are we sufficiently restrictive? Is the question.
Well, I'm going to go over to the Bloomberg Financial Conditions Index. It's 0.019. We are more restrictive than we were the last time the Yankees won.
9 games losing streak. 9 games. Longest since '82. Brutal.
Yeah, somebody called in. Thank you so much for your worry about Douglas Cass down in Florida. Mr. Cass is medicated.
I think Doug is alive and well.
He lives right down the street from Jim Palmer, which is like Goosebumps, the famous Baltimore Orioles pitcher. And I think Palmer had to go over and give him a
hug.
An Orioles IB, some hug and love. And
is season over?
And all that for the Yankees.
Big time.
Other than Mr. Judge, I think everybody's at risk there. We'll leave the baseball to the experts. Right now, we're going to go to the gentleman from New Hampshire. Of course, on the drama that we will see in Milwaukee tonight. Greg Valliere joins us, Chief U.S. Policy Strategist, AGF. Greg, I'm going to cut to the chase. The stereotype is a polarity of the nation and maybe even the polarity of the party. Let's cut to the Wisconsin chase. Wisconsin was won by Biden by under 1 percentage point, 0.63%. Trump won it 4 years earlier by 0.77%. How does this debate fold into those X number, those 10 key states that make the difference in November of next year?
Well, this is the opening night, obviously. I'll get my espresso machine out. It's going to be a late night. I think it's time for some new faces. And I think maybe one of the stories tomorrow morning will be the emergence of Tim Scott, the African-American senator from South Carolina. Maybe this guy Ramaswamy. There's a couple of other people who might do well. It's the beginnings of a sign that the country will look at fresh faces.
Where is the debris of George Bush Sr., somebody who worked in office for decades and decades, centrist Republican? Is that Chris Christie, or am I confused?
Well, Chris Christie is a centrist, but he's also very pugnacious. He can brawl, and I think he will be the hitman to go after Donald Trump. I don't blame Trump for not showing up. I mean, he's ahead by 40 points in a lot of states, so he'd have nothing to gain and everything to lose by showing up. But he will be a subject. I would focus, Tom, on other issues that will be interesting tonight. Aid to Ukraine. What do we do about the budget deficit? There are issues where the party is divided.
And that's one reason why people actually want to hear the issues, which have gotten drowned out by some of the larger concepts. I do want to dig into that. But before we do, you said you want to see fresh faces. And a lot of people are looking for that at a time where Ron DeSantis is having to prove himself in a new way. What does he have to do to reclaim his spot as number 2 and get some growth in his campaign promise?
Well, no gaffes, Lisa. I think he can't afford another misstep. But to a certain extent, he has an advantage in that his expectations are low. I think people aren't expecting him to show much, so he might exceed those low expectations.
When you talk about some of the divisive issues, you mentioned aid to Ukraine. Where is sort of the popular feeling within the Republican Party? Is there consensus that some of these candidates are going to try to reflect? And is it different from the more general population consensus?
Good question. I think for the base in the party and some of these candidates, the feeling is we've spent enough on Ukraine for a war that hasn't been won. I think there's also a real division on Social Security and how you deal with a budget deficit. Chris Christie has been very outspoken saying we need Social Security reform. DeSantis said that a few years ago. Will he embrace that tonight? That I'm not so sure of.
Greg, for our international audience, and frankly, I'm not up to speed on this as well, what's the primary process look like? Is it radically different than what we grew up with? Is there something new this year as we stagger through February?
No, I don't think so. I mean, the signing deadlines come late fall. By Thanksgiving, a lot of states will have their deadlines, which will focus, I think, on the governor of Virginia. I think there's a chance that Glenn Youngkin, late in the sign-up period, will decide, if it's just Trump and nobody else looking strong, Glenn Youngkin's worth about $500 million, and I wouldn't put it out of the question him running at the last minute.
Who else has money? I mean, obviously, President Trump, even with the legal challenges, has money. Mr. Pence, I believe, is struggling. Which of the candidates tonight on the stage has money?
Well, not a lot of them have Glenn Youngkin money. Earlier in the year, DeSantis raised a decent amount of money, but the surprise fundraiser in the last few months has been Tim Scott. And again, I think Tim Scott is going to be the surprise of the night.
Greg Valliere, thank you, Greg. As always, looking ahead to that debate a little bit later over at AGF Investments. It's round one, Tom, of a brutal battle into 2024.
You can talk to Valliere about this because he's a New Hampshire boy, and I've been up there with him during the dash. And John, particularly for our international audience, there's a cadence that we are hardwired to, a process of this, again, over all these idiot months that we have to do to get to November of next year. And all the states are jockeying to change this, to get power and to be first. And like the Iowa caucus. Should we go to the Iowa caucus?
Why not?
Why not?
Should have gone to the state fair.
I am so on board with that.
You want to go to the state fair?
I love state fairs.
We missed the state fair.
I know that you're being, a little bit tongue-in-cheek.
No, I would have been happy to go
really?
to the state fair. Yeah, sure.
Honestly, they're awesome. The pie testing contests.
Please, what is the high point of the Fargo State Fair?
It's great.
It's so good. Everything about it. I mean,
have you ever milked a cow? I've never milked a cow.
Yes, I've milked a cow.
You've milked a cow?
Yes.
John, have you milked a cow?
I've never milked a cow.
I've never milked a cow.
Maybe I milked a cow as a kid when you used to go do those farm tours.
Yeah.
You ever do one of those?
I've never milked.
Is that when you milked?
Yeah, of course. I'm not
just
a farm kid.
When we got to Jackson Hole, folks, you guys got to understand. Like they have lasso contests.
We're milking cows in Jackson Hole.
No, it's big bison country.
Part of our show.
You go up Route 191, John.
We're milking
bison. You come out of Jackson, and you take the Gulf Stream in. John, seriously, you take the Gulf Stream in. You go up Wyoming 191.
Right.
And like the bison are out in the field. The bison over here are monetarist. The bison over on the left are Keynesian. And you go up, you turn left at the lodge, you're there.
Are they making the decisions?
Yeah. You're there.
Based on the policy decisions of the last couple of years, maybe.
Whoa.
Who knows?
Whoa.
Making friends.
If you miss your turn on the way to Jellystone Park, there's transitory Wyoming. It's a ghost town.
Banned from the lodge on Friday. You know why. Liz Ann Saunders of Charles Schwab's going to join us a little bit later. That's coming up next. In the market at the moment, equities on the S&P 500 positive 0.5%. The data out of Europe, how many times are we going to say this morning? Dreadful. Just absolutely dreadful. Deutsche Bank talking up a pause at the ECB in September. They've still got an inflation problem. It's just amazing to see the difference between what's happening in Europe, what's happening in China, compared to what isn't happening in the United States. Tom, the slowdown that never was in America.
Yeah, it is. I mean, there's no other way to put it. It's a serious slowdown. You're going to see it in the data. What I see is it does today, John, it goes across equities, bonds, currencies, commodities. What am I focused on? I'm sorry, Swiss franc strength. A 0.94 on Euro Swiss would be a huge deal. We're not there yet.
That's what you're focused on?
I'm focused on Swissy.
As the next trip?
Swissy.
Swissy. Okay. Good to know. From New York City this morning, good morning.
hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Equities with a little bit of a lift this morning. Good morning to you all. On the S&P 500, we look a little something like this, elevated by 0.4%. On the Nasdaq 100, up by 0.55%. Yesterday, another day of losses. That's 5 days out of 6 we're down on the S&P. Let's see what today brings. The fate of that might be in the hands of one stock we'll talk about in just a moment. In the bond market, a 2-year, 10-year, 30-year. The 2-year getting comfortable around 5%. Yeah. 499.68, down about 5 basis points this morning, Tom, but the 2-year very, very close to the cycle high.
Comfortable nails it. I mean, all of a sudden, it's like I'm getting used to these numbers. Lisa, have spreads come in? I mean, is there a dynamic to corporate spreads around a 2-year at 5%?
Well, just recently, there's a little bit of softness, but tight. That's been the story for a long time.
These are bid. Price up, yield down.
Yep.
People want to buy 7%, 6% coupons. They do okay.
Spreads
there?
consistent.
Bond talk.
I would say spreads are consistent.
Consistent. Okay.
Yeah.
Yeah.
Because treasuries have moved, right? So anyway, we won't get into that.
It's not my world.
Okay. Yields are lower by 6 basis points on a 10-year right now, 4.26. Yields are lower by about 4 or 5 basis points on a 2-year, just sub 5%, 499.89. That's the bond market. Into foreign exchange, let's look at two currency pairs together. Data out of Europe, really, really not great at all. Out of the UK, not much better either. Cable breaking down by 0.8% here, so that's a much weaker pound against the dollar, 126.31. This is the latest from Nomura and Jordan Rochester. It's a set of data from the PMIs that could start the conversation of a euro at 105 in view for some folks, as rate spreads would already imply, but the stronger conviction from us is that it'll see pound sterling head towards 122. The view, Tom, from Nomura this morning.
DXY moonshot over the last 48 hours, 103.00. We're going to break 104 here by the time we get to the next hour. Moonshot. I mean, that's a serious move.
Some sizable moves out there, Tom. Yeah. Dollar stronger. Under surveillance this morning, the downturn in Europe gathering pace with Eurozone services PMIs coming in much worse than expected. Services coming in below the estimate at 48.3, dropping below the growth mark of 50 for the first time since late last year in Germany. In Germany, Lisa, 47.3 on services. Manufacturing, brutal. We're talking about numbers we haven't really seen much of outside of the pandemic.
And raises some real questions about the recovery in Europe, particularly how Germany is going to redefine itself in a services side recovery that's not really becoming a recovery anymore, with services now coming toward manufacturing the wrong way. Something that Virginia said that I think is really important is how much is this that the transmission mechanism of higher rates in Europe is faster, is more direct than in the U.S., and how much is this what the U.S. can expect down the line versus something tied to China, tied to how the rate structure is in Europe?
I couldn't agree more. There's a chart on my screen right now that's been doing the rounds on Twitter in the last 24 hours, and shout out to Robert Burgess here at Bloomberg for putting that one out there.
He should go to Jackson Hole.
The effective rate on outstanding mortgages. So not what are people being charged when they go to get a new mortgage, what are people paying? So we know that yields are near levels we haven't seen since 2007. We know that Fed funds is at the highest in something like 20 years. We know mortgage rates are pushing 8%. This is what people are actually paying right now. The effective rate on outstanding mortgages, 3.6%.
Yeah.
3.6%. Levels that we were at, I think, December 2020, something like that. 3.6%.
30-year bank rate right now, 7.61%. Substitute out your belief in what inflation is, and there's your real rate on real estate. You're underwater day one. I mean, that's all there is to it.
People aren't selling their homes. Seen that in the housing data.
I'm house shopping in
falling off a cliff.
I'm house shopping in Jackson Hole. I mean, I'm sorry.
I hope it's a cash purchase.
Four bedroom. And folks, look at the real estate. When you get a chance, look at the real estate in Jackson Hole. And I guess it's because of the taxes. Maybe it's Liz Cheney. I'm Tom Rush. I don't know. Everybody wants to be out there.
But that number, Tom, is why people can't buy and why people aren't selling. It's why this market is frozen. Just frozen. Yeah. And for those of you that would like that, the ticker on the Bloomberg, the ticker on the Bloomberg, USMIRATE. Just for anyone that wants that with a Bloomberg terminal, worth tracking. Chinese President Xi Jinping skipping a business forum at the BRICS summit where he was expected to deliver a speech on China's economy and its support for emerging markets. The no-show coming as China's economy struggles with falling prices and a faltering property market. TK, a no-show as the economy is not performing so well. I think notable at this point.
I'm going to be careful here and not editorialize. A study here in international relations is coming out of Lord O'Neill that we saw years ago at Goldman Sachs, Jim O'Neill. And the basic idea is the old BRICS, the modern BRICS, and if you take that, which side do they stand on? And to me, it's the age-old tension of China and India. And I mean, who is President Xi speaking to? Is he really speaking to India? Is there across the border, guns in hand? I just don't see it.
Well, publicly today, Tom, seemingly not speaking at all. The other story to look for after the close a little bit later, chipmaker Nvidia reporting earnings after the bell. The company soaring year to date on the back of optimism over AI, including guidance last quarter that came in far stronger than expected. Lisa, I think Dan Ives of Wedbush calling it the guidance heard all around the world back in May.
And it's a great way of setting it up because how much is this an NVIDIA specific, either upside surprise or profound disappointment? How high is the bar for NVIDIA? But how much is this really what's driven the entire tech sector rally? And I know that sounds like hyperbole, and yet if you take a look at the Magnificent Seven, the incredible rally really was hinged off from NVIDIA's upside surprise. All of a sudden, it's not as if AI was created this year. It's been around for a while. Artificial intelligence is not new. But suddenly, oh my goodness, look at the potential for profitability. NVIDIA keyed that off. If they disappoint on revenues, does that key off the opposite reaction?
I'm going to gap this into two worlds. And my brother's really good at this, like, an item in AI. There's a legit AI in GPT. He says it's earth-shaking. It is revolutionary, John, what these smart people are living right now. And then there's a whole other group, which he calls unmitigated hype. And I'm guessing NVIDIA, I can't even pronounce it. And NVIDIA.
Why not? What if you want it to be,
NVIDIA's in both camps, right? They're in the dead serious GPT camp. And they're also straddling games and all that, the hype camp.
AI hopes and frenzied dreams, I think we're calling it. That stock is up by more than 200% year to date. Just got this email, Tom, if you're interested. Spurs, Sheffield United, hospitality, $250 a ticket, September 16th. You want to make that happen?
I want to make that happen. We could hang out there with Def Leppard. Joe Elliott probably will be there. And,
nice.
It'd be good. Adele.
What's that stadium like? I've still never been. It's like the one Premier League London
great.
Stadium I've never been to.
You walk in and they're playing Adele. She's a huge Tots fan. And they literally are playing Adele when you walk in. And it's like wicked American, fancy. And it doesn't feel like what I see on TV. Was it Luton? Luton?
We should go to Luton.
Luton? Or where you grew up, where it was tough, or West Ham, you said used to be really tough. I like the Ted Lasso ones, the smaller stadiums. Richmond, yeah. Well, Richmond,
Crystal Palace.
They got relegated. I mean, they're playing like.
Is that a spoiler?
What?
Was that a spoiler?
No, it's not a spoiler. Mohammed told me Richmond's playing QPR this weekend, or I think, or next weekend. It's going to be interesting.
Is that a spoiler? Because I've still not watched the new season.
Come on. Well, the British don't like the show. I've read that it's lost in translation.
I don't know about that.
In the United Kingdom. I don't know. Liz Ann Saunders joins us right now to save the show. Chief Investment Strategist at Charles Schwab. This is an important conversation given the gloom out there. What's the Saunders gloom measurement right now, Lizanne? How gloomy is it in the land of equities?
So we really started to face problems at the beginning of June. Lots of conversation, obviously, about the concentration problem, the Magnificent Seven dominating pretty much all performance. At the same time, you only had 15% of the S&P constituents outperforming the index over the prior 60 days. So it was sort of this double whammy of concentration, which often happens in cap-weighted indexes, but such significant underperformance. Initially, we started to see some breadth improvement at the beginning of the pullback that we saw up the cap spectrum into those mega cap names. Now, unfortunately, we've seen this deterioration in breadth, and it's sort of across the board. And I think more has to be worked out there. Even on a day like yesterday, under the surface, it didn't look great. And these pullbacks tend to have 3 steps. You know, the first step is you start the down move, then you get a little bit of a relief rally, and then you continue. I don't know if it's going to be into correction territory, but I think there's probably a bit more that has to come out.
You went right where I want to go. To review, folks, from 2021, the peak of the market, SPX is down 9%, 8%, whatever. And the recent pullback has just been a crater, down 4%. Listen, you got to be kidding me. You and I remember when a correction was a correction. Is the mathematics of correction bear market, or dare I say down 35%, still in place? Or are we in a new world?
Well, so we've gone now almost 600 days without hitting a new cycle high. That's a pretty extended period of time. And that suggests that this is more likely a rally, in a bear market. But we've all been surprised so many times with the unique nature of this cycle, and we still have the dip buyers that come in. And what's interesting is those mini phases that happen of the dip buyers stepping in. It's also when you see a lot of attention go down the quality spectrum. You know, you get lips in the meme stocks and the non-profitable areas. That's the segment of the market that I think you want to use trader lingo, fade. I think you want to continue to lean into, call it the quality trade, and just be mindful of FOMO down the quality spectrum, especially in non-profitable areas.
One area that has seen a large amount of interest, especially in light of this question around where we are in the cycle, has been consumer discretionary. And I'm wondering if you think people have gotten over their skis in the optimism that the savings won't run out for individuals. And I'm among those people that question maybe it's never going to run out. But then the Macy's CEO got on the call and said that credit card delinquency is ticking up pretty significantly, and really seeing consumers much more restrained with how much they're spending. Do you buy that story? Do you think that's going to come to the fore more?
I do. And if you have to peel a layer or two back from the onion when looking at things like broader retail sales or even individual retailers' reports, to look at unit sales, the biases in terms of consumers moving more toward generic type brands as opposed to higher end brands. We also have to be really mindful of differentiating between nominal data, and a lot of retail data is expressed in nominal terms, and in real terms. And you're right. I think pointing out delinquency is important. It's mostly been concentrated down in the higher risk segments, lower income, subprime, but you're starting to see it creep into more of the sort of quality segments on the delinquency side. I still think, though, that it's the labor market that is most important to ongoing consumption remaining somewhat healthy, even more so probably than the savings story, the excess savings. I think it's the labor market. And if we start to see more cracks in the labor market, I think the consumer could maybe shut down the spigots fairly quickly.
Lizanne, what kind of cracks are we seeing now in the labor market?
Hours worked have come down quite a bit in this environment where there might still be labor hoarding. You're certainly seeing that. You've seen weakness in temporary employment, multiple job holders having gone up. You've had some bouts of an increase in unemployment claims. We've seen some of the commentary from some of the recruiting companies that are withdrawing guidance. So I think you're going to start to see it on the job openings, layoff announcement side of things. So there's still cracks, but they're wider than they were a few months ago.
Just happening really, really slowly, isn't it? Just much slower than we thought it would. Lizanne, thank you for the update, as always. Lizanne Saunders there at Charles Schwab. The excuses we've heard from retail in America over the last week. Walmart and Target talking about student loan payments resuming later on this year. Macy's sales are down. Delinquencies, to Lisa's point. Theft at Dick's Sporting Goods. Theft, Tom, that stock got absolutely hammered yesterday as they discussed shrink and how many people are just walking out the store.
And it speaks to
goods.
two Americas. It speaks to the political debate that we're going to see tonight in Milwaukee. And you know, there's a part of America that's booming. You know, we make jokes about it, but Jackson Hole is the antithesis of Dick's Sporting Goods down below 59th Street. I mean, you know, they're two worlds apart, truly two worlds apart.
Well, in Milwaukee on that stage, Tom, I wonder if Chairman Powell comes up in this Federal Reserve. I often hope it's about the economy. Yeah. They've been playing to that. Yeah. They've been playing to that.
But I thought what Greg Valliere said about Ukraine was fascinating. Do they really sit on Ukraine for foreign policy? I don't know.
Yeah. All of that still to come later on this evening on NVIDIA. After the close, there are people out there who think this report later on this evening is more important than Jackson Hole and Chairman Powell on Friday. Mandeep Singh of Bloomberg Intelligence on NVIDIA next.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, you know, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang Thursdays, 10 p.m. Eastern on Bloomberg Television or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
What's really important is less what we're going to hear from NVIDIA, less what we're going to hear from Chair Powell, less what we hear. And overnight, we obviously had some moves from China, and more the price action in response to all of these things.
Julian Emmanuel of Evercore with a clinic there. You have the data, you can learn something from that, and then you have the way the market responds to the information. You can learn a little more, Tom, from that as well.
Dead on. It's gospel Ed Hyman 101. I'm going to dovetail Ed Hyman's persistent call on disinflation into Julian Emmanuel's call on you got to be in the market, but and the way you do it, and you know, we make a joke about it, folks, but the Bloomberg helps here. On the terminal, we can't just look at the stock market. You can't just look at FX. Witness Jordan Rochester looking near a 107 handle any moment. On Euro, you got to look at equities, bonds, currencies, commodities. And John, you have to look at NVIDIA.
You have to look at Foot Locker as well, apparently. I just want to squeeze this in. Another retailer cutting its 2023 forecast and pausing the dividend. Foot Locker in the pre-market getting absolutely hammered. Down by 15%. This after what we heard from Dick's Sporting Goods yesterday. This has been a difficult time. I'll also throw in Nike. Just bear in mind, Nike on a record
9 days
losing streak.
9 days?
9 days, Tom.
I saw that in Zero Hedge.
Just in line with the Yankees.
And what's great is on Champs-Élysées, it's the La Carte de Pied. And it's amazing. Have you ever been in one, John?
No.
I mean, you go in with the children, and they lighten the wallet instantly. I mean, it's like you don't go in a Foot Locker. You come out with a lighter wallet. And yet there they are, really
What are they
struggling.
buying? Air Force Ones and all that stuff?
They're trying to. We say
I went to
no.
a Foot Locker. I
You
went to
know.
a Foot Locker a long time ago. I haven't been in a Foot Locker recently.
Yeah, but it's...
Are they still wearing those referee jerseys?
I think so.
Is that still a thing?
You know.
Anyway, there is a story here, Tom, that we should probably discuss, Lisa.
It's retail, yeah.
It's the disappointment we're seeing in retail and some of the warnings we're seeing from some of these big players.
Is it just consolidation among the strongest and the largest, or is this something broader and indicating some kind of weakness? Just to give you the actual numbers of how disappointing the full year adjusted EPS forecast is, $1.30 to $1.50 from up to $2.25, a material downside shift as they take a look at how things are weakening. Again, is this just due to Foot Locker and due to online sales, et cetera, or is this something broader?
Can you help me with how you invest in a company that makes 4 cents on the dollar? It's like groceries. It's like, produce. If Kroger gets bananas wrong, they lose money. It's such a tough, retail is a tough business if you're netting out 4 cents on the dollar.
It's getting harder. Foot Locker saw softening in trends in the month of July. So cutting their outlook, the stock is negative by 17% off the back of some pretty ugly numbers from Dick's Sporting Goods yesterday on the stock side of things, Tom. And Nike on that record losing run.
Do you want to make 4 cents on the dollar net income come down the income statement, or do you want to make 10 times that? How about 45 or 46 cents on the dollar net income up the income statement? Mandeep Singh knows NVIDIA does better than good. He's been just wonderful with us on tech this morning and joins us. How will NVIDIA move the market? I'm not asking you don't do buy, hold, sell.
Yeah.
You certainly don't do the guesstimate of what's going to happen. Is it at 4 o'clock today, Jen?
4:20.
We're 4:20. I'm stuck in some terminal somewhere. The answer is we're going to be stuck on our Bloomberg on our phone. What should we look for to come out in the headlines? What financial headlines matter?
The guidance. I mean, last quarter,
the
guidance. And last quarter, they raised guidance for this quarter by 64%. Now, the buy-side bogey is actually higher than the guidance they raised. So clearly, expectations have run up quite a bit. And what you're expecting is another beat and raise, but beat and raise by at least 20%. That's our view. And look, I think when you look at the confluence of factors that have helped them, easing of supply chains, China pull forward because there is a likely export ban, that is what's driving, that huge run up in the data center revenue growth. I mean, it could grow sequentially by 100%. This quarter, data center revenue.
But can we sustain that, John?
Well, we've had a ton of earnings already. I just want to Mandeep, from your perspective, can you get a read on NVIDIA ahead of time based on the earnings we've already had? Or is NVIDIA just a read on everything else?
Well, so NVIDIA plays into this secular trend that everyone believes is going to be with us, at least for the next 5-10 years and even beyond. And that's where it's different from that crypto kind of uptick that you saw for NVIDIA. At that time, NVIDIA was the only player because everyone believed it was a niche market. Now, everyone is buying into Gen AI, and they are actually putting their CapEx dollars. In the case of hyperscale cloud vendors, they're spending about $1 billion in CapEx every quarter to buy these chips. Now, they could develop their own, and that's a big risk for NVIDIA. That's what investors want to know, because they're up against the large internet and cloud companies when it comes to competition.
What about national security concerns at a time where a lot of people are gaming this out as the next big thing on both the good side as well as on security sides and concerns? Does it matter which areas of the world are buying NVIDIA chips most, where they see the growth now, but they could come into focus politically?
I mean, think about, how these chips are being consumed. They're being consumed on the cloud and on the internet. And cloud and internet serves everyone. So the physical location of the data center doesn't matter. Yes, the buyers may vary. It could be a Baidu or a Tencent, or it could be a Meta or a Microsoft or an Amazon. But ultimately, that's where this Gen AI chip capacity is being used.
I'm mentioning this because Saudi Arabia made a massive investment, I believe, in NVIDIA and is trying to expand in artificial intelligence in a meaningful way. We know that there have been issues with China and some of their development of artificial intelligence. I'm just wondering how this plays into NVIDIA as they expand globally at a time where there have been concerns raised about how some of this technology is going to be used and where the chips are really going.
Yeah, so far the export restrictions have been more on the leading node chips. So they have their latest H100 chip. They came up with a lighter version that's not based on the leading edge, or it has all the features, and that's what they are selling in these markets just to avoid the restrictions. But ultimately, everyone is looking to buy these GPUs because that's how you develop your large language models or you do your inferencing. And I think with NVIDIA, clearly they have the technology. They just have to figure out how to work through these export restrictions.
You're talking about paint drying. Mandeep Singh scheduled to be at the Battery Management Solutions Seminar for Texas Instruments in Dallas in October. That sounds like a bundle of fun. I want you to take NVIDIA today and extrapolate it out, obviously, to Microsoft, but to the Texas Instruments of the world, the silicon substrates of the world. Can you do that, or is it just discrete to NVIDIA?
No, actually, so Microsoft in their earnings said they are going to see a 1 to 2% point growth lift from Gen AI workloads.
Growth lift where on the income? Revenue?
On the Azure line, on the Azure
on
revenue.
On the Azure line,
yes.
The subdivision, the cloud division.
And so Google said they could see something similar. AWS, on the other hand, hasn't called out any growth lift because they are bigger in size.
They're working a 3-day work week. That's what that's about.
And so it does come down to, you know, how the cloud guys actually make that available. I mean, ultimately,
the cloud guys are working a 2-day work week.
I hope that if productivity goes up this time around, we actually work less, but I fear we won't. Mandeep, thank you. Mandeep Singh of Bloomberg Intelligence. Let's get these two names on a screen. Foot Locker, Nike. Foot Locker cutting their outlook. A new range for you on earnings per share, 130 to 150. Previously, 2 to 225. The estimate, 198. The stock down 24%. Weakness in the month of July. Tom, inventories much higher. Stores being closed. It sounds brutal, doesn't it? This is the kind of move we saw yesterday on Dick's Sporting Goods. You're seeing it on Foot Locker right now. And Tom, that 99-day losing streak could well become 10. That stock, 99, we're down by 2.4%.
I'm going to go to this phrase, John, I hate, omni-channel, which I've hated from day one. Oliver Chen taught it to me. What's he know? But the bottom line is Foot Locker I perceive as stores and malls. And the answer is, are we buying all of our sneakers off the internet now where Foot Locker's cut out versus other providers?
Possibly, to some degree.
I'm just making this up.
But Tom, for Nike right now,
can you see me in a
they've
pair
got a problem
Nikes?
over in China as well. Weakness there too.
Can you see me in a pair of Air Jordans?
Yes, I can. I can see that working. I can see that working. What are you wearing now? Pradas?
Yeah, I got my Jackson Hole shoes on. They're like, you know.
Ready to go. Thanks for interrupting what was otherwise going to be a serious conversation about what's happening in retail, TK.
Retail's getting hammered. That's the discussion.
Well, it's more than that, though, right? There's a larger question here about discretionary spending and whether the savings is really coming up. There's a larger question about whether this is the weakest players getting beaten out during a high-rate environment, or whether this is something broader that really speaks to a consumer. I keep going back to what the Macy's CFO said yesterday. The speed of the increase in bad debt since the first quarter was faster than planned. Charge-offs, concerns about ability to spend. Yes, there's specific stories. There also is something else going on here.
What we've heard from these retailers in the last week is inconsistent with what we see at the headline, the labour market. Lizanne did a wonderful job of going through some of the weakness you see elsewhere. But Tom, right now, the headline is 3.5% and payrolls growth is pretty decent. The guide you're getting from some of these retailers is not that consistent with that.
I just looked down at Mandeep's shoes. He's wearing the Roger Pro Clay.
How much are they?
It's like $300 a pair. You know, he's like all tennis.
They're expensive.
He didn't get them at Foot Locker.
Nice. Like Federer own brand. Is that what
Get
that
me
is?
off the set.
The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority.
New York City, a $100,000 salary feels like just $36,000. That's according to a new study that looks at 76 of the largest U.S. cities to see where $100,000 goes the furthest, after taxes and after accounting for the cost of living. For many, reaching a six-figure salary is a huge moment when you feel like you finally made it. But that feeling may not last long when you realize just how much taxes and the cost of living in an expensive city takes out of your paycheck. And that's especially true after 2 years of inflation. Hybrid and remote work have opened up so many more opportunities for people to choose where they live. So that forces the question, Should I stick it out in an expensive city or try to find somewhere more affordable? So where should you live if you want to maximize your salary? Consider Memphis, Tennessee. The home of the Blues topped the list with a take-home pay of about $86,000. Tennessee doesn't have an income tax, and the cost of living there is about 14% cheaper than the national average. So a dollar there takes you much further. Texas is another popular choice, and it's clear why. 7 of the top 10 cities where $100,000 goes the furthest are in Texas, a state known for low taxes. Of course, there are so many factors that influence where you choose to live. You may want to be at the center of things, or be near family, or be somewhere where there are a lot of career opportunities in your field. It's not always just about dollars and cents.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
How high can rates go before it becomes almost self-limiting?
The policy rate is going to rest on a high plateau for a while. That's going to feed into longer-term yields.
We're still within that transition period where we could have a very interesting trend environment.
We had the biggest surge in inflation in 40 years, and while headlines come down, core is still sticky.
We're seeing some cracks in the consumer, but broadly speaking, we still are pretty upbeat.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Retail is not having a good time. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market's just about positive by a third of 1% on the S&P. It's the big one a little bit later after the close. You'll hear from Nvidia already this morning. Another retailer in a world of trouble. Foot Locker down in the pre-market, Tom, by 25%. A quarter of the market cap gone. Just like that.
On the break, when you saw Big Little here, Bramo was really intelligent here on the split here economically. This is not about luxury. Even LVMH is off, Hermes is off, da-da-da-da-da. This is about America in a certain part of America flat on their back, and that's the tension that you'll hear at Jackson Hole. I'm going to suggest Jerome Powell will address this middle part of America that feels like they're in recession, and you see it in Foot Locker this morning.
Just some warnings starting to pile up, Lisa. You mentioned Macy's and delinquencies that they flagged. We can look at what we heard last week from Walmart and Target flagging student loan repayments. They were flagging that as well. And then Dick's Sporting Goods, a world of pain yesterday for them as well.
And so some people might say, well, these are each specific stories that are losing share to others. It doesn't necessarily represent the entirety of consumers. They still have money, although it's running out. That said, clearly the buck is starting to stop. And if a company is weaker and they have
Just rolling over. There's no other way to put it.
Let's look at the charts right now. Futures rolling over just a little bit. We're positive by a quarter of 1% on the S&P 500. Futures slightly higher. Yields are coming in 7 basis points, 425.68 on a US 10-year, and the euro. Haven't mentioned that this hour. Took about 3 minutes for me to do it. I apologise. The data. Dreadful. Dreadful. Euro weaker. Euro dollar here, Lisa, 108.05.
And people expecting possibly the ECB to remain on hold for just a chunk longer as they try to assess that. 1 p.m., I'm really watching this. The U.S. is planning to sell $16 billion of 20-year bonds at a time where we've seen yields climb to the highest going back 16 years. Where does the demand come from? 20 years is sort of a hairy issuance anyway, so how much demand will really perhaps set the tone in markets? After the Bell NVIDIA earnings, everyone's looking for whether they can justify a 200% gain so far this year, more than that. Can they deliver an upside surprise? Mandeep was saying, what, of 20%, which can keep this going? And at 9 p.m., it launches. It is the first primary debate of the Republican Party beginning in Milwaukee, and there are 8 candidates, former President Donald Trump not among them. Clear focus on Ron DeSantis, clear focus on Tim Scott, clear focus on issues that we haven't been talking about as much as maybe some people would like in terms of Ukraine. We heard that from Greg Valliere, as well as the deficit in Social Security.
Lisa just killed that. I mean, she could just, when Harden's off on one of her 14-week vacations, Lisa could bomb down to D.C. and just kill it.
Balance of power.
No, but you could do both. You could get up. No, Lisa, you could get up and do the 6 a.m. and then do the 6 p.m. as well.
Oh, that's so sweet.
It's so sweet.
Lisa can't wait for that. That's great. Anastasia Amoroso with us in the studio, Chief Investment Strategist over at iCapital. Anastasia, good morning to you.
Good morning. Good to see you.
Should we be worried about what's happening with discretionary spending?
I mean, there's definitely some dichotomies going on, and I do think that part of it has to do with what consumers are prioritizing. They're continuing to prioritizing services, they're continuing prioritizing, food and drinking places, and they're not so much prioritizing retail and furnishings. And I think that's part of what we're seeing in some of those retail earnings. I mean, that's really the undertone. But I can't be worried about the state of the overall consumer because when I look at the unemployment rate, it is still low. When I look at excess savings, yes, they're diminishing, but they're still kind of diminishing from a high level. And, wage growth is still running at 4.4%. So I can't be worried about the overall state of the consumer. I think some of these are idiosyncratic stories.
I love, love, love your note that Chairman Powell will not save the day. Thank you for bringing Jackson Hole rationality in here. I would suggest he will look to August 31, and I believe it's September 31, inflation data. Will it shock us with disinflation?
The core PCE numbers should continue to show disinflation, or at least sort of stagnating around this 4.5%, 4.7% level. But the one print that I am a little bit more worried about is the CPI print, which is September, September 13th, before the Fed. But I worry about that because we've got food prices that are creeping higher, we've got energy prices that are creeping higher, and so I worry that the headline numbers are going to start rising by more than 0.2%. And per month. And the big deal about that is if you have this speed of 0.2% increases or more, we actually might start to see year-over-year headline numbers continue to rise. So, maybe the core disinflation continues, but the headline may point the other way.
Which raises a question about this from the former St. Louis Fed President Jim Bullard in an interview in the Wall Street Journal this morning, saying, I think it's turning out that the Fed's policy has been very successful, and I think that will be the buzz at Jackson Hole. I don't know what will be in the speeches, but the talk will be that this has been quite successful. Are you concerned that they're going to declare victory before they really even have the data to understand where we are in the cycle?
I don't think this is the moment to declare victory. I mean, yes, I know on the one hand you want to say, inflation is declining and we've got economic growth, but we have 5.5% interest rates and we have close to 6% GDP. I mean, that is not a soft landing economy. That is a no landing economy. That is an accelerating economy. So I think they have to take a hard look to say how restrictive are they actually being.
Given this sort of backdrop, where are you in terms of leaning into risk or backing away? We hear Liz Ann Saunders saying that she's just on the margin cautious. We hear others leaning in and adding risk, expecting there to be a recovery trade starting early next year. Where do you fall?
Well, I think you buy the pullback, and you especially buy the pullback in some of the artificial intelligence stocks. And as you know, we've been looking for some sort of consolidation and maybe draw down back to 100-day moving average levels on the S&P. But I do think you buy that because, Lisa, it goes back to the point that the Fed at this moment in time may actually not be yet restrictive, especially if they have a rethink about the so-called neutral rate, which is neither restricting the economy nor accommodating. And if that's the case, then we have the economy that might just keep going. So that's the cyclical side of it. And the thematic side of it, artificial intelligence is one of the most far-reaching opportunities. And you've got stocks in the AI beneficiary basket that are down 15, 20% from their recent peaks. I want to buy those.
You mentioned 6% GDP. Lisa, I just looked at Atlanta GDP now, 5.76%. To me, that's a complete fiction. I had a guy once in Beloit, Wisconsin, email me in anger. Said, Tom, the unemployment rate here at the time was 14%. America's not feeling a near 6% GDP economy. I mean, not even close. I mean, I really take issue with that. I love in your note, buried. I don't know why you bury it. You should put it at the top. The way you make money or not lose money in this market is to look to companies that don't rely on leverage. That's the smartest thing I've heard with a real yield where it is. What kind of companies don't use leverage?
Well, you go back to technology. You go back to tech companies that historically have not heavily relied on leverage. And you also look to private markets, for example, growth equity strategies and venture strategies that invest in things like artificial intelligence, but they don't borrow heavily to do it. They're not leveraged buyout companies, but rather they're investing equity.
John, NVIDIA, crushing debt. It's like Warner Brothers Discovery, 1.7% debt in NVIDIA.
Anastasia, thank you. It's good to see you.
Thank you.
Anastasia Amoroso there of iCapital. Here goes another one. It's Peloton. They see quarterly revenue at 580 to 600. The estimate's 647 to Tom. The estimate's 647.8. The stock is down by 18%. TK, translate this for us. When a company turns around and says we don't expect to remain free cash flow positive for the upcoming quarters, what's your response to that?
You know, it's not a 4% business. This is what's known as a loser. I, with great respect for the people that are there, I feel sorry for the sell side. We got how many analysts? Let's see. We got 27, make it 30 analysts following this dog. I don't know what to do with it. Talk about a zombie. Who's going to buy him? Apple?
Dog, zombie. I feel sorry for the South Side. This is how you keep in touch.
Do you know
with
how much?
TK.
Do you know how many Pelotons? Look, in my walk-up, you know, we got a Peloton in one room. We got another Peloton in another room, and the only common thing with the 3 Pelotons we have is they're all gathering dust. I walk around and go, "Is anybody going to use this stuff today?"
Stock's getting hammered. To Anastasia's point, some of these stories, Lisa, would be idiosyncratic. I would suggest this is one of them. Elsewhere in retail, there's still a lot to talk about.
Okay, well, how many idiosyncratic stories before suddenly we have a trend? And I understand that these are the weaker players, but is this just the weaker players getting pushed out at a time where there is more discretionary kinds of behavior? Or is this something that is broader, that is people pulling back in certain corners? Peloton's its own story. I mean, let's just put it that way.
Peloton has a Peloton problem.
Yeah. What was it? Big? Chris, what was that? Like the Mr. Big?
Oh, Sex and the City.
Sex and the City.
Are you bringing that one up again?
Well, I mean, it was like sort of the
heart attack.
That was so bad.
The heart attack.
Yeah, I think that was
it
marked the downfall.
Isn't that like 2.5 years ago now?
Well, but that marks the rise and fall, right? I mean, it was like the hot thing.
That was the peak.
And then, have you seen it since then?
What, Peloton or Sex and the City?
Both. Peloton. I'm talking about Peloton. I know you watch Sex and the City.
I haven't watched the new stuff. I haven't watched the new stuff. No.
It's just your old school.
John, Claudia Sam just put out on Twitter the photo of the lodge at Jackson Hole, and I can see your room. You got the rock star room, 2 down from where the vice chairman sleeps. That's the one with a spider web. It's got spider web. Do you look under the bed for snakes?
It's so cute. You think I'm staying at that hotel with you. If you're just tuning in, welcome to the programme. On the S&P 500, futures rolling over here, just about positive by 0.1%. Joining us a little bit later, Lisa Shallard at Morgan Stanley. Just a fantastic guest, Tom. Coming up at 7:30 Eastern Time, so that conversation, 20 minutes away.
That's going to be interesting to see. We've got Lisa Shallard coming up. Dr. Weissman will join us as well from Macquarie. Back-to-back, Thierry Weissman and Damian Sassauer. John, when we invented this, that's what you want. We got 30 minutes of encyclopedic knowledge on EM and the challenges of China.
Very, very cool, Tom.
Yeah, very cool.
Can I just bring you this little tidbit from Peloton? Evidently, their new expansion plan is to partner with college campuses. And they're looking to in-state Peloton bikes in college campuses in their new business.
Which is why we're
program.
paying $75,000 for some fancy pants. School.
They're working with University of Michigan, starting off. So that's sort of their way that they're trying to
issue them a slide rule, and it'll be a better world.
Well, it's just sort of interesting, sort of how they're looking to new areas of growth. That's what they're talking about.
Weren't some investment banks giving away Pelotons? Do you remember that?
Yeah.
We turn to our expert, our Peloton expert right now, Anastasia.
You get a bike.
Joins us
you get a bike.
What do you think? Peloton, thumb up, thumb down.
I think that might be a pandemic thing. Tom, if I had one, it might be sitting in the corner as well.
Yes, thank you.
You using that as a walker? Is that what you were doing off camera just a moment ago?
What, the Peloton?
Yeah,
that's what it's, you got to get up. It's like Soul Cycle. I did Soul Cycle. Courtney Collins
trying to break numbers.
Courtney took me up to Soul Cycle.
You're so distracting. From New York, this is Bloomberg.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make
The top names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. Today, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Tune in for continuing coverage with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Key message of Chair Powell at Jackson Hole is going to be the policy rate is going to rest on a high plateau for a while. He's got markets about where he wants. The main message he's going to want to send is rates are going to be around current levels for a lot longer than you think.
Higher for longer, the message from Vince Reinhart there, the chief economist and macro strategist at Dreyfus and Mellon, your equity market. Well, you were grunting as I was reading.
Yeah,
it's difficult,
was.
Tom.
I'm trying to figure out the Yankees. Okay, I'm going back and forth with Doug Cass. They've lost 9 in a row. I'm upset.
Can I get to the price action?
Please.
Thank you. It's good to see you. Equities positive by 0.1% on the S&P. Yields are down by 7 basis points, TK, your 10-year, 425.68.
And it's going to be interesting, to say the least. John, what's the data point that you see today that really matters to you? What's a single data point we got to look forward to?
Dollar strength. Dollar strength.
Yeah, 103.91
Off the back
DXY.
of some really soft PMIs out of Europe, both the UK and the Eurozone.
Yeah, for everybody who gets no more literature, read Jordan Rochester today. He doesn't mince words. It's at a tipping point this morning. Pay attention to that. Into Jackson Hole. Not paying attention to Jackson Hole, Anne-Marie Horton joins us now. Bloomberg debate correspondent. She nailed debate in high school, took it further in college, and now debates on balance of power. What will you focus on in balance of power is the pre-intro into the festivities in Milwaukee?
Well, I think it's going to be interesting to see how each of these individuals really try to define themselves away from the incumbent they are fighting on the stage, who will not be president, and that's the former President Donald Trump. And I don't mean so what they think about Trump, because we pretty much have a good idea of how everyone is going to deflect when it comes to, or attack when it comes to the former president, but when it comes to policies, because when you look at a latest poll over the weekend from CBS, YouGov poll, what you see is that voters are craving to hear about what these candidates have in terms of their plans for the economy, most notably inflation. So you really want to see who is going to come out. And then, of course, when you think about past debates, it's always those moments you cannot prepare for, when someone stumbles, when someone makes a gaffe, potentially when there's a bit of bickering or a modern-day version of a brawl on stage. Those kind of moments is what you want to see, and who in the next morning is going to potentially pop and get all the limelight. But we should note that that limelight that someone potentially can get Thursday morning is really going to be overshadowed within those 24 hours, because the former president says he will turn himself in Fulton County, Georgia. The
former president, if you take him out of the mathematics on radio, folks, we just showed a great bar chart showing President Trump way out in front of everybody else. I'm sorry, DeSantis has a massive lead over everybody else, 19%, and the next one is 9%. I don't even know who it is. It doesn't matter. What's the DeSantis plan against Bidenomics? Is he going to come out tonight and act presidential and give us a DeSantis, I can't even say this, John, help me, a DeSantis-nomics plan?
Well, one thing, he will come out, I think, looking and trying to act as presidential as he can. He is with one of the best debate preppers this country has ever seen. When you look at the track record for this individual, this is what he's been quoted about for years, an individual who prepped in 2004 former President Bush when it comes to the debate stage, and something that we've learned from the DeSantis camp, according to reporting from our colleagues, that he has actually been doing this for months. So he has been preparing for this moment. He'll also be center stage, the way the RNC does it, because he is leading in the polls. He will be in the center. So with Donald Trump not there, DeSantis's camp is really expecting all these attacks to happen on him. So he needs to differentiate himself, not just from the former president, given the fact that he is going to be the leader in the polls, only physically present on the stage, but when it comes to Biden. So you can expect him to go after the culture wars in corporate America, saying corporate America has gone too woke, but also he will go after inflation, which I think you're going to see really all of these 8 candidates across the board go after Biden when it comes to inflation, and they're going to say that Bidenomics, what this administration calls their economic plan, has failed.
How much is the audience going to be the primary voters, and how much is it going to be the general election voters?
Well, it's interesting because, of course, you have a primary, and to get to the primary, these individuals are going to have to show that they are as far right as they can be, right up against the former president, to get that primary vote. But then, if they are the ones that become the nominee, they then need to really start to move more moderate, especially when it comes to issues, if they're asked about Social Security and Medicare, if they're asked about issues like abortion. These are issues where they're going to want to make sure that they can pick off these independents in a general election. So that won't happen just yet. You're going to definitely see them really try to gear towards those primary voters, those caucus goers, because those are the ones they need to win right now.
So many strategists have told us that the only way to actually bring the deficit into check is to do something about Social Security, either by increasing the revenues for it or by cutting benefits. Have we heard any of the candidates really address in a comprehensive way, head on, what to do with those particular expenses?
Well, they're likely going to be asked about this evening, because when you look at the polls, this is what individuals want to hear about. They want to hear about the economy and inflation, but those individuals in America, those voters who are older, in their 60s and the 70s, they want to see a comprehensive plan. We have heard from some candidates who say, Mike Pence has talked about this, Governor DeSantis has talked about this, that they want to make sure that Social Security does not go insolvent. So there needs to be a plan going forward. The plan would then hit those that are younger, but they want to make sure that those that are older are protected.
I'm afraid to ask Anne-Marie, they're going to do the spin tonight. Do you go to the room? Are you in the spin room? Are you allowed to go in the spin room, or can only Joe Matthew brave the spin room?
I believe actually is the first time that Fox is opening up the spin room to other journalists from other outlets.
Yeah.
So you can expect the spin room to be mobbed with
What
individuals.
happens in the spin room? I'm trying to think of Sir Keir in London, in the spin room of Labour politics. What happens in the spin room?
Well, they get their surrogates out there, and it's their cheerleaders, right, to say this is why our candidate did the best and try to diffuse any issues that happened potentially on stage. But I don't think people really remember what the surrogates say in the spin room. They just remember those moments on stage.
What do you think of this, Jed? This is insane.
Well, the spin room.
The spin room, the whole process is nuts.
That's a long history, Tom, doesn't it?
It used to be it was JFK and Richard Nixon, and it was about the dog and pulling the ears.
You're trying to shape the way journalists tell stories. That's what you're trying to do.
Should we do a spin room out of here?
With Peloton.
Have the guests, all of our guests there with,
Like. Sounds like you want to go.
Oh, no, God, no.
Don't fancy it?
No. Maybe if they ran it in black and white, that would be good. It would harken back to when it was a real debate.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Equities just about positive here, struggling to bounce. The S&P 500 up by 0.1%-ish on the S&P. On the Nasdaq up by a similar amount. A lift for the equity market, but just a little one. Some earnings out there, raising some concern. We'll talk about that in a second. In the bond market, 2-year, 10-year, 30-year. Let's slice up the yield curve. Your 10-year is down about 6 basis points, 4.2588. 30-year down 5 basis points to 4.35. If you've been away for summer and you're just coming back, well, yes, we've had quite a sell-off in the Treasury market, a reset, a 2-year, Tom, in and around 5%. And yesterday at the close, something like 3-4 basis points away from a new cycle high at the front end of the curve.
I'm going to go to the real yield. The 10-year real yield, 1.91% down from that shocking 2% level. And that will be, and I'm not thinking it's unspoken at Jackson Hole. I think it'll be part of the debate out there, is central bank and monetary theory in a new rate regime, and particularly a new real rate regime, going right over, John, to the R-star debate front and center.
If you'd asked me about a month ago, Tom, I would have talked about resilient economy, the tension between the progress we've made on inflation and the fact that things are still pretty robust in America. If you ask me now what the main event might be in a couple of days, global slowdown for me, what's happening in China, what's happening in Europe, very much the focus, and we'll talk about that in just a moment. Two currency pairs for you. Look out below. Sterling, the euro, weaker against the stronger dollar. Cable right now, 126.35.
Edge of Brexit.
Negative 0.75%. TK, a weaker pound off the back of some weaker data across Europe.
And I haven't looked at the technical charts, but you break support or resistance depending on the currency pair. And, you know, you're there, and we're there. DXY, 103.87.
Under surveillance this morning, here's the name we want to talk about, Foot Locker. Sinking in pre-market trading. The company pausing its dividend, slashing guidance for the full year. The stock also weighing on Nike as it could extend a record losing streak after falling for 9 straight days into today. Lisa, Foot Locker is down by 32% in early trading.
To $15.86. So people are not particularly full of conviction. In terms of the business model here, what is the business model at a time where people are going direct to consumer, at a time where people are shopping online, and at a time where their stores are facing physical difficulties with respect to theft and with respect to the real estate footprint? There are a lot of questions here. The larger one is, are these idiosyncratic stories? Perhaps. Does it suggest something broader about a weakening in terms of consumer appetite, particularly on lower income levels? And that, I think, is something we're going to have to parse through.
Does it go beyond physical retail? Given what you've just said, Nike's down 10 straight days now.
Nike is connected to China. So all of these interconnected stories are kind of coming together. Foot Locker, more of a U.S. story, but Nike very much connected to the global slowdown that you just mentioned.
Just amazing to see some of the weakness, and these stocks get absolutely hammered in the pre-market. Odds climbing that the ECB is going to hit pause in September. Weak PMIs out of Europe, getting everybody's attention this morning. The headline reading falling further into contraction territory for the last month. Flash PMI data out of the UK also in lower than expected with higher rates hitting demand. Tom, in Germany, I think what might get your attention would be what's happening with manufacturing in the 30s on the PMI. But I want to focus on services. The fact that services are coming down to manufacturing in Europe is not coming up to services.
Does Lagarde rewrite? I believe it's a Friday or Saturday speech. I mean, what does she do? She got to rewrite it. I mean, I'm sorry. There's literally going to be sentences they're working on right now in Frankfurt, or I mean, the entire ECB takes off 6 weeks. I mean, that's the way they do it. But are they at Saint-Tropez or wherever rewriting the speech?
Oh, keep going, please. This is good. This is good. Can't wait to see if Lagarde sees you on Friday.
Hi.
Yeah.
Yeah.
Okay. Let's finish with this. UPS. The workers approving the $30 billion labour deal tentatively agreed to last month. Roughly 86% of employees voted yes. I want to know who said no.
Exactly.
A Teamsters record at UPS. The 5-year agreement will go into effect after a local Florida affiliate votes to ratify a supplemental agreement. That sort of technical stuff. Bottom line is, big deal over at UPS. Tom, big deal over at American Airlines as well. And to Lisa's point, she said this a couple of times in the last couple of days. We haven't had the strikes, we've had the pay rises.
Yeah.
Let's see if that changes.
And of course, there's a Hollywood distraction as well. I guess they're trying to move forward there, and it's based out on what I see in Twitter. It's a challenge to say the least. What is important here at Surveillance is we like to focus for 30 minutes on a theme. Damian Sassower is scheduled to darken the door on EM and the market dynamics, and far more, John, is to speak to someone, including the frontier economy, Europe, and that would be Dr. Weissman with all of his work at Bear Stearns and now at Macquarie.
Terry, good to see you. Fantastic as always. What a change over in Europe. We thought this year would be good, driven by China reopening. How important do you think the global slowdown is going to be in Jackson Hole this Friday?
Not too important, because I think that the theme of the symposium, or the conference, if you will, is not the short term. It's not the cyclical themes. The theme they've laid out is the structural changes in the global economy. And when you hear something like that, you think that the speakers are going to be directed towards talking about things that happen a year from now, 2 years from now, 3 years from now. As far as Powell's speech goes, look, the Fed could, if it wanted to, pat itself on the back. Inflation is low in the U.S. The economy looks a bit robust, at least in certain quarters. But I don't think it's time for him to do that. There are still too many hawks on the FOMC panel that are nudging him towards at least sounding as if he should be hawkish from a medium-term and long-term perspective. When you think about those narratives about the global economy that are structural and longer-term in perspective, they are things like climate change, deglobalization, demographic change, high debt in the emerging markets. Those are all things that sound inflationary. At least two of them feel like negative supply shocks. So I don't think he'll be inclined to say much about the short term and the outlook for the Fed funds rate. I think he will focus, if he sticks to the narrative of the symposium, on those longer term considerations. Right. And that will mean that he's going to stress that it's going to be difficult to get to that last mile of inflation decline from 3% to 2%. And therefore, don't expect rates to be cut.
I look at Europe, and what we're going to hear from Powell and from Lagarde and other worthies are going to be there is, well, and I look at our start as a debate here. It's an academic debate of a full and running economy. In Europe, whether it's Eurosclerosis or something new, can there be a European R-Stard? Can you do legit economic analysis of the European experiment?
You can, and I think you can do legitimate analysis of the current cycle in Europe, this weakness that we're seeing both in manufacturing and now in the services. I think to a large extent, the manufacturing slowdown in Europe is coincident with the Chinese manufacturing slowdown. I don't think you can separate the two. Look, China had this massive slowdown in manufacturing in the second quarter. Well, look at that. Europe had a massive slowdown in manufacturing in the second quarter, too. We know those economies are connected through the German industrial complex and the export economy in Europe. So I don't think that's too much of a mystery. China and Europe are coincident. I do think, however, that this services slowdown we're seeing is also analyzable, but I think the focus has been too much on what the ECB has done with rates. It hasn't been enough on what the ECB has done with liquidity that it issues to the banks. The TLTRO program has been winding down out of the ECB for a few months now. And if you look at credit creation coming out of Europe, the extent to which banks have issued credit to the private economy, it has flatlined. And that's the reason why Europe is now seeing this slump in services.
Just to underscore this, in other words, the slowdown in services is directly related to the transmission mechanism of ECB policy, not necessarily what's going on with China, correct? Is that basically what you're saying?
That's right. But what I'm also saying is don't look at rates. Don't look at the deposit rate being at 3.75%. That doesn't really tell you much about what's going to happen to the European economy. Look at bank credit. Look at broader monetary aggregates. They have flatlined in nominal terms. They're actually down year on year in real terms. It's the credit economy that people don't focus enough on. And if they had been focusing on that flatlining, they would have predicted the slowdown in aggregate demand in Europe.
Is the European economy so different from the U.S. economy in terms of the rate structure and the lending structure that there is no analog to be drawn in terms of how higher rates in Europe are affecting the economy and how they will eventually trickle out in the U.S. economy and affect the economy there?
They should affect the U.S. economy the same way, but there is an important difference between the European economy and the U.S. economy, and that's as follows. The European economy is overly dependent on its banking system for the extension of credit. They really don't have non-bank lenders. They don't really have direct lending in Europe. Everyone who wants a loan ultimately has to find his way to his or her way to a bank. In the U.S., it's completely different. Now, if you were just to analyze the banking systems in Europe versus the U.S., you'd find a lot of similarities right now. You'd find that credit is contracting. You'd find that loan officers in the U.S., just as in Europe, are much less willing to extend loans. Maybe the reasons are mildly different. Maybe in the U.S. it has to do with regulatory overhang. Maybe in Europe it has to do with what the ECB has done. That's the similarity. The difference, though, is that the U.S. doesn't have to depend just on its banks. There are other sources of lending to support the startup economy, the legacy economy. We don't have that in Europe. And therefore, when bank credit contracts in Europe, you feel the effect on aggregate demand much more than you do in the U.S. And I think that's what we're seeing now. The U.S. will catch up, though.
There is a time for a surveillance audible. We will do it right now with Thierry Weissman as well. Years ago, you would publish with Emmy Sheo, David Malpass, and the rest of the clan at Bear Stearns on Latin America, and the world would stop. Argentina, do we care, or is it just the problem child of our lifetimes?
I don't care. I think it's the problem child of our lifetimes. It's not that well integrated into the global economy. Yes, it has some commodity exports, but
lose the hysteria.
Yeah, lose the hysteria on Argentina. It's not terrible, by the way, that they may have a president that's going to adopt some radical market policies in the final analysis. When you have a situation like this that hasn't been working for more than 4 decades.
Why be scared of something new?
Why be scared of something new? Exactly. I would be much more scared of something old.
Okay, so what should the IMF do? They've been handing them out gazillions. They're going to write a check in Morocco, I assume.
The IMF should just wait. You cannot make a decision with regard to the extension of credit until you see what the political economy is. Let things simmer for a while in Argentina. Let's see what the policy agenda would be under a new president or a legacy administration, and then make a decision.
Terry, thank you. It's good to see you, as
My
always.
pleasure.
Terry Weissman there of Macquarie on the global economy and all the rest of it, including Argentina as well. Message of the morning, maybe of the week. This here from Thomas Thornton across the Bloomberg. The best trade in 2023 was the pair trade. Long Eli Lilly, short Foot Locker. People are taking shots versus taking walks. What do you make of that, Tom? They're taking shots, they're not taking walks. Isn't that good? Took you a while, didn't it? That's really, really good.
Classic.
That's
it's
really
sort of an
smart.
indictment of the American
But
culture.
wait, wouldn't that be
really smart?
No, that would be Diageo Foot Locker.
Diageo Foot Locker?
Yeah.
What do you mean?
Taking shots. I mean,
No. Taking shots as in like lose weight.
Oh,
like Ozempic rather than going to the gym.
Oh, I'm not. Yeah, I tried that and it didn't work. I thought it was a different shot.
Straight over TK's head.
No, sorry.
No. Not Diageo versus no.
Cherry didn't get it
If
either.
you've got to explain the joke, it's not as good as it. I read it. I got it straight away. I thought that was great.
I said an indictment on American culture.
Somebody said, are we wearing
Yeah.
Western cowboy stuff at Jackson Hole? I said, one, we're not there for 2 cups of coffee. But no, we're going, it's like a business thing. It's like,
What's Jackson Hole got to do with this?
No, I just, my emails lighten up today with people wishing they were going to Jackson Hole. I'm like, it's really romantic.
No, don't wish that.
Yeah.
Nice.
What do you think? 42 degrees Friday morning.
Potentially, yeah, check the weather.
Yeah, check that out.
Low 50s maybe.
With potential rain.
And then it starts to climb. No rain.
Really? I saw a couple of potential
Oh,
raindrops.
I didn't see that.
Yeah,
You're looking at a different forecast.
I think it changes every 3 minutes.
Okay.
It's the mountains.
Ah, all right. If you're just tuning in,
Grandma
welcome
knows.
to the weather forecast and the price action as well. Equities right now positive by 0.16%. Coming up a little bit later in the next hour, Steve Rasciuto, Chief Economist for Mizuho Securities, Tom, on this economy going into Jackson Hole Friday.
Really important conversation. He is exquisite at the dynamics of the core GDP function. He's somebody where at the Fed they will really listen to what Rasciuto combined with Dominic Constam, what they think about the dynamics of the system. Rasciuto on GDP and Dominic doing all the different interest rate and the geometry of it.
That'll be fun. And then the She No-Show with Damien Sassin of Bloomberg Intelligence. We were expecting a speech at this BRICS summit, Tom. Didn't get one. The economy's in a little bit of a tough spot. Been some suspicion about what's going on in the equity market over there, Lisa.
Here's one comment about that no-show. It's clear that Xi Jinping places a higher priority on political issues, security issues, than he does on business and the economy, which raises a question of, will they come in with the policy support if they're more concerned about other considerations? I mean, that's been one of the underpinnings of this whole weakness and the market response.
Without a doubt, Tom. Are we going to get that big policy shift? Right now, no big sign that we are.
No.
And a loss of faith, I think. A loss of faith from the international investor around the policymaker in China over the last couple of years.
Well, huge. And you see it with the devaluation of renminbi. It's tangible. Can you imagine if it continues?
Equities just about positive stateside on the S&P 500. Live from New York. Good morning.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
I think the 2-year back at basically 5%. I think that's the pain trade for a lot of the banks. At what point does the economy effectively break under the weight of real rates? I don't think we're quite there yet at 4.3%. I still think that the market's ignoring a lot of this interest rate pass-through at their own peril.
I love that I say shots, Tom, and you just think of booze.
Diageo.
Gary Goldberg.
That's where I'd go. I mean, maybe
head of US
somebody's
rate
got a better
strategy
idea.
over at TD Securities. Yeah. Shots, booze, not medication. It's a big difference there, Tom.
Some people consider it so.
Yes. So, Tom, that is medication. Futures right now on the S&P, just about positive, but fading. We're positive here by 0.1% on the S&P 500. Yields are lower by 6 basis points, 426. There's so much going on a single name basis in retail right now. Foot Locker to stand out this morning, just absolutely hammered. In the pre-market, we're negative here by 32% in early trading, Tom, as they cut their outlook going through the end of 2023.
They cut the outlook, but it's also the way of doing business. I noticed Amazon, with the cloud and all that, not down nearly as much as traditional retail. And I think Lisa's dead on. This is much more than just sell-side income statement chit-chat.
It goes beyond Foot Locker, Lisa, that's for sure.
And we've seen that with Nike, and that's related to what we've seen overseas, but also to exporting goods. Is this going to be just simply the weakest players getting punched out of the woods, getting punched out of the water at a time of higher rates? Is there something broader? Is there something that's going to be a more persistent trend? And at what point does that get people nervous versus who's gone into a Foot Locker anytime recently anyway? And does anyone use their Peloton? I mean, these are sort of the questions that people are going to be asking
I'm not sure
this
we're the
morning.
target audience, okay? I'm not sure we are. I'm not sure how often you and I go to Foot Locker is a decent indication of business
I have gone
at that company.
with my kids who want to get, Air Force.
Yeah, okay.
Jordans
That's
and all
different.
That.
All right.
Although they're often sold out. It's not even good customer service. That's part of the problem.
Oh, right. You let them know. You want to tell them now?
I'm good. They're
Okay.
having enough trouble this
We did
morning.
airlines
Best
yesterday,
of luck.
Tom. We did airlines yesterday. Some of the customer service. So the gate, I find, it's not on the plane. On the plane, I think they're fantastic.
The gates are a disaster.
But the gate, why are they so rude at the gate?
Because people are just awful. Because they're basically forced to lump together.
I think they're
and
worse
have
in
you seen
London.
this? Like the sense of, again, we talked about this yesterday. Everyone rushes to get on so they can get their overhead suitcases.
needless.
And then all of a sudden, everyone's pushing and shoving, and it's like, food fight.
Like Ryanair in the early 2000s.
100%.
I had a pilot.
Brutal.
I had a pilot tell me it's not funny. The pilots are not amused by all the luggage going on and all that. I mean, I don't know.
But why is the customer service on a plane decent, but at the gate they're just rude to you?
I do not know.
What's that
why.
about? I just don't get
to
it.
me, it's as bad in London. I find in London it's just as sketchy.
What, we're ruder in the UK?
Zurich's great. Zurich is like a Swiss watch. They run it beautifully.
You think they're polite in Switzerland?
Yeah.
That's a new one.
You know, what's amazing...
Not my experience.
Damien
okay.
Sassar's agent just looked over at me and he says, "Can you get to Damien?"
No,
You know.
no. I love talking
Damien was
about
enjoying
TSA
it.
pre-check.
Okay, well, Damien Sassar here in pre-check. Chief of
TSA
Richard.
pre-check line. Everyone's got it now, Damien. The line is like back out the terminal.
I just got it a few months ago. It's fantastic. I mean, I've never had it before.
Everybody's
I was
getting-
the one in the 7 queues just to get to the
They're
gate.
getting clear now.
So they can
Have you
be
seen
mean
that?
to me.
Clear? They're getting clear now.
I do clear.
You do clear?
Yeah, it's
How's that working out for you?
It's sketchy. I mean, they go my knee.
It's another good review for a company today. Sketchy.
I put my eyes, John. I put my eyes into the thing, and they go, "We'll have to do that again, sir."
Let's hope that's not a public company. Sketchy.
I'll be using it today. You know, look, what's this Francine as the Gulfstream? That's what I don't get.
Outrageous.
2 years in a row. Damien Sassar with us right now. After Terry Weissman, this is really the way to do it. Damien, I want you to talk to the fancy people we will talk to at Jackson Hole. Adam Posen of the Peterson Institute scheduled the iconic Barry Eichengreen of Berkeley. They're removed from your world. What will you, as a sophisticated markets guy, say to the international relations and international economics crew at Jackson Hole?
Yeah, no, I mean, okay, I'll tell you my honest answer. My honest answer is we're moving into a multipolar world where countries are being forced to take, a side between China and the U.S. And in that environment, should those countries that can actually remain neutral command a premium from investors? So that's the big question I would have. That's the serious answer. The other answer I'd be saying is, why do we even care? Because it's all about Christine Lagarde after those PMI figures. I mean, let's get clear. Bruce Kasman called it last week. He said, forget about Powell. He's going to have 3 pages or less. This is going to be about Lagarde after the PMI. And I think he's probably right here after what we've just seen.
We'll build on that. How does Lagarde respond to how weak the data is in Europe right now?
I mean, well, I can tell you what investors are doing. They're trying to pinch strikes and short sterling, and then Euribor secondly. I mean, look, that's really kind of where I see the market going here. This is all about a set pause and whether or not that's the top of rates. I mean, I'm an EM guy. I'm not a Euro short sterling specialist, but I used to trade those contracts, and I know what the market's doing
They
right
have
now.
Euribor, there's Shibor, there's Libor. There's like 47 Libors. It's like
world
Howard
tour, if you
Johnson's Shibor, Euribor.
Well, whatever bore you have, there is a question around how high it is and what that's doing to the economy. We were just speaking with Terry Weissman about this idea that on one hand, in Europe, the weakness is coming from China, and on one hand, it's coming from higher rates, and that really transmitting into the economy. You put those two things together, doesn't that pressure the EM complex in a major way that has been sort of somewhat priced in, but not discussed to the degree that maybe it should?
Interesting. I mean, I don't know if I completely agree with that. I mean, definitely, if you just look at interest rate differentials, Euro-US should be trading at 105. And what are we at, 108 now? So, there's weakness there. Certainly, if China's PBOC isn't managing the currency, you'd probably see it at 740. That's where B of A has it. I think that's where JPM has it. It could go far higher than that. But at the end of the day, you're right. The path of least resistance is dollar higher, stronger dollar. I said that, to you guys on Monday, and I genuinely believe it. Now, for emerging markets and from a foreign investment perspective, I mean, let's look at China. China's had over the last, 2 weeks, $10.7 billion of withdrawals out of their equity market. By comparison, since 2014, emerging market local debt on a net basis has seen $50 billion removed from it. That's since 2014. And in, 2 weeks, not even, we've seen $11 billion sucked out of the Chinese equity market. So, look, foreigners are supposed to be only 4% of that market now. But, I mean, I guess at this point, I mean, positioning so light, maybe you could just see a little bit to move it. I don't know, maybe. Is China zero in your portfolios? Probably. Should it be there? I don't know. It remains to be seen.
To our portfolios, and I just, as an aside, I wanted to talk to you after the show about that investment I did in the 97-year Austrian zero coupon bond, going from 80 or 90 somethings where I closed a trade with Mr. Sassauer, now enjoying a price of 5, 90 to 5 or whatever, total bombshell. Where's the opportunity right now?
Well, I mean, century bonds are interesting now, right? If you're a believer in duration, you think that rates have peaked, right? I mean, and it's not just Austria, it's I think Petrobras has a century bond.
Yeah,
I'm
asking, where's the pop if you get the rate right?
Look, I think, it's got to be treasuries. I mean, look.
You're going to go back to U.S. full faith?
I mean, I think real yields in the U.S. are sufficiently adequate. So you're sufficiently compensated for the risks you're taking there, which means not that much in this environment of uncertainty. So, I like treasuries here. I mean, I like the fact that you're clipping 2% 10-year real yields. I mean, you take what the market gives you, and I think the dollar, has the wind at its back right now. So, I mean, for me, that's kind of the play. But, forget about that. Let's talk a little bit more about emerging markets, some of the things that Terry and you were just talking about, like Argentina and how no one cares. I care. The reason I care is because this is the IMF. This is the multilateral finance institution for emerging markets. And if they kind of show that they can't support, one of their biggest constituents, that's a real problem, I think, for all these other countries out there. So, I care about that. We've had elections. We mentioned in Ecuador, we've got a runoff, in Guatemala, Argentina coming up. And, these are all important, touch points that we have to focus on.
Why should the IMF be concerned about what's happening in Argentina?
$7.5 billion disbursement that's going to be approved today, probably. At least that's what Sergio Massa, the finance minister of Argentina, believes. And then another $2.75 billion scheduled for November after the election, maybe?
Is that our money?
$10 billion.
Whose money is that?
Oh, it's a long answer. I mean,
well,
SDRs, we're going to talk about, drawing rights and all that stuff. Yeah, I mean, a lot of it is the U.S., but it's other developed market economies. It's Japan. It's the Eurozone. Everybody's kind of behind the IMF. It's not just any one party.
Do we want that body to decide political outcomes?
Well, what's the option?
I don't know the answer to that.
China, bilateral institutions who basically have different agendas. I mean, I think the IMF has done an adequate job. I wouldn't say a great job, but certainly knowing there's a backstop there for countries in crisis and in times of need is a really important thing. And I think that's how a lot of financial assets in my neck of the woods are priced.
Bloomberg Business of Sports, speaking of options, the Yankees, even back to my youth, have never been like this. Doug Cass is medicated down in Florida. He thinks Jim Palmer should come in. The great Jim Palmer should come in and be the new manager. Are they going to blow up the Yankees this year?
Forget about the manager. I've got 2 words for you. Theo Epstein. Theo Epstein, his 2 boys are now grown. He's living up in Greenwich, Connecticut. We need to bring Theo Epstein down to the Bronx.
Give him the Red Sox love.
Give him the Red Sox love, exactly. Luciano, we got to, draw back all that. And, maybe we need to start over. Look, Aaron Boone is obviously on notice. I think Hal's going to try and make his mark. But, yeah, the Yanks don't look good. Hard knocks. Aaron Rodgers tonight. That's what we need to be focused on, the New York Jets.
You're going to watch the debate or the Jets?
What debate?
Damien, good to see you. Damien Sassower of Bloomberg Intelligence. Tom, I can confirm that Clear is a public company, if you'd like to explain.
Yes. Yeah. I'm a member of Clear. I love it. I think
okay.
Clear is absolutely...
Not sketchy anymore.
Let me be clear about Clear. I love Clear. I use them. I stare at a thing. I go like this.
I see the small print running across the screen. This is not investment advice. This is not investment advice.
I'd like to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority.
The hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
I don't think the Fed is done. I think we're in a higher rate for longer regime.
The inflation, the uncertainty about the Fed, the resilience of the U.S. economy, that's left us in a very different place.
Everyone would rather wait to see if something is going to come to fruition. And that's exactly what you're seeing this week.
The consumer has money. The consumer has jobs, so they're willing to spend.
There's a lot of money that's going to be getting sucked out of the system, and I think it's ongoing right now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on our way to Wyoming. On radio, on television from New York this morning, we prepare for Chairman Powell's speech and Jackson Hole. It's going to be an interesting hour on this as well. John, I just think we got to do a data check here. And the per capita income in Jackson Hole, per capita income, Jackson Hole, $318,297 is the per person per body income in Jackson Hole. 69, sort of like the surveillance team, 69% of income comes from investments. This is a fantasy land we're flying out to.
Things are pretty good if you've got loads of money. For other people right now, not so much. So we can talk about a couple of names. We've had some warnings in the last week from retail. Foot Locker this morning, cutting the outlook, the stock getting hammered. Same thing from Dick's Sporting Goods in the last 24 hours. Some warnings from Macy's about delinquencies. Lisa talking about that. Last week, student loan repayments are going to restart later on this year. And apparently, according to Walmart and Target, Tom, that's going to hurt. This Friday for Chairman Powell is about the tension between the progress they've made on inflation. And they have made some progress.
Yes.
But the fact that mission is not complete, because at the moment, this economy has been far more resilient than they thought it would be. It's the tension between those two things and whether they need to go further or maintain rates higher for longer that we'll all be focused on.
But to me, the heart of the matter, and I think Paul's actually been pretty good about the social aspect of the dialogue, is the haves and the have-nots. We are going to happy land the absolute ground zero of the wealthy in America. And we have to witness the retail numbers you're talking about. Lisa, I'm sorry, half of America is flat on its back with a 5% GDP statistic.
I take your point, which is the reason why it really stood out to me that the former St. Louis Fed president, Jim Bullard, said this in a Wall Street Journal article. I think it's turning out that the Fed's policy has been very successful, and I think that will be the buzz at Jackson Hole. He went on to say he doesn't think this is necessarily going to be reflected in the speeches. It's not a very good look to say victory, but at the same time, that's going to be the scuttlebutt. This, to me, is a question. Is it too soon? And this is what everyone keeps talking about, the long and variable lags, which we laugh about, because how long, how variable, what does this mean?
Super long.
Super long or super short, whatever you want to call it. Whatever you want to say, it is clear that rates are not transmitting to the U.S. economy as quickly as people had previously thought. And so it raises a question, will they ever? And then what does that look like?
Okay, I've got in my briefcase my book of the summer, Olivier Blanchard's monograph on our start. It's on, where are we going to settle out? John, what are we going to hear at Jackson Hole about the new 2.0%? I think we're going to hear a lot about it.
The new long dot, a high neutral rate.
Yeah.
John Williams, the former New York Fed president, poured some cold water over that, Tom. And I think to Chairman Powell to come out this Friday and maybe separate himself from New York Fed President John Williams would be a pretty big ask, wouldn't it?
Yes.
It would be a big ask. Yeah. So let's see. Let's wait and see if we hear anything on that. I think in the last 24 hours, to some extent, relatively speaking to where we were a week ago, much bigger attention now on President Lagarde of the ECB this coming Friday, off the back of some pretty dreadful data out of Europe, off the back of a weaker China. And Tom, if we took the US economy out of it, let's take the US economy out of it. It's pretty robust, resilient, all of that stuff. Take it out of it. Just focus on China. China at the moment, not great. Policymakers struggling to respond to it. Europe, sub 50 PMIs, basically in contraction. And inflation's still a problem, even with that. Things are much, much harder.
I'm going to go where you were 2 hours ago, John. The euro, we're on the 107 handle. Watch 108.12 on a weak euro.
Yeah, and potentially 105, according to Nomura's Jordan Rochester. He seems to have more confidence, though, Tom, in a weaker pound story. The pound at the moment, 126.29. He's looking for 122. So a dollar stronger here. Bond market rallying, taking some of that yield back. TK, we're down 5 basis points, 427.26. And equities just about positive by 0.2%.
Just had a wonderful feeling. Lisa Shallot to take over for James Gorman, I think it would work.
Lisa Shallot
I'm sorry, I think it would work. The Chief Investment Officer at Morgan Stanley Wealth Management joins us right now. Your worst nightmare, Ms. Shallot, no question about that. Tell me what you're hearing from Morgan Stanley investors. I don't want to know about, the research department or what banking's doing, the land of Gorman. What are you hearing from your customers?
Yeah, so this is really interesting, Tom. Our clients have been, quite frankly, pretty willing to watch the quote unquote sideshow of markets this year and take advantage of what for many of them are the best fixed income yields in 10 to 15 years. And with so many things and so many cross currents that, quite frankly, don't hew to traditional or recent models of how Fed tightening works, a lot of this has been viewed by our clients from the sidelines as they clip coupons.
Lisa, the real yield is up at a level which most adults that we talked to said it would never get to. Do you change your portfolio allocation with a 10-year real yield touching 2%, now 1.92%?
Now, our advice has certainly been to do that. We believe real yields at these levels make fixed income particularly attractive, and the stock market is still not fully processing the reality that these real rates at these levels, if they persist and they prove not to be a momentary dislocation of liquidity in markets, if they are truly emblematic, as you mentioned earlier, of a potentially higher R star or a Fed that is exceedingly patient, that has major implications for the valuation of long duration growth stocks. And this is one of the conversations that we're having with folks. It's kind of, Finance 101, reminding them that the discount rates matter when you're thinking about the cash flows, even of the Magnificent Seven.
Lisa, there's one thing to talk about clipping coupons at a time where growth is decelerating. It's another when just looking at the GDP Now forecast from the Atlanta Fed, as Tom was mentioning earlier, it's nearly 5.8%. It's reaccelerating. And you can say hocus pocus, and there are all sorts of other things that it's not accounting for yet, et cetera. Still, there has been this incredible growth, which goes against the normal thought that there will be a slowdown as a result of these high yields. How do you explain that to clients and say, no, this reacceleration can't last? No, look beneath the hood. What are you pointing to really show that it's not sustainable?
Well, I think we're trying to talk a lot about the extent to which this has been a combination of balance sheet resilience combined with excess savings across the private sector, both for corporates and for households, and really just doing the math and saying, look, at a certain point, that excess savings that was delivered to the household sector at the peak of COVID, which approximated $2 trillion, is now down by our best guesses to something around 375 billion is left. Again, not saying that that's nothing, but it is attriting. And that you put that together with some of the other factors here, as have been discussed, whether it's higher oil prices, the demands of student loan payments, et cetera, and the consumer will start to face headwinds in our humble opinion. On the other side of the ledger, for corporates, certainly the sum of the refi wall on some of this corporate debt, we believe is going to start to show itself in 2024, and you're going to start to get some of these cracks in the credit markets, alerting people to the cost of capital, and that maybe the capital spending boom that we've seen begins to slow a bit as that interest rate sensitivity does finally kick in over the next 12 months.
How surprised have you been? How frustrated have you been, Lisa, that the thesis hasn't really played out this year?
Extraordinarily so. Look, I think that we tend to model things in two dimensions. One are our economic models, and secondly, our market models. And what's been pretty extraordinary is both types of models are failing in the current environment. The macroeconomic models, things like, indices of leading economic indicators, some of the manufacturing PMI-oriented data that historically have pointed to material deterioration in corporate profits, has not really played out. On the market side, things like the real rate, which typically is inversely correlated with stock prices, has just not had the efficacy. We've seen, price earnings multiples really expand in the face of rising real rates. That's not a typical correlation. So this has been an extraordinary year. If you tend to be pretty, data and framework driven in your recommendations, as our team historically has been. Now, that doesn't excuse, trying to do the homework for, what we missed. And as, we've tried to talk about, we really missed the extent to which this interest rate insensitivity would persist, and the extent to which household balance sheets and corporate balance sheets have thus far been immunized. Their spending patterns have been immunized from these higher interest rates.
Lisa, you weren't alone, that's for sure. Lisa Shallett of Morgan Stanley. Lisa, thank you for the update there from Morgan Stanley Investment Management. TK, hasn't that been a story? One person's complacency, another person's resilience. Which one is it?
Which one is it? I think Anastasia Amoroso nailed it. Is you got to look at the three accounting statements rather, and the key attribute here, given Lisa Shallett's discussion of real rate dynamics, is leverage, 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 leverage. That's the first. You go to WACC, John. I don't know if you knew this. It's a terminal function, weighted average cost of capital. Informative. You want to own things now with a lot of debt, like. Look at Hollywood and entertainment, just as one example. That's where Amoroso was coming on this.
The great refinancing that never was, but might be next year. If you're just tuning in, welcome to the program. The S&P 500 positive here by 0.2%.
Coming up in about 18 minutes from now, Steve Risciuto of Mizuho Securities looking ahead to Chairman Powell in Jackson Hole, Wyoming on Friday. Before we get there, after the close, we will have numbers from NVIDIA. Looking ahead to all of that, Jim Kerrin of Morgan Stanley in the next hour on Bloomberg TV, alongside David Leibovitz of JP Morgan, Nadia Lovell of UBS. And we'll ask that question at the very top of the hour. Complacency, Elisa, or resilience?
It's two sides of the same coin, at least. Where are we in this moment? It always looks like a soft landing when it is about to turn into a hard landing. That's what we were hearing from JP Morgan earlier this week. At a certain point, though, what data are we tracking? And this is my frustration with data dependency. I know you share this. At a certain level, are they going to try to declare victory in Jackson Hole, even just on the margins, not in the speeches, because it's a bad look? But, you know, or are they going to really say, hold on a second, there's something else going on here? Take a look at Foot Locker. This is concerning to us. Are they going to be paying attention to that?
There's a data point this morning for you. I think relative to last year, they're in a much better place.
Yes.
And they deserve to feel much better about the situation. Whether they declare victory, TK, that's a stretch at this point, going into September.
It's not, there's a humility to Jackson Hole. Seriously, folks, we make jokes about it, but there's some serious academics going on here. In debate, it really gets heated. They really get going in the meeting. McKee's in the meeting. They won't let me in. I tried to sneak in once when I wore a bear costume. Tried to sneak in one year, didn't get in. And Bowder went mental. Willem Bowder at Citigroup went absolutely mental.
Because you were in a bear suit?
Because you could get in.
That was part of it, but they won't let me in.
Why did William go nuts?
I can't remember what the paper was, but they really get going on this. There's like serious debates here. To me, it's over our start. It's like, where do they set?
This is really selling it
5
to the
years
people.
out, 10 years. I am. I'm selling
What a promo. Going into
I'm going
Friday.
fishing.
You're going fishing.
No, you're
Matt
That's a
Roy,
promo.
Western River Anglers. I'm going fishing.
Let's get a video of that. All right.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
It is a weaker China that we've seen. And of course, Europe is more exposed to China than the US. So definitely part of the slowdown picture. And I would say generally a theme of divergence of the US versus the rest of the world. I think what we're seeing in Europe is the impact of tight monetary policy. The transmission has been much faster or more powerful than in the US.
Virginie Mazeneuve at Allianz and with massive Pacific Rim cred. She was really quite good about the synthesis of China into all north and, of course, down south to Australia on the Pacific Rim and the oddities, the confusion right now that we see there. Here at 8:17 a.m., we're doing a number of things. We're looking at really ugly retail America. We're looking at some difficult European numbers. We're on watch for 107 euro, 108.08, 1.0808 weaker euro today. We have our eyes on India, which was a non-story until X number of days ago when a Russian space probe crashed on the moon. Don't know much about that, but what we do know is India now will make the go. I believe we've got an image on radio. It is a textbook image of what you see in a control room, and this in India, as we are 20 minutes away from that. Lisa Bramwitz, our satellite expert, will bring us coverage on this.
We're all looking forward to that, including me.
We're looking forward to this, and it's some wonderful history here because they look to the far side of the moon. Lisa, it's good to talk to Henrietta. Why don't you bring her in because she's expert on the far side of the Capitol.
All right, well, fine. Let's start there. Henrietta Trey is Director of Economic Policy Research at Veda Partners, and we've been talking all day about the debate that happens at 9 p.m. Eastern of the Republican primary candidates. But there is a larger question right now at a time where we are hearing about Gina Raimondo going to China and a question of the rearranging of the global sphere. And I'm just wondering, from all of the rhetoric that we've heard over the past 24 hours, really criticizing China by the U.S. about the lack of transparency, et cetera, is there a clear message right now coming from the U.S. administration on exactly what they want this relationship to look like?
I think the message is getting starker. And while the Biden administration is doing its level best to have these cabinet level secretaries be going over to China throughout this year and maintain that there is a dialogue happening at a high level that would prevent, a trade war from escalating into something more aggressive, you are simultaneously now starting to see the Republican presidential candidates enter the fray on the China discussion more aggressively. And I think it has to be said, former President Trump yesterday having that bombshell report in the news that he is reconsidering and plans to repropose what was a 2016 idea of a border adjustment tax that effectively says anything coming in from China gets taxed with a 10-20% tariff rate, which is effectively a tax on durable goods. Big box retailers end up going sort of ballistic whenever this gets proposed, as they did in 2016. But it's a $1 trillion revenue raiser that when we deal with tax reform in 2025 is going to have to come up. So I think the Biden administration's approach to China is is already being influenced and is going to be wrapped into the Republican presidential candidates' plans, which is to be very aggressive towards China and indeed the rest of the world. The border adjustment tax is not just facing China, but any nation that does trade with the United States.
Just building on that, this idea that the party line is to be as aggressive as you can on China. We are expecting to hear that from the candidates tonight at the Republican primary debate. What is the distinction between candidates? Is it sort of hard and harder in terms of the lines that they want to draw? What are some of the contours of where they're going to draw distinction from the other candidates?
On the trade front, I think there's nowhere to go but more aggressive. Domestic onshoring, imposition of tariffs, anti-China sentiment in the United States is at its highest that we've ever documented, according to Gallup polling. The only groups that are from the sort of traditional Republican platform, which used to believe in something called free trade and is now something called fair trade, which apparently requires tariffs to even out the uneven playing field that the Republican candidates see, there's really no limit to how aggressive you can get on China. And I would not want to be the Republican candidate saying, hey, maybe trade with China is a good idea. They'll just get pilloried by anyone who's polling higher than them, including Trump.
Henry, I don't have this as direct news, but I think it's anecdote with imagery that in some form, 5 drones took out 5 major jets, bombers, whatever, of Russia overnight. That brings an immediacy and imagery of this war in Ukraine, whatever the news may end up being. How do they address a war in Ukraine, which I would suggest does not engage the American audience?
I mean, the Republican Party in particular is specifically bifurcated on this issue. There are some candidates, I'm sorry, not really candidates, but there are some Republicans in mostly the United States Senate. I would say Mitch McConnell is the most preeminent actor there, who are strong advocates for continued aid to Ukraine. They will take the White House's $10 billion supplemental emergency request for Ukraine and probably plus it up to 15 or so, as we've seen them do in the past. But then you have the presidential candidates who are pretty split. Ramaswamy, I would say, is probably the leading candidate, along with President Trump, who would say, maybe let's question whether or not this is a situation we need to be engaged in at all. We're more worried about federal spending. Let's strip this out of any supplemental request.
Okay, but I made a joke earlier about the far side of the Capitol as we wait for India coverage here in a number of minutes as they attempt to land a craft on the moon. Henrietta, let's try to land a craft in Congress right now, and that's the culture war. Is this debate about the economy stupid, or is it about culture stupid in America?
It's really unbelievable. I was just thinking about this yesterday. Then Majority Leader Mitch McConnell gave Republicans the biggest Christmas present I've ever could have imagined. Trillions of dollars in tax cuts that expire the year after the president is elected, the next president. This campaign should be exclusively about tax policy, federal interest rate policy, all the individual tax brackets expiring. And you can't even see the Christmas present because Donald Trump and abortion are blocking out the entire tree, let alone that present. So I think that in a alternate universe, Republicans are talking exclusively about tax policy and economic policy right now, which would be a boon to them going into an inflationary environment where President Biden has struggled to get his Biden economics message across. And instead, we're talking about abortion because it's on every docket, particularly across the South, next in Virginia.
And this raises a question about what the gravity is going to be after today and how much it's going to pull away from just a shrug of the shoulders and a suggestion that President Biden will get reelected. How much concern is there in the Democratic Party about really galvanizing that campaign at a time where donations are flagging and a lot of enthusiasm is as well?
I mean, all you need to do is look at the turnout we've seen in Ohio and Kansas, and we will see, I suspect, in Virginia in November, and again in Ohio in November. The voters are flocking to the polls when it actually counts. I heard an incredible note. It's basically, people will say that the economy is their number one issue, but then they go to pull the lever in the voting booth and they say, oh, I vote for this guy because of his position on abortion. I think that's what you're seeing in the middle of August, and that's got staying power.
Henrietta Trace, please watch the debates because I'm going to be with Damian Sassower watching the New York Jets. Henrietta Trace, thank you so much, with Veda Partners. Lisa, there is Eli Lilly of Indiana. I can't explain, the pharmaceutical expert of the troops from Indianapolis. In years before that, literally the cash founders of Washington University of St. Louis was Mallinckrodt. This is one of America's venerable names in pharmaceuticals until I'm going to just quickly eyeball 15 years ago where this company blew up with opioids. And that's what this is about. Mallinckrodt of St. Louis, in one of the 47 spin-offs from Tyco and Covidien, declares a second bankruptcy this morning. They did so 3 years ago. I don't know the particulars on this other than to say, Lisa, it's one of the great venerable names of pharmaceutical science in America, buried within all the debate and litigation of opioids.
Yeah, they're paying their final payment of $250 million to the opioid trust, and in the process, wiping out a bunch of their debt in this bankruptcy.
Coming up, Michael McKee. This is Bloomberg.
top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. The top names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
Bloomberg surveillance. We'll get it right. Good morning, everyone. Jonathan Farrow, Lisa Bramlett, and Tom Keene. We're on our way to Jackson Hole here in a number of hours. John Farrow preparing for the 9 o'clock hour. We have so much going on. Stephen Rasciuto will join us in Mizzou. This is a critical review of the American economy. We're going to go out and see Wonder Boy waking up at the Pioneer Grill in Jackson Hole. That would be Michael McKee leading our coverage. And also we have a landing of a spacecraft in India right now. Lisa, give me the image, please. Mr. Modi here, I believe, going to talk. And we're a little bit vague on here. There's a count up clock as they descend. And what's amazing here, Lisa, is this is to the south, where we did not go with Apollo 11.
And you put it really well earlier that we wouldn't be talking about this as much if the Russian lunar landing on the South Pole a couple days ago didn't pan out. They crashed, and this one is slated to be the very first to land here. What's interesting to me is this comes at a time where India is really ascendant and is sort of throwing around its heft as an independent player at a time of a bipolar or multipolar geopolitical world. And you see that taking place with this question of are they going to go with Russia and China, or are they going to move to the West? Are they going to remain independent? For them to be displaying this kind of space-related kind of exploration highlights their preeminence in the new way.
And to set this apart, folks, with the history here of there's water in the bottom of the moon. We learned this from Ranger-like spacecraft that crashed into the moon. And so now, like China, like America, we're trying to land on the far side of the moon. And for those of us in our ute, this was a huge deal. Lisa, this goes back to October of 1959, which is frankly 2 years after Sputnik, and was maybe even more amazing than Sputnik. The Soviets were on the far side of the moon, and we weren't. And that resounded through American aerospace science.
And Pink Floyd was on the dark side of the moon. There is a question going forward about whether, we do find water and the fight over that. And that has been something that people are looking for as well.
Yeah, it's just great, folks. This is when you get Chicago aerospace in there when we're quoting Pink Floyd.
Well, I mean, come on.
As the Indians got it done. We'll continue to follow India as they create some scientific history here right now. Creating history right now, Pioneer Grill open for 32 minutes out at Jackson Hole, which means Michael McKee, leading our coverage at Jackson Hole, is well fed as well. He greets us in the chill of Jackson Hole. Michael, I want to go to that moment that we'll all see where Powell, Ueda, newly minted at Japan, Broadbent in for Bailey, and of course Lagarde speaking as well. They're going to wander out and point to the scenery behind you. What are they going to be thinking about? What is the common ground of four central bankers as the Kansas City Fed meets to greet?
Well, I think there's two things, Tom. The first is they're going to look at these mountains behind me and they're going to say, wow, it's real. It is so beautiful. And then they're going to think about what are we going to do to keep inflation down in the three countries that have inflation problems, and what are we going to do to keep inflation up in Japan? Those are their main goals going forward. And while all of that does seem to be happening as the central bankers would like it to, they can't really explain all the reasons why. And so this conference may be able to provide some grounding for the central banks as they try to figure out what their moves in the coming years are going to be.
I looked, Mike McKee, at the niceties of this in the Kansas City Fed for our international audience as well. Can you explain the transfer of power at Kansas City? You and I were with Esther George last year in the grill with a baby puppy pivot, and now we have Schmid of Kansas City. Tell me about Schmid of Kansas City.
Well, he started, as the tradition at the Kansas City Fed seems to be, as a bank examiner, not at the Fed, but at the FDIC, but worked his way up in banking, ran a couple of banks, did a stint as CEO of Mutual of Omaha, so we will get Marlon Perkins out here to find us a moose, and then ended up running a family bank in Dallas. So he's got a banking background, same as Esther George and same as her predecessor, Tom Honig, so the bank stays consistent in that. As for his monetary policy, we have no idea at this point. He's only just started on Monday.
Michael McKee from the far side of the Tetons. And now we go to India and I believe a successful landing of their spacecraft searching for water at the bottom of the moon, very, very distant from the Sea of Tranquility that we saw, what is it, Lisa? Help me here, 50 years ago, 50 plus years ago. Moments ago, Lisa, Mr. Modi waving the India flag, a proud moment for Indian science.
And this really pushes forward exploration as the hunt for water in space is important. I can't help you with 50 years ago. I can tell you that this is going to be interestingly going forward. Well, I mean, honestly, you're like, you can help me out there on the history of exploration. Come on. Really, you think that I'm going to just know? No, don't know everything.
We'll go from the Esther Bramo there, putting me in my place, to the elder. Constam's even a kid here to you, with Dr. Constam holding coat at Mizuho Securities, is Stephen Rasciuto, the U.S. chief economist. What's the common ground? I'm talking about common ground of four central bankers. Right now, what's the common ground of the brilliant Rasciuto Constam research at Mizuho? What do you both agree on?
Well, I mean, I think the answer is very, very simple, is that, there is a dynamic trade-off going on between the global political forces and the global deflation or disinflationary forces versus the cyclical local inflationary forces that several of the individual countries are experiencing. And it's this battle that's being reflected in the yield curve. The reason why long-term rates can't mount a sustained upward movement is everyone looks at it and says, okay, eventually the Fed's going to be successful at holding down inflation, so how far do we need to push? But by the same token, there's global deflationary forces out there that's pulling down long-term rates. At the front end of the curve, it's all about domestic cyclical inflation stories, and that's pushing the curve. So the curve is in this inverted standpoint. It's been here for over a year, and people keep on expecting the curve to shift back to a more normal position. And the reality is it's probably just not going to happen.
I'm talking on camera with smart people like S.A. Adam Posen, the Peterson Institute. I'm talking off camera with all the officials that don't want to talk to me on camera. Are they working out of the textbooks you used in school, or are they making it up at Jackson Hole internationally?
Well, they should be working out of the textbooks. They should be actually going back to the older textbooks, the Keynesian textbooks, because the reality is we learned from COVID that Keynesian economics was the right brand of economics, and we've gotten the response we expected from a Keynesian stimulus. And therefore, a lot of the Nouvelle discussion is should be put to the wayside. In fact, one of the things that worries the most that I hear from the Federal Reserve officials is this idea of, as inflation comes down, real rates go up, and therefore the tightening gets greater. The reality is corporate CEOs do not make decisions on after-the-fact real interest rates. They make decisions based on what they expect nominal interest rates to be. And that nominal interest rate assumes an assumption for real returns and an inflation expectation. And if those nominal interest rates are rising, that's a bigger problem than them looking back and saying, oh, well, real rates were higher.
All right, let's put this all together and raise a question about the soft landing narrative that seems to now be the consensus on Wall Street. It seems as though this has become a commonplace idea, even though it's been elusive historically. I see you laughing. Are you seeing material cracks that challenge the idea of this that people are ignoring?
No, I don't see any material cracks right now, but I think the reality you have to understand is that any recessionary tendency will wind up being a hard landing. You know, there are differences between crashes, credit crunches, and there are differences between recessions. And this is going to have to be an inflation recession. And that's the result. And that's not necessarily a soft landing. A soft landing is this vague concept where you bring the economy back to trend growth and inflation comes back in that direction as well. That's not going to happen with a labor market as tight as we have today. And it's going to be hard to get inflation to go from 4% to 2%, a lot harder than it was to go from 9 to 4.
So we're talking this morning about Foot Locker, about Dick's Sporting Goods, about some of the results in retailers that have struggled in the past and that are now seeing that kind of come to a fore. And we're raising a question, is this idiosyncratic stories of management structures and business models that have become less relevant, or is this something broader about consumer spending? From your view, not to go into the companies themselves, but what do you think it is?
No, there's a lot of idiosyncratic risk. I mean, keep in mind how long the expansion was prior to the COVID meltdown, and then the nature of the COVID restructuring and the rebalancing or the reacceleration really has papered over a lot of problems for a very long period of time. And they all have to come home to roost. And this is the idea that a recession is somewhat therapeutic if it's not a credit crunch. And we kind of need that in this environment.
You are acclaimed, and I'm going to go to Olivia Blanchard's study of R-starred and where we are. And the one phrase that permeates, and this is the humility of Blanchard's work, is other factors. Yeah. He says there's things out there we don't know. You own the high ground on this. What are the other factors that make this R-starred certitude a mystery?
The real issue is when you look at balance sheets, which we don't do a lot of. We don't look at balance sheets and try to assess where we are. We look at things like financial stress measures, which, to be honest with you, we play games with because they're statistically created out of indices that we see published in markets. The reality is when you get to look at the underlying balance sheets of companies and you look at them at a macro level, balance sheets are extraordinarily healthy. And this is why when you looked at Silicon Valley and so forth, you could actually back away from that having been a credit crunch because the underlying balance sheet of the banking industry was very healthy.
Just to sort of pull this all together, what is an inflationary recession? What is an inflation recession, which you just said?
Well, the difference between an inflation recession and a credit recession is basically the interest rate increases and the inversion of the curve slow the economy to bring down inflation. In a credit crunch, what happens is the inverted curve causes a credit crunch that then causes a recession. So the Federal Reserve has to slow the economy. You can't get the economy to slow and get inflation to come down to target unless you're going to create an excess in the labor market or some excess in the labor market. That's what they have to accomplish. You can only do that by having GDP contract. That's a recession. The reality from a credit crunch standpoint is the credit crunch causes the recession. And that's what 1990 was, that was what 2000 was, that was 2007 was. And the reality is that's what COVID was, because COVID was a massive corporate balance sheet problem and household balance sheet problem. And that's why they required subsidy levels of interest rates.
Steve Risciuto, thank you so much with Mizuho. A lot of breaking news going on right now. We have a correction. This is on Mallinckrodt, and it's a subtle correction because there's loads of headlines out about their restructuring and bankruptcy over 3 years. But to be clear here, Lisa, they have not filed for bankruptcy. They have a scheduled filing for bankruptcy in the coming days.
We're clarifying some of the timing as they try to figure this out and work through this excess from the legal settlements and just how much they had to pay.
Some confusion over my inept coverage of the landing of the Indian spacecraft to the south of the moon. It's not like Ranger where it crashes in. This is a landing, like I'll say a lunar module that we remember from Apollo. But then the idea is to have a rover, which I believe is 60 pounds. It's like a teensweens rover going down. I guess it goes down the ramp like in, you know, like a Disney movie. It goes down the ramp and then it goes out on the surface and looks for water.
I'm actually really excited about this, but I love science fiction. I'm revealing way too much.
This is not fiction. This is like reality.
I know. It's so cool. And water is where life is, and that's the potential exploration. Although I imagine there's some other reasons.
They're in my ear. Enough of the Bill Nye the Science Guy stuff. Do a data check. The VIX 17.00. Standard & Poor's up 0.1%.
I like Bill Nye the Science Guy. You could keep going.
I got my Bill Nye bow tie.
Oh, you should wear it more often.
It's
I'm
in there.
totally
I got
a fan.
470 bow ties in the closet.
Complete fan.
It's a walk-in closet. And in the answer, there's my Bill Nye. You know, he gave it to me.
Wait, you have a walk-in bow tie closet?
I have a walk-in bow tie closet.
And do you have like sport bow ties?
No, I have
like,
three, and then this is we'll see Lagarde out in Jackson Hole, and there's 3 big hooks that hold about 100 of the bow ties, and one on this side is gifts. Wonderful, generous people. I got one from Constant, but not Risciutto. I don't know what that's about. And there's another side, which is stuff that's like from the family, which I've never worn.
Yeah.
And then there's in the middle the Hermes bow ties, because I wear Hermes bow ties.
How do you choose? Is it sort of like roulette? Do you have a big wheel?
You choose at 3 a.m. It's in the dark, and you just pick one.
Oh.
What am I wearing today? I don't even know.
A lovely sort of very thin plaid bow tie.
Oh,
You
yeah,
look
this
fabulous.
is I need tenure bow tie. You wear this when you need tenure.
So this is this is our retail conversation of the day as we focus on potential issues in the retailers. But this is sort of the question, you know. I mean, are we seeing people, you know, not buy bow ties as much?
Well, you mentioned, you know, Hermes and something fancy like that. It is about this huge bifurcation in society. That'll be the theme of Jackson Hole. Michael McKee out front, setting up with our team for our complete coverage. Ruhr, there's a shot, and I see Joe Weisenthal and Tracy Alloway. They're halfway up the call right now. Weisenthal's on oxygen.
Oh, that looks beautiful and cold.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I want them to see, damn! Golly, this is a badass knife.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday. Can't seem to hold on to the gains as the session grows older. We do see the S&P futures just dip just a touch as we assess whether the slowdown can. Oh, actually, now they are up 0.1%. We're looking at a question around how much we can gain resilience at yields where they are. Yields trying to go lower and coming back as the session grows on. And frankly, we saw this yesterday too, Tom. Yesterday, we did see initially a bit of a bid into treasuries, and it completely faded by the end of the day. And I wonder if that's sort of the gravitational force right now in the bond market.
Yeah, but help me here. Are we Jackson Hole dependent, or are we NVIDIA dependent? I would suggest right now NVIDIA is more important.
I think that right now the expectation is for Jay Powell to say absolutely nothing of import because he has no incentive to, and NVIDIA actually will give us projections, which is the reason why. I do think it's important to look at some of the single name movers right now. I think it's important to take a look at the retail names that we've been talking about throughout the morning. We've been talking about Foot Locker. It's taking a disproportionate amount of airtime. People are saying, why do you care about Foot Locker? Everyone kind of wrote them off. But the fact that they cut earnings and their expectations for earnings so significantly after already seeing a deteriorating business outlook really has gotten people concerned. Those shares have lost about a third of their value so far in pre-market trading.
I did not realize that that's hammered.
It's a massive move, and we're talking about adjusted EPS expectations this year for the full year of $1.30 to $1.50 from $2 to $2.25. So significantly coming in, sales coming in, talking about theft. We've heard this from a number of retailers, including Dick's Sporting Goods. Is it just Foot Locker, or is it something bigger?
Paula Jews out moments ago at Citigroup. He's really wonderful. I hope I'm pronouncing that right. You know, I'm probably butchering it. Paula Jews with Abercrombie and Fitch, killing it. Against everybody else.
We're going to get
there. He calls it a blowout quarter.
We're going to get there. So that's the reason that people are wondering, is this idiosyncratic or not? Nike, before we get there, also poised for a 10th
What are you, all retail
loss.
today?
Yes, I'm all retail.
You're all
we
retail,
know,
okay.
Is it idiosyncratic or not? And that's the question, which is you pointed Abercrombie and Fitch. They are soaring after boosting full year outlook. And is this idiosyncratic? Because they did adjust some of their Hollister brand, their teen brand, I would say. You know, some people might buy it who aren't teens, but you know, there is this brand that they are reset, and they're trying to take actions to recalibrate, and they did have some rocky periods earlier. How much is this a story by story, and how much can we draw conclusions at a time where you've said this, the gravity's coming down to earth. The winners are going to win, the losers are going to lose.
Yeah, but the difference here on Fifth Avenue is my kids are lined up outside Uniqlo trying to, get something, that they saw in some fashion mag, some foreign fashion mag. Your kids are lined up outside Abercrombie and Fitch. You got to refi the house to get out of Abercrombie and Fitch, right? It's expensive.
I don't know because my kids aren't lined up outside Abercrombie and Fitch, but I will say, you have different price points. It's not exactly luxury. It's just that the winners can still win. I think that's the point, and why it's so difficult to come up with a narrative in this market, because you still are seeing discretionary spending for certain things and not for others.
And now he's Segui this morning towards Jackson Hole, where everything today is an angle on Jackson Hole. This will top them all. Long ago and far away, David Blanchflower of Dartmouth College and the Bank of England was out there. He went on a hike. Blanchflower got halfway up the damn mountain and couldn't get down. They had to go do a rescue effort. Mike McKee rescued Blanchflower off the cliff. Someone with knowledge of this is someone who's never been up the famed Dartmouth Skiway, legendary. This is what you do in the Dartmouth bubble. You go ski all winter. Ed Harrison with us here, Edward Harrison. Dartmouth, it was like religion. You had to have a certain beverage of your choice and go out to the skiway. You never really did it, but I mean, this used to be like religion, right?
Exactly, and I bucked the trend by being there for 4 winters and never once setting foot on the ski slopes.
That would be smart. Your parents end up at the Dartmouth Lodge there in the green as you're in the hospital with a broken leg. Let's talk about the broken leg of the American economy right now. Lisa's been going all day on this. Retail shows a grim consumer. What does Scott Landman and the team say in Washington?
Well, I think that I'm thinking Anna Wong in particular, and she's saying that she's still looking for end of 2023, early 2024 recession, and we're seeing the incipient signs of some distress potentially there. I think the one thing to look at is GDP now, which is at 5.8%. The next version is coming out tomorrow. This is ahead of Jackson Hole. So it'll be interesting to see whether, with the surprises, the upside surprises that we're getting in the economic indicators, whether or not we start to roll off.
How important is it to you that we have seen bonds sell off into the close? This idea that in general, you do have people who are interested in buying the dip. Maybe at the beginning of the day, but by the end of the day, they're like, no, we're done. I mean, is that important to you?
Well, I think the question is the fundamentals versus the technicals, because the technicals, Ed Bolingbroke from my group, he has a post out today saying that we are short across the curve at every single maturity, both in the U.S. and in Europe. And so what that says is that the technical factors are moving us toward a higher rate. And so we have a short squeeze that's going on right now. So that's the technical of today. But the trend is higher, not only because of that positioning, but because the U.S. is outperforming relative to other countries.
Given that it's also August and a lot of people are just at the beach, which might be also part of the technical underpinnings of what's been going on, how focused are you on the 20-year auction today, which is coming at a time where there are these sort of new cycle highs for yields?
Yeah, the 20 trades very differently than a lot of the others because there's not as much liquidity in that. And so it'll be interesting to see what the uptake is, because what we saw, I believe, a week ago is that the 30, there wasn't as much demand, and that sort of set in motion this bid higher in yields. And so I think it'll be very interesting to see what happens with that particular auction.
How do you filter the core debate of whether this jargon are starred into the markets? Is there not a linkage or a one-to-one relationship, but then how do you synthesize Jackson Hole mumbo jumbo into the real world of markets?
Well, Bill Dudley, I think he had a good piece out talking about R-star going higher. And, the way I'm thinking about it is in terms of the September SEP. So when we get the summary of economic projections, we've already seen the central tendency going up for the last dot. Maybe we see even more movement there. They've been at that level, 2.5%. If they go up beyond that with their mandate at 2%, that's telling you they're saying R-star is moving higher than 0.5%. Maybe they're going to be telling us they think R-star is now 0.7% instead of 0.5.
Played basketball recently?
No.
It's a threat to society. I always get hurt, and we got breaking news. And it's Ed. Thank you so much, Edward Harrison, with us today on the markets. What you mentioned there's 8 people on stage tonight.
There may now just be 7.
7.
Hearing.
This is Dana Bash over at CNN leading the coverage. Let me read it, Lisa. The North Dakota governor, Mr. Burgum, taken to a Milwaukee emergency room after suffering an injury while playing a game of pickup basketball with his staff. It is unclear whether he will attend tonight.
And so we will be reporting more about that. He was a long shot candidate. It wasn't as though he was one of the front runners, but still an important voice at a time where there are many, and we're looking for some new voices to come in that have been overshadowed by some of the other developments over the past couple of months.
And this guy is special. I don't know anything about his politics. I'll be honest, I haven't followed it. I leave it to Anne-Marie Horton and Joe Matthew, Balance of Power. But Governor Burgum is a name from my youth. And you talk about this hysteria over NVIDIA right now. There was a somewhat equal hysteria over Great Plains Software. And this is the guy, folks, who said, you don't have to be in Boston. You don't have to be in San Francisco. We can get this done from the Great Plains. And this was a huge, he made more money than God. I mean, he's got to be like Youngkin of Virginia, where, he can literally write the ticket himself. But maybe he can loan some money out to some of the others. But the bottom line is Doug Burgum is what everybody in this country is dreaming of. Steve Case, AOL, leading the way on this, doing innovation and technology outside of 4 zip codes in California.
I lived in Fargo, North Dakota. They've got a big Microsoft campus at the time, and that was part of the push. He did have to gin up some of his own pocketbook, though, to get people to donate enough so that he could actually be on the ticket, because he doesn't necessarily have that common name appeal. It's, that said, he does represent another time and place in this whole race.
Yeah, and so we'll see that. We'll have continuing coverage of that, of course, Anne-Marie Horton and Joe Matthew tonight on Balance of Power with that. An incredible day. We're on our way to the airports here in about 60 minutes to get out to Jackson Hole. Lisa, what are you going to look for at Jackson Hole?
Just whether they do talk about the new neutral and whether they actually feel confident that a soft landing is not a pipe dream, that this is actually a base case in a real way, which a lot of people are raising eyebrows about.
For my mother, chipped beef on toast, the Pioneer Grill.
You're going to eat it for your mother?
I'm going to have it 2 or 3 times. Only reason I'm going.
Miss Keene, this is for you.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, go out and people are like crying, that's when sometimes I'm, whoa, what, why? There's no rule book for it.
Watch The Circuit with Emily Chang Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
Big couple of days coming up. Live from New York City this morning. Good morning, good morning. Equities just about holding on here, trying to bounce on the S&P by 0.1%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, markets on edge ahead of key results from Nvidia. Retailers sounding the alarm on the consumer as the GOP prepares for a high-stakes debate without Donald Trump. We begin with the big issue, resilience or complacency.
The economy remains very resilient.
Data just continues to be very, very resilient.
Growth so resilient.
Equity markets remain quite resilient.
The U.S. consumer still remains extremely resilient.
It certainly looks as if third quarter is going to stay pretty resilient.
The economy appears to be on solid footing.
All this talk about a recession so far hasn't panned out.
I think we've gotten too optimistic on the growth front.
There is some complacency.
Market complacency.
People being very complacent. That usually leads to some sort of natural pullback.
It's really hard to see material upside to equities.
Over time, higher for longer should slow things down.
We still have this mild recession in the forecast.
We are going to have a recession at some point.
At some point, you're going to start to see things break.
At some point. Morgan Stanley's Jim Caron joining us now alongside JP Morgan's David Leibovitz. David, is it complacency or resilience?
So I think it started as resilience, but it does feel like it's beginning to morph into complacency. I think, taking a step back and thinking about why the economy, the U.S. economy in particular, has been so strong this year, so much stronger than people expected, it really has to do with the state of the consumer and the state of the labor market. But, we recognize the lag impact of shifts in Fed policy. We recognize that 12 months ago, the Fed funds rate was still down in the twos, and we think that, a lot of these rate hikes that we saw into the end of last year are going to start to bite. And unfortunately, I think that this is coming at a time where markets are increasingly warming up to the idea that we could have a soft landing next year. I'll call it complacency.
Your colleague in the investment bank agrees. Marko Kolanovic saying this: compared to the start of the year, investor expectations, market positioning, equity valuations have moved up. Marko goes on to say, with soft no landing the new base case, there is no more fear, only complacency. Jim Karen, which camp are you in?
I'd like to pick that apart a little bit and say that, look, the labor market has been very, very resilient. I think the growth sector, let's say like within equities, which is what's driving most of the indices higher, maybe that sector of the market has become a little bit complacent and dependent on those increases. So, I think it's a good mix of the two. I think people are pretty worried. I mean, when you ask people what they think about the future in terms of recession expectations, they have them. They have the Fed cutting interest rates at some point in the first half of next year. They're only going to do that if we see a slow.
Bit of a technical problem there with Jim Karen over at Morgan Stanley. David Leavitt, I'm pleased to say, is still with us. We'll reconnect with Jim in just a moment. David, just to build on some of the things we're thinking about here, I think Jim did a decent job at the start of those comments. Draw a distinction here between what's happening with the economy and what's happening with the market. You were talking about the market. Let's talk about the economy. Mortgage rates running close to 8%, 7.5%. Mortgage applications this morning, the lowest since 1995. Now, I would say, David, unsurprising. The question we've got to ask is just how rate sensitive is this economy? Are we finding out it's far less rate sensitive than we thought it was?
So we are finding out that this is a less interest rate sensitive economy than a lot of people originally thought. And, primarily this stems from the behavior that we saw not only in the immediate aftermath of COVID, but really over the better part of the expansion post-2008, where consumers delevered, they termed out their debts, right? They took advantage of very low interest rates to extend the maturity of the loans that they were taking on. And overall, we have seen this create a less interest rate sensitive consumer, but we're also seeing it on the business side as well, where normally you would expect a big increase in rates to have an impact on interest expense. We're just not seeing it because, again, businesses have been successfully able to term out their debt, particularly over the course of the past couple of years. But you look at where mortgage rates are today. Importantly, you look at other parts of the world, namely Europe and China. Europe in particular, the manufacturing sector does look like it's coming under a bit of pressure here. And I do ask myself if this story of resilience in the U.S. economy is really dependent on the continued resilience and health of the consumer. You're seeing kind of the cyclical parts of the economy globally begin to crack, and I think it's just a matter of time before that shows up here in the United States.
Yeah, David, to build on that, China right now not great at all. The PMIs out of Europe just absolutely dreadful this morning. Germany, across the Eurozone, the UK as well. I'm pleased we've reconnected with Jim Karen because, Jim, I'd love for you to speak to this. The US economy, in the rest of the world, it looks like services is coming down to manufacturing. In the US, Jim, do you think manufacturing can come up to services?
Well, that's our core thesis. I do think it's more manufacturing coming up to services. Now, look, the base case that I have is that we're still going to have a soft landing. That still means we likely have a mild recession, but it's a mild recession. So I think the service sector, which has been strong, and I think certainly the manufacturing sector has gone into probably more of a recessionary type of a level. But as we see this resilience, I think in the labor market, I think that what you're going to see is more investment, more CapEx, and I think there's going to be probably more support for a softer landing. So I take the opposite view on this than probably most do. I think it's manufacturing going up to services.
25 minutes away from the opening bell. Equity futures right now on the S&P 500, just about positive by 0.1%. Into the bond market, we've gone through some big levels in this bond market in the last couple of days, the past week. The 2-year still really close to 5% at 499.25. We're down 5 basis points on a session today. The 10-year, after going through 430 and making a new cycle high in the last 24 hours, we're back down by 6 basis points to 426.67. Jackson Hole, the annual Fed get-together kicks off tomorrow. Chairman Powell speaks on Friday, 10:05 Eastern Time. On the ground, Mike McKee joined us from Wyoming for a preview. Good morning, Mike.
Good morning, John. Well, you just mentioned the bond market. One of the big questions is, why are yields so high at this point? Bond market participants say there are a lot of different reasons, but how much of it is due to the Fed? That'll be one of the discussions here at Jackson Hole, along with what happens next. It's a question about structural changes in the U.S. economy. That's the title of this meeting. And do we see things change from the way they were before the pandemic permanently? Go back to maybe where we were in the 1990s in terms of yields. So a lot for them to discuss here. Jay Powell, as you mentioned, kicking it off on Friday morning with what is titled An Economic Outlook. Is he going to talk more about rates and where they're going? Maybe he will say the same thing he said before, that we're going to continue keeping rates high until inflation comes down. They have made a lot of progress since last year. Inflation way down from when we were here a year ago. Unemployment hasn't gone anywhere, still very low. Nobody really quite knows why. So a lot to discuss, and everybody's going to be looking forward to Jay Powell's speech and how much of a hint he gives Wall Street about what actually is going to come next.
Mike McKee, right now, just looking at you, I'm more impressed by this outfit than I am the backdrop. Mike McKee makes me want to go home and repack and get some new clothes for this trip. Mike, good to see you. Looking forward to catching up over the next couple of days. Mike McKee on the ground at Jackson Hole, Wyoming. Just absolutely stunning over there. Equity futures right now on the S&P just about positive going into Friday. And Chairman Powell, David Leibovitz, what are you looking for from the Fed Chairman on Friday?
So I don't think we should be looking for any big surprises. You know, my sense is that Powell is going to get up there and he's going to reiterate exactly what he's been saying over the better part of the past couple of months, which is we've come a long way. We've made a lot of progress. We're not 100% sure that the inflation issue has been completely put back in the proverbial bottle, and so investors should expect interest rates to remain higher for longer. I think we're seeing markets reprice here and reprice more in line with what the Fed has been telling us, but there are still cuts in market pricing for 2024, and the only way that we get there, in my view, is if we see a more significant deterioration in the overall state of economic activity. And so I think what Powell's going to try to do is lift those futures dots and try to bring them more in line with what the Fed themselves are forecasting, but really reiterating that message of higher for longer being the base case view down at the Fed.
Just to add to that, Jim, how far along do you think we are in that adjustment process to that higher for longer reality in the bond market specifically?
Well, look, I mean, I think the bond market's pricing it pretty well. I mean, higher for longer makes a lot of sense right now. There may be one more rate hike on the cards. Now, look, I think that Jackson Hole is going to be an opportunity for Powell to flip the narrative a little bit. What Powell and the Fed worried about was growth, and they were concerned about inflation. Today, I think they're going to really focus on inflation and have some concerns on growth. And the reason is that the labor market has proved to be very, very resilient, and now they believe that growth can be sustained, but now they absolutely have to get inflation down. So the veiled message I think that comes out of this is was with Powell talking about higher for longer and talking tough on inflation. Essentially what he's going to likely do is steer us towards a mild recession. And for me, for one, the way that I would think about this, a mild recession that comes sooner is better than a recession that comes later, because a recession that comes sooner is likely mild. A recession that comes later is probably a harder landing. So I think Powell wants to get this over with quickly, get inflation back towards target levels, talk a little bit tougher, talk about higher for longer. And I think the veiled message is going to be probably towards a recession, although they're not going to explicitly say that, of course.
So, Jim, make it easy for me. Is that a buy for the 10-year or not?
So I think it's a modest buy. I think that these levels in yields can probably hold in reasonably well. I'm more concerned about the shape of the yield curve. Look, if the Fed cuts interest rates 100 basis points or 150 basis points, from current levels at some point in 2024, what's the shape of the curve? If the curve goes to zero, if let's say 2s, 10s goes to zero, that keeps the 10-year note right still around 4%. Right? So, or 4 to 4 1/4. So I don't see a lot of downside in yield here unless we bake into the cake a hard landing.
David Leibovitz, final word.
So I wouldn't disagree with that. I think the one thing I would add is that we need to respect the technicals here. And if you look at what some of the charts are saying, it does suggest that there may be some further upside for 10-year yields relative to current levels. But, you know, when we look at the broader investment opportunity set today, we do think that high-quality fixed income looks attractive. You are finally getting paid something that's positive on an inflation-adjusted basis. If this is the high watermark, you know, your guess is as good as mine. But more interested at these levels than we have been in some time.
David, Jim, stick with us. Equities right now just about positive on the S&P by 0.2%. A ton of movers out there ahead of the opening bell. Here's Abby with more. Hey, Abby.
Hey, John. And there's certainly some big movers in the retail space and to both sides. As you know, Foot Locker absolutely plunging. This is the worst day, I believe, in at least a decade. I was trying to go through the calculations by hand, and actually Netflix is up 1.7%. And as a Netflix subscriber, I'm very happy to have learned that they will be allowing us to keep the discs once they stop sending out the discs at the end of September, but also subscriber numbers on track. Now, Nike, one of those retail movers that I was talking about, Foot Locker absolutely plunging, as we were talking about, and that is, of course, on their slashed outlook, cutting the dividend, the stock plunging down more than 30%. Nike, 65% of their revenue going back to last year, their merchandise. So Nike falling in sympathy. And then Advanced Analog Devices, their outlook is disappointing. You can see that stock down about 4.8% more on retail in just a little bit, John.
Abby, thank you. We'll catch up with you around the opening bell. Coming up, retailers under pressure.
Biases in terms of consumers moving more toward generic type brands as opposed to higher end brands. If we start to see more cracks in the labor market, I think the consumer could maybe shut down the spigots fairly quickly.
Foot Locker getting absolutely hammered. That conversation up next.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
There's definitely some dichotomies going on, and I do think that part of it has to do with what consumers are prioritizing. They're continuing to prioritizing services, they're continuing prioritizing food and drinking places, and they're not so much prioritizing retail and furnishings. And I think that's part of what we're seeing in some of those retail earnings. That's really the undertone.
More pain coming to the retail sector. Foot Locker cutting its outlook and suspending its dividend, becoming the latest victim of a slowing consumer. The CEO saying we did see softening trends in July. and are adjusting our outlook to best compete for price-sensitive consumers. It's the latest red flag from US retailers as Nike sees a record run of losses. Sales are dropping over at Macy's. Dick's Sporting Goods is warning about theft as Target and Walmart have their eye on student loan repayments. Walmart CEO saying this in the past week, resuming student loan repayments, higher borrowing costs, tightening lending standards mean household budgets are still under pressure. Katie Greifeld has the story. Hey, Katie.
Hey, John. Well, we heard it loud and clear from Macy's yesterday. We heard it again from Foot Locker this morning that resilient U.S. consumer may be starting to pull back here. Foot Locker shares off an incredible 32% pre-market on the heels of that forecast cut, and that's sending a chill through its supply chain as well. You take a look at Nike, you take a look at Under Armour, both under pressure this morning. They're both suppliers to Foot Locker. Nike, in particular, on track for a 10th straight day of losses, given that Nike, 65% of athletic merchandise was purchased from Nike by Foot Locker in 2022. Now, this Foot Locker report, it comes a day after that Dick's Sporting Goods report that you talked about just earlier. A similarly disappointing report and forecast there. It also cut its profit outlook for the year, and it also cited increased theft at its stores. We know that shrink is a problem for these retailers. But if you're looking for a bright spot, John, you will find it in Abercrombie & Fitch, actually boosting its profit outlook. Its Hollister brand returning to net sales. Urban Outfitters, too, also beat on earnings. John, my takeaway there is that teenagers are still buying clothes.
There we go. That's good to know. Katie, thanks for the update. Katie, thank you very much. It's mixed out there for retail. The negative headlines, though, they seem to be the dominant headlines, as always. Jim Kerr and David Leibovitz back with us. David, there are reasons to worry. Are there reasons to worry a lot from your perspective, looking at some of those names that Katie just went through?
So I think the important thing to recognize is that, the consumer is 70% of U.S. GDP. So what happens with the consumer is very much going to dictate what happens with the economy at large. We are seeing signs that consumers are coming under pressure. You can look at the savings rate, which is well below its long-run average, the increase in credit card use. If you look at kind of excess savings, right, according to the Federal Reserve, they believe that it was exhausted in the U.S. Over the course of the summer. And so I think you're beginning to see the consumer bend more so than break, but obviously that does suggest tougher times ahead for the overall U.S. economy.
Here's the constructive way of looking at it. Mark Zandi, Moody's, he says this: income growth is now stronger than inflation. The need for excess savings to support continued sturdy consumer spending is thus fading. Jim, would you take that favourable view of things going forward from here?
No, I'm a little bit more skeptical and a bit more cautious on this. Look, the way that I see this is I see the consumer is starting to weaken. But look, the reality is that interest rates are rising. This is what's supposed to happen. This is how you cool down inflation. So this is all part of the overall plan. Where I start to get a little bit more concerned then is what do these companies do in terms of trying to address profit margins? So what they were able to do before, because people had a lot of money coming in and savings, is every time inflation went up, they just raised prices and they kept their margins the exact same. Today, now they're not going to be able to do that, so they're going to have to cut prices in order to get the same amount of volume moving through their stores. So the reality is that you end up getting a narrowing of profit margins, which could also hurt earnings growth. And then that probably leads to some of the wobbliness that's in equity markets today. Now, I don't think this is the end of the bull market or anything like that for equities at all, but I do think that we could see an additional adjustment lower as the markets start to really internalize what it means to have a soft landing in a mild recession. If we have that, which I think will come up at some point in the future, maybe in 2024, possibly, the reality is that there has to be some price adjustment in these assets. And I think that's happening, but I think it's a correction. I think it's an adjustment. And again, the sooner we get this over with, the better off we're going to be.
Well, let's pick out a part of the market, specific part of the market. David, let's talk about consumer discretionary. Huge outperformance this year in places like airlines, elsewhere for the cruise operators as well. We've seen big gains through 2023. And David, you know the story. We brought forward all that goods demand in the pandemic. We pushed out all that services demand, and we're working our way through it now. Working our way through that excess savings, working our way through all of that pent-up services demand, to go on vacation, to fly, to go on cruises, whatever. David, are we at that point now where you think we should fade that story in the equity market?
So I do think that it is becoming the time where we want to fade that story. And I recognize the point that you made about, real income growth being positive as inflation has started to come down. But I tend to think that the impact of that overall dynamic on profit margins is really the one to watch. And I think we talked about this a couple of weeks ago. If you're a business that's trying to defend their margin, you basically can do three things. You can pass along higher costs in the form of higher prices, you can reduce your investment spending, or you can reduce your employment. And to the point that was made earlier, right, that ability to increase prices, it's fading. Inflation is coming back down to earth, and that pricing power is finally running its course. That means that businesses are going to have to make a tough decision. Do they pull back on investment spending if there is some to cut, or do they have to pull back on employment? I think we're increasingly getting to the point where you're going to see businesses pull back on employment, and that obviously undermines a lot of the strength that we've seen in the consumer over the past 12 to 18 months.
So, David, you've explained what you don't like then. Tell me what you do like in the equity market right now. What are you advocating for?
So we'd be focused on hitting singles and doubles. To me, this is not a market for heroes. We like the lower beta, dividend-paying stocks, consumer staples, utilities, so on and so forth. We would be inclined to add to growth names if we saw valuations re-rate, but given where a lot of those companies are trading today, we just don't love the entry point from a valuation perspective. So kind of straddling the line between value and growth, leaning a bit more into value today, but definitely dipping our toes in growth when valuation presents us with that opportunity.
Jim, I've got a minute on the clock. Final word, please.
So look, I mean, I agree with a lot of what David's saying, and what I'll say is materials and industrials are areas that we're also looking at as well. We do think that the U.S. is in a manufacturing renaissance. It's trading a little less with China now, trading more, with Mexico and other places, Canada as well. So I do think that the materials and industrial sector, once we get a broadening of the breadth of the rally to start to come through, I think those are going to be, very good places to be. Growth, we still like it, but it's name specific and it's going to be valuation specific. Fixed income, look, we still like higher yielding assets in the markets. We don't think we're going to go through a large default cycle, although there will be some stress near term, but we see this largely as a buying opportunity.
Neat and tidy within 60 seconds. Jim, thank you. Jim Karen alongside David Leibovitz. To the both of you, thank you. Equity futures right now just about positive on the S&P 500. Coming up, the morning calls and later. UBS's Nadia Lovell steering clear of big tech stocks ahead of earnings from Nvidia. That conversation still ahead.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Equities doing okay here, about 5 minutes out from the opening bell. Just a little lift going into a big earnings report later on this afternoon. That's the price action. Here are some morning calls for you. First up, Edward Jones upgrading Dollar General to buy, expecting growth to re-accelerate due to improving fundamentals and weakening competition. Your second call from Morgan Stanley upgrading Brown Forman to overweight from underweight, raising shares by 2 notches as margin headwinds turn into tailwinds. And finally, Wedbush downgrading Dick's Sporting Goods to neutral, seeing a challenging outlook as consumers cut spending on leisurely sporting items. I think that's something about barn doors and horses bolting, and I think you know what I mean by that. That stock is down by 2.8% after cratering in yesterday's session. Coming up, the best performing stock of the year reporting after the closing bell. Nadia Lovell of UBS on why she's steering clear of big tech.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We've hit a rough patch in this equity market, down for 5 days out of 6 on the S&P, trying to bounce. Elevated this morning by just 0.25% on the S&P 500. On the Nasdaq, up by 1/3 of 1%. Two big events. One on Friday, Chairman Powell. The second one a little bit later, Nvidia after the close. There's your opening bell. Switch on the board and get to the bond market. Yields look like this on a 10-year. A rally for once. How refreshing in the Treasury market. Yields are lower by 8 basis points. The 4.2469. The euro weaker. I've said this a million times. I know I'm on repeat. The data out of Europe, dreadful. 108.28, the euro negative by 0.2%. Crude lower as well. A break is 78 on WTI. 77.96, we're negative there by about 2%. 20 seconds into the session, here's the state of play for you on the S&P 500, up by 0.25% on the S&P. The Nasdaq with a similar move, Nothing like that on Foot Locker. That's the stock to watch at the open. Shares getting absolutely hammered after the retailer cut its outlook and suspended its dividend on weakening spending patterns. The CEO saying this: "We did see a softening in trends in July and are adjusting our outlook to allow us to best compete for price-sensitive consumers." Abby has more. Hey, Abby.
Hey, John. And on this, we are having a record softening pattern on the stock. It is having its worst day on record, going all the way back to July of 1980. And what makes this amazing, this stock into this report already down 39% on the year. There's a 21% short interest. So this weakness not taking everybody by surprise. But even with that expectation, we still have the stock down so much. They've absolutely slashed the earnings guidance by as much as 35% for the year. As you know, they suspended the dividend. There is that 11% short interest. So these trends that they're talking about, that they're seeing, they're really moving into the numbers, the financials, investors slashing the stock as a result. But it's not just Foot Locker. And this is a real story of the haves and have-nots, because we have Abercrombie & Fitch. They boosted their full-year view. The namesake brand was strong. The teen brand Hollister also strong. Kohl's going in the opposite direction, not just from Foot Locker, but Macy's also. They put up 125% earnings beat. Their inventories are improving. They're clearing out the merchandise, optimized assortment, all positive. And then Urban Outfitters, another strong one, a 24% earnings beat, 1.8% sales beat. The discounts are fading, and apparently their customers are choosing fashion over price. So on the year, it stands out that Abercrombie & Fitch, or excuse me, Foot Locker is the stock that's down into today, down 39%, whereas Abercrombie & Fitch up 80%, Urban up 43%. Again, a story of the haves versus the have-nots.
Abby, thank you very much. Foot Locker does not have a lot right now. It's negative 34% in early trading. Nike, 10-day losing streak over that period, down more than 11%. That is a record losing streak for Nike right now. That stock is negative on the session by 4%. Let's stick with earnings. Toll Brothers topping Q3 profit estimates on increasing home deliveries and surging unit prices. The CEO saying this: while rising rates remain a challenge, they further cement the lock-in effect that's kept resale inventory at historically low levels. Katie Greifeld has the story. Hey, Katie.
Hey, John. Yeah, Toll Brothers up more than 2% after delivering that beat and raise quarter. Third quarter EPS revenue and total home sales all beat estimates. And the look ahead is similarly rosy. If you take a look, the luxury home builder sees year-ahead deliveries between 9,500 and 9,600. The lower end of that range was previously the upper end of their forecast, so raising that. And Toll Brothers also boosted its gross margin forecast. That is boosting the stock this morning. As the CEO said, this extremely tight housing market, it's been good news for the home builders in general, and particularly for Toll Brothers. Resale inventories are historically low due to very high rates, but also due to the fact that we're coming out of a decade of underproduction of homes. That dynamic, of course, has been a tailwind for shares all years. You take a look at Toll Brothers up more than 50% in 2023, John.
Nobody's selling their house. Nobody's going to anytime soon. Katie, thank you. Toll Brothers up by close to 2%, as Katie mentioned. Let's stick with that name. Just a word from the South Side. Raymond James seeing plenty to like from the earnings report, writing this today. With its rapidly improving operating efficiency and best-in-class land positions, we believe Toll Brothers warrants a tactical move to the analyst favourites list to take advantage of the recent pullback among builders due to rising interest rate fears. That stock is up by close to 1%, just fading just a touch. Peloton. The tough year gets even tougher. The company issuing a disappointing forecast due to weakening subscriber trends. The CEO saying, quote, "The slowdown exceeded our expectations as consumer spending shifted towards travel and experiences." Simone Foxman has the story. Hey, Simone.
Hey, John. Yeah, analysts hoping for commentary about the company's transformation, sweetened, as a Bernstein analyst put it before the results, by a nice surge of new app users. Instead, they got that negative commentary on subscribers, in addition to more trouble on its hardware business. A recall of about 2.2 million seat posts, costing more than $40 million than it had anticipated. And in addition to that, 15,000 to 20,000 subscribers choosing to pause their subscriptions until they got those new seat posts. They've received about 750,000 requests for that seat post replacement. The dented that first quarter forecast, that's the next quarter, they think they're going to see a loss of $10 to $20 million. Analysts were anticipating a profit. Perhaps the only positive things there was that their fiscal fourth quarter was roughly in line with expectations, and subscribers were up on a 3.8% year on year. But in a shareholder letter, the CEO writing to stockholders, I'm signaling significant potential upside, but considerable uncertainty, John.
Simone, thank you. That stock is down by 21%. The two big events of this week, you know them well. Chairman Powell on Friday in Jackson Hole, Wyoming. After the ballot a little bit later, earnings from NVIDIA. The equity market darling of 2023, the vehicle to chase AI hopes and frenzied dreams, following a more than 200% gain for the year so far and a blowout quarterly report last time around. Just how high is the bar going into today's results? Ed Ludlow has more. Hey, Ed.
Good morning, Jonathan. Sky high. I mean, NVIDIA earnings on the same plane as Fed Chair Powell at Jackson Hole. I like that. In all seriousness, the story is, does the AI momentum that NVIDIA has seen in 2023 have staying power? The expectation is 65% top-line growth for $11 billion of revenue in the fiscal second quarter of fiscal year 2024. It was interesting. Citigroup had a note out that for institutional investors and clients, their expectations are even higher, $12 billion of revenue. Either way, the average analyst estimate and that 12 billion institutional figure is above what NVIDIA guided last quarter. The staying power story, we go to the full year fiscal 24 guidance for revenue. The estimate for that is $43.98 billion. There are those out there in the market who want to see some revision higher on that in terms of the guidance that NVIDIA gives. In the quarter that they report, the fiscal second quarter margins on an adjusted basis, 70.1%. We might get some evidence that margins continue to creep higher throughout the year. If there's a concern, it's on the supply side. Was NVIDIA able to get the chips that it needed from its contract manufacturer, TSMC? Of that $11 billion of sales, 8 billion is around 8 billion is for data center, and that really feeds into the AI story, those higher margin chips. We're talking H100. We also want signs of demand for the next gen chips, the GH200, for example, that NVIDIA announced earlier this month. The market is waiting for this one, John. I think the options market's pricing in an almost 10% swing. This is a stock that is almost 4% of the S&P 500 on a weighting basis. I'm incredibly excited. Look forward to it.
It's the story of the year in the equity market for sure. Ed, thank you. The stock of the year. No dispute about that on the S&P 500, given its performance so far. And for some of you, I know, it's the story of the week. Much more so, perhaps, than Chairman Powell on Friday. We'll see about that. Nadia Lovell of UBS expected a shift in leadership within the equity market, seeing upside in beaten down energy stocks and keeping big tech on her list of least preferred sectors, along with real estate and utilities. Nadia Lovell joins us now for more. Hey, Nadia, let's start with tech. Why steer clear of some of those big names?
You know, as we know, it's been a well-loved sector, and valuation is quite elevated. I mean, our view is a lot more nuanced. I mean, we've seen tech take a little bit of a breather since July, down about 7% since mid-July. You know, the earnings reports were quite mixed. Of course, we continue to see weakness in PCs and smartphones, and that did have impact on some of the semiconductors and hardware companies. The IT budget environment is still quite tepid. You know, but that said, I mean, the AI theme we think is strong and here to stay, and so that's why I say there's nuances in our view. When we sort of look out on the horizon, we do think that demand, AI demand is broadening. We heard that throughout the earnings season. CapEx related to AI is increasing, and our expectations for the end market demand for AI over the next 5 years, we think is going to be a 60% CAGR. But that said, Jonathan, you want to remain selective at this stage and really be valuation sensitive and really focus on those companies that have, you know, distinct monetization opportunities and developments.
Well, Nadia, elsewhere, as you know, massive multiple expansion through the year so far, a huge adjustment in the yield curve too, more recently, much more so over the last month. Do you think there's some tension there that needs to be resolved between what we've seen develop in bonds more recently, in rates, and what we've seen in multiples all year?
Absolutely. That's been one of our points, that we think that valuations are quite elevated. Yes, they have come in a bit in the last few weeks, but they're still elevated in the context of higher rates. I mean, that said, in terms of the pickup that you've seen in bond yields, this is partly why we have a slight preference of bonds over equities, just given valuations. But we do expect bond yields to come back in. We know that some of this has been driven by technical as well as fundamental factors. So huge expectations of supply coming to the bond market to fund our balloon looming government deficit. But when we look into the end of the year, we think that the economy will slow down, inflation will abate, and as we look forward into 2024 and the possibility of rate cuts, we do think that yields will come back in. And so we're looking for the 10-year to be in the range of 3.5 to 3.75 by the time we get to the end of the year.
Nadia, as you know, at the moment, growth is above trend. You believe in sub-trend growth by year-end. Nadia, can you identify maybe some subtle signs that slowdown in this economy is starting to build?
Mm-hmm. Absolutely. I mean, look at some of the retailer earnings, right? We know that the Atlanta GDP now is trending at 5.8% for this quarter. We think that that's going to come down, but we are expecting near term, Jonathan, at least for the third quarter, above trend economic growth. But when we look into the end of the year and into next year, we're looking for more GDP sort of be sub-trend, probably in the 1% range. I mean, there are cracks of the consumer. Yes, the consumer remains strong overall, but there are pockets of weakness, whether you look at delinquency rates going up, and whether it's in autos or on the credit cards for some of these retail companies, we're seeing that. And so we do expect consumer spending to start to slow as consumers' excess savings dwindle.
So, Nadia, one thing that stands out, and you and I have talked about this before, and you can help me explain it, you maintain a Brent target of 90 year-end, even though you expect growth to go from above trend to sub-trend, and you also like energy stocks. Just reconcile those things for us.
Well, Jonathan, we have actually updated our Brent target to $95 by year end, and we expect that to continue into 2024. I mean, when we think about energy, of course, the demand side still looks very strong. Record level demands probably this month. And even when you're seeing weaker economic data, activity data, and industrial data from China, reality is the mobility data is still quite strong. And so oil demand has remained strong for China. When we look at some of the data around waterborne crude oil, it's actually imports are actually looking to be record levels. And then, of course, on the supply side, we have OPEC Plus that has been production cuts are has pushed production down to a near two-year low, and we know that those production cuts for Saudi Arabia and Russia extends into September. And so we think that all of this is going to support high oil prices. We're looking for a deficit of 1.5 to 2 million barrels a day through September. And so we continue to favor the energy sector as a result of this. Also, oil, long-dated contracts, the markets right now is in backwardation, and we've also been advising clients to really use volatility strategies and sell downside to oil as well.
Are clients giving that trade any love, Nadia? Given that you're telling them slow down in China, slow down in Europe, slow down in the US, buy crude?
Yeah, well, you know, the recent prices that we've seen through this summer helps to encourage clients to leg into that trade.
Nadia Lovell, the update over at UBS. Nadia, always enjoy the exchange. Thank you for joining us as always. About 13 minutes into the session. This is what we look like at the moment. Going into NVIDIA later on this afternoon. We're positive by 1/3% on the S&P. On the NASDAQ, we're up by 0.4%. Coming up, the GOP squaring off in Milwaukee.
This is going to have to be their breakout moment. Americans are looking for people who are going to solve problems, who will address some of the issues that we're facing. And they're not looking for somebody that just can be the nastiest on stage.
8 GOP hopefuls looking to stand out on stage. Team coverage up next.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Downside surprise, the dividing line between expansion and contraction on a PMI, 50. Sub 50 on manufacturing, 47. The estimate, 49. On services, 51. The estimate, 52.2. This is a preliminary reading for the month of August. 50.4 on the composite. The estimate, 51.5. Off the back of that data, big bid comes into the bond market, a rally. Yields are lower by almost 11 basis points at the front end. We've seen some big moves in the other direction more recently. The 2-year now, 494. The 10-year down 11 basis points to about 421 after hitting a cycle high well through 430 earlier on this week. Off the back of that, yields lower, dollar weaker. The euro, bear in mind earlier this morning, the data out of Europe was, to use a word I've used all morning, dreadful. The euro was much weaker. The euro at the low of the session, 108.03. We now fill the gap, almost unchanged on the session at 108.43. So the dollar weakness kicks in on the other side now off the back of weaker than expected economic data out of the United States. Weaker data, will that be a focus for the debates a little bit later? It's round one of what's set to be a brutal fight going into 2024. GOP presidential hopefuls squaring off in Milwaukee, Wisconsin. And who won't be there is perhaps just as, if not more important, than who will be.
Donald Trump.
President Trump asked me to put him over the Constitution, but I chose the Constitution.
They care deeply about Obamacare, and Donald Trump promised them he'd repeal and replace it. He had a Republican in Congress. He didn't do it.
It really does take 2 terms as president to be able to finish this job.
He would need 110 years as president to be able to finish the wall. He didn't get it done.
His policies during the 4 years he was in office were very positive for North Dakota.
It would be a lot easier for me as a Republican candidate in this race if Donald Trump were not in it.
The former president with a commanding lead in the polls, the latest from CBS YouGov, leaving his closest challengers well behind and looking to close a widening gap. Your team coverage starts right now with Bloomberg's Anne-Marie and Kelly Lyons down in Washington, D.C. AMH, what are you looking for a little bit later?
Well, Jonathan, there's a few developments over the past hour that is really going to highlight this evening's debate. One, we do know that the former president, there's been lots of reporting about him sitting down with Tucker Carlson. Well, actually, the former president took to Truth Social and said sparks will fly tonight. They're going to air that interview on Twitter at 9 p.m., so exactly when the debate starts. So this is Trump really just owning into his base and shrugging off the RNC. When it comes to the actual debate stage, another development is that Doug Burgum, the North Dakota governor, who you saw there speaking on balance of power as well, will potentially not be in attendance. He was playing a pickup game of basketball this morning, hurt himself, went to the emergency room in Milwaukee, and it remains to be seen whether or not he's actually going to make that stage. Then we're definitely down to 7. And one thing to focus on, center stage physically, will be Ron DeSantis, given the fact that of these individuals that are on the debate stage, he is leading in the polls, but also he's going to be center of those attacks. He needs to try to hold himself in that second place. And then, Jonathan, potentially there's an opening for someone else.
Kelly, that's the people. Let's talk about the issues, the substance, China, Ukraine, the economy, the former president. Kelly, what tops the agenda later this evening?
Well, they're not going to be able to avoid talking about the former president. He is the elephant that is going to be very much not in the room this evening. And even the Fox host of this debate, the moderators, have indicated that they will be playing sound of the former president in their questioning. So he is going to be unavoidable. But polling has showed just as recently as within the last week that what voters really want to hear about is substantive policy. The economy obviously will feature probably incredibly highly, as many of these candidates have said that Biden administration policies have contributed to inflation. Voters likely will want to hear what their plans to fight inflation realistically will be. And then on some of those foreign policy issues, everyone seems to be trying to out-hawk each other on China. Doug Burgum, who may or may not be in attendance just last week when he was speaking with us here at Bloomberg, was talking about the Cold War we are in with China and how it must be won. So that messaging will be key. Potentially talk of sanctions as well from some of these candidates. And then the issue of Ukraine. There is a bit of a divide within the Republican Party about what U.S. support should look like going forward. Of course, Ron DeSantis, who is likely, as Anne-Marie said, to be the target of many attacks tonight, previously called it a territorial dispute, then had to walk that back. Mr. Ramaswamy, who is looking like he is potentially in third place, could gain some momentum here, also has indicated that the U.S. should pull back support for Ukraine. So those are going to be some things to focus on. And of course, we've heard from a number of these candidates about the fate of Fed Chair Jerome Powell as well. Mike Pence suggesting he wouldn't reappoint them. Chris Christie, though, told Bloomberg he maybe would. So market watchers likely will be watching that closely, especially ahead of Jackson Hole, John.
MH, as you know, winning a primary is very different to winning at the national level. Where does Ukraine feature in that effort?
Well, Ukraine is at an interesting point right now when you look at the Republican Party. As Kayleigh noted, you have some serious divisions, but also it's a difficult line for some of these candidates to walk. One, when we saw Ron DeSantis make that kind of fateful issue, saying that Ukraine is just a territorial dispute, he then had to walk it back, but also that really spooked some donors. The other issue why Ukraine is so important right now is because Biden is asking for more aid, and this is becoming a huge issue on the budget fight on Capitol Hill. And potentially, Jonathan, we might see a showdown when it comes to a government shutdown by the end of September, and Ukraine is playing very large when it comes to that. The far right of the Republican Party in Congress do not want to give more aid to Ukraine. So what the candidates say this evening could potentially give those members in Congress more of a nudge to continue fighting to not send more aid.
Anne-Marie, thank you. AMH, alongside Kelly Lyons, to the both of you. That debate later on this evening. Right now, I hate saying this, but this is how it's playing out. Bad news is good news for this market. Equities up, bonds bid, yields lower. Coming up, your trading diary.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
This is Bloomberg.
The headline today, disappointing economic data on both sides of the Atlantic, a rally in the bond market, a rally in equities as well. That's the price action. Here's the trading diary. New home sales coming at the top of the hour, Nvidia earnings after the closing bell, and the first GOP presidential debate kicking off later on this evening, 9 p.m. Eastern Time. Another round of jobless claims and durable goods coming on Thursday. And finally, I'll see you over in Jackson Hole. Kicking off tomorrow with Fed Chair Jay Powell speaking Friday at 10:05 Eastern Time. From New York, this was the countdown to the open. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, coming up, we get some economic data crossing the tape. We'll break that down for you. We're also going to talk to Erica Edelberg, mortgage-backed security strategist with Bloomberg Intelligence. What are we seeing in the mortgage market? New home sales, all that coming up. Omar Aguilar, he's the CEO and CIO at Schwab Asset Management. We're going to get his market call. Then Catherine Daugherty, finance reporter with Bloomberg News, has got a great story out today on Merrill Lynch, Bank of America, fighting for market share against the big guys at Goldman Sachs and Morgan Stanley. Having some success, too. We'll get to that. But first, let's go to John Tucker and get a Bloomberg Business Flash.
All right, let's get right to the data. Did use home sales yesterday. New home sales in the U.S. coming in a lot better than expected. 714,000
Edelberg, MBS strategist, Bloomberg Intelligence, joining us here. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thank you, Paul. Well, Hollywood studios have released details on their contract proposal to screenwriters. Bloomberg's Kimberly Adams has more.
The studios say they offered their biggest wage increase in 35 years, protections against the use of AI, and sending the Writers Union quarterly reports disclosing viewership for series. Details reported by Bloomberg last week. Screenwriters want studios to guarantee rewards and success. The two sides continue to meet.
Now, meanwhile, the president of the United Steelworkers says U.S. Steel doesn't prioritize its union workforce and accused it of betrayal. The union plays a key role in any transaction that involves the sale of U.S. Steel mills or assets. It supports Cleveland-Cliffs' bid to buy the company, and the steelworkers say that Cliffs can bid for U.S. Steel on their behalf. Shares of U.S. Steel right now, they are up just a fraction. And the deal is done over at UPS after union members have approved a new contract with workers. Bloomberg's Steve Potus reports.
According to the Teamsters, about 86% of employees voted for the deal, the union's highest vote ever for a contract with UPS. It adds about $30 billion in additional pay and benefits and avoids a strike that could have crippled the economy.
And checking in with shares of UPS right now, they are up nearly 1%. And Goldman Sachs is putting the pressure on its workers to get back to the office 5 days a week. Now, its human resources chief said the company is simply reminding their employees of their policy. Citigroup and JPMorgan Chase, they have been tracking attendance and even urging managers to enforce their mandates. Now, shares of Goldman Sachs right now, well, they're up just a fraction. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, stocks are higher, and Treasury yields, they are dropping. In the S&P 500, yet 10 of the 11 major industry groups in the green, being led by communication services. And then NVIDIA shares doing some of the lift there. They're up 1.7%. Well, the jobs market, that's been pretty hot, right? Well, actually, government data released today show U.S. job growth was probably less robust in the year through March than previously reported. The number of workers on payrolls probably will be revised down by 306,000. S&P 500, 26 points higher right now. That's up 0.6%. 44.14 on the index. The Dow Jones Industrial Average up 78 points. The Nasdaq 100 up 161 points. That's a pop of 1% so far. 2-year yield down 10 basis points, 4.94. The 10-year 10 basis points lower, 4.22. Tomorrow's August 24th. You know the significance of that date? Anybody?
I do.
Oh.
More people call in sick on August 24th than any other day in the year.
Somebody actually tracks this, which I find is fascinating.
Why?
I'm not entirely sure of the reason. Maybe it's just...
Dude, there's
before
just
the
absolutely nothing
long-
going on. I don't know about you, but for me, like...
Wait, it's NVIDIA, you know.
No, I'm just saying, yes, this year. But typically, if I have something really important at work, I'll come in even if I have COVID ×2, right? But if there's nothing happening and I have a stomach bug, I'm out.
And February 13th is the other, typically the other day where everybody just calls out and says,
The day before Valentine's Day?
The day before.
Everybody's not shopping for that last minute Valentine's gift. All
This
right.
is a study by Flamingo.
That sounds reputable. I'm down with that.
No. Anyway, that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. Matt Miller, Paul Sweeney here in Bloomberg Interactive Broker Studio. We are streaming live on YouTube.com, so head over there and search for Bloomberg Radio, and you get it. You know, in this market this year, and particularly in the month of August, it seems like the equity markets are kind of following what's happening in the bond market. And August is a time we saw rates move really higher in the in the Treasury market, and kind of a tough sailing there for equities. I'm looking at today, the 2-year and the 10-year Treasury, both down 10 basis points. That gets your attention here. We got a little move up here in the market, but I have no idea what I'm talking about. But I know we have people on this show, Matt, that really do know what they're talking about. Omar Aguilar, he's the CEO and the CIO of Schwab Asset Management. Omar, what is your market call here, looking at some of the volatility we've seen in the bond market this year, and particularly over the last 3, 4, 5 weeks?
Hi, good to be here. And it sounds like investors need to take tomorrow off. Sounds like it's a pretty popular thing to just take a little bit of a break. I would probably, think, a big part of what we have seen, especially in the last several weeks, is the fixed income markets and bond traders seem to be driving the bus. Yep. And, our sentiment continues to be that, investors are trying to find some sort of a stability on these yields. As you mentioned earlier, we saw an increase in the 10-year yield of, more than 25 basis points in a short period of time, followed by 1 day of 10 basis points drop. That is very, very significant compared to the history of what you see on yields on bonds. And what that does is just gives you a sense of what's driving the overall component. Normally, when you look at the fixed income market, you try to look for signs of, is this reflective of the economy? Is this reflecting of inflation expectations? Or is this just a supply-demand imbalance that is driving these changes in yields? And it sounds to me that today it's all of the above. We know that there is more competition for yields across the globe. So we, have now, probably a more broad opportunity to invest in treasuries in the US, but also in other parts of the world that are competing for the same investors. So there's this supply-demand imbalance where there's significant supply of US treasuries that we probably didn't have before, and the demand is probably not as strong as it was before. The second thing we have is that, yes, we saw with the housing data, we see with the consumer spending, we see the delinquencies going up, that we see the inflation expectations are coming down and are being very volatile. And lastly, the discussion that we're going to have about the Fed and what the rates will do as a reflection of the economy are driving this amazing volatility that we see in there that is reflected in the U.S. market more as a collateral more than anything else.
What about, aren't your investors looking at yields? And this just gets to the supply-demand question, right? I know there's a ton of supply coming out, but aren't they saying, hey, I'm going to lock in not just 5% of the short term, but like 4.5% for a 20-year? Aren't they looking at these returns and saying, I want that?
Well, there is definitely the more of total return expectations of bonds that we probably haven't seen in 15 years or so. So definitely that is, puts a big pressure on this risk premium we have for risky assets. But at the same time, especially when, investors are looking at duration, they need to be aware of the fact that there will be more volatility on the longer part of the curve, that is the part that we continue to emphasize. As long as the credit market stays stable as it is so far, then it's probably wiser to take a look at potential total returns in areas that emphasize credit, as opposed to try to look at options on duration, because that volatility is something that you have to endure until we have a little more stability of the yield curve, which will be in line to what we see in the Fed decisions, as well as just the overall state of the economy.
Hey, Omar, I'm just looking at your research, and you've got a key point here. Watch the C's, the letter C. What does that mean to you?
Well, at the end of last year, we were looking at these as sort of the barometer of what we thought would be things to watch. And of course, AI and significant amount of investments in technology surprised everybody as to how the equity market behaved in the first part of this year, together with the fact that I think everybody was surprised on, how resilient the economy was going into 2023. So when you put along the context, we go back now to look at what the C's are. And the C's, are China, which as all of us know, provides a significant amount of barometer of global growth. And in this particular case, China has been in the news in the last, several weeks, mostly because of deflation and most of the challenges they have in their financial sector, as well as the potential contagion they may have to emerging market. The second one is commodities. Commodities is a big component of what brings inflation into the fold and what is a reflection of, again, the overall global picture on inflation, which is what the Fed is looking to. The third one is credit. Again, the credit market is critical for the U.S. financial system to operate well and potentially can give us a sense of whether or not the soft landing, hard landing, or no landing, scenario. Obviously, a big part of these component and the fact that we have been so resilient, it ends up in the consumer, which is the other one of the C's, which includes, the fact that consumers have been the drivers of U.S. economic growth, has been the drivers of a lot of the support that we have seen. And a lot of that has to do with the fact that we're looking at the consumption levels that we have, that we're seeing the big component of what we're seeing in the market now. And the last one is claims, which is related to a report that you just saw today, which has to do with the labor market. So between consumers and the labor market, those rounds off the C's that are the key focus for the rest of this year.
Love it. Commodities, China, credit, claims, and consumption. Watch those C's. In terms of the China investment question, Omar, what do you tell investors who want to buy assets in a place that has a significantly different rule of law than the United States? Obviously, that's not only China. There are other jurisdictions, that Americans may not fully understand or appreciate.
Yep. It's a great question, and we do get a lot of questions on investing overseas. And I would probably say, as a general terms of what we encourage our investors, diversification is key, but at the same time, investing, in other parts of the world brings risk, and you have to understand, the trade-off between risks and return and your overall expectations in your overall planning. And as you said, whether it's transparency, whether it's different rules, whether it's different information, that provides, different parts of what becomes, a risk associated with return of what you expect. We encourage clients to look at opportunities in the overseas, but at the same time to basically look at those markets that we have. And this is not just China, and this is not new. If you go back in history, the history of investing, say, in emerging markets, frontier markets, or any other parts of the outside of the United States, usually bring, opportunities that we don't have in the U.S. for of more diversification, but at the same time has come historically with potential risk that you have to endure if you're part of that long-term planning.
Yeah, I'm just looking at the ARM IPO that's coming, the S1 that dropped. They had 3,500 words allocated for China risk in the prospectus, so just extraordinary amount of risk disclosure.
Yeah, that's 25% of their revenue.
That's a big play there. Omar Aguilar, thanks so much for joining us. Omar is the CEO and CIO of Schwab Asset Management. He also received his master's and his PhD.
Let me guess.
Duke University.
At Duke.
That's right. So that's why he's so smart. Omar, thanks so much for joining us. So Matt, again, that NVIDIA print after the close here, I might even, pick my nose up and take a look at this thing after the close, because it's going to have big implications for tech and maybe for the equity markets in general.
Yeah, I think we're all going to be dialed in to see what comes out from NVIDIA at 4 o'clock, whether we're at home or maybe on the golf course, because it's so important. And To me, it's just so interesting, right? Expectations are so high that they have to significantly beat. I think this is what I've been hearing from analysts and investors. They have to significantly beat expectations in order to drive the stock any higher.
Exactly. Here's a company with a $1 trillion market cap, up over 200% year to date. I don't think I've ever seen that before, so that's really amazing. All right, right now let's head down to Washington, D.C. Amy Marcy's got world and national news for us.
All right, thank you, Paul. Rudy Giuliani on his way to Georgia to surrender at the Fulton County Jail.
I'm a big boy. I can take it. I fought battles much worse than this, against people much tougher than them.
The former New York City mayor was indicted along with Donald Trump and 17 other alleged co-conspirators on racketeering charges connected to an alleged plot to overthrow the results of the 2020 election. Meanwhile, a Republican debate tonight, and some candidates who didn't qualify to participate are crying foul. Former Congressman Will Hurd tells ABC he has no intention of dropping out.
I've always said my goal is not to peak on August 23. My goal is not to peak next week. The goal is to peak later in the winter before the first election, before voting begins.
Some of those who didn't make the cut accused the Republican National Committee of cherry-picking the polls. Some GOP voters in Wisconsin are disappointed that Donald Trump decided to skip tonight's debate, telling Fox News that they believe it's a missed opportunity for the former president. They say they'll look for one of the other candidates tonight to emerge as someone who can challenge Trump for the Republican nomination. India, now the first country to land a spacecraft near the moon's south pole and the fourth to successfully land on the moon at all.
जी हाँ, आप अपनी स्क्रीन पे देख सकते हैं कि हम
India's rover is set to analyze the chemical makeup of the moon's surface and search for water. You might recall just a couple of days ago when Russia tried it and that attempt failed. South Carolina's new all-male Supreme Court reversed course on abortion, upholding a ban on most such procedures after just weeks of pregnancy. The ruling departs from the court's own decision earlier this year to strike down a similar law. It is now at 6 weeks of pregnancy. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. We have stock indexes rising, bond prices, they're rallying, pushing the yields lower. Earnings due after the market from NVIDIA, that's going to be scrutinized as something of a bellwether for artificial intelligence trade. Right now, those shares are rallying. We also had results from Peloton and Foot Locker. That's a different story. Disappointing there, sending their shares lower. Morgan Stanley's Lisa Shallot sees the investors shifting from risk assets to fixed income.
Our clients have been, quite frankly, pretty willing to watch the quote-unquote sideshow of markets this year and take advantage of what, for many of them, are the best fixed income yields in 10 to 15 years.
Speaking of yields, right now the 2-year 9 basis points lower at 4.94. The 10-year also lower by 9 basis points. That's at 4.23. S&P 500 up 29 points. That's up 0.7%, 44.17 on the index. The Dow Jones Industrial Average up 62 points. That's up 0.2%. Nasdaq 100 188 points higher. That's a rise of 1.3%. And home builders continue to benefit from limited supply in the resale market. New home sales rising in July to the highest level in over a year. And friend of the show, it's a sad story here, but Laszlo Barini of Barini Associates. I mean, his background with Deutsche Bank and Solomon Smith Barney, going way back. He has passed away. Our condolences to his family and his colleagues.
Yeah, I absolutely loved Laszlo. We interviewed him, it seemed like almost daily during the great financial crisis, and beyond. He was always such a fascinating and prescient voice on the markets. So, yeah, he'll be missed.
Great career, a great run. So thank you, John, for that. I spent most of my career on Wall Street. So whenever Bloomberg puts up a great article on Wall Street, my eyes just naturally gravitate towards it. And today's a really good one by Catherine Doherty. B of A trading desk gains ground with capital and headcount. And I spent part of my career, about a cup of a coffee's worth, at Mother Merrill Lynch. Great firm. B of A now owns it, but just one of the behemoths on Wall Street. B of A, Merrill Lynch could do anything, in my opinion. Great firm. Catherine Doherty joins us, finance reporter for Bloomberg News. She joins us here in our Bloomberg Interactive Broker studio. So it looks like B of A / Merrill, they're trying to make a push across their trading business. What did you find out?
So it's funny, B of A, second largest bank by assets, but when you talk to folks across Wall Street about trading, they're not the first name that comes up in conversation. And really, that just comes down to their risk tolerance. Since the financial crisis, since they bought Merrill, since there's been so much integration, they've kind of held back. And while they're still serving clients and they are one of the largest firms that is trading with buy-side investors, they're not taking as much market share as, let's say, JP Morgan. Right. But that's starting to change. About 3 years ago, they named a new head, Jim DeMar. He took over for Tom Montag, who was really running that trading business along with investment banking. And in the last 3 years, they've added some talent, some key talent from those firms that take riskier bets, from Goldman, Morgan Stanley, and they've also been able to get more capital. They went all the way up to CEO Moynihan, to their head of risk, to ask for basically more room to run. And while they're still in a narrower risk tolerance than others, with more capital and with these key hires, they've been able to slowly chip away and gain more market share over the last 2-3 years.
So have they built up a bigger team? I know there is a speech, at least I read in a Bloomberg story, that there was a speech last year where DeMar said, listen, if you're not willing to give it your all and, work your butt off to build this business, you might want to work somewhere else.
Yeah, exactly. So about a year ago is when he gave that speech. And it was after second quarter results where some of the other banks had posted pretty impressive results within fixed income, especially. This was after the war in Ukraine had broke out. And you had banks on Wall Street taking advantage of all that volatility. They were helping clients place bets tied to Russia. Bank of America did not. They had a mandate from high up that said, you guys got to hang back. You can't get involved in these types of trades. You can help clients unwind their positions, but you can't help people profit, and we can't profit off of this war. So this was why Jim was getting up and saying, hey, we have progress that we still have to make. And that comment was made to his group, the entire trading team, to say, if you're not willing to put your best foot forward and to act, maybe not aggressively in the form of taking more risk, but you got to be willing to be top three, then yeah, maybe you should look elsewhere. And he's not making this statement to say, here's the door, and you should be going to somewhere else, get out of here. He's just saying we want to have people that really want to be here and that we want to make headway. And 1 year later, they've shown that their second quarter results this year, so this is 1 year after the kind of tepid results they saw a year ago, they were up 10% when all the other banks on Wall Street were down. Now, that's also because you're comparing it to the record quarter, again, a year ago, post the war in Ukraine. So it's really going to be a story that we'll keep tracking. And if this group can continue to maintain the growth and the market share that they have chipped away at again, then it might be something that they are able to sustain. But that's still a question mark. It's not a foregone conclusion.
You know, when I was at Merrill, we were going to go pitch a public company on a follow-on offering, and one of the things was we wanted to be a top trader in stock. We want to say we were your number one trader, which we weren't. We were like third or fourth. So I went down. My job was to go down and talk to the trader, who was probably my same age, young, and they said, you know, if you can, we'd appreciate it if you could take a bigger profile on XYZ stock. From that day forward until we pitched the IPO in like 2 months, number one every single day trading the stock. And that's just a commitment of capital, you know. So that trader, that desk was willing to put up the capital to make our jobs of getting the follow-on offering easier, which we did get and made a big print. Looking at the comp function, for the stock, BofA's kind of flat over the last 5 years. Morgan Stanley up 15%, Goldman Sachs up 9%. So if you go to Brian Moynihan now, do you feel like if I'm a trader and I ask for some more capital, you think he's going to be more open to that?
So there's a lot that's changed in the last year, and capital has become more constrained across Wall Street. But the bank, if you were to ask them, I'm sure that they would say we have enough cash on the balance sheet. They will show you that with the numbers. And they will say that if the capital is needed and the group, whether it's the trading group or the investment banking group, comes to us and has a good pitch and they explain why they need what they need, we'll give it to them. But I think that that's probably getting harder to do. Those pitches need to be pretty clear, pretty persuasive. But what you just described is exactly what they're trying to focus on, which is making sure that the groups within this huge organization are working together. So if you have someone in investment banking that's working with a client, that's a corporate client, and they need to hedge their risks, whether it's their currency risk or their rates, they're going to want to say, hey, you should talk to our trader who can help you out. And I think that when you have such a big organization, this is not specific to B of A, but anywhere, often communication lines can break down. So they're just trying to communicate better in order to either get clients to interact with them more or to tap new clients that they might not even know that they can be working with and that they should be working with.
So who's the best and biggest trading desk on the street, and what do they do right?
Well, right now, JP Morgan does have the most market share, and that's been kind of the same for as long as I've tracked this,
but
at
it's
least, which isn't the longest time. But.
No, it's long, but yet they have the big capital behind them. It's all about how much capital you can put up. So JP Morgan, Goldman Sachs, Morgan Stanley, those are things. And if you're Merrill Lynch and you've got the Bank of America balance sheet, but as Catherine is just reporting, less ready to put up some incremental capital here, but maybe that's changing a little bit. So but it's good stuff. I remember it just took me like 45 minutes to find where this kid sat on the trading floor. That's how big the Merrill Lynch trading floor was and how many people were there. I had to find it. It's crazy. But anyway, that was a good story. Catherine, thanks so much for the reporting here. That story just jumped off the terminal for me this morning. Catherine Doherty, finance reporter for Bloomberg News. Bank of America, Merrill Lynch, the thundering herd of Merrill Lynch, maybe stepping up a little bit more on the margin.
Weakening spending patterns. Now, the company is having its worst day on record going back to July 1980. But with all that said, there are a few bright spots in retail. Bloomberg's Abigail Doolittle has that story.
Abercrombie & Fitch, they boosted their full-year view. The namesake brand was strong. The teen brand Hollister also strong. Kohl's going in the opposite direction. They put up 125% earnings beat. Their inventories are improving. They're clearing out the merchandise, optimized assortment, all positive. And then Urban Outfitters, another strong one, a 24% earnings beat, 1.8% sales beat. The discounts are fading.
All right, so let's break down the shares right now. We said Foot Locker was down 34%. Abercrombie is up 25%. We have Kohl's up 2%. We have Urban Outfitters up 2% as well. And what matters more to investors? Better than expected second quarter adjusted EPS and an earnings forecast boost, or slightly weaker than expected net sales and a tweaked projection? That's the situation that Bath & Body Works is in right now. As shares have been wavering back and forth right now, they're up just a fraction. And from retail to housing, U.S. mortgage rates have jumped to the highest level since late 2000. The Mortgage Bankers Association says the contract rate on a 30-year fixed mortgage increased to 7.31% last week. Now, that helped to drag down home purchase applications even lower, falling for a 6-week to the lowest level in nearly 30 years. Yesterday, Mortgage News Daily put the 30-year fixed rate at almost 7.5%. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Good day for the equity markets. We had the S&P 500 up at 0.8%. NASDAQ doing a little bit better, up 1.4%. The VIX is down pretty solid, just a 16.21 on your VIX. Lots of movement downward in yields today after kind of surging yields we've seen over the last several weeks. Both on the 2-year and the 10-year yields down about 9-10 basis points. The 10-year is at 4.22. The 2-year is now 4.95%, so we keep an eye on that. Pullback in oil, not as much as earlier today, but still WTI crude oil just below $79 per barrel. On Bitcoin, it is now just back above $26,000 per token. Let's head down to Washington, D.C. right now. Amy Morris has got world and national news.
All right, thank you, Paul. Rudy Giuliani on his way to Georgia to surrender at the Fulton County Jail in Atlanta.
This will be proven to be, like all the rest, a complete hoax and a lie. One of the worst, actually.
The former New York City mayor was indicted along with Donald Trump and 17 other alleged co-conspirators on racketeering charges. Excessive heat, an issue for much of the country. Bloomberg meteorologist Rob Carolyn tells us this is an enormous heat dome.
A strong and stationary high-pressure system over the central United States will continue to bake areas from Texas into the northern plains today. Areas stretching from Texas into extreme South Dakota are under either excessive heat warnings through Friday or heat advisories, and that extends eastward into parts of the western Ohio River Valley as well as the central Gulf Coast.
Bloomberg meteorologist Rob Carolyn says it'll take a couple of days for the system to break down because other weather systems are actually passing over the heat dome, and that's dumping unusually cool weather in the northeastern U.S. The number of people confirmed dead from wildfires on Maui remains at 115, but the number of people missing now back to about 1,100. Officials say it's confusing because many unaccounted for residents are listed in those missing lists with first names only. We expect to learn more today from Philadelphia police after an officer shot and killed a man in the city last week. Anthony Arce with the Citizens Oversight Commission is calling for Officer Mark Dial to be fired.
We came to the conclusion that we would call for Officer Dial to be fired. It was not an easy decision to come to, but in our evaluation of the evidence, it spoke for itself.
The officer's initial report stated that Irizarry got out of his car and then lunged at police as he was holding a knife. But newly released video shows Officer Dial shot 27-year-old Eddie Irizarry through the closed-door window multiple times at point-blank range. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate that. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. We're also live streaming this thing on YouTube.com. Just head over there and go to Bloomberg Radio on the search, and you'll find it. All right, Matt, some eco data today in the housing market. U.S. new home sales rose in July to the highest level in over years. Home builders continue to benefit from a limited supply in the resale market. I mean, you talk to residential real estate. That's what's being built out there. It's tough to find something to move into.
Yeah, absolutely. Not only is it tough to find something to move into, but it's tough to pay the high mortgage costs. And we were just talking with Erica Edelberg, who's a Bloomberg Intelligence mortgage-backed security strategist, who pointed out that a lot of these firms, especially the bigger home builders, are able to offer prospective buyers much lower rates. She said even down to 5%, which is great when the bank rate mortgage rate is at 7.5 or more.
It is. So, a combination of tight supply and high costs continues to weigh on affordability. That's the thing you hear a lot from the real estate folks is really poor affordability conditions out there. The median sales price of a new home climbed to $436,700 from a year earlier. That's according to Commerce Department's report. So that's well above pre-pandemic levels. So again, you don't know what the break-even point is on mortgage rates where it might entice some people to start buying and selling homes, but it's not at 7.3% where we currently sit for a 30-year fixed mortgage. So we'll keep an eye on that. Matt Miller firmly ensconced at a 3.25% rate. How about that? This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, a lot to talk about. We're going to kick it off with a little preview of NVIDIA. People are going to be focusing on those earnings after the close. Ed Ludlow, he's host of Bloomberg Technology. He is down with this story. He'll join us and give us his thoughts. Then we're going to talk a little bit about the space business. Why? Because we have a space reporter at Bloomberg News, Lauren Grush. She covers all the space stuff, and it is a real business these days. India had a successful moon.
I was just going to say, China crashed their lunar lander.
Was
on,
it China or Russia? I can't remember.
Russia. Russia
Right.
crashed their lunar lander on the south pole of the moon.
Yep.
And
But we had a successful landing today from India.
Yes, exactly. And
Awesome.
they're going to hang out during the day on the moon with the rover lander. Did you know that one moon day is 14 Earth days?
I did not.
Yeah.
Should have known that. I'm a child of the
Crazy,
Apollo
right?
missions. All right, we got a lot of good stuff coming up. We'll talk space there as well. Let's kick things all off back down on Earth with John Tucker of Bloomberg News.
All right, stocks are higher. Treasury yields, they are falling. You have 9 of the 11 major industry groups in the S&P 500 in the green right now. Communication services, that's in the lead. A biggest drag coming from energy as oil prices fall. Why are they falling? Jess Menton says it's seasonal. Yeah. Among the data today, American business activity barely expanding. That's because of lower customer demand. We're getting that from the S&P PMIs. Now, as investors try to guess the path forward from the Federal Reserve, Anastasia Amoroso at iCapital says we are not out of the woods on inflation.
We've got food prices that are creeping higher. We've got energy prices that are creeping higher. And so I worry that the headline numbers are going to start rising by more than 0.2% per month. And the big deal about that is if you have this speed of 0.2% increases or more, we actually might start to see year-over-year headline numbers continue to rise.
Traders growing more optimistic on U.S. equities. That's according to Charles Schwab's Trader Sentiment Survey, which found 44% now bullish, from 32% in the second quarter. S&P 500, 36 points higher. That's up 0.8%. 44.23 on the index. The Dow up 113 points. The NASDAQ 100, 208 points higher. That's up 1.4%. The obligatory NVIDIA quote ahead of the earnings up 2.25% right now. So why are they going to the moon? To find, they only in the past relatively recently discovered that, yes, in fact, there's water on the moon, lots of it trapped as ice. So if there's water, you can convert that into hydrogen. And
why do we want to do that?
Because then you would have fuel for rockets, and then you can go...
You mean so like at a stopping point, so they could go
Potentially,
there, refuel, and then go further?
Yeah, potentially. It's just like, why so much interest all of a sudden?
Right, because I thought we'd kind of been there, done that.
No,
when I was a
it's
kid.
just like there's more to do there.
Okay, all right.
Yeah, I hope we keep going.
All right. I think you've been there. Don't we go to the next one then?
Maybe my kids will go, instead of like to the BVIs, they'll go to the moon.
Yeah, I think I'd rather go to the BBS. Thank you very much. John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio. We're doing the streaming thing live as well on YouTube. Head over to youtube.com and search Bloomberg Radio or Bloomberg Global News. That'll get you where you need to go. Jess Menton darkens the door, brightens up the room as she always does. We need to talk about some of these markets because we got green on the screen here. Jess, you cover all the markets for Bloomberg News. What are you looking at these days?
Well, I have to bring up Peloton,
Oh, man.
Paul, of course, because unfortunately that stock is down almost 25%.
Unbelievable, man.
Huge move here. So Peloton is the ticker, but we all know about Paul in the bike and the treadmill that he just had.
Well, I'm trying
Paul
to get
and Jen.
I'm trying to get the bike at least down to the Jersey Estate from North Jersey down to shore, but I don't know how I'm going to do that. What happened today?
Maybe this is part of the problem. Hang on, Paul. Instead of just buying another one for your estate down south, you're going to move the one from up north?
Yeah, I don't think I need two of them, do I?
Well, I guess this is part of the issue, Jess.
This
Right.
is part of the issue, part of the problem. All right, what happened to Peloton today?
Weak forecast, expensive recall are some of the main things that are happening here. So unfortunately, that product recall substantially exceeded initial projections here. If you look at the stock year to date, down about 33%. The company plans to resume sales of its Tread Plus, though, for the holidays there, Paul. But that is a stock I had to mention because I know that you are watching it closely.
Yeah.
But of course, we all have been talking about this for all week as far as when it comes to NVIDIA that we know is coming after the bell. SURP is what I like to go to gauge as far as the options implied volatility on the move here. So about 10-11% move following the results is what's being priced in at this point. NVDA is the ticker for NVIDIA. That stock is up about 2% heading into this report. But if you look since its last report in late May to now, it's actually added more than $307 billion to its market value since we last got the update from its forecast, and it's been the biggest contributor to the NASDAQ 100's close to 40% rally this year. The NASDAQ 100 is up about 38%, and analysts have been raising their price targets ahead of the report. I like to use the ANR function. I'm sure that's something that you look at, Paul. If you look at that 12-month price target, $520. If you looked at where it was a week ago, it was actually around 1.4 trillion. So NVIDIA is the fourth largest company in the S&P 500 right now. Amazon is the third. It's catching up a little bit.
If I had some funny money at a hedge fund, let's say I'm running a gajillion dollars, but I got a little side pocket of like $200-300 million, would I have the fortitude to take a short position in this stock today? Buy some puts, write some calls, short some stock, because are the odds greater that they're going to have a disappointment vis-a-vis the stock and expectations, or better?
Isn't it going to be very difficult to impress the street, Jess, considering how high expectations already are?
They are. So for the last quarter, so at the time when they had put their report out in May, so for the quarter that they're currently going to be reporting on, they gave a revenue forecast in the range of $11 billion at the midpoint. So the analyst consensus was around $7 billion. So that's what's really hinging on it. And then also the data center businesses, that's a big crucial there. Piper Sandler is looking for that to grow close to 80% in the last quarter, but you still see different targets being raised here, like HSBC's Frank Lee thinks the stock has further room to run despite more than tripling this year and trading around 44 times its projected profits. So even you still have firms on Wall Street that think it could go further here to go, but I mean, there's a lot riding on this. So even if it does meet expectations, you could still see the stock potentially sell off on that.
All right, so I'm going to put $250 million to work right now on the downside. You heard it here first. But looking at the ANR function again, just 52 buys, 6 holds, and 1 sell. So the street is all in on this name. So
yeah, 88% of the buys there, and just 1.7% sells. On
all right,
NVIDIA.
there you go. Jess Menton, thanks so much for joining us here. Jess Menton covers all the markets for us. And again, let's get a little bit of a preview of this NVIDIA story. People, I don't think we can cover this enough. I don't think we're overkilling here, because it's not just NVIDIA and a $1 trillion market cap company. It's the tech space in general.
It's the whole market.
And it's the whole market. A lot of strategists will tell you, the performance you've seen this year in the market has been AI driven, and NVIDIA is the poster child for AI and the whole theme here. So they're going to be people are going to be watching this print and the conference call very closely. Ed Ludlow joins us. He's a host of Bloomberg Technology. He's right in the middle of it out there in San Francisco. Ed, what are you hearing out there from your sources? You're right smack in the middle of all the tech people.
Yeah, I think you guys have framed it really well, right? That if we get a disappointing print from NVIDIA, like the way I think about it is it's between 3 and 4% of the S&P 500 on a weighting basis. This whole rally in 2023 has largely been AI driven, or if you go at the NASDAQ 100 levels. So, it could change the psychology of the market if NVIDIA shows that the AI story does not have staying power. And why do I say that? Because NVIDIA is like the pure play AI pick right now. Literally, it's the one that has GPUs in the market.
And what is a GPU versus a CPU?
Yeah, so a graphics processing unit, basically, as opposed to a CPU, is better at running lots of data processes in parallel. The origin of the GPU is actually in video games and in graphics. You think about when you're playing a video game, you need to play lots of different data sets in real time to show the visual on the screen, but also make commands for the video game character. That's the easiest way of explaining it. But the reason this story is important is that, you know, there are other companies that have GPUs specifically for AI. When you're training a large language model, you need to run lots of data processes in parallel. It's simply lots of data, high volumes, running at the same time. Simple layman's term explanation. The difference between NVIDIA and like an AMD or an Intel is that NVIDIA actually has multiple generations of its product in the real world, in actual data centers and servers. Whereas AMD is in a comparison, it's announced lots of products, but it hasn't actually started manufacturing them at scale yet and putting them into the real world data server.
It's fascinating. It really is, I think, interesting. And that there's no other pure play AI stock out there. It's amazing because, you know, how many tens of thousands of stocks are there in the world, and thousands in tech alone. What about the other companies that you see coming up, Ed? Are there others that want to be pure play AI companies? I mean,
you know, in the private markets, yes. You know, there was news, for example, that Salesforce has led around in Hugging Face, which is a large language model developer and platform for third parties to build their own large language models. And it gave them a valuation of $4 billion. You know, the only other one that I guess would claim to be the pure play now is Google. But we've already had their earnings, and I think we discussed this, right, the three of us, that what was the story of earnings season? It was investors micro-focused on their legacy core businesses, which in Google's case is search, not necessarily AI. Well, and they rewarded or punished them for that.
It's neither here nor there because we're focused on the earnings tonight.
Big time.
Underline for us how important this earnings report is, Ed, not just for NVIDIA, but for the rally that we've seen in 2023.
Yeah, Jess Menton set us up really nice. Expectations super high. Top line growth of 65% year on year. NVIDIA guided that revenue in this fiscal quarter would be about 11 billion. This average analyst estimate is slightly above that. The institutionals are saying we want to see 12 billion. So there is definitely high expectation. As I pointed out, you know, if you take the S&P 500, NVIDIA at this stage, given the run up in its stock, is almost 4% on a weighting basis. You know, the NASDAQ 100's had a 36% year-to-date gain, almost entirely driven by NVIDIA, that's up almost 220% year-to-date. I think you guys point out it now has a market cap bigger than Amazon. So we set ourselves up. I don't know how closely you guys follow the technicals on this morning show. As you know, I'm normally doing my hair at this time, getting ready for my own show, having coffee. But we're now punched through our 50, 100, and 200-day moving average on NVIDIA. You know, so I pose the question to you guys, like, how much further can this go?
Yeah.
This is, like, crazy, the story of the stock.
It really is. I just thought, okay, Ed Ludlow's coming on the show.
Right.
I went upstairs and got myself a cup of Builder's tea.
Sure.
This is PG Tips.
Yeah.
This is what I was sure that Ed drinks all day long. He's like mainlining it. But coffee? He's coffee drinker.
I'm a terrible British person. And also, guys, I love to be in before the market opens, but you have to remember I'm still here when the market closes, covering these earnings in the tech sector. You know, I'm a caffeine fiend. I have to be.
Yeah, the violin's playing for you, my friend. Okay, so here's my thing about AI. I think I'm in the news business. I think I'm kind of aware of what's going on. I couldn't even tell you AI before 4 months ago. Like, it wasn't even in my lexicon that I had to think about it as a technology, a thing, much less a driver for the entire stock market until 4 months ago, or 3 months ago, when they came out with these revised projections. So my question to you, Ed, is AI really a thing out there in Silicon Valley? I mean, it seems like
it's the only thing.
It's the only thing, it seems like.
Big
it just
time.
Came out of nowhere.
There is no exaggeration here, and I go to the data for private markets because you guys, I guess you don't cover the private markets as daily as we do on the tech show, but literally more than 50% of every venture capital dollar that went to an AI startup in 2023 so far has gone to a San Francisco-based company.
Wow.
The concentration of new companies is here.
It's good for the city.
To tie it back to NVIDIA,
it's their only hope.
What happened was that more people started companies that were AI related. Those people needed compute power to train their models. NVIDIA had pretty much the best available GPU. So every hyperscaler, every data center provider, if they're not using their own silicon, they went to NVIDIA and said, we need this right now. And the GPU became commoditized in a sense. You know, historically, it's only memory chips that are commoditized, but everyone was desperate for this GPU. So it became like a badge of honor. If you're an AI startup out here in the Valley and you can put out a press release saying, I secured 20,000 NVIDIA H100s, you are regarded as competent in this field. It's just an amazing story.
Badge of honor.
You know, from a technology perspective, not just a markets perspective.
I got to quickly ask you about Peloton, Ed, because you're all over that story as well.
Yeah.
Paul, you know, he's recently acquired a second home, but he's not willing to buy a second Peloton.
I heard this.
And
He wants to move
he's
it.
one of the diehards. What's wrong with this company that the stock can lose a quarter of its value in one trading session?
Because they continue to have operational challenges. The story that Barry McCarthy wanted was moving Peloton from a hardware maker and provider to software and subscription. But in the fiscal fourth quarter gone, hardware hurt them. They had a seat post recall, 2.2 million bikes affected, and then 750,000 people called their bluff and said, yeah, you know what? I do want a new seat. And they didn't factor that in. They didn't know that it would be that bad. What also happened was their news story unraveled because about 15 to 20,000 people just hit the pause button on the subscription. They said, you know what? If you're not going to fix my seat post, I don't want the subscription either, which really damaged them. And that was a big net contributor. And the big headline was subscribers fell away by 26,000 in the quarter or something like that. How can you tell the street that the story is we're a subscriber-based business when subscribers are flying out the door? So as quickly as I could, I think that's the problem with Peloton.
Yep, you're right. It seems like it's not just the post-pandemic effect; it's operational snafus for really the last couple of years, trying to adapt to a new market, and that's been the challenge. So bad day for Peloton. Hopefully, we'll see what kind of day it's going to be for NVIDIA after the close. Ed Ludlow, thanks so much for joining us. He does all that Bloomberg technology stuff for us.
Well, and if you were watching his program more often, you would have known about AI sooner.
I would have. You're exactly right.
So we've got to let Ed get out to the makeup room, get your hair did, and get ready for that program. Ed Ludlow and Caroline Hyde co-host Bloomberg Tech every day at 12 noon.
So, I mean...
Well, 12 noon our time, right? 12 noon East Coast. It's 9 a.m.
Wall Street time, that's right.
9 a.m.
It's amazing how he's adapted so well from London to New York to San Francisco into that tech. He's like embedded in that world of technology out there. So
I have so many good things to say about Ed Ludlow, but I think he's still listening, so I'm not going to say them.
we don't want to do that.
No, I don't need to inflate his ego.
Ego is inflated quite enough at the moment. S&P 500, guess what? It's up about 0.9%. The NASDAQ, the Ed Ludlow Index, it's up 1.4%. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Yeah, we're going to continue along what Ed Ludlow was just saying. So it's been a tough year. It's getting even tougher for Peloton. The fitness company's forecast revenue for the first quarter, it missed estimates as consumers kind of shifted their spending to travel. And that's not all the bad news. Bloomberg's Simone Foxman has more.
On its hardware business, a recall of about 2.2 million seat posts costing more than $40 million than it had anticipated. And in addition to that, 15 to 20,000 subscribers choosing to pause their subscriptions until they got those new seat posts. They've received about 750,000 requests for that seat post replacement.
Now, the news comes after the company announced plans to expand will it will offer its equipment. Bloomberg's Steve Potisk has that story.
As it seeks new markets now that its pandemic workout at home boost falls further into the rearview mirror, Peloton is looking to college campuses, kicking off a new strategy that includes co-branding apparel and bikes, discounts on its app for students, and social media campaigns that feature athletes. The University of Michigan will be the first such partnership.
Now, checking in with Peloton shares, it is brutal, down 22% right now. And the bidding for Subway, well, that's heating up. Sources tell Bloomberg that TDR Capital and Sycamore Partners have called in Goldman Sachs and a sovereign wealth fund in a last-ditch effort to kind of beat out that front-runner, Roark Capital Group. Now, Roark already offered more than $9 billion for the sandwich chain. A decision, well, that could come as early as today. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, stocks, the major averages are all higher, and yields on the 10-year Treasury note, which have hit multi-year highs in recent days, they are retreating right now. Among the data that we saw today, sales of new single-family homes reaching the highest level in more than a year. Builders benefiting from a limited inventory of existing homes. And we did see mixed earnings results from retailers. This comes ahead of the closely watched report from AI leader NVIDIA after the close of regular trading today. Foot Locker, that sank, reported a quarter loss of $5 million, noting a softening in business trends. Abercrombie & Fitch getting a boost. It swung to profitability in the second quarter. Higher sales there. S&P 500 of 40 points. That's up 0.9%, 4428 on the index. The Dow's up 140 points. The NASDAQ 100, 234 points higher. That is up 1.6%. And the 2-year yield down 10 basis points. 10-year yield, that is also down 10 basis points right now.
Yeah.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thanks very much. Matt Miller, Paul Sweeney here in our Bloomberg Interactive Broker Studio. We're doing this YouTube live stream as well, so head out over to youtube.com and search Bloomberg Radio. Question I have is, why is all these countries tripping over themselves to get to the moon? Didn't we do that like more than 50 years ago? I don't know what the big deal is, but our next guest will help us out here. Lauren Grush, space reporter. That's right, Bloomberg has a space reporter. Why? Because we have 2,400 journalists around the world. We cover everything, everywhere.
In 150 countries. But also, I mean, it's a huge and emerging...
It's a business
industry.
It
is.
I mean,
look, I think...
it's not just NASA anymore.
Let me ask Lauren. I'm pretty sure... Lauren, first of all, hello. Welcome to the program. Thanks for joining us. Didn't Elon Musk and SpaceX just raise new money at an even higher valuation in what is, for most startups, a down market?
They did, but they also have quite a lot on their plate in terms of what they're trying to develop. You know, they're working on Starship, which is this massive vehicle that's supposed to take humans and cargo into deep space and to the moon, as you guys have been talking about. And they're also expanding when it comes to their Starlink initiative as well. So they have quite a lot to work on. And so that's ultimately why part of the reason why they did that raise.
All right, Lauren. So help me out here. What's the attraction to the south pole of the moon? We had Russia crash, didn't quite do it. But India today reported a successful landing. What are they after?
Right. So the South Pole of the moon has been a bit of a tantalizing place for scientists over the last few years, because more and more research has come out and evidence has come out that the region might have large quantities of water ice and these permanently shadowed cratered regions. So areas that never see the sun, they get extremely cold. And that's tantalizing for people, especially those looking to send humans to the moon, because there's the possibility that we could mine this water ice and use it as resources. We could use it as drinking water. We could use it as water for plants if we wanted to grow crops on the moon for lunar habitat. And it could also be used as rocket fuel. You can break apart water into its constituents and to make it into fuel that could be used to send rockets off of the moon. The issue is we just don't know what kind of form the water ice is in, how much is there. So we need to get there in order to prospect and to see, you know, is this a viable option to use for future exploration initiatives?
So older listeners, Lauren, are going to be wondering, is this the dark side of the moon?
Nice.
I don't know, like, about the polarity. And apparently one side of the moon never faces the Earth, or what's the story with that?
So it's not the dark side of the moon. There actually is no dark side of the moon. I hate to break that news to everyone.
What?
Yes. You are correct, though. There is a far side of the moon that we never see from Earth because the moon is tidally locked, and so it is constantly facing our planet in one direction. So you might be very familiar with the face that faces us. You may not be so familiar with the face.
And the South Pole is where? Is that, do we see that one, or?
we see parts of it, but yes, it is within our part of it is it within our site.
All right, listen, Tucker's laughing at us because he knows all this stuff.
He does, I
But
know, because he
don't
watches
know.
YouTube videos on this stuff.
Yeah.
Yeah. All right, Lauren, you're a space reporter. What are the big stories that you're kind of following? What are the themes that you're following as it relates to your space beat?
Well, there's quite a bit going on. As you've mentioned, the moon is a very popular place these days. So, it's not just India, not just Russia that are looking to go back. The U.S. is actively looking to go back to the moon. A lot of those efforts stem from NASA's Artemis program, which is a concerted effort to send the first woman and the first person of color to the surface of the moon. Right now, they're targeting the landing in 2025. I think that is extremely ambitious and doubtful that it will be achieved, but that is the outward goal at the moment. And then through that initiative, there are a lot of private companies that are also hoping to send their robotic spacecraft to the moon. So we have Astrobotic and Intuitive Machines who are also trying to reach this region of the moon with their own uncrewed landers. And those are supposed to happen. Those are supposed to launch before the end of the year.
Lauren, why is it so hard? I don't get, by 2025, couldn't we do it next week? We did it in the 60s.
I hate to break it to everyone, but it's still quite hard to reach the moon. Yes, it is something that we did in the 60s, but you have to understand, we had increased NASA's budget significantly at the time. There was an extreme focus on reaching the moon during that time. We put a lot of resources into it. And so now we don't really have that same sense of urgency, and NASA is working with a much lower budget than it had at the time the space race was going on.
Yeah, but my Nintendo Wii has more computing power than NASA did back then. I mean,
that's true. That's true, and that's ultimately why we're making a lot of strides in terms of who is able to reach the moon. With those companies I just mentioned, they're hoping to be the first commercial companies to reach the surface of the moon. That title has not been claimed yet. So far, it's only been nation states. But ultimately, we are getting there. It's just taking a while, and we're trying to do it in a smarter way that doesn't rely on that big influx of cash.
So, Lauren, of all the private companies out there, because that's what's different from when I was a kid and we were all fixated on NASA and we all wanted to be astronauts back in the day. Private space travel, are there viable economic models out there? I mean, how do any of these companies, is it space tourism? Is it just taking garbage out there? I mean, what are we doing?
I mean, I think that's ultimately the prime question right now, as more and more companies are trying to turn space into a business. Can these businesses make money? The answer we're getting from the few companies that have gone public is not a lot. Yep. Some are bringing in revenue, some are not even bringing in revenue. It's a very hard market to break through in because it does require a lot of capital up front, and to develop these vehicles and these capabilities takes many, many years. It's besought with delays. And so, we are in an era that we're trying to prove that we can make these companies into viable businesses, but there's going to be a lot of casualties along the way, business casualties, not human casualties. And I think it still remains to be seen if these companies can really turn a significant profit.
And Elon Musk, Jeff Bezos, a couple gajillionaires, they're all in on this business. I guess it kind of feels to a lot of critics that it's just kind of a billionaire's game out there for space. And, is there any other real model out there?
Well, you have to understand, we've been in the business of space for a really long time. The earlier models focused more on defense contractors, building these vehicles and help with NASA. But they were not as vertically integrated as some of these newer players. That seems to be one of the bigger changes that Elon and Jeff and these other companies are implementing, is vertical integration. So keeping everything in-house. But as I mentioned, these companies require a lot of capital, and so that's ultimately what they are able to help with. The billionaires is being able to give that kind of big cash injection up front and to help out whenever money is tight.
All right, Lauren, you're a graduate of the University of Texas. Are you one of those crazy Longhorn alumni?
I'm sorry, are we crazy? I think we are normal, regular college graduates.
Okay, because we have Jess Menton, who comes in here and does a lot of work with us reporting on the equities at Texas A&M grad. So she's the only one in her family that defected.
I can't speak to that.
Okay.
Hey, what's the next cool launch you're going to go watch? Do you go down there and watch those?
I do. I've been to quite a few. Kennedy Space Center is kind of my second home sometimes. I'm based in Austin, Texas, though, and SpaceX has been building their Starship vehicle down in Boca Chica, which is on the border of Texas and Mexico. And I have been there to see their first test launch. We're gearing up for that second test launch. SpaceX is going through the motions of kind of fixing what went wrong during the first one. They're undergoing tests, but signs seem to be pointing that we could be seeing another test launch from Texas in the near future. So we're just getting ready for that and seeing how that will go.
All right. Lauren Grush, space reporter, Bloomberg News. Hook 'em horns, right? Another big football season coming up, and I'm sure they're all fired up down there. I love that we have a space reporter. That's so cool. Let's head down to Washington, D.C., World and National News with Amy Mars.
All right, thank you, Paul. Rudy Giuliani on his way actually has now arrived at the Fulton County Jail where he is to surrender to authorities.
I don't know if I plead today, but if I do, I plead not guilty. And I get photographed. Isn't that nice? A mugshot for the man who probably put the worst criminals of the 20th century in jail.
The former New York City mayor has been indicted along with Donald Trump and 17 other alleged co-conspirators on racketeering charges. Some GOP voters in Wisconsin are expressing their disappointment that Donald Trump decided to skip tonight's debate, telling Fox News that they believe it's a missed opportunity for the former president. A late summer spike in COVID cases is a reminder the virus is still out there and it's putting vulnerable people in the hospital. Baylor University infectious disease expert Dr. Peter Hoter says everyone really does need to get a booster this fall.
The previous immunizations are not nearly as effective. The single most impactful thing you can do to protect yourself and your family is to get that booster.
Baylor University infectious disease expert Dr. Peter Hoter says waiting until September to get your booster will help protect you this winter when another COVID wave is expected to arrive. The Biden administration says it's allocating $1 billion for mid-stage COVID vaccine trials. The funding will be split among 4 biotech companies. The trials of those vaccines expected to begin this winter. India, now the first country to land a spacecraft near the moon's south pole and the fourth to successfully land on the moon at all.
जी हाँ, आप अपनी स्क्रीन पे देख सकते हैं कि हम लैंडर मॉड्यूल
India's rover is set to analyze the chemical makeup of the moon's surface and search for water. You might recall that just a couple of days ago, Russia's attempt at a lunar touchdown in the same area ended in failure. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have big tech leading gains of stocks right now. This, of course, comes before NVIDIA's earnings. We get those after the close of regular trading in New York. Shares right now 2% higher for NVIDIA. Then you have Treasury 2-year yields. They are down right around 9 basis points. I'll say 10, so below 5%, 494 on that more policy-reactive Treasury. Among the data, U.S. business activity losing momentum in early August. Manufacturing weakened. And as we await Fed Chair Jerome Powell's speech from Jackson Hole on Friday, Steve Risciuto, the chief U.S. economist at Mizuho Securities, pushing back against the idea of a soft landing for the U.S. economy.
A soft landing is this vague concept where you bring the economy back to trend growth and inflation comes back in that direction as well. That's not going to happen with a labor market as tight as we have today. And it's going to be hard to get inflation to go from 4% to 2%, a lot harder than it was to go from 9 to 4.
And right now we have the S&P 500 up 38 points. That's a rise of about 0.9%, 44.25 in the index. The Dow Jones Industrial Average up 130 points. The NASDAQ 100 up 224 points. That's up 1.5%. Juul Labs planning to lay off about 30% of its workforce, whittling the former e-cigarette juggernaut's operations. It's seeking to raise capital or even sell the company. And as a parent of youngsters, I'm just not going to say anything. I'm not going to weigh in on Juul Labs.
Wait,
but
you're not going to give us your editorial opinion on Juul?
I think I'm hinting at what it is because I have kids.
And you're just hoping that they pick up a serious nicotine habit with the easy electronic aids of Juul?
No, I'm not going to say I was hoping that a meteor hit the company, but you know where I'm coming from.
Don't want to say that. All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. I want to get right to our next guest because there's a million ways we can go. Rania Sedholm joins us. She's a managing partner of Sedholm Law Group. A lot of things to talk about, Ronnie, but I'd like to start with something near and dear to my heart, which is the media companies and the Hollywood studios, strikes with the writers and the actors. And where are we on this thing? Because it seems like both sides are really entrenched, although I believe the studios did come with a proposal that seemed reasonable to me, but I'm not involved, so.
Well, I think that both are holding pretty steadfast in the direction that they want to go. I don't think anything has been resolved at all since I've last been here or since the strike went underway. It is true that the studios did propose some changes. However, I believe the union wouldn't come to the table, which is, a way of rejecting it outright.
Yeah.
And so these...
So there have been no talks. They haven't been in the same room officially.
I don't believe so, no.
No, but they came back with what I thought were certainly, I don't know what the word is, but they were substantive. They addressed a lot of issues. Whether they went far enough as the
yes.
union, I don't know. But if I were the studios and I put this on the table, I would certainly expect a professional response, wouldn't I?
You would, and...
That's why I'm not a negotiator.
Yeah, the negotiating table has to be went to in good faith under the National Labor Relations Board rules. You can't just refuse to engage in any kind of discord. However, if someone comes back to you with what you deem is a wholly unreasonable solution, you can take the position that I guess that's what the union is taking at this time. But you're right, everything was addressed. Whether or not it was addressed properly or thoroughly enough for the union, I guess the answer is no.
Ronnie, let's just reset for listeners who haven't been following this very closely. You work with the actors side, and what are the demands that they've made? Elementary in sort of the elementary demands. What exactly do they want?
Well, I think some of the celebrities who I represent, they're individuals, just to be clear for the listeners. They want to protect themselves and their image. They don't want you to be able to take whatever image you've seen in a movie, a TV show, or whatnot, and just change it, right? I mean, AI can do so much we don't even realize as the viewers, but you don't need to take additional takes, for example. You can just use whatever take was provided and then make whatever changes you want to change, as long as you have the image of the person, the motion of the person, and the tone and sound of the person, which clearly you would have when you take your first take. So I think they want to protect themselves from being seen incorrectly, right? Because who knows what you're going to do with the image, but also it's about money as well. Every time their image is used, they want to receive a royalty. And I think that's like a huge debate right now. You know, what are we paying for exactly? And typically contracts do state, we control this image that you've provided us with, whatever it is, for the show, for anything, in whatever medium exists now or shall exist. So we don't even know what else is coming after AI.
Well, that's in, I would say, most content areas. So, for example, as a research analyst on Wall Street, I did not own my research. It belonged to the firm I work for. The models I created, the earnings models, belong not to me, but to the company. And so what you'd see before any analyst went from company A to company B is he or she would take their earnings models, which they created, download them to the little floppy disk so they could take them to the next spot, which was a no-no. But everybody does it.
If you do that, I might send you a nasty letter.
Yes.
Okay.
Exactly.
Or Paul should maybe hire you. You know?
Yes, exactly. But so isn't that kind of, is that law already created and already exists? We're just now applying it to a different medium, I guess?
Yes, in a way that is true, but no one anticipated what you can do with this technology. So for example, if you sent me research and let's say I discarded it or I changed it, I may not attribute it to you.
Right.
And so your research findings, if they were not what I wanted, you're left out of it. Nobody knows about it. Here, it's your picture, it's your voice, it's your movement, and we're doing something with it. And you may or may not agree with it.
Right.
So that's that's one of the things that they want you to change. Then on the money side, you know, I think we don't understand exactly how much money, for example, SAG-AFTRA estimates that these streaming companies are making. Their representative was telling Paul that she thinks they're making $30 billion a year in profit. But when we look at these earnings reports, that's not readily apparent. So is that something that needs to be solved, how much money they're making off streaming, or does it just not matter to your clients? They want a bigger take anyway? Well,
Honestly, money's always a factor. So I think, of course, that does matter. And I think that I don't know if it's a world view, but certainly a U.S. view, that the gap between the owners and, in this case, they're not employees, but we'll just use that analogy, should be smaller.
All right. So is this something, like when we think about AI and all the uses and therefore misuses that could be had of AI, does law need to be created, do you think, or just existing laws apply to a much wider view now because of AI?
I think laws should be created, but I think it's also too early. Who really can stand up and say, I thoroughly understand this technology and how it works? You can't create a law around something you don't comprehend.
And what makes these discussions with the actors and the writers is, I think an executive could stand up. I would defend a media executive standing up and saying, I don't know what this stuff is worth. I don't know how we're going to generate revenue off of this stuff. All I can tell you is when we think it up, you'll get your cut. So you write up the language that does that, is what I would do.
Yes, that could be one way, but it's always the devil that's, in the details, and everybody wants those details. But I think you can start from a contractual position moving forward that says, I'm not giving you rights to my entire likeness. I'm only giving you rights to this particular season, movie, whatever. We can define it and slice it differently.
I don't know. I think it's something, well, I don't know. I think there's language out there that they can get things done, but it seems like there's not a lot of movement there. So we'll keep on top of this thing in Hollywood, the whole AI issue, which is just, mind-numbing to think about where this could all go and the applications of AI across a range of industries, and the lawyers got to figure it out. Rania Sedhom.
Like Rania.
Exactly.
Great to have you in the studio, Rania. Thanks so much for joining us.
It's awesome. Rania Sedhom, managing partner at Sedhom Law Group, live in a Bloomberg Interactive Brokers studio. Markets here still green on the screen. S&P 500 up about 0.9%. A little bit more juice there in NASDAQ, up 1.4%. NVIDIA post-close Little bit of pressure on our friends from Santa Clara. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Big Tech's earnings season wraps up today with NVIDIA after the bell. You were just talking about it. The chip maker has added more than $370 billion in market value since its last update. Bloomberg's Alex Webb reports.
Interestingly, if you look at the multiple at which it's trading, it's currently at 44 times its forward earnings. Now, that is a premium to the Philadelphia Stock Exchange Semiconductor Index, which is trading at 24 times its forward earnings. But it has come down quite a lot. Now, of course, that forward earnings multiple is partly because analysts, they're anticipating higher revenue for the rest of the year. So any indication of a wobble on that front is likely to be punished.
All right, so let's check in with shares of NVIDIA right now. They are up about 2%. AT&T now matches its rivals, offering 5G wireless home internet service. Bloomberg's Gina Cervetti has that story.
The new service called Internet Air will cost $55 a month in parts of 16 metro areas, including Chicago, Los Angeles, Philadelphia, and Cincinnati. AT&T follows Verizon and T-Mobile in pushing into wireless internet, which is beamed into homes at a lower cost than landline internet.
And shares of AT&T down right now, just a fraction. Facebook Marketplace is being criticized for selling recalled products, including baby items. Now, a group of lawmakers have written a letter to Meta Platforms asking it to take action. They say keeping the products on the platform puts users and their kids at risk. Now, Meta says it does not allow the sale of recalled products, and when they find listings that do, they're taken down. Shares of Meta right now, they are up about 3%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is
What VR use cases are there in healthcare?
Physical therapy. Like, let's say there was a patient that had wrist surgery. They would actually see in the goggles and visualize trying to catch the butterfly, right? Get that movement going in your wrist in a way that is enjoyable for the patient.
And Matt Miller.
10-year Treasury off on 11 basis points. 2-year trading at 4.95%. The 10-year 4.21%. So still inverted yield curve, but certainly less than what we've seen before. Right now, let's head down to Washington, D.C. We'll get world and national news, and we will do that with Amy Mars.
All right, thank you, Paul. Rudy Giuliani in Atlanta, Georgia, to surrender at the Fulton County Jail.
This will be proven to be, like all the rest, a complete hoax and a lie. One of the worst, actually.
The former New York City mayor was indicted along with Donald Trump and 17 other alleged co-conspirators on racketeering charges connected to an alleged plot to overthrow the results of the 2020 election. Excessive heat still an issue for much of the country. Bloomberg meteorologist Rob Carolyn tells us that there's this enormous heat dome.
A strong and stationary high-pressure system over the central United States will continue to bake areas from Texas into the northern plains today. Areas stretching from Texas into extreme South Dakota are under either excessive heat warnings through Friday or heat advisories, and that extends eastward into parts of the western Ohio River Valley as well as the central Gulf Coast.
Bloomberg meteorologist Rob Carolyn says it'll take a couple of days for this system to break down